We're seeing a cap on long-end bonds. Maybe that's useful in terms of risk sentiment, but really we're just waiting for some big events, PCE and Nvidia.
Yeah, the event risk is certainly there, but we will be watching those oil majors, of course, on lower oil prices. Travel and leisure could get a bit of a lift on softer energy prices as well. Of course, tech is in focus. Nvidia earnings dropping later today. The software story is interesting as well. There's a little bit of softness coming through from the likes of Intuit and Zoom overnight stateside. It's possibly a read across to some of the European counterparts. SAP in focus, a downgrade for that company from one of the analysts. Sportswear in focus as well. There were some decent numbers coming through from Anta over in Hong Kong. We'll see if some of the European names get a lift on the back of that. And Zabka, this is a Warsaw-listed retailer, aligned there about a potential takeover bid by Canada's Alimentation Couche-Tard. So we're watching that as well. Zabka in focus over in Poland. Anna.
Okay, so a few sectors and companies to keep an eye on, but broadly, we are going to be waiting for the big events of the day. That is PCE data out of the United States, Nvidia earnings after hours, also earnings actually from some of the other tech names that maybe are on the slightly more vulnerable side when it comes to the AI rollout. Let's have a look at where we are on these European equity markets then as they open up. And the FTSE 100 is the first out of the gates, down by 0.1%. The Stock 600 broadly flat. Perhaps we're not going to see a huge amount of movement ahead of those big events, the PCE data indeed, and the Nvidia numbers, perhaps even more importantly. So perhaps the market or investors reluctant maybe to make any big bets with those things in mind. The CAC 40, though, getting a bit of a bid, as is the IBEX over in Spain, so up by 0.3% in those markets. Perhaps some of the more consumer-facing names in focus there. So that's the broad early look, Tom, at what we're seeing here. We don't have the DAX open, but that's pretty standard for this time of day. So what do you see?
In the first few seconds, most sectors are in positive territory. Not a surprise that energy is down 0.9% as a sector. Tech, interesting, a little softer, just by 0.2%. Just 4 sectors so far in negative territory. Top of the list, I was flagging this, travel and leisure gaining 0.7%. That will be the gains coming through from weaker oil prices. So travel and leisure as a sector getting a bid on that story. Basic resources a little stronger as well. That sector up 0.7, and the consumer up 0.6%. Banking also faring relatively well. Gains there of 0.5%. The biggest losses then for the energy sector, down around 1% right now, Anna.
Yes, indeed. So in terms of the balance of things, we are broadly stronger, aren't we? The FTSE 100 is pretty flat. As you've been saying, the energy name's under pressure, so maybe that's no surprise. So we're not getting outperformance there. But we are seeing some outperformance then coming through in the French market. So that's something to consider. Just looking at the consumer products, yes, and we are seeing a bit of a bid into luxury, up 1%, but that's down. Beating the market at least today. We're up by over 1% on LVMH, on Kering, on Hermes. So maybe there's something to that. Let us broaden our focus and talk about where we are in global markets with Wei Li, Global Chief Investment Strategist over at BlackRock. Really nice to see you this morning. Thanks for being with us. So let's start by thinking about your broad perspective on stocks right now. We've come through a couple of weeks where we've been questioning whether higher yields are going to ruin the party, if you like, for stocks. And maybe we have our answer, maybe we don't. It's a low volume kind of August at the moment. But how are you thinking about global stocks at this point?
Well, we're still overweight stocks at the moment. Yes, rates have been repricing. Cash path has been repricing, term premium has been repricing too, but in our view, stocks can do well still in the face of higher rates, because rates just affect the discount rate with which we discount future cash flow, but growth matters a lot as well, and earnings have been very strong for stocks. If you look at S&P 500 in terms of forward PE. We're now below 20 times because of the strength in earnings momentum. So that being the case, it is possible for stocks and at least selective parts of stock markets to outrun the higher rate environment, which is why we're still risk on.
Okay, and that takes us to the NVIDIA earnings, which are coming out later on today. And what do you look for from companies such as NVIDIA, such an important part of the well, we heard them described yesterday as the central banking of the AI trade, by one of our colleagues yesterday, such a linchpin of the AI trade. What kind of mood music are you listening for when it comes to NVIDIA?
I like how you described NVIDIA earnings earlier as the macro event of the week, because micro is now macro. That's how big this AI company spending has gotten to. So one thing that we're paying attention to is CapEx kind of trajectory. I'm not just talking about NVIDIA, I'm talking about the whole AI complex. Already beginning of the year, it was record level and it has been revised higher. And higher CapEx also means competition for capital is intensifying, and that pushes rates higher as well. We're in a higher rate environment, but on the flip side of that, durable income becomes a more important theme for portfolio, which we're very excited about. But back to equities, Mag 7, you know, we just talked about the S&P 500 trading at below 20 times. Mag 7 forward PE is just above 23 times, which is close to a 3-year low at the moment, mostly because of, well, there has been a bit of consolidation, rotation, but also strength of earnings. So within the broader AI ecosystem, there is a sub-theme, which is scarcity sellers are doing quite a bit better than scarcity buyers, and NVIDIA is scarcity seller. You look at some of the price increase that we have been talking about, it really does show that they have earnings pricing power, earnings momentum, and that's something that we are very excited about.
Oh, that's really interesting. So you see that as a pricing power story for NVIDIA, not a concern about margin squeeze on higher memory. You're more, the read you take from that is they have pricing power. They can do this and do it comfortably.
Well, there is the whole AI ecosystem, and pricing dynamics very much kind of shifts where revenue is accruing. So there is pricing power. Memory prices are also going higher, and I would also think of memory providers as scarcity sellers too. So if you think about them as kind of players within the whole ecosystem, sellers better than buyers in this particular case, and the models have a role to play within the overall ecosystem as well, because we talked about how valuations look attractive, but earnings durability very much at this point divides AI bulls from AI bears. And as we think about kind of the commoditization risk from China, it impacts models, and specifically we just talked about some of the pricing dynamics. It's happening within model providers too. You look at leading model labs in the US, OpenAI, for example, you see that the less advanced models are more kind of facing the pressure of commoditization, whereas the very leading edge models, they still command pricing power. And that is important, which is why they're throwing everything at it to try to lead in the frontier race, right? So the bottom line is we're still positive, the AI trade, because momentum is very strong, CapEx is strong, your CapEx is my revenue, so things are going up, but we're paying attention to model development to understand the progress of technology. We're paying attention to GPU rental prices to understand demand. We're also paying attention to incremental margin in particular to understand monetization trends.
It's really interesting. I mean, you're talking about the model development, so it makes me think of obviously a number of different things. The role that open source is playing in terms of the earnings story, maybe, and whether you see that as one of the catalysts around your conviction that earnings remain strong. But I'm also thinking, of course, of Anthropic's upcoming IPO, expected IPO, and the market reaction to that. You're comfortable that you can get an Anthropic or one of these frontier models, let's say, listing, and that the market will take that and can continue through that it's not going to absorb so much liquidity, it becomes a challenge?
Well, liquidity is a big consideration as we think about market sentiment and mood music in the second half of the year. And it's not just liquidity drain from record IPO, it's also liquidity from credit issuance. It's also liquidity from government bonds issuance. Everybody is in need of more capital, right? This competition for capital is intensifying. So liquidity consideration is a potential potential risk for markets as we think about potential kind of pockets of indigestion as we head into second half of the year. But that is more technical in nature, and if the fundamentals are strong, it doesn't change our kind of broader conviction in AI. Whilst as we talk about the intensifying competition for capital, again, it goes to, and it really kind of leads to high rates for longer. And this, again, is why durable income is so exciting for portfolio right now. And it's not just bonds that provide income for portfolio, you know, infrastructure, private credit income, and also some option type of equity strategies could provide income. So, you know, as we think about this world of polyfocated outcome, many possibilities on the table, all quite likely, because we genuinely do not know, right? Like this big mega forces driving where we're heading towards. We don't have a base case anymore, so macro anchors are becoming weaker, but income anchor becoming more important in portfolios.
Okay, yes, this higher yield environment then, the opportunity of that as income is really interesting. So we talked to a guest earlier on in the program from Oaktree, Weili, and we were talking about whether, well, she said that this is a multi-generational build out. So this is the time horizon we have to think about when it comes to the infrastructure rollout for AI. Is it possible to have sort of investment horizons that really reflect that?
Well, yes, some of our institutional clients do have the luxury of longer-term investment horizon, but the reality is markets are mark to market on a daily basis, right? So there is a bit of a consideration on both sides, but this bridging of kind of when you spend versus when you can reap the benefit, this is actually key. This is why in our outlook we have a key theme of leveraging up, because there is a time disconnect between how much spend that needs to happen now in order for productivity boost to come in later down the line. If history is anything to go by, it takes a long time.
It takes a long time. And it's worth the leveraging. So who needs to leverage up then, Weili? Who is it advisable to leverage up? Who should be thinking about more leverage at this point?
Well, a private sector hasn't really been leveraging up for a long time. You know, if you look at the periods coming out of the global financial crisis, it's the governments that have been leveraging up in terms of debt to GDP ratio. Versus pre-global financial crisis, debt to GDP ratio in the US has now almost doubled, right? But the non-financial corporate part of the US economy actually has been going sideways, and consumers has not been leveraging up as well. So there is room for leveraging up, and because now corporates need financing to bridge towards when their investment.
So if we see gearing rates go higher, that's not a negative then. That's just investing into this exciting new technology that delivers in the future?
It depends on the return, and the jury is still out. Only time will tell, but the starting point is quite healthy. As I said, you know, like right now, the level of indebtedness for private sector in the US compared to the levels that we saw kind of, you know, during dot-com bubble, this is very healthy. So a bit of incremental leveraging up is promising until we get to a point where, you know, we're talking about downgrade risk for these large companies. Right now, leveraging up is just a feature of the environment.
I have to ask you, as we're talking about structurally higher inflation, structurally higher rates for all the reasons you've outlined, whether you believe in the best cent put when it comes to the long end. Do you take that seriously?
Well, I think it says a lot about intent. They really do care about the long end. But the long end is also driven by many, many factors. There is kind of the policy rate path, and then there is the term premium. Right now, US term premium is 80 basis points. It has come a long way from almost negative 1% less than 5 years ago. So term premium has repriced quite a lot already, but there is room for further repricing because of where inflation is heading towards, because of where fiscal spending is heading towards, and also because of the global dynamics. If you think about incentives for international players to hold treasuries, so all of that would likely push term premium higher, and there is global dynamics going beyond what the US government can do, but you can clearly tell the intent from recent policies.
Weili, thank you very much indeed. Always fascinating. BlackRock Global Chief Investment Strategist. Let's check check in on the core 6 right now before we get your stocks to watch. So the core 6 in focus, of course. Let's bring them up. ASML is currently down 1%, so a little bit of softness then for that key technology provider in Europe. Schneider Electric gaining just 0.2%. It's a slightly brighter picture over in the healthcare space with Novo Nordisk at 2.3%. LVMH Luxury was under pressure. It was one of the biggest losers across the sectors yesterday. Today, a turnaround. LVMH currently at 1%. Nestle in the consumer staple space at just up 0.5%. Let's get your individual stocks on the move and get some more clarity and colour with Chloe Melly standing by. Chloe.
Good morning, Tom. We are seeing a bit of weakness in that software sector in Europe on read across from the US. So we had Intuit and Zoom Communications having quite disappointing results, and we are seeing that impacting those software stocks here. Today we've got SAP and Sage Group down. Another thing that's weighing on SAP today is that it did also get downgraded by UBS. So not a great picture there, but it's not all bad across the entire software sector. We've got the IT services company Software One that is actually up this morning quite strongly. We're up more than 11% after some strong first half results. Moving on to Hochschild Mining, which is a gold miner that is also in the green this morning. We're up about 6% after it boosted its forecast, so quite strong move there. On the other hand, oil majors are having a bit of a tougher day this morning as Iran and Oman discussed a framework for resuming traffic through the Strait of Hormuz. That is weighing down some of those stocks this morning, with BP and Equinor in particular down in the red this morning. And finally, let's go to Ambu, which is a healthcare equipment maker, and it has had quite disappointing results, and then after that was also downgraded by Nordea analysts on the back of those earnings. And so we are seeing that really drag down the shares this morning. We're down more than 17% for this company.
Chloe, thank you. Chloe Melly finding her best to find some of the interesting stocks on the move this morning. Coming up and on the programme, we'll take a dip into the Bitcoin story because Bitcoin does appear to be back, why optimism is returning to the beaten down crypto market, and where it goes from here. We'll discuss. This is Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Burr.
I'm Lisa Mateo.
And I'm Christina Raffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas.
The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors.
We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Bringing you up to the minute geopolitical news whenever and wherever it happens. I'm Anne-Marie Hodern in Beijing, China, and this is Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
You know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
The trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg. This week, Bloomberg is live at the Jackson Hole Economic Symposium. Tom Keene and Lisa Abramowitz, along with Michael McKee, will bring you news and interviews with Fed leaders, policymakers, and economists shaping global monetary policy. Tune in for continuing coverage and a special episode of Surveillance, August 28th at 9 a.m., including full coverage of Kevin Warsh's first speech to the conference. The Jackson Hole Economic Symposium on Bloomberg. Context changes everything.
Welcome back to the opening trade. Happy Wednesday. We are 18, almost 19 minutes into today's session. A bit of sideways trading, it seems. The European Stocks 600 currently up just 0.1%, ahead of some big risk event stories, of course. PCE, inflation data out later. Then on the corporate front is Nvidia. And then, of course, you have Kevin Warsh on Friday. US futures currently a little softer on the Nasdaq 100, down 0.1%. But you can see a slightly brighter picture when it comes to France. The CAC current is currently up 0.4%. Here in the UK, the FTSE 100 is flatlining, 10,882. You've got basic resources gaining as a sector. On the downside, it's energy on weaker oil prices.
Yes, the mining sector doing well, as you say. Let's talk mining of a different sort. Bitcoin has surged about 25% just over the past week. The blistering rally pushed the most popular crypto coin briefly above $80,000 for the first time since May. Renewed chatter about the debasement trade has brought Bitcoin back in favour after Scott Bessent's bond buying plan sparked a wave of dollar selling. So let's get some analysis now and speak to Bloomberg senior crypto editor Ryan Weeks. Very nice to have you with us, Ryan, on the programme. So give us your take on what it is that has been driving Bitcoin higher. Is it all about dollar debasement, about finding alternatives to the US dollar, and in steps crypto? What's the driving force?
Well, I think there are two big drivers. One is certainly that Bessent's intervention in the bond market revived talk of Bitcoin's anti-inflationary properties, which haven't always held true, but it was thought to have created the right macro backdrop for a rally. There hasn't been a decent rally in Bitcoin for some time. It's been stuck in the doldrums around 60 to 70K for a really long time, since a big sell-off last year. Over the past week or so, it's made it back to above $80,000, and that seemed to be quite significant. I think it was its largest percentage gain last week for something like 3 years, which is quite significant. So that was certainly one big reason for the rally. The other was more regulatory in nature. So the Clarity Act, which is seen to be a very important bit of legislation in the US for cryptocurrencies, has stalled. But there was a meeting between Donald Trump and industry executives last week at which he gave an endorsement to the sector, called on lawmakers to get that done, and also, signaled that certain types of crypto instruments would be brought to the US, or that the CFTC is trying to do that. And so that was seen as positive as well.
Does that regulatory story mean that the gains that we've seen are maybe a little bit more sustainable? Does this? What is the likelihood? What is the industry saying about whether or not this can be sustained?
Well, the industry certainly thinks it can be, perhaps unsurprisingly. We've seen bullish forecasts coming out again, people suggesting we might have a new record by the end of the year. I'm not sure about that just yet, but certainly the inflows into the big Bitcoin exchange-traded funds in the US would suggest that this is a more meaningful rally than we've had recently. And I suppose, the amazing thing to bear in mind is that the regulatory backdrop for crypto has hardly ever been better than in the US right now. And yet, for the first half of the year, cryptocurrencies, most of them were languishing at lows not seen for a while. And so, whether or not there are regulatory advances meaningful enough to really push Bitcoin further up, I think that remains to be seen.
Ryan, how should we think about the alternative nature of these currencies? Because I was struck listening to Scott Bessent at the beginning of this week talking about trying to limit the resources that Iran has at its disposal, and he cited digital assets as one of those areas. And I've been wondering whether Iran was going to have to pivot more into this kind of space if they're cut out of the dollar trading system. But maybe crypto, with the regulatory push that you mentioned, is increasingly attached to the dollar-based system. How can we think about the alternative nature of crypto?
Well, to some degree, that's right. I mean, the way to think about it is to look at Tether, or USDT, which is the world's biggest stablecoin, which at one point, not so long ago, was, not particularly welcome in the US, and now has become, Tether itself, the issuer of that stablecoin, has become a kind of an ally to the administration. And, they're constantly touting the work that they do with regulators to help to freeze assets. And they were involved. There was a large USDT seizure that essentially involved the US freezing funds that were being used by the Iranian central bank last year. So, to some degree, that kind of anarchist past where, it was all about not being, within the purview of the state for cryptocurrencies, that's sort of no longer the case to some degree.
Okay, really interesting breakdown of what we're seeing across the crypto space, with that focus, of course, on Bitcoin. Bloomberg senior crypto editor Ryan Weeks. Ryan, thank you. So, from Bitcoin to the more traditional part of the financing system, the banking space in Italy. In the latest news from Italy's bank acquisition saga, Banco BPM has indicated scepticism towards the takeover offer received from rival banker Monte dei Paschi. The lenders board acknowledged the unsolicited offer, but said that the bid, quote, does not recognise a premium for its shareholders. Let's get more from Tommaso Ebhardt, Bloomberg Southern Europe managing editor in Milan. Tommaso, explain Banco BPM's reasoning here. They're just trying to drive up the offer.
Sì, buongiorno from Milano. We are going from bitcoins to the world's oldest bank, Banca Monte dei Paschi di Siena. Banco BPM essentially indicated that the offer is not enough, and also that it was unsolicited. Banco BPM and Monte dei Paschi had discussed for months, if not years, about the combination. Banco BPM last month said, okay, we are not going to ahead with the combination. We can't find, the right path together. And then Banco Monte dei Paschi arrived with an unsolicited bid. So it looks like Banco BPM doesn't seem very happy about this kind of a bid. It's very difficult to understand if this is a tactical response. It's just their initial response. They're going to evaluate the bid deeply. Obviously, at the end of the day, more than what the board thinks, it will depend on what investors think about Banca Monte dei Paschi offer. And the big question mark is how the French will behave. Crédit Agricole owns about 1/3, 30% of the bank. So if you want to know how it's going to end, maybe we need to find some answers in Paris.
Yes, I seem to remember we asked the CFO of Crédit Agricole about that, and certainly said that she was certainly saying they have a seat at that table. So where on earth does this saga go next then, Tommaso? Everybody in Italian banking seems to be out to buy everybody else. So what do we expect to happen from here?
We have been waiting for a decade for consolidation. Here it is coming. So what's next? One important thing that happened last night, too, is also that the Italian government somehow indicated that it's not going to sell its remaining stake in Monte dei Paschi di Siena at the moment, not to take part in this fight around the Siena bank. So what's next? For sure, we have to see if Intesa Sanpaolo, Italy's biggest bank with Unicredit, which made a bid for Banca Monte dei Paschi di Siena, will react to Siena Defense double twin bids for Banca Popolare di Milano and for Banca Generali. But more importantly and closely, Generali hasn't said a word. Generali owns 50% of the other target, Banca Generali. People familiar with the matter has somehow told us that they are not opposing, in principle, a deal including Banca Generali, but they haven't said anything. Okay. So in the next couple of days, we expect a response from Generali.
Tommaso, thank you so much for joining us once again. Tommaso Ebhardt in Milan for us. Coming up on the programme, we'll get back to the NVIDIA earnings. We'll discuss what to expect with Lion Trust Global Technology Fund co-manager Claire Playdel-Bouverie. That's next. This is Bloomberg.
Today's CFOs are reshaping the C-suite. Spotlight on these dynamic leaders.
What's the skill set that you would advise every aspiring CFO to develop?
Psychology.
I think analytical skills are important. Obviously, you need to like the numbers. If you don't like numbers, then don't go into finance, you know. It's sort of like a recipe for disaster if you don't like numbers.
Not only for the CFO, but also the company's management. That's a communication and the collaboration.
I spend a lot of time figuring out how to take the complex and make it simple, and then finding a way to be able to communicate that both internally and externally.
I think it's relationships, whether it's working with investors, bankers, with the senior management team, with the board. Having your head down is one thing as a finance person, but keeping your ears open is super important as well. And I think that all of that is what kind of builds out being a successful CFO.
Watch Chief Future Officer only on Bloomberg. It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more.
We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Consequence for U.S. markets.
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Wednesday morning, everybody. The opening trade, 30 minutes into that opening trade here in Europe. And the session here in Europe is a little more negative, maybe, than we'd anticipated. And we are seeing a bit of a boost to some of the consumer-facing stocks as a result of a weaker oil price. That is lifting what we're seeing over in France. The CAC 40 up by around 0.5%. But elsewhere, maybe it's the drag from energy names that outweighs that upbeat consumer impulse from a lower oil price. And so as a result, some of the energy names weighing down things like the FTSE 100. The Xetra DAX also down by around 0.1% or 2%. And so, Tom, net, we are flat on this European equity market, but we wait for some big set-piece events, NVIDIA earnings and PCE data out of the US.
Once again, volumes are a little light, down about 20% versus that 20-day average. Majority of stocks, though, are in positive territory, just about there, 331 versus 245 that are losing right now. Let's flip the board and have a look at the leaders, though, and some of the individual stories that we can pass. Software One is one of those stories and one of those stocks that is gaining today and gaining pretty strongly, as you can see. That's an earnings beat, so up close to 12% on the back of that. Hochschild Mining, this is also a more positive forecast coming through, particularly around the gold price, and so Hochschild is gaining up 36 points, up almost 6%. Ørsted, this is a positive story as well in the renewables space, gaining 1.4%. Ørsted is getting an upgrade to buy by Citi for that renewable and turbine maker. On the downside, SAP, so that's taking a hit, the software giant, of course, listed over in Germany, over in Frankfurt, down 3.7%. Possibly a bit of recross. There was a downgrade coming through and downgrades coming through in terms of the outlook for Intuit and Zoom, and so a bit of negativity in that space for some of their counterparts. BP on the oil price, as Anna was saying, down 2.5% as oil prices drop, on some optimism that maybe there are movements towards coming to some kind of resolution around a framework deal in the Strait of Hormuz. And Ambu, this is in the healthcare space, plummeting almost 20%, down 17%. That stock, there's a downgrade from Nordea, really hitting that stock so far in the session. Anna.
Let's get an update then on one of the stories that's moving the oil price this morning and some of the other news flow that's in focus for us, Tom. Oil is falling for a third day as Iran and Oman look to push diplomatic efforts to resume shipping through the Strait of Hormuz. According to Oman's news agency, leaders from the two countries have discussed what's called an interim framework that seeks to establish a temporary joint maritime corridor. And a plan for mine clearance is also part of the conversations to restore safe navigation through the area. The Trump administration is discussing additional trade measures against Canada. This after Canadian Prime Minister Mark Carney unveiled dollar-for-dollar retaliation to new tariffs imposed by the US and announced new support programs for Canadian businesses hurt by the escalating trade war. NVIDIA will deliver its quarterly earnings report today after the bell, updating investors on the state of the AI industry's massive data center expansion and the company's efforts to remain at the center of that AI build-out frenzy. Analysts estimate that the tech giant's revenue nearly doubled from a year earlier to $92 billion last quarter, more than any of its rivals generate in a full year. Tom.
Let's get analysis on that story then, as we build up to that massive event, of course, for the markets, the macro event that is now the NVIDIA earnings story, and bring in Claire Pledel-Bouverie, Global Technology Fund co-manager at Lion Trust. Claire, always great to get your insights on the NVIDIA story. There is a view out there amongst some that NVIDIA is maturing, that this story is maturing, that there is increased competition, that the ROI story has not been properly answered, that the fact that NVIDIA is playing, as one of our colleagues described, the central bank role around funding a lot in the ecosystem is exposing it to additional risks. You push back on that narrative. Why? What is the transformation that you're seeing at NVIDIA that suggests this is not a company that is coming to the end of this cycle?
Morning, Tom. Great question. Really, four things have changed for us with NVIDIA from the start of this year, and they really transform, actually, how we analyse this company. First of all, compute is becoming an asset class, and the fact that NVIDIA's stock still trades where it did before the announcement of the $500 billion consortium from the world's largest credit investors that really validate compute as collateral, GPU as this asset class, is very puzzling to us. We see potential for up to $500 billion of revenues as this consortium gets deployed. Secondly, we think the ROI question was firmly answered in Q2 earnings season. We saw very significant cloud revenue acceleration from all three of the major hyperscalers. GCP 82%, Azure 37%, and AWS the fastest growth in 8 straight quarters. Thirdly, open source has had its catalyst in Kimi K3. Now, all the market attention has been on China leading this race, but
and that's a Chinese model.
Precisely, moonshot.
Yeah.
But the Western leader in open source models is, in fact, NVIDIA. Nematron 3 Ultra is the most intelligent open source model in the West, and that is NVIDIA's model. And then finally, and this is a point we think is not very well understood, every single one of the world's largest inference players, including all hyperscalers, now Apple, and massive new customers we've got Elon Musk with SpaceX, are all now increasing their proportion of their capex towards NVIDIA. And this is in spite of custom ASICs growth. So these are the four factors that we feel give us confidence that NVIDIA is actually accelerating. And we did see an acceleration in fundamentals at the turn of this year. We see that continuing through into next year.
And can I ask you then, in that context, and then you're saying you were seeing a lot more capex to NVIDIA, and I wonder how we think about the capex that NVIDIA will see in the context of how long GPUs last. Because when we initially started talking about the rollout of NVIDIA GPUs, the data center build out, we asked over what period will we need to think about the lifespan of these GPUs. It gets longer. Is that bad or is that good for NVIDIA? Because if it gets longer, if they prove to be more useful, I mean, does that mean they don't sell as many of the new ones, or that's not the story that matters?
It's good news for NVIDIA, and they're certainly a lot longer. They're proving longer by a factor of 2 to 3-fold versus a lot of critics and initial assumptions. I was in China just a couple of months ago, and I saw with my own eyes A100 servers, which is NVIDIA's 2020 Silicon Ampere, being sold out and being sold out at a premium. We heard the same from Alibaba's on their conference call last week. Volta, which is 2018 silicon, is still being fully deployed. The reason this is possible is because of software optimizations. NVIDIA improves its fleet every single year, so the chip you bought last year gets faster this year.
So and that just explain, that's because they upgrade the software that is layered on top of those chips, and you can get more performance out of even an older chip with improved software.
Absolutely. So if we take a Blackwell server, a GB300 server, just purely through software optimizations in 6 months, NVIDIA managed to increase throughput by 2.7x and decrease the cost per token by 60%. And so this is the CUDA moat, this is the Dynamo moat, which is another software offering we think is distinct from CUDA that NVIDIA has to its advantage. But back to your question, Anna, on why this is good for NVIDIA, is that this is what enables GPUs and compute to become a financeable asset class. Because if I'm one of the world's largest credit investors, what I'm looking for if I'm going to put compute as my collateral is an asset that's got residual value.
Yes.
And this is why having the best technology wins. We're moving into the stage of the AI infrastructure cycle where the first stage was really funded by cash flow from operations, primarily from the hyperscalers. Now, the capital markets are taking over. Debt is going to take a much more significant role in this. And so having the best technology really, really matters.
Can I just push on Anna's point about why you'd buy a Vera Rubin if you can extract more value out of an older chipset, particularly as CFOs and CTOs are becoming increasingly cost conscious on the cost of compute?
So you buy today's latest and greatest for training your frontier model. And being on the frontier really matters.
Moving from training to inference.
And then you use your N-1 architecture for inference.
Okay.
This is why you buy both. And this is why every single hyperscaler, every single one of the world's largest inference players have all put in their purchase orders for Vera Rubin. And the reason for that is that if you are still wanting to be on that frontier, on that Pareto curve, you have got to keep on buying the best compute, because you then can't charge your premium. We're seeing open source models commoditize the low end, and the open source models are going to take the vast majority of volume in that model layer. But if you're on that frontier curve, then you can charge up to $100 million per megawatt per hour versus 30 if you're below it.
Yes. Claire, in terms of the cost base that NVIDIA faces, why do they seem as vulnerable as everybody else to higher memory prices? Or maybe they're not. Maybe they're doing deals that are better than others, but they're certainly facing higher memory costs and having to put up prices to customers as a result.
So NVIDIA's got supply chain leverage, and this is one of the reasons they're in a very strong position given the insane increases in memory prices. So they can put up prices to their consumer, to their customers, but they still have to face those higher prices in the first place, didn't they? They have to face the higher prices, but they will get a volume discount just because they are purchasing in such significant quantities. If we think about the scarcest inputs right now to the AI build-out, memory is probably number one. TSMC advanced packaging, CoWoS is shortly behind. You've also got substrates, MCLL. All these sort of critical components are in shortage. Optics, really stretching throughout the decade. And NVIDIA's locked out between 2/3 and 3/4 of the supply chain. And this is why we really focus on the purchase commitments every single quarter. 145 billion last quarter, which is up from 30 billion just 9 months ago. So that really indicates to you just how much supply chain leverage this company does have, and how it is going to be increasingly difficult for competition, no matter how competitive their chip architectures, to actually purchase all those.
Claire, thank you very much indeed, outlining in detail the bull case for NVIDIA. Claire Playdale-Bouverie, ahead of those earnings, of course, Global Technology Fund co-manager at Lion Trust. Meanwhile, on the competition side, OpenAI says its new in-house chip outperformed NVIDIA's current flagship processor in key tests, measuring efficiency and response speed. Speaking exclusively to Bloomberg's OpenAI's Vice President of Hardware, Richard Ho, said the goal is to deliver more intelligence to users at lower costs.
The benchmarks that we did were with an open source kind of benchmark called Inference X. And we did that because it was a fair, kind of neutral benchmarking method. What we're seeing with Jalapeno is that we're able to get both high throughput and low latency with the same device, which is kind of a first in the industry. And why does this matter is because high throughput means that you can serve a lot of customers with a lot of tokens much cheaper than you could if you otherwise. Low latency gives you very fast response times. And so, the agents will come back faster, you can do, more coding quicker, and that really, I think, is a real benefit for our products.
This is it. This is Jalapeno. You very graciously allowed me to get my hands on it. And again, the whole emphasis is on throughput and ultra-low latency. This is an inference chip.
It is.
So very simply, why focus on inference, not on the training side with your custom silicon program?
Well, I think that if you look at it, right, OpenAI has this enormous need of compute. And where that growth of compute is really on the inference side. We need a lot of training, and we have a really strong partner in NVIDIA who has, really got a great training chip. So we focused on where we thought we needed to increase the amount of compute that OpenAI has available. With the growth in our users, with our weekly active users growing very, very fast, we saw the need to continue to have a wide range of inference products, and this is going to be part of our fleet, along with our existing partners who are providing us other chips.
How do you decide which workload goes to Jalapeno versus NVIDIA or Cerebras, for example? You have options, but how do you make that decision?
It's a great question, right? I think with this optionality that we're now creating for the company, I think that we will be able to provide users with a range of models that have different cost benefits and different latency capabilities. We will map that ourselves. We will map out which product, which SKU, which chip is best for which one of these models. But the whole goal of this is to deliver more intelligence to our users at a lower inference cost, at a lower infrastructure cost. And that's what this is part of, that entire strategy that we've been working on for a while now, right?
Lots of people struggle with the benchmarks. To the layperson, it's difficult to decipher. So in very simple terms, on a dollar per token basis, how does Jalapeno stack up against the other options that are out there? How has this changed the economics for you?
It should drop it. It's a really good chip. It should drop it by a lot. The performance per watt that we're seeing, which is a good proxy for how much token will cost, is somewhere in the region between 1.8 to 4x better than other existing chips right now. And so we should see that ultimately when this rolls out into production, customer token prices should come down. That's a big drive that we've had at OpenAI for a little while now. And this really is part of that strategy.
Keeping things competitive then, perhaps. Richard Ho, OpenAI's Vice President of Hardware, speaking exclusively with Bloomberg tech anchor Ed Ludlow. Coming up on the programme then, we'll get back to the trade narrative. It's tit for tat between the US and Canada in their trade war, as the Trump administration is currently weighing further action against Ottawa. That story next. This is Bloomberg.
famous dogs. You have they look like balloon kind of figures to some extent. How do you make those?
In the case of the balloon dog, I blew up a balloon dog. So I had this balloon, which is kind of like a latex type of piece, molded it, cast it, and then blew that up in scale and put it into a clay, and eventually had that transformed into stainless steel.
So when you have a balloon dog, let's say, a regular size one or then a big one, do people say, Jeff, you're crazy? Were you shocked that people were willing to pay very high prices for this?
When I was making my first balloon dog, one of the purchasers was Eli Bro. And originally I thought I could make a balloon dog for around $300,000 that I could manufacture. It's a large piece, over 10 feet long, or 12 feet long, 10 feet high. But it turned out that the fabricator came back to me and said, you know, Jeff, I can't do it for $300,000. It's going to be $650,000. But eventually, then they raised the price again, and they finally brought it up to $1.6 million. And I told Eli that this is the reality of it. I showed him everything, and he ended up paying for the production costs.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
It's Bloomberg Money.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend. This is Bloomberg Television. Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
I told the Prime Minister, no deal is better than a bad deal. And we have to go tariff for tariff and dollar for dollar. And it's unfortunate. We had an attack from President Trump on our sovereignty, on our country, on the economy, that we're so integrated. Both countries were both each other's #1 customer, and it just doesn't make sense to attack each other.
Ontario Premier Doug Ford speaking to Bloomberg just yesterday. He's been quite animated in some of the language he's used about the Trump administration, and the Trump administration has used some colourful language back. President Trump and his team weighing additional trade measures against Canada, it seems, following those retaliatory counter tariffs announced by Prime Minister Mark Carney. Very much tit for tat now. Brendan Murray joins us, who leads Bloomberg's global trade coverage. Where on earth have we got to on this then, Brendan? So tit for tat coming very quickly, day after day. Our latest reporting then suggesting that the US is readying even further tariffs, maybe higher rates or a wider range of product.
Yeah, exactly. The list that Canada released was pretty much as expected. They raised the steel and aluminum counter tariff that was already in place from 25 to 50. They hit agriculture, they hit furniture, they hit electronics, they hit seafood. They hit some industries that will really stir up some unrest in states where Republicans really want to hold seats or gain seats in the midterm election. So Canada was very targeted with their response, and we've got 2 weeks until they take effect. So there is still time for the two sides to get together and postpone these tariffs. And it sounds like the rhetoric is cooling off a bit.
Okay. Right.
In the interview with Doug Ford, he sounded a little less, personal against President Trump, and so it sounds like we're headed toward some sort of negotiation back to the table.
I'm glad you say that, Brendan, because when President Trump posted yesterday about renaming Lake Ontario Lake America, it didn't feel like the rhetoric was dying down, but that's
a lot can change in 12
yes,
hours.
It does change quickly.
But if they don't find an off-ramp, then we're looking at further escalation and further economic damage for both countries.
Yeah, exactly. President Trump has already said that come January 1st, we're going to raise tariffs even further. But January 1st is a long time, and you would think that President Trump, who has sort of a knee-jerk reaction in a lot of instances, would have done that sooner. And so I think that was a signal that he wants some sort of time to figure things out. at the end of the day, the U.S. and Canada don't really want to get into a full-blown trade war. Let's remember, this is only $20 billion worth of goods that go back and forth. It's a small fraction of the overall trade. So it's a trade war, but it's small arms fire at the moment. It's not a full-blown economic disruption yet.
That is interesting. Yes, I was interested that the couple of banks in Canada were saying, yeah, manageable seemed to be the word that they were using to describe
manageable
this.
now. Well, we'll see if that tone down in rhetoric is translated into concrete talks between the two sides. Brendan, thank you for framing it for us so brilliantly as ever in terms of that trade dispute. Bloomberg's Brendan Murray, who covers all things trade for Bloomberg. Let's look ahead at what else we are watching throughout the day. 11 a.m. UK time, the ECB's Cipriani will be speaking at the Bundesbank event in Frankfurt. We've been hearing from Isabel Schnabel calling and making the case for higher rates from the ECB. At 1:30 p.m. UK time, the focus switches to the US with core PCE, of course, important for the Fed as we think about how they respond to inflation pressures. At 4:45 p.m. UK time, we'll be hearing from the Fed's Barkin. We'll be speaking and we'll get those lines for you. And, of course, on the earnings front, it is the big ticket number. It's NVIDIA reporting earnings, but also Okta, CrowdStrike, and Salesforce may be interesting, and HP. Those all report after market.
Yeah, so we get NVIDIA, obviously beneficiary of the AI rollout, but then we also get those reports from some companies that maybe have been a bit vulnerable to talk about AI and what it can do to software. Skylar Montgomery-Koenig joins us from our Markets Live team to round out the hour and think about where we go from here. Skylar, good morning to you. So we are heading towards the NVIDIA earnings. We've been asking a lot of people from a lot of different perspectives, what's in it for them? You know, what are you watching out for them when it comes to NVIDIA?
Yeah, I mean, I think the general kind of bellwether we use for NVIDIA is it's the biggest AI company. So what does it say about demand? How does that feed into the market more broadly? What I will say is that it looks like a relatively positive backdrop heading in terms of we had this massive positioning reset in July where you had speculative positioning unwinds, you had retail investors come off, and there was still clearly concern in August as in you've not had this strong rebound, but maybe that's a healthier backdrop. In terms of NASDAQ positioning as well was quite short mid-August, and that's coming off as well. So I think that's a more positive sign. The other thing I'll point to is the earnings we've had so far from AI companies have been strong demand. And so we kind of get this last check or this big check at the end of the earnings season to say, where can we go from here? But given that positioning is in a healthier place, given the earnings we've already had, potentially this can be a positive catalyst, especially because more recently, the last, I think yesterday rather, NVIDIA rallied, but the 7 days prior to that, it sold off. So maybe there was some front running of the downside you typically get on the earnings release.
How binary do you think the reaction function of the markets will be to the inflation print, the PCE print out of the US later today?
I think it's very asymmetrically skewed hawkish. And I say that because all of the data so far in the last couple of months have skewed in the dovish direction. So you've had non-farm payrolls, you've had 2 CPI prints that have been softer, and that's had pricing come off for hikes, but it's been sticky at around 1 hike this year, either at the end of this year or beginning of next year. And I think that's sticky because of the level of inflation, as well as this idea that Fed credibility is under pressure post the last FOMC, and that pressure has just gotten bigger by the buyback program announced by Bessent. So if we get this core PCE print and it's a bit softer, I think it's hard to take out more pricing. Whereas if we get a hotter number, you can certainly put more in heading into Warsh on Friday. And particularly because the expectation for core PCE is 3.3%. That's very high relative to target, and it's flat from last month, and that's what the Fed targets, and it's been stickier than a CPI.
Okay, just briefly, Skylar, if that's possible, the long end outperforming the rest of the world a little bit, outperforming swaps a bit. Do we read a lot into that? Is that a sign of Bessent being effective at controlling the long end?
It's an interesting one because we have seen relative divergence based off of how fiscally irresponsible countries have been. So France has been under a lot of pressure. The U.S. has been under pressure, but the U.S. hasn't been as under pressure as you would expect given the deficits, the largest in G10 for 2026 and 2027 as a percent of GDP, that budget balance. And so I think there is this kind of reserve asset benefit the U.S. is still getting. I don't think it's necessarily Bessent weighing in there. I think it's just the U.S. having an advantage of being the world's largest government bond market.
The 10-year currently yielding 4.64, the 30-year at 5.18. So yields up 1 basis point, but yeah, still they have
Thomas Barkin weighing in with his view that there will be a reckoning at some point. It's just defining at some point is, he says, impossible.
Skylar, thank you very much indeed. Skylar Montgomery-Koenig from our Markets Live team, of course. On the equities front, European stocks are currently flat. Maybe there's a bit of staying on the sidelines ahead of these risk events then, with inflation, of course, and Nvidia. Yeah, and in terms of that US futures picture, flat and negative really on those stocks, down 0.2% on Nasdaq futures. That is it for the opening trade. Have a good day, everybody. The Pulse is up next. This is Bloomberg.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers, and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech. Every weekday, only on Bloomberg Television.
Bringing you the latest business news wherever and whenever it happens. I'm Scarlett Fu, reporting from America's biggest military shipyard. This is Bloomberg.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
The global economic playbook is being rewritten, and the levers of power are moving in real time.
To see where the world is headed, you have to look where the action is.
I'm Haslinda Amin in Singapore.
I'm Menika Doshi in Mumbai.
Welcome to Emerging the New Economy podcast.
Each month, we dive deep into how the world's most exciting rising economies are shaping the global future.
Join the conversation. Subscribe to Emerging on your favorite podcast platform today.
Nasdaq futures are lower ahead of results from AI bellwether Nvidia, what is now the key macro event ahead of US inflation data and Jackson Hole. Brent drops for a third consecutive day as Iran and Oman push ahead with talks on a temporary shipping corridor through the Strait of Hormuz. And Bloomberg understands the US is considering even more tariffs on Canada, with the trade war threatening to spiral. Well, those are your headlines. Welcome to Wednesday if you're just joining us on Bloomberg. Welcome to The Pulse. It's potentially set to be a big day in markets with PCE data and Nvidia on the docket. So here's how things are shaking out so far. We have Brent trading at $86 a barrel, down 2.9%, extending its decline on the latest in the Middle East, even if it's not really been enough to support equities in Europe. Nasdaq futures also lower 0.25% as we head towards those Nvidia numbers. Euro dollar pretty steady. 116 is where we trade after our interview with the ECB hawk Isabel Schnabel, saying rates might need to, well, must rise further before higher energy costs turn into higher wages and leave policymakers behind the curve. And Bitcoin there below the 80K level Our MLive team says we may have to wait for a bout of dollar selling off the back of an inconclusive message out of Jackson Hole to see the cryptocurrency's next leg higher. Now, let's also have a look at how European stocks are faring an hour into the cash trade. We've got the stock 600 not doing much, so masking what's happening beneath the surface. It's flat to the upside, and it's a more negative session, really, than we had anticipated. But under the hood, as you can see here, gains for the CAC 40 in Paris at 0.5%. The FTSE, one of the laggards this morning, down 0.1%, dragged down by the oil majors. But as ever, remember, it's late August, so these are relatively light volumes, and it's just the sort of environment where we could see volatility with such massive potential catalysts on the agenda. So it's a busy day ahead. Let's get you started.
Newsmakers and market movers. This is The Pulse.
Good morning and welcome to The Pulse. I'm Lizzie Burden in London. Now, the world's most valuable company will deliver its quarterly earnings report later today. The results from Nvidia are being closely watched by investors looking to gauge the state of the AI industry's massive data center expansion. Let's bring in Bloomberg senior strategist Neil Campling for a preview. Neil, how hard is it going to be for investors to be impressed by this report from Nvidia when we know that expectations are so high? Nasdaq futures down 0.25% this morning. Does the positioning heading into this report look healthy to you?
Yeah, morning, Lizzie. I think the positioning going into the result is, as you mentioned, it's the world's biggest company. So you probably wouldn't expect a significant move on the actual results itself. And often, actually, the realised volatility of the stock has been quite low on numbers itself. But as you say, it's really the barometer for the entire AI complex, which has trillions of dollars meaning around it. And if we look at whether it's the equity valuation is pretty low in terms of the price earnings multiple. The concern is in the other parts of the market, maybe in terms of the CDS spreads. Credit default swaps on Nvidia are higher for Nvidia than they are for the hyperscalers, which may surprise some people, given Nvidia is a cash machine generating significant amounts of free cash flow. So we're going to hear from Jensen after the numbers in terms of the outlook for the business. We expect it to be strong in terms of the absolute numbers because all the anecdotes suggest they will be. But it's really going to be about, I think as well, about the questions around that Bank of Nvidia type of issue, the circular financing, the backstopping of other deals. That, I think, could be a new area of focus for analysts on the conference call tonight.
Yeah, because it's really so interlinked with other companies, but they're also kind of competing with Nvidia at this point. We've had OpenAI saying that the new jalapeno chips it's created are better than Nvidia's when they've been tested. So as you have more of these companies developing homegrown chips, and Nvidia recently telling companies that it's going to have to hike prices, we've reported about 15%, where does that leave Nvidia?
I think, again, it comes back to the overriding idea that tech should be deflationary in nature. It should cut costs. It should be, to get ubiquitous usage, it needs to be deflationary. But of course, at the moment, we're seeing the AI cost being inflationary. They're significantly higher, particularly on the memory side. So the customers are all often going to look for alternative solutions, whether other providers or their own internal solutions, whether it's OpenAI, and we hear Amazon are doing similar, as have Google. So in some ways, Nvidia is a key customer to OpenAI. It's a key supplier of the chips, but it's also a financer of the OpenAI ecosystem. So there's all of these interlinks. And at the end of the day, we'll see the tech leadership play out over the course of the next 2 to 3 years to find out which of the ecosystems is going to be the dominant platform. And that's still unknown longer term.
Yeah, just in another part of the ecosystem, Bloomberg's learned that SoftBank is in talks about a potential $10 to $20 billion bond offering to help refinance a loan and its investment in OpenAI, so another part of this chain. Surely these are massive sums when you've got concerns about credit risks that you're already flagging and concerns about whether these investments are actually going to pay off.
That's right. We still don't know whether the classic return on investments, return on invested capital will come through or not. Now, what it appears from the article is that SoftBank are refinancing up to about half of the bridge loan they've had, so very expensive financing. I'm going to be really keen to watch what kind of rates they get on this refi, whether they can get good terms, because recently, as I say, we have seen increased prices. That we had the example of Alphabet in Australia paying the highest rate that we have seen for quite some time. So let's see what plays in terms of what they're actually going to get in terms of those loan rates.
Okay, looking forward to your analysis of the NVIDIA results. That's Bloomberg's Neil Campling, thank you. Well, where sentiment is boosted today, one of the reasons why is because oil prices are falling for a third day as Iran and Oman look to push diplomatic efforts to resume shipping through the Strait of Hormuz. For more, let's bring in Bloomberg Horizons Middle East and Africa anchor Abir Abu Omar. Abir, just tell us what we know about how this framework for Hormuz could actually work. Good morning.
Good morning, Lizzie. Well, what we know about it so far is that it's a temporary mechanism to reopen the Strait of Hormuz for the coming period. Of course, the two countries are going to go into further discussions to find a more permanent solution to resuming the traffic or the movement of vessels stuck in the Strait of Hormuz over the coming 30 to 60 days. That's, of course, according to a joint statement by Oman and Iran. Some other clauses that were mentioned or that we know about, Lizzie, is that they will both find a mechanism or a way to demine or find a way to remove mines or clear them to restore safe navigation through the Strait of Hormuz. And then one other very important thing that was mentioned is that there's also going to be some discussions about who's going to manage the Strait of Hormuz. Now, we don't know how that's going to sit with the United States and definitely countries in the Persian Gulf. And speaking of the Persian Gulf, we also have reason to believe that the statement had alluded that maybe Gulf countries are going to participate in the wider agreement. But of course, for the time being, this is a temporary measure just to get that stuck traffic in the Strait of Hormuz that has been there over the past 2 months or so to get a move. We don't know how that's going to translate into reality. And of course, we await that more permanent solution. Now, when it comes to the demining, which is a big part in all of this, of course, because it is the part that poses physical danger, Lizzie, on the traffic. President Trump did come out and say multiple times that the Strait of Hormuz has been demined. Of course, he never gave evidence to that assertion. Iran and Oman now say that this will take place. Of course, that was a big concern for countries in Europe and countries here in the Middle East. But a positive breakthrough, although it doesn't say much, it is positive. And that's why you're seeing Brent crude prices down for a third straight day, about $85, $86 on the barrel.
Okay, Abir, thank you very much. That's Bloomberg's Abir Abu Omar. Well, ECB member Isabel Schnabel says that interest rates must rise further as that lengthy conflict in the Middle East, as well as surprisingly strong Eurozone economy, the economy pose upside risks to inflation. I'm joined by Simon McAdam now, Deputy Chief Global Economist at Capital Economics, for analysis. Good to have you, Simon. I don't know if you've seen this interview with Isabel Schnabel. Of course, she is a hawk on the Governing Council, but when you have an ECB hike in September almost fully priced, do we need to wait for 2027 for another one?
I don't think so. As you rightly say, Isabel Schnabel has been consistently on the hawkish end of the spectrum in the last couple of years, and particularly since the Iran conflict began. But in terms of the rate outlook for the ECB, I mean, let's look. It's true that the Eurozone economy has been resilient in the face of higher energy prices. To some extent, the household savings have clearly acted as a buffer. We anticipated that to some degree. I think it surprised us and others as well, to the extent to which that has played out. But we're thinking about price pressures going forwards. There are next to no signs of indirect effects of the conflict feeding through. So you're going to have higher energy prices, obviously hitting consumers with higher fuel prices. Ultimately, that will feed through to higher electricity prices as well. But in terms of the indirect effects, things like how is higher fertilizer prices and how are fuel prices going to boost food inflation? To what extent is jet fuel prices passing through to airfares? Well, to what extent are some of these power generation costs diffusing their way through the price mechanism? So far, there's very limited evidence of that. Now, it's true that some of these effects are lagged. They do take time to feed through. Food inflation, for example, can take as long as a year to fully feed through into consumer price inflation. But I think the magnitudes we're looking at and the limited evidence of these sort of indirect effects we've had so far suggests that price pressures are relatively contained. We've had some of the survey indicators have started to see some of these price indices fall a little as well. And the big thing that keeps central banks up at night is the risk of second round effects. Is the labour market hot enough? Is the economy booming such that workers and firms respond to higher energy prices by trying to bid up wages in order to compensate themselves for a hit to their purchasing power, and I don't think there's very much evidence of that either.
But if you put the second round effects to one side, within energy, a nat gas price is more of a concern now for inflation than oil when it's the European picture.
That's right.
Okay, right. So where's neutral for you?
Well, I mean, to be honest with you, we don't even necessarily think that they needed to have hiked you know, already, right? Okay, we thought we've characterised initially when they hiked, we thought it would be a case of one and done. You know, that would be all that's necessary. That was predicated on the view that we wouldn't get a sustained increase in natural gas prices, and it was predicated on a relatively optimistic view that seemed to be prevalent at the time of the signing of the Memorandum of Understanding, that we would get a gradual reopening of the Strait of Hormuz. That has obviously come into doubt, and the longer that this conflict goes on, the longer that the blockade is in place, the bigger the risks are to energy prices. Now, you mentioned that gas being more important than oil for Europe. Absolutely, that's the case, and we're seeing natural gas prices rise. Stocks are at a seasonably low level. They really should be much higher where they are, considering we're coming into peak demand season.
Heading into winter.
That's it. So I think the risk here is that you do get higher gas prices feeding higher electricity inflation and higher food inflation. The question is, what is the state of overall demand? Is there going to be, the question for 2027, is the Eurozone economy going to be strong enough to allow to convert those transitory price pressures into a more persistent price pressures to which the ECB would need to respond forcefully? And I'm not convinced that's the case. It's true that the rhetoric coming from some of the Governing Council members and the stance of the ECB generally, I would say, we could characterise their reaction function as hawkish. So the risk is clearly towards there being a 1 or 2 rate hikes, but my base case is that the economic fundamentals don't justify them.
Let's also talk about the US, because of course we've got PCE coming out later. How hawkishly skewed are the risks from that print?
Well, I mean, not really. I mean, the print for the PCE deflator is we've already had the CPI and the PPI data, so we're pretty nailed on for a sort of around target consistent, slightly higher than target consistent print for the core PCE deflator. So we're looking at about a 0.2 monthly gain. Now, that on itself, taken in context with the softer labour market data that we've had recently, taken into account some of the softer activity data as well, suggests it's sort of dampening some of the appetite for a sort of a September hike from the Fed.
Okay, because the bets have been up and down when it comes to a September hike.
Yes, it's been a bit of a roller coaster, hasn't it? I think that we had initially ourselves, I thought that the September hike was most likely outcome, but always contingent on the July and August data releases, and it just turns out that ever since we had the July FOMC meeting, things have sort of been playing into the dove's hands.
Well, partly because, of course, of Kevin Walsh's communications.
Well,
We're going to hear from the chairman on Friday at Jackson Hole. Do you think that he needs to give more clarity on the reaction function of the Fed and his views on inflation to restore credibility to the Fed, or is Fed credibility just fine in your eyes?
It's a bit of both, really. In a sense, it's a storm in a teacup. And you know, it's like the big commentary we all had about whether Fed independence was under threat from Trump, and a lot of column inches was devoted to it. I'm sure a lot of interviews on this programme were devoted to discussing that issue, and generally speaking, it doesn't amount to a huge amount. Similarly, with the credibility of the Fed being brought into question by a bit of a flop at a press conference from Kevin Walsh, has probably overstated the significance of this.
So just a rocky start, maybe?
A rocky start, maybe, but I mean, what makes me only slightly marginally concerned is that, of course, it is a long-standing view of Kevin Walsh that he's not a fan of great transparency, and markets want transparency. So to the extent that he wants to manage market volatility, it makes sense for him to come out and try to give markets a little bit more in terms of what he's talking about, in terms of what inflation measures is he talking about when he's talking about inflation pressures more generally. You know, we want to know, in the past when we were talking about inflation targets moving, that was a question of central banks potentially moving the goalposts. With Kevin Walsh, it's a question that there are multiple goalposts and we don't know which one he's shooting for. And it'd be really good if he gave some indication about that. The problem is, of course, Jackson Hole's theme is about financial innovation and about payment systems.
Want to hear about
could
necessarily.
be a bit of a snooze fest, but there's a chance that probably a likelihood that he says something interesting.
But what about Scott Bessent's credibility, the Treasury Secretary wading into the bond market? You've been the voice of reason. Does he have a credibility problem, would you say? Because you've had the likes of Citadel saying that what he's doing is financial repression.
Oh, right, OK. So 2 things here. On that last point on financial repression, let's be clear, I don't believe he's doing financial repression at the moment. Potentially we're at the beginnings. What he's actually doing is debt management, I would say. So this buybacks of issuing short-dated bonds to buy back long-dated bonds on such a small scale, I think is a relatively minor technical debt management issue. I think moving forward into Q4, they might even change the issuance such that they, again, skew it more to shorter-dated bonds, to bills. But I'd still classify that as debt management. When we're getting the Treasury and Trump coming out and demanding that US financial institutions have to start hoovering up more treasuries, or when they start talking about potential regulatory changes in order to force them to do so, that's when we're in a world of financial repression. So I don't think we're there yet, even though I do accept that we could look back in a year's time and say this was the beginning of a move towards financial repression. But I don't think we're there yet. The broader point you have about Bessent and a credibility problem, it comes back to the difficult, sticky situation that the US finds itself in the Middle East. And clearly Bessent has been put under pressure to have to come up with something. The military means has not been sufficient to bring about the change the Americans wanted in Iran. Therefore, the onus is having to be taken up by the Treasury Department and what they can do with economic warfare. The latest announcements about the economic D-Day really doesn't add very much to what's already in place. Iran is already heavily sanctioned. It's largely an economic pariah. It's under blockade and its exports are largely stopped. So further economic sanctions are, one, unlikely to put on much more economic pressure, and two, likely to run all sorts of problems with managing the relationship with China, with whom the Americans, of course, have a famous meeting, much anticipated meeting in just a month's time.
Exactly.
So I'd say it's less of a credibility problem. It's just sort of symptomatic of the wider geopolitical problem that America is dealing with in the Middle East.
All right, Simon, thank you so much. Simon McAdam there, Deputy Chief of Global Economist over at Capital Economics. Great to talk to you this morning. Well, coming up on the Pulse, the Trump administration weighs more trade measures against Canada after Prime Minister Mark Carney unveiled dollar-for-dollar retaliation against new US tariffs. We'll get you the details next. This is Bloomberg.
The most important news and financial information whenever and wherever it happens. I'm Michael McKee on the Mexican border, and this is Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Burr.
I'm Lisa Mateo. And I'm Christina Raffini. We're tracking breaking news today from Wall Street to Washington. Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
I told the Prime Minister, no deal is better than a bad deal. And we have to go tariff for tariff and dollar for dollar. And it's unfortunate. We had an attack from President Trump on our sovereignty, on our country, on the economy, that we're so integrated. Both countries were both each other's #1 customer, and it just doesn't make sense to attack each other.
Ontario Premier Doug Ford there on Canada's response to new US tariffs. Well, let's bring in Brendan Murray, who leads Bloomberg's global trade coverage, for more. So where do things stand in this trade war, Brendan? What's in the US arsenal to reply to the retaliation from Canada?
Yeah, I mean, in the span of 48 hours, we've gone from the strident response, the insults, to really the silly stuff. The President Trump saying he wants to change the name of Lake Ontario to Lake America. And so we've sort of run the gamut of President Trump's calling cards here. And we've heard some noises from the Canadians that, you know, they're now facing the tariffs. They're paying the tariffs, and Canadian consumers and businesses are feeling the weight of that. And there seems to be some softening of the tone. Doug Ford, you know, talking about how, look, we're each other's biggest customers. So this tells me that we're headed back to the negotiating table at some stage, whether it's in the next 2 weeks before Canada's tariffs take effect, or they kick the can down the road and they try to put something together before the end of the year. But the bottom line is neither country really can afford to go into a full-blown trade war. Remember, this is just a small segment of the trade that goes back and forth across the border. It's not going to have a huge economic impact. I think one of the estimates from a Canadian economist was 90,000 jobs are at stake in this current situation. Any job loss is not great, but 90,000 is not going to tank the Canadian economy. So both sides here have an incentive to get back to the negotiating table.
What have CEOs been saying then about the hit to business? Because we know that Carney's promised to try and make some damage limitation.
Yeah, exactly. So, you know, the auto companies are the main ones that a lot of people are focused on. They have the most at stake, the supply chains that stretch across both countries. And, you know, it's going to cost them. They're very careful to not say anything too publicly because they want to stay on the right side of President Trump. But what we're seeing in the Canadian media are the small businesses, the importers of American goods and the exporters who are already seeing the price tag of the things that they sell go up, and it's difficult to pass on big price tag increases when both countries are really facing kind of an affordability crisis, to use the political phrase from Washington.
Okay, Brendan, thank you very much. That's Bloomberg's Brendan Murray. Now, turning over to Bitcoin, because it surged 25% last week with the renewed chatter about the debasement trade, bringing it back into favour. Let's bring in Bloomberg senior crypto editor Ryan Weeks for more on this. So Ryan, how much can we attribute the rise in Bitcoin to Scott Bessent's buyback plans? Is this actually evidence that the debasement trade is back?
Well, it was certainly a big factor. Bitcoin was created with anti-inflationary properties in mind, to exist beyond the purview of government, and so Bessent's intervention was seen as, you know, creating a favourable macro backdrop for Bitcoin, and that really played out last week. The weekly gain you mentioned was the biggest in percentage terms in 3 years, I think. We've seen ETF buyers, Bitcoin ETF buyers, come back in numbers. I think the inflows last week, again, were the strongest for something like 10 months. So certainly a big factor. Another was more regulatory in nature. So there was a meeting between Donald Trump and industry executives at which he, called for the Clarity Act, which is a market structure bill in the US, to be pushed ahead with after it had stalled recently. So that was another big driver for Bitcoin.
But everyone was saying, you know, when you get past 80K, it's a psychological level. It's only going to go up from here. We're actually below that level now. So what do you think the next catalyst will be? Could it be Jackson Hole if we don't get much of a conclusive message from Kevin Walsh and you see dollar weakening off the back?
I mean, that could certainly further bolster the idea that this is a very favourable backdrop for Bitcoin. I think, again, the other near-term catalysts are regulatory in nature. The Clarity Act, any sign of progress on that would be looked on very favourably. The other potential driver is that Trump and the CFTC have signalled their intent to try to bring perpetuals, which is a trading instrument for crypto, the most popular in crypto, in fact, into the US, and to have regulated issuers of perps there. It's not so directly relevant to Bitcoin, but for the crypto market as a whole, that would be seen as a very bullish signal.
Okay. Ryan, thank you very much. That's Bloomberg senior crypto editor Ryan Weeks. Now to some of the other stories we're following for you this morning. Bloomberg has learned that Huawei has pitched Egypt on building AI data centers for military surveillance and other public sector use. If successful, the project would mark early but meaningful progress for China's campaign to challenge American dominance in global AI infrastructure. We're told the Trump administration has approached NVIDIA, AMD and Microsoft about assembling a US counteroffer. And the Queen of Country Music, Dolly Parton, has died in Nashville at the age of 80. She emerged from extreme poverty in rural Tennessee to become a renowned songwriter, singer, performer and businesswoman, known and loved for her one-liners, rhinestone-studded outfits and blonde wigs. Some of her most famous songs include Jolene and I Will Always Love You, which was also covered by Whitney Houston back in 1992.
Western countries, all of them are cutting funding to Africa. And some of these programs were supported by funding coming from Western countries, like for human resources, for testing, for transportation of samples. And suddenly, African countries have to think how to fund money and to cover this gap. But it takes some time. And I think the combination of all of these factors are fueling this mistrust that we see at community level. We value the support we got and we are still getting from the US. And we think that if we continue to work together, and there is no reason for the US not to work with Africa CDC, Africa CDC is the leader in terms of public health in Africa.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Good morning and welcome to The Pulse. I'm Lizzie Burden in London and these are your top stories. Brent drops for a third consecutive day as Iran and Oman push ahead with talks on a temporary shipping corridor through the Strait of Hormuz. Bloomberg understands the US is considering even more tariffs on Canada, with the trade war threatening to spiral. And Nasdaq futures are lower ahead of results from AI bellwether NVIDIA, the key macro event ahead of US inflation data and Jackson Hole. Well, staying with the AI trade, and Nvidia is expected to continue growing at breakneck speed when it reports later. Let's bring in Ven Ram from the Bloomberg MLive team for more. So Ven, we're talking to you about this because at this point, Nvidia's results are a macro event. It's got a macro market cap of $5 trillion. But you say that Europe's going to benefit no matter what the immediate fallout. Why?
Morning, Lizzie. I think that, the optimism on Europe is kind of well-founded because, if NVIDIA does well, the outcome is going to be pretty binary regardless of the results. If NVIDIA does well, then that is going to boost some of the technology and semiconductor names that are prevalent in Europe where there is scope for earnings compression. But if the results are bad, then Europe becomes a defensive play and a diversification asset because where else are investors going to chase yields, earnings yields? I mean, Asia is stretched, valuations are stretched for the same reasons as in the US, which is technology overladen. So Europe offers a safe diversification avenue for that, particularly in the UK, because, if you look at the UK and the Euro Stocks 500, I think that the earnings yield, available earnings yield is north of 6%. That is not to be scoffed at. You won't get anywhere near those kind of pickup anywhere in the developed markets. Not only that, if you look at the historical PEs, the current PE in the UK is well lower than the historical PE. So the markets are kind of undervalued. And if you look at the equity risk premiums, which is the excess in earnings yield over the 10-year yield, German yield, that is also pretty high in Europe and in the UK. So all in all, valuations look compelling. And if the theme of the markets is going to be rotational play, I think that the scope for earnings compression is the most likely in Europe.
Okay. I also want to get your take on the bond market this morning, Ven, because we were talking about all of the skepticism from Wall Street about Treasury Secretary Bessent's bond buying plans. And yet, are we actually seeing signs that the Bessent put's working?
It is working for the time being, as it is meant to work, because there were a lot of short positions on long-dated treasuries before Bessent's announcement of buyback. So I think that it is only natural that some of those short positions have been unwound. But the question is, the longer-term question remains, what is the Treasury's plan to cut the deficit and what is the Fed's plan to cut inflation? And on neither of those fronts are we getting any kind of material development. Walsh, of course, is going to speak later this week. But what is he going to tell us about inflation that he isn't already said? We know that he sounds very hawkish on inflation, but is the Fed as a whole, as a committee, willing to act on that conviction and raise rates to get inflation to 2%? We are going to get the core PCE reading today, and that is going to show another reading of 3.3%. And somehow we have come to accept 3% as the kind of de facto normal. That itself says why treasuries are under pressure, and that pressure is going to continue.
Yeah, and surely it's going to get harder and harder for Kevin Walsh to sound hawkish as we get closer to the midterms if he misses the chance at Jackson Hole. Ven, thank you for the analysis. That's Ven Ram from our Bloomberg MLive team. Now, turning to Europe, and France is heading into a new season of political brinkmanship that'll test investors' patience with a showdown over the country's towering debt. We can get more now with Bloomberg's Caroline Conan. She joins us from Paris. Caroline, we've got yields at multi-decade highs around the world, but also in France. Parliament gridlocked. Budgets are always dramatic, as we know. You've covered many of them for us. But just how perilous could this last finance bill of Macron's presidency be in the context of his 10 years in power?
Of course, you have the global geopolitical uncertainties weighing on these bond markets as well. But in France, you have this whole domestic uncertainty over the next few weeks and months. First, over the budget that needs to be passed by the end of December, with this very fragile Prime Minister, Sébastien Lecornu, who just 1 year ago actually decided to quit and then come back a few days later. So clearly, that's going to be, again, a showdown over the next few weeks. As you can see, the debt servicing cost of France have been surging with these high interest rates, and at the moment it's 65 billion euros of debt servicing costs for this year, could go up above 70 billion euros next year, and France hasn't really managed to cut properly the deficit over the past few years. In fact, last year's target was 5% of GDP, and this year, for the next budget, it's probably going to be a similar target, about 5% of GDP, so clearly very far away from the EU target. And just before an election, it's difficult to imagine that the Prime Minister, with this fragmented parliament into 3 blocks, is going to manage to really cut spending and really bring the deficit below this 5% threshold.
Well, yeah, when you look at the candidates in the French presidential elections, which are fast approaching, none of them seem to be promising to cut spending. So surely then French yields are only going to keep climbing.
And if you actually look at the 2 leading candidates in the poll, the far right Marine Le Pen and the far left Jean-Luc Mélenchon, the main risk that the markets are facing over the next few weeks and few months is a possible runoff, a second run in the presidential elections, with these 2 candidates of Jean-Luc Mélenchon and Marine Le Pen facing each other. Jean-Luc Mélenchon, who actually, as soon as this month, said that French debt needs to be put in the freezer. So basically asking the ECB to do some sort of haircut of French debt. Before that, he was saying that French debt should be actually sent to fire. So clearly not many big plans here to cut French debt and to cut the deficit. If you look at Marine Le Pen's plans, we don't have the details of the manifesto quite yet, but mainly she wants to cut France's contribution to the EU and to cut the welfare spending to immigrants. So not really structural reforms here in order to really bring this deficit down over the next few years. Edouard Philippe, one of the other leading candidates, is actually proposing a 10% reduction in state spending. So that's one of the proposals. And in fact, tomorrow night, we're going to have the MEDEF Business Lobby organizing a debate with 7 candidates facing CEOs of small and medium enterprises. So we'll see what the questions are. That may be actually an interesting debate to find out a bit more about the economic plans of these candidates.
OK, we'll look forward to your reporting on that then, Caroline. Thank you very much. That's Bloomberg's Caroline Gonnin in Paris. Well, of course, here in the UK, we also have a fiscal dilemma. Prime Minister Andy Burnham refusing to rule out tax rises in the autumn budget, saying that he, quote, won't be unrealistic about the state of the public finances. Joining us now to discuss what British businesses want to see in the budget is Anna Leach, Chief Economist at the Institute of Directors. Anna, great to have you round the desk. So when you're talking to British businesses that you represent, what sort of policies or reforms do they want from Team Burnham to keep operating in the UK?
Well, of course, I mean, you mentioned tax. What they would rather like is a tax cut. Certainly not.
Wouldn't we all?
Wouldn't we all, yeah. They certainly don't want any more tax rises. They would like tax simplification and certainty, because that's one of the key challenges they face. They want regulatory costs to come down. There is a target for that. That needs to be pursued as well. They want electricity costs to be brought down as well to make British business competitive again too. So these are many things that have been around for quite a while for businesses, and they're just getting a bit sharper.
You mentioned certainty. Is there a sense among your members that they're going to hold back on investment and spending until we know what comes out of the budget?
It rather depends on the sort of commentary trajectory from here, because at the moment, you know, we're quite early on in the new Prime Minister's tenure. Speculation hasn't been massively high regarding tax changes in the budget, as you say, a little bit, and he's, you know, ruled out discussing it, which is the right thing to do. So at this point, you know, compared to the last 2 years, it's not the kind of environment which is where the politics is going to be a particular pressure on investment and hiring trends. The challenge is the broader environment applying pressure. We've got the Middle Eastern conflict persisting. We've got the ongoing sort of ratcheting up of employment rights and the implementation challenges that those represent for businesses. And those are the kind of pressures which are really sort of holding back some of those big spending decisions.
Okay, so more about the external headwinds. But, you know, when you look at Team Burnham and the fact that Jim O'Neill didn't want to be a part of it, he says because he's got other jobs to do and they're very exciting, he wants to concentrate on them. Does it knock your confidence in the administration when we know that Jim O'Neill would have been against, for example, wealth taxes and higher capital gains taxes?
I mean, it's difficult to read, isn't it? Because, of course, his position is understandable. He didn't want to be compromised in his sort of investment choices and broader positions, which is fair enough. But we also haven't had any more about, you know, what might a formal advisory role look like for Richard Hughes. That would have been an interesting...
Former OBR chair, of course.
Indeed, which would have been an interesting person to have on board. And, of course, Andy Haldane as well, who's also got a BCC, British Chambers of Commerce, hat on as well, so brings a bit of the business acumen to the fore as well. There's been talk about his engagement with the new administration. So, I mean, that feels a little bit, you know, that's a little bit hard to read. And I think elsewhere in what's coming out of Burnham and Friends is a little bit hard to read as well, because on the one hand, the devolution agenda and some of the more boring but important behind-the-scenes administrative changes, so number 10 North, but also, you know, reframing the Cabinet Office and sort of rebuilding the connections surrounding that to enhance implementation. That all looks quite good for growth.
It looks good. Okay,
yes.
So it's not just, you know, moving the deck chairs on the Titanic. It's actually going to materially move the needle for economic growth in the UK.
It could, because what they've been doing is, like, so this machinery of government changes, so hence I describe it as kind of dull. It's not the headline rebrand that number 10 North is. It's the stuff that actually matters. So how do we actually connect up the right policy, powers, levers and competencies behind the scenes to enable devolution to be delivered effectively? So what's happened is some powers have been taken from Treasury and MHCLG in relation to devolved economic policy authority. Cabinet Office has been reshaped. There's this new National Economic Council, I think it's called, has been recreated with mayors on board to try and bring together all the right parts of the growth.
But does that growth come fast enough for the next election in 2029?
This is the challenge, right? So it's all the right stuff. Everything. I mean, that's part of the challenge, really, right? It's like everything that is good for growth and the UK needs to do delivers relatively slowly. And we don't have huge amounts of money to spend either. So, I mean, this is the big problem. It's a lot of slow, hard, disciplined work, like cost of living. Actually, you can't, it's not easy to solve. We don't have loads of money to alleviate the pressures on budgets.
But the good thing is, when you look at the data lately, the PMIs, the confidence numbers, actually they're pretty rosy. So do you think that this kind of boosterish tone from Burnham actually has a material economic impact, unlike what we saw with the Starmer administration's debut and the gloomy tone from Starmer and Reeves?
I mean, absolutely, because actually what we saw with Starmer and Reeves and the run-up to the two budgets, it did have a deleterious effect on growth. The OBR highlighted it, actually, in their last budget assessment, that they thought it had led to weaker economic growth in the second half of last year. So, of course, yes, having a clearer communication strategy and being a bit more upbeat is likely to have a little bit of a boost for economic growth. And yes, you're right, there's been some like positive upside surprises on economic growth. Inflation isn't dreadful, given what's going on in the Middle East. The challenge, of course, is that, you know, the labour market is still weak, inflation is going to rise further, that's going to compromise real household income growth. So you've still got these sort of broader economic pressures which are going to be continuing to constrain things and keep growth around that rather limp 1% rate.
Well, we've seen such dissent on the Bank of England. How do you see the path ahead forming when you know, as you say, there is that debate about whether the labour market's weak enough to keep a lid on inflation.
Yeah, well, the two things they're looking at, as we know, is what's going to happen with wages and what's going to happen with price setting by companies. So the labour market, all the reads on the labour market look so fairly subdued. Vacancies are continuing to fall. Wage growth is coming down relatively in line with expectations. So the labour market side, it looks like that's not going to be a major source of inflationary pressure for the Bank of England to be concerned about. The interesting thing will be, like, if we've got this sort of reinvigorated confidence and economic buoyancy, does that create conditions which firms are more able to pass on price rises? So does that create an additional source of inflationary pressures? Meanwhile, we suspect that food price inflation is going to become higher still later in the year. It's expected to go up anyway because fertiliser costs, etc., have pushed up. But we've had, you know, worst harvest probably on record in the UK, and harvest impacts across Europe as well. So that's going to have an inflationary impact. And we know that's the measure that consumers look at and worry about. So it's still a bit complicated, but at least it's there. It's nice to have a bit of better news recently.
Isn't it indeed, Anna? Thank you very much. That's Anna Leach, Chief Economist at the Institute of Directors, with the business view on what's happening in the UK economy. Well, coming up, Banco BPM is signalling scepticism over Monty Paschi's takeover offer. So we'll get more on the M&A next. This is Bloomberg.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg, the China Show. Weekdays around the world, right here on Bloomberg. Context changes everything. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. This week, Bloomberg is live at the Jackson Hole Economic Symposium. Tom Keene and Lisa Abramowitz, along with Michael McKee, will bring you news and interviews with Fed leaders, policymakers, and economists shaping global monetary policy. Tune in for continuing coverage and a special episode of Surveillance, August 28th at 9 a.m., including full coverage of Kevin Warsh's first speech to the conference. The Jackson Hole Economic Symposium on Bloomberg. Context changes everything.
This is The Pulse. I'm Lizzie Burden in London. Now, OpenAI says its new in-house chip outperformed NVIDIA's current flagship processor in key tests measuring efficiency and response speed. Chip chief Richard Ho told us exclusively that the goal is to deliver more intelligence to users at lower costs.
The benchmarks that we did were with an open source kind of benchmark called Inference X. And we did that because it was a fair, kind of neutral benchmarking method. What we're seeing with Jalapeno is that we're able to get both high throughput and low latency with the same device, which is a kind of a first in the industry. And why does this matter is because high throughput means that you can serve a lot of customers with a lot of tokens much cheaper than you could if you otherwise. Low latency gives you very fast response times. And so, the agents will come back faster, you can do, more coding quicker, and that really, I think, is a real benefit for our products.
This is it. This is Jalapeno. You very graciously allowed me to get my hands on it. And again, the whole emphasis is on throughput and ultra-low latency. This is an inference chip.
It is.
So very simply, why focus on inference, not on the training side with your custom silicon program?
Well, I think that if you look at it, right, OpenAI has this enormous need of compute. And where that growth of compute is really on the inference side. We need a lot of training, and we have a really strong partner in NVIDIA who has, really got a great training chip. So we focused on where we thought we needed to increase the amount of compute that OpenAI has available. With the growth in our users, with our weekly active users growing very, very fast, we saw the need to continue to have a wide range of inference products, and this is going to be part of our fleet, along with our existing partners who are providing us other chips.
How do you decide which workload goes to Jalapeno versus NVIDIA or Cerebras, for example? You have options, but how do you make that decision?
It's a great question, right? I think with this optionality that we're now creating for the company, I think that we will be able to provide users with a range of models that have different cost benefits and different latency capabilities. We will map that ourselves. We will map out which product, which SKU, which chip is best for which one of these models. But the whole goal of this is to deliver more intelligence to our users at a lower inference cost, at a lower infrastructure cost. And that's what this is part of, that entire strategy that we've been working on for a while now, right?
Lots of people struggle with the benchmarks. To the lay person, it's difficult to decipher. So in very simple terms, on a dollar per token basis, how does Jalapeno stack up against the other options that are out there? How has this changed the economics for you?
It should drop it. It's a really good chip. It should drop it by a lot. The performance per watt that we're seeing, which is a good proxy for how much token will cost, is somewhere in the region between 1.8 to 4x better than other existing chips right now. And so we should see that ultimately when this rolls out into production, customer token prices should come down. That's a big drive that we've had at OpenAI for a little while now. And this really is part of that strategy.
OpenAI chip chief Richard Ho speaking exclusively to Bloomberg Tech anchor Ed Ludlow in San Francisco. Now let us turn to Italian banking M&A, and in the latest news from the acquisition saga, Banco BPM has indicated scepticism towards the takeover offer it received from rival banker Monte dei Paschi. The lender's board acknowledged the unsolicited offer, but said that the bid does not recognise a premium for its shareholders. Let's get more on the saga with Tommaso Ebhardt, Bloomberg's Southern Europe managing editor out of Milan. Tommy, we all knew it was going to be a tall order to get this over the line, let alone at the same time as buying Banca Generali. But is Paschi's plan looking like a non-starter at this point?
Ciao Lisi, buongiorno. It's an ambitious plan. We heard last night the initial response by Banco BPM, who had been talking for a combination with Monte dei Paschi for months, if not years, until they stopped a few weeks ago. And the board said, this is unsolicited and there's no premium for us, so it doesn't look they appreciate it. But at the end of the day, it will be a matter of shareholders' vote. So which are the next steps? First of all, 29th of October, Banca Monte dei Paschi di Siena shareholders needs to approve the twin bids for Banco BPM and for Banca Generali, and then the offer will go to the shareholder of those two banks. In the meantime, Intesa Sanpaolo, Italy's biggest bank with UniCredit, is going ahead with this bid for Banca Monte dei Paschi di Siena. And if you want to add some complexity, the Italian government, which still owns a share of Banca Monte dei Paschi, had decided to hold off to a sale of its remaining stake in Monte dei Paschi, not to interfere in this incredible saga about Italian banking.
So even more hurdles to come then. Do you get a sense that Paschi investors will be on board at the meeting?
That's a good question. CEO Lovaglio needs 2/3 of investors to approve his plan because Monte dei Paschi is under so-called passivity rule, because he's under Intesa bid. It's not going to be easy. He needs the approval of some of its main backers, which include, for example, the Del Vecchio family, the billionaire family which funded EssilorLuxottica, is the biggest investor in Banca Monte dei Paschi di Siena. But that family itself is facing a very difficult succession issue. 4 years after Del Vecchio died, they haven't agreed on the succession, and the news of yesterday is that one of the heirs resigned from EssilorLuxottica. Are they going to support Lovaglio? Are they going to give the share to Intesa? It's a big question. We don't have an answer so far. We'll try to find something for you in the next days, weeks, or months.
All right, I'll hold you to it, Tommy. Thank you very much. That's Bloomberg's Tommaso Ebhardt in Milan. Well, let's check in on these markets as we wrap up the hour. And we have been seeing Brent there weaker by 3% now on the latest in the Middle East, $85 a barrel on Brent. It's not doing that much to support equities. We've got NASDAQ futures lower by 0.2% as we head towards those Nvidia numbers after the bell. Here in Europe, the Stoxx 600 is only flat to the upside. Euro dollar pretty steady, despite the hawkish comments from Isabel Schnabel saying there must be a hike from the ECB. So 116 is where we trade on euro dollar, and Bitcoin still below the 80k level, but maybe we'll get another leg higher later on in the week when Jackson Hole comes. That does it for the Pulse. Bloomberg Brief is up next. We'll pass you from London to New York. Good morning. This is Bloomberg.
Investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world, the Dealmaker playbook, where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. Great scoop on this. You've been reporting about an activist investor coming up and trying to shake things up. What's the latest?
We've been hearing that there was going to be an activist at some point. The question was who?
There is a convergence of technology and national security.
The United States is a big country. We're playing in the Northeast. That's an economy as big as the United Kingdom.
This is a really interesting space to watch. We're expecting more consolidation. As this is Bloomberg Deals at Bloomberg Invest, I want to talk about the broader deal and M&A environment.
This is a moment in time. We'll see how long we're here. It's far too early to call.
There is an underinvestment in what's going on in private markets because everyone's looking for additional AI cloud capacity, and it's very tough to build.
Everybody wants to get things going, and the IPO market is just one symptom of that. It is an early indicator of what we're going to see in the M&A market.
Let's go to Scarlet Fu, who's taking a closer look at drone companies. With ongoing conflicts in the Middle East and Ukraine, there's renewed investor appetite for new names in the space. Excellent reporting. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers, and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech. Every weekday, only on Bloomberg Television.
What is going to be the consequence for U.S. markets? We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
It's 5 a.m. in New York City, 10 a.m. in London. Good morning, I'm Vonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. Futures and treasuries dipping ahead of Nvidia earnings and the PCE inflation data. Trade tensions intensify as the U.S. mulls additional measures against Canada.
And oil slips for a third day as investors await a potential interim deal between Iran and Oman on the Strait of Hormuz. All right, it is a big day for the AI trade. Let's kick things off looking at markets around the world. Here's Alice French in Tokyo for the latest from Asia. Alice.
Good morning. Yes, look, we've been in somewhat of wait-and-see mode, I think, here today ahead of NVIDIA. We can see the benchmarks did find some strength later in the day, but we opened pretty weak. Tech shares, including those big chip makers like SK Hynix, seeing some selling. I think a lot of investors sort of holding off until we find out more from the NVIDIA report. Elsewhere in the yen, we can still see it holding around that 159 mark. We do have some comments from the BOJ Deputy Governor Himino coming tomorrow. I think a lot of people will be watching for how hawkish she's going to be ahead, of course, of the BOJ's meeting in September, and we'll see if we do see any weakening towards that 160 level.
All right, Alice, thank you so much. That is Alice French in Tokyo. Now let's take a look at Europe. It's obviously low volume, end of summer type of trading, but we are seeing some gains in Europe. This primarily on anything related to copper and miners and so on, pulling things higher, but also the luxury names carrying LVMH, they're doing pretty well in today's session. If you look at London, we've just dipped into the red. That was higher as well a little bit earlier. Again, Anglo-American and all of these commodity-related names doing well. Not so much, though, the commodity names related to the oil trade, because as you can see, Brent crude is down another 3%, and we are touching $86 a barrel now on Brent crude. Obviously, software has a lot to do with this as well. Zoom and Intuit disappointing in the United States yesterday, so SAP and Dassault, for example, are lower. Let's take a look at some of those commodities that I mentioned, because we're closing in on a record for copper. We're up 16% this year on copper, and that's also having an impact. If you take a look at gold, we're already up 15% just this month on gold. We came off the boil a little bit yesterday and again today, but we're still at 46 and change an ounce. And then I did want to point to European natural gas as well. It's going to be a real tough winter. Apparently, the prices are going to be at their highest in 3 years, particularly in the UK. And while Labour said it was going to save everybody £300 on those prices, they've already risen by more than that per year per household. Let's take a look at the United States, because that overhang from Intuit and Zoom obviously are going to impact the trading in software names today. Now, software and services has been doing the best in the S&P 500 this month, and that's likely to change. As you can see, futures pointed just very fractionally lower. NASDAQ futures also pointed lower. NVIDIA did snap that 7-day losing streak yesterday, and the SOX index was higher as well. NVIDIA, though, ever so fractionally higher in the early trade. Let's take a look at yields, because they are lower once again today. Now, oil playing a big part in that. There's also discussion about how much Scott Bessent's intervention is actually impacting this trade. The 30-year yield, as you can see, well down to below 518. And if we look at the 2-year yield, we're off yesterday morning's highs. We're at 419.70 as traders await Jackson Hole. And of course, more inflation data today, which is expected to look a little soft. Let's get to some individual market movers now. For that, we'll go to London and Chloe Melly.
Good morning, Bonnie. As you were mentioning, we are seeing NVIDIA slightly in the green this morning ahead of those earnings. Of course, those results will be really key to understanding where the AI trade goes next, as we still have all of those worries around this potential AI overspending. So we could see maybe some cautious optimism there ahead of this report. Moving on to Intuit, which is a tax preparation software company and has disappointed investors with quite a weak outlook, which analysts have said points to maybe a deceleration across many different segments, and is really weighing on that stock this morning. We're down about 11%. And finally, another software stock that is also in the red today, that is Zoom, which has also provided quite a weak outlook, and that is despite the fact that it released a bunch of new products that include new AI features. And so we are seeing this slightly muted outlook really dragging down those shares this morning, and we are down about 6% in pre-market trading.
And no doubt it will have an impact on today's trade. Chloe, thank you so much. Chloe Melly there will be back later in the hour. We're going to be drumbeating as well to the PCE data and, of course, Jackson Hole and the war speech with Matt Maley of Miller Tabak. First, though, stock futures slipping ahead of NVIDIA earnings after the market closed today. Traders holding back while they wait for key gauges on AI's massive expansion. Joining us now is Bloomberg Tech Europe host Tom McKenzie. Tom, we're looking for 108% growth in data center revenue, margins at 75%. What else will be investors keying in on?
Yeah, just 100% growth, as you say. Look, revenues are expected to double to more than $92 billion in the second quarter. Earnings per share expected to come in at above $2 per share, around $2.06. So we're watching that as well. Really, the focus is going to be on what they guide NVIDIA and the team, and Jensen and the team, in terms of that demand, what the backlog is looking like, and how quickly they're ramping up the Vera Rubin as well, how much demand there is for that most cutting-edge GPU that they've produced. But you're right to point out the margins, and the gross margin has come in at typically around 75%. Can they preserve that margin in the face of higher costs, particularly when it comes to memory? HBM, high bandwidth memory, we know the prices there have soared, and the reporting they've already had to talk about putting up prices for some of their key customers. So the margin will be in focus as well. When it comes to the customers, to what extent are they broadening, if at all, that customer base that is quite concentrated? That may be an area of focus as well for analysts. And then there's the competition part, and we've been speaking, the team stateside, been speaking to the OpenAI chip head about that jalapeno chip that they've produced, which could compete with NVIDIA on some levels when it comes to inference. Other competitors out there, Google's TPUs, of course, Amazon's building its own silicon. So the competitive story and anything that NVIDIA has to say to address that could also be interesting. But really, it's going to be about the backlog, and it's about the margins, I think.
And also, Tom, the constraints, right? What's the bigger constraint now for the likes of NVIDIA? Is it financing? Is it shortages? Is it the supply chain?
They have this epic grip on the supply chain, which is why the fact that they had to raise prices, or at least are asking their customers to increase prices or to absorb prices that are up to 15% higher on some of their servers was notable. They have this incredible grip on the supply chain, but even NVIDIA, it seems, is not immune to higher memory prices. Maybe it suggests that they have pricing power, that they have such a strong grip on the GPU market, that their chips are so in demand that they can afford to be able to push up prices without risk of their customers going elsewhere to the likes of AMD and others. Interestingly, this is also a company, of course, that is central to that financing around the AI ecosystem. Bank of America pointing out that if you look at their equity investments in companies like OpenAI and Anthropic, that amounts to about $70 billion US. That is still only about 15% of their expected free cash flow. So they can afford to do this at the moment, but how far do they want to go along that route with rates moving higher as they are?
Tom, Huawei has pitched Egypt on building AI data centers. Washington apparently assembling a counter-offer. Is it a lock for China at this point? China already has a lot of influence in North African countries.
You're absolutely right. They've spent a lot of time building out diplomatically and business ties with Africa and with Egypt. This deal is not a lock yet. This is Huawei that has put a bid in for this tender offer for the Egyptian government to build out data centers for military capabilities, for surveillance capabilities, for other public sector uses that would include the use of Huawei's most cutting-edge Ascend 950 chips. It has drawn the attention of Washington, not a big surprise. The Trump administration apparently picking up the phone to NVIDIA, AMD, and Microsoft saying, can we get a team together to put forward a competing bid for Egypt? But really fascinating in terms of how Huawei and China is thinking about trying to have that involvement in terms of data center build-out and chip shipments outside of the China market. And if they can get that foothold, it would be small, but it would be nonetheless pretty meaningful for Huawei and for China.
Yes, the global AI race very much top of mind today. Tom, thank you so much. Bloomberg's Tom McKenzie. Treasury yields retreating across the curve ahead of July's PCE print. Those numbers coming in at 8:30 Eastern, along with GDP and personal income and spending data. Joining us now is Bloomberg's Sven Ram. This rally in Treasuries, Sven, how much are these declining yields due to just oil prices down for 3 and 4 days straight? And how much is it really to do with Besson's so-called intervention, which hasn't even actually happened yet?
Well, I think that it's more of the former at the moment because, you know, we have seen a significant tumbling of oil prices this week alone. And if you look at the tumble in oil prices, what it means is that, you know, the average oil price this year is still below the baseline estimate, for instance, for some of the major central banks, the ECB and the Bank of England. So I think that, you know, that is giving the immediate spur for the moves. But of course, Besson's buyback announcement is also helping sentiment because it's taken out the shorts that were in the market, that were in play. I think that the markets, the vigilantes will recongregate, but I think they will need to wait for a catalyst. So to answer, the short answer to your question is, for now, yes, the thaw in sentiment is for real.
You know, if treasuries are seeing short-term outperformance now due to the fact that Besant is perceived to be interventionist, will that hurt eventually longer term?
Yes, absolutely, because what he is trying to choreograph is what is happening to the yields, which is a symptom of the bigger problem. The bigger problem, as we have spoken many times about, is the deficit. Is the persistent deficit and the burgeoning deficit. The other issue is, of course, inflation that is unchecked. Last year, we were on this program talking about core PCE readings of 2.7%, 2.8%. Even that was stretched. Now we are in a milieu where we are talking about 3.2, 3.3%, as though the de facto inflation target for the Fed is 3% now. So if a nominal bondholders are being forced to underwrite bonds that have a coupon that's going to be corroded by inflation, or in 30 years' time, what is to say that in real terms they will come out ahead? If they can't answer that question with an overwhelming yes, they're going to suffer a loss, which means that treasury yields have to go back up higher again.
Then, is it a bigger risk if Kevin Warsh says really much of nothing about particular market conditions or what the market is expecting him or hoping for him to say, or that he actually does give us something?
If he gives us something, that will have at least the market something to trade off, because so far what the markets know is here is a person who talks very hawkish, but when it comes to delivering on that hawkish message, he seems to be wanting ratification from several committees that he's instituting. So I think that the markets are short on conviction that he's going to actually act on his word, and the markets will be looking for any clues whether that has changed in terms of his reaction function.
Ben, thank you so much for guiding us this morning. As always, that is Bloomberg's MLive's Ben Ram. Now, two other top stories trending on the terminal this morning. SoftBank is said to be talking with investment banks about a potential $10 to $20 billion bond sale to help refinance its stake in OpenAI. According to sources, the offering could come as early as September. Talks are still ongoing. Details could change. Citadel Securities reversing its bearish call on long-term treasuries. The firm's head of macro, Frank Flight, says the risks now favor lower long-term yields, citing improving inflation data and crowdish bearish bets. Just last month, Flight had warned of a cruel summer for U.S. bond investors. Sheehan's existing investors are agreeing not to lock up new shares, allocating them to its Hong Kong IPO for 6 months. Current backers are expected to take a significant portion of the offering, which could raise as much as $1.8 billion. Coming up, the U.S. and Canada trade battle heating up. Washington now weighing more measures to counter retaliation. More next. This is Bloomberg.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Only on Bloomberg.
Bringing you the latest business news wherever and whenever it happens. I'm Scarlett Fu, reporting from America's biggest...
Only on Bloomberg Television. Context changes everything.
I told the Prime Minister, no deal is better than a bad deal. And we have to go tariff for tariff. And and dollar for dollar. And it's unfortunate. We had an attack from President Trump on our sovereignty, on our country, on the economy, that we're so integrated. Both countries were both each other's #1 customer, and it just doesn't make sense to attack each other.
Ontario Premier Doug Ford speaking to Bloomberg TV after Prime Minister Mark Carney announced dollar-for-dollar retaliation to new U.S. tariffs on Canadian goods, a portion of them. Washington now mulling additional trade penalties against Canada. Let's get more with Bloomberg's Brendan Murray. What kind of further escalation could possibly be on the cards, Brendan?
Well, President Trump has already announced that January 1st, additional tariffs on Canadian imports would take effect. So he's already, in effect, announced his escalation of the current situation. So over the past 48 hours, we've really heard both sides hurl insults at each other. We've had this, kind of silly thing of President Trump saying he wants to change the name of Lake Ontario to Lake America. So we've kind of gone from the absurd to where we are now, is where, as Doug Ford said in the interview with Bloomberg, can't we just be friends again? So this tells me that both sides are headed back to the negotiating table, maybe not in the near term, but neither side really wants to inflict more economic pain on the other. Prime Minister Carney has some cards that he could play that could hurt American electricity users. Of course, there's Canadian energy exports to the U.S. All of those are, none of those have been threatened at this stage, but the U.S., from what we hear in Washington, is preparing some measures, whether those be the existing authorities under 232 or 301 measures that the White House could take. But the rhetoric seems to be, at the moment, ratcheting back a bit, and both sides sound like that they want to try to get some resolution here. But at the moment, there are no talks planned, but it sounds like the economic pain, Canada is already starting to feel it, and so the impulse there from the government will be, maybe we should try to get back to the negotiating table.
Yeah, I mean, President Donald Trump, he's involved in so many standoffs right now, and often he does this, it's escalation to de-escalate, right? But what would be the catalyst for de-escalation? It's not like there's any, meeting planned or any event that's happening that would be the primary deadline, let's say, for a de-escalation.
Well, the catalyst would come from these border states where American consumers and businesses are going to get hit come September 8th by Canada's tariffs on U.S. exports. So there could be some members of Congress, some Republicans who are in tight races for the midterm elections coming up in November, who say, look, enough's enough. We've made your point with Canada, and maybe we'll get some concessions from them by pushing them on tariffs. But until we see that, Congress is on recess, of course, and members of Congress are back in their districts hearing from constituents. So it could take a few days or possibly a few weeks before the White House really feels the backlash from not just Democrats, but Republicans in the House and Senate.
All right, Brendan, thank you so much. That is Brendan Murray, our trade czar. In the Middle East, Iran and Oman working towards what's being called an interim plan to reopen the Strait of Hormuz, oil falling for the third straight day. Bloomberg's Abir Abu Omar is with us now. What exactly is this interim deal? What is an interim deal to allow ships through the strait?
Yeah, good morning, Vonnie. A lot of unclarity. I mean, in your question as well, you can just sense that we don't have a lot of details about what exactly it alludes to. We've reported, obviously, over the past month that there is some mechanism for inbound and outbound ships using the northern part of the Strait of Hormuz and the southern part of the Strait of Hormuz. But what we know about this is a joint statement by both Iran and Oman came out yesterday, suggesting that this is a temporary deal to reopen some movement in the crucial waterway, of course, course, with the next 30 to 60 days for further negotiations over a more permanent solution. Another couple of good clauses that were mentioned there, Vonnie, of course, that we're keeping an eye on. One is that those negotiations will also go over who will manage the Strait of Hormuz. Of course, a notion that the U.S. and Gulf nations have refused for Iran to oversee the Strait of Hormuz. Those were some of the criticisms that they had over the past couple of months or so. And then something else, of course, that we're keeping an eye on is what Iran had said about demining the Strait. President Trump, of course, said previously that the Strait is completely demined, an assertion that he had without providing much evidence. Now Iran and Oman are saying that this mechanism will also overlook demining the Strait of Hormuz until those further negotiations, of course, take place. Some positive news, a breakthrough in the region. That's why you're seeing, of course, Brent crude prices falling for a third straight day below that $90 on the barrel mark.
Some kind of movement, at least, Abir, better than stagnation. Abir Abu Omar, thank you so much. Coming up, a look at your front page news. This is Bloomberg.
Anything we do in Africa is going to be more risky than the U.S. I think the approach we want to take is how are we being compensated for that risk? And one of those is obviously going to be a valuation question. In our minds, valuation was a lot more attractive in Africa, even if we adjust for some of those Africa risks that a lot of Western investors see. So yes, in a lot of ways, you take some of those models that, as I said, might be more asset medium or asset heavy. There might be some more inherent risks. However, if we're saying we're adding some risk because of that kind of model, but we're now solving a core problem as opposed to maybe a nice to have solution in Africa, that might actually offset it. Where if you're solving something that people really absolutely need and can't live without, in a way that then that's a lot less risky. So again, we'd encourage investors to have a less binary view. In other words, the US isn't risky, Africa is risky. That's going to lead to a lot of complications down the road.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
It's Bloomberg Money.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend. This is Bloomberg Television. Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Bloomberg Brief. I'm Bonnie Quinn in New York. Time now for your front page news. First up, the Wall Street Journal on the South Carolina Republican Senate primary runoff. Trump-endorsed Senator Darlene Graham won with 52% of the vote. The runoff was seen as a test of Trump's endorsement power. Graham will face Democrat Annie Andrews in the fall general election. Next up, the Financial Times reporting the Trump administration has paused immigrant visa applications worldwide to accommodate what it's calling in-depth training for consular officers. It's looking to screen out candidates deemed likely to need U.S. assistance. Applicants with scheduled interviews have received emails that their appointments are being rescheduled, according to the FT. And Bloomberg reporting Guggenheim Investments, the asset management arm of Mark Walters' Guggenheim Partners, is telling lenders that affiliates may look to buy portions of a nearly $1.2 billion loan issued by its financing entity. This after the debt's value collapsed in recent weeks. Fallout building from investigations into Walters' businesses. All right, let's take a look at your macro picture. Going into the Wednesday session, we have Nasdaq futures pointed lower, though NVIDIA did snap its 7-day losing streak yesterday. It was up more than 2%, and it's fractionally higher this morning as well before earnings after the close, which everybody is waiting for as a read on the AI trade. Brent crude helping yields and much of the complex today. It is down 8% already this week, and as you can see, the 30-year yield is below 518, partially thanks to this and partially the idea of intervention. Matt Maley of Miller Tabak is going to join us next.
Point in your tennis career did you say, I've had enough and I'm just going to retire at the top? Do you ever worry about that problem, staying too long?
It's a great question, and it's one that I think every athlete finds a different answer to. Mine came a little bit later than when I would have liked. I think stubbornness was a great quality that shaped a lot of my victories, but in the end of my career, I think it became a flaw because I was so stubborn to get healthy, for my shoulder to recover. I was also at an age where just my body didn't recover as quickly. And so for a year or two, that stubbornness got in the way of other great things in my life.
What would you say is the thing you're most proud of having done as a tennis player? Was it winning Wimbledon? What was the highlight of your tennis career?
I'd say consistency. I think consistency is, you can have results and they could, come at various times in your career, but I was consistent for many years, and you have to show up. You don't just show up to play first round of the finals, but you have to show up for press conferences before every match, before every tournament, and just the consistency and the mental wear and tear of showing up week in, week out. So I felt like I consistently showed up for my team, for my sponsors. As I look back, I'm proud of that.
Middle East and Africa, vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Bringing you up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
It's 5:30 a.m. in New York City, 10:30 a.m. in London. Good morning, I'm Bonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. Futures and treasuries dipping ahead of NVIDIA earnings and inflation data. Trade tensions intensify as the U.S. considers additional measures against Canada. And oil slipping for a third day as investors await a potential interim deal between Iran and Oman on the Strait of Hormuz. All right, let's start with futures. As you can see, we're off, but not by that much. In fact, NVIDIA did snap its 7 days of declines yesterday. It was up 2.1%. It's up small in the pre-market as well. We did have the NASDAQ 100 higher by 0.6% yesterday too, but we have to consider that it's the software complex that might get hit today after disappointments from Intuit and Zoom after the close yesterday. Looking at yields, well, they're down today once again. We are seeing down as opposed to yesterday morning, that is, so higher just in this particular session. But look at that 30-year yield below 518 when we had been seeing it at levels that were in the 20s, and then at their peaks almost at 535. So that's quite the stunning drawdown in terms of yields. At the same time, oil is also lower by 8% this week, so that is also having a major impact on yields. That was the primary driver, in fact, before Scott Bessent got involved in the bond market, which of course is still percolating through the market as well. The 2-year yield just below 420 as we await Jackson Hole, and of course the inflation data later today out of the PCE and personal income and spending. Bitcoin also lower today too as relief comes out of some asset classes. You can see it at 78,500, so that's at least 4 today. Let's get to some individual market movers now. Chloe Melee is in London for us. Chloe.
Good morning, Bonnie. Of course, all eyes are on NVIDIA today ahead of those earnings. We will know a little bit more about the health of the AI trade, and this will have no doubt some impact on chip stocks really across the world. And there's maybe some note of cautious optimism this morning in pre-market trading, with NVIDIA up about 0.2%, so not a huge boost, but slightly in the green. Moving on to Intuit, which is the software company that has really disappointed investors with quite a weak outlook. We can see that reflected in the shares taking quite a hit this morning, with analysts mentioning a deceleration in some key divisions for the company. And finally, let's go to SolarEdge, which is up this morning after getting upgraded by UBS, with analysts saying that the company should benefit from a better pricing power and should also gain some market share after the FCC banned the import of some solar equipment. And so we are seeing that reflected in those shares this morning. We're up about 5% on the back of their UBS upgrade.
All right, some positive news for the solar equipment makers. Chloe, thank you so much. Chloe Melee there in London. Matt Maley of Miller Tabak sounding the alarm on equities ahead of what he's calling a hurricane season for stocks. He's writing, the semiconductor index has only retraced about half its July decline and is now starting to roll over again, reminiscent of the kind of divergence with the S&P 500 we saw when the internet bubble burst. So if that weakness continues, it would be a major warning flag for the broader stock market. Matt Maley joins us now. He's Chief Market Strategist at Miller Tabak. Does everything hinge on NVIDIA earnings when it comes to the AI trade and everything related to it, Matt?
Well, a lot will, I think. And, of course, we have Chairman Warsh is speaking later this week as well. But, you know, like I said, we're heading into hurricane season in the U.S. and the Caribbean right now. And the one thing about that is if you live in Florida, you want to get insurance, it's ridiculously expensive, or if you can get it at all. Thankfully, in the stock market, as we're heading into this September-October timeframe, which is seasonally a tough time for the stock market, the VIX is very low. So if people want to buy some insurance by buying, you know, some VIX options, whether it be VIX calls or maybe some puts on some indexes, you know, it's relatively inexpensive. So you know, that's one thing that does bode well. But as you mentioned, what happens with NVIDIA and the chip stocks, I think, is going to be most important.
Yeah, I mean, why is insurance so cheap at the moment? I don't mean insurance for Florida homeowners. I mean insurance on, you know, some kind of an equity market sell-off. Ed Yardeni asking this morning, you know, we could be at peak fear, peak yields, peak earnings, and peak AI. That's a lot of peaks in there that we're potentially meeting, Matt.
Yeah, I mean, there are a lot of concerns out there, and I think that's a decent reason why to buy some insurance. But you know, we have whatever it be with what's going on with the interest rates, having moved up to basically its highest level, and we've all heard about the last 20 years, et cetera. And they have come down slightly, but they're still very elevated. And whether it be the situation in the Middle East, whether it be AI, and why are these chip stocks underperforming the S&P in this recent bounce. The same thing with Korea, which was very similar to what we saw in 2000. And so, I just think with what, Ed Yardeni talks about how we're seeing a normalization in interest rates, that they're back to levels that are more normal, between 4 and 5%. Well, that's fine, but if interest rates are going to be higher, that tells me that valuations are going to have to normalize a little bit as well, and that's going to have to come to the downside. So again, no guarantees. The market doesn't always go down in September, but I just think with the VIX as cheap as it is, and insurance as cheap as it is, you can buy a little bit here just in case.
So you talked about the semis retracing some of their decline but rolling over again. Is there any part of the AI trade that's most at risk? Obviously, the software trade could be at risk again today after Intuit and CRM yesterday.
Yeah, I mean, there's a couple things. First of all, you're right with what's going on with the software sector, because the major indexes, the S&P and the Nasdaq, of course, are very highly weighted in the tech sector, with the tech sector. And so if they start to roll over again, the indexes have to come down. And if the indexes come down, some of those people stop rotating and start rotating into cash. And but the situation again, we have with the chip stocks, is that so many different companies, basically every company has reported great earnings, and everybody except for Broadcom has reported good guidance, or very good guidance, and yet the stocks have sold off, kind of in a sell the news reaction. Thankfully, in a way, it's weird because the recent weakness in NVIDIA is actually a pretty good setup. So hopefully that won't happen there. But if we get another sell the news move in the most important chip stock out there, that could create some problems.
Well, the action in the run-up to this earnings report has been fascinating. Yesterday was really the only day of gains after 7 days of losses. Now, let's move to other parts of the market. Tom Barkin saying this yesterday: we're a global currency, rule of law, all the reasons people keep buying the debt. But at some point, people will stop buying your debt, and that's the risk out there. Sounding the alarm, and obviously this has been in the ether over the last several weeks, no more so than yesterday with the Stanley Druckenmiller op-ed, Matt. What do you think about what's happening with yields in the Treasury market, and whether we should be concerned right now?
Yeah, Vonnie, I mean, the thing that we have is that the situation with yields, I mean, everybody's been worried about for decades, hey, what's going on with inflation? Is the economy overheating? Will that cause people to raise, the central banks to raise interest rates, or for long-term yields to rise? But now we have this, issue of debt, excuse me, and the budget deficits. And so, this is something that, Dick Cheney, the vice president, famously said 25 years ago: deficits don't matter. And that was true for several decades. Well, that's not the case anymore. And it's not just here in the U.S. We're seeing rates move higher in Japan, in France, in the UK, because of people are starting to insist on getting paid more for the higher risks they're taking because of these big deficits. And so even if yields do come down with Secretary Bessett's program, how much are they really going to come down with these massive deficits? And so, again, if we're going to reprice what the normal value or the natural value is for interest rates, I think the stock market will have to do the same.
Is it important that yields stay around the levels they're at now or lower, Matt, in order for stock performance to continue? Or is it the opposite? If they continue on higher, well, that just makes stocks potentially more attractive because obviously there's a little bit more risk being priced in.
Yeah, I just think that if yields push higher, that's going to create a big problem. Everybody's been talking about 5% on the 10-year. Of course, the 30-year is already pushed above that level. But they had been saying 4.5 and then 4.6 and then 4.7 were the most important levels. Well, now it's 5%. They keep moving the goalposts. But again, when you have a market as expensive as it is, and it's we're 22 times earnings, but much more expensive on price to sales and price to book, which are at all-time highs. It just makes it harder to justify those valuations if yields, stay at these levels, but especially if they push higher.
What are you braced for out of Jackson Hole, Matt? Is there a risk event that could happen as a result of what Chairman Warsh does or doesn't say?
Well, there is, because there does seem to be a little bit, I guess the big thing is that the Treasury Secretary Bessent and Mr. Warsh, Chairman Warsh, seem to be a little bit at odds. I mean, what one of the issues is this whole issue of confidence. And it's like, why do we always have to come in when there's any little blip on the radar screen in the markets and support things artificially, whether it be through the Fed or through the Treasury? And why don't we just let the markets trade on their own? Is what Warsh is saying, where Bessett is saying, well, we're going to help things and support things. And there's some political aspects to that as well with the midterm elections coming up. So I guess my point is, with what Warsh says this week is going to be very very important, because if he backs off because he wants to support Bessett's programs, is that going to be how positive is that going to be? Is that going to be something where people lose more confidence because the Fed seems less independent? Or does he, really hammer home the idea that, hey, we're the referee, not involved in the game, and that we're going to let the markets trade where they're going to trade, and only be a backstop if something serious happens? That's something that I think will create some fear. So, Jackson Hole has been a bid market mover in the past, not every year, but it has in the past. So there's a good chance it'll be again this time.
All right. It continues, this whole circus. Matt, thank you so much. Matt Maley of Miller Tabak, much appreciated. Now, two other top stories trending on the terminal this morning. Meta and state attorneys general are said to have discussed a possible settlement of a blockbuster case accusing Meta of deliberately designing Facebook and Instagram to addict teens. The trial is in the second week in a California federal court. A loss at trial could result in penalties of as much as $1.4 trillion for Meta. SoftBank said to be talking with investment banks about a potential $10 to $20 billion bond sale to help refinance its stake in OpenAI. According to sources, the offering could come as early as September. Talks are still ongoing and details could change. Huawei has pitched Egypt on building AI data centers for military, surveillance, and other government use. The move is drawing attention in Washington. The U.S. is said to have approached NVIDIA, AMD, and Microsoft to pull together a consortium to counter Huawei's bid. Huawei declined to comment, and the Egyptian Ministry of Foreign Affairs didn't respond to questions. Coming up, we look ahead to NVIDIA earnings with Mandeep Singh of Bloomberg Intelligence. This is Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
My old mentor, Roger Staubach, who told me when I transitioned, football will never leave you, but you need to leave it.
Wow.
Everyone has a dream, and a lot of dreams are, my dream is to play football and play professional football, and you get the dream comes true, but it is going to end. And the day it ends, the day before it ends, you're one of the best in the world. Great. The next day you wake up, that's gone. What are you great at? And the truth is, nothing, right? I'm not great at anything else.
I talk about it all the time, Steve, is this whole idea of it's not from penthouse to penthouse. And what I mean by that is you played for 15, 20 years and you're in the penthouse. That doesn't mean that you come to the business world and you're going to be in the penthouse. Now, you don't start in the third floor or the lobby. You actually have to start in the basement.
Welcome to Bloomberg This Weekend. I'm David Murray.
I'm Mateo. And I'm Christina Raffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. That's really propelling this deal forward.
Yeah, the hope is this will markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a week coming up in politics.
Earnings season is underway. We're going to get some key reports.
You need to know before the markets open on Monday.
Bloomberg This Weekend, bringing Bloomberg into your weekend routine.
Guys, buckle up.
This is Bloomberg. This is brief. I'm Bonnie Quinn in New York. Starting in tech, NVIDIA snapping its losing streak ahead of its earnings today. The results expected to give a barometer for the state of the AI trade. Joining us now is Mandeep Singh, Bloomberg Intelligence Global Head of Technology Research. What are we going to learn today about AI infrastructure demand, Mandeep?
I mean, clearly the data center segment is where, all of the upside from the CapEx estimate revisions that we have seen so far this year. And look, when we started the year, the CapEx estimates were around $600 billion in aggregate for the hyperscalers. Now we are talking about $850 billion plus for this year and $1 trillion for next year. So a lot of those positive revisions in terms of CapEx should flow through to NVIDIA data center estimates. And to my mind, now that NVIDIA has started disclosing the hyperscaler kind of segments separately, so we'll have a very good sense of, how much upside has come from the hyperscalers versus the other parts of the customer base that NVIDIA has.
How much reassurance will investors need on things like financing, on power needs, on supply shortages?
Yeah, so that's where I think when it comes to hyperscalers, they will figure all these things out on their own. Where NVIDIA is helping the ecosystem is, the neo clouds, the inference clouds, and, some of the other smaller players. And look, NVIDIA really wants to develop a big ecosystem around their chips. So that's where they're flexing their balance sheet, when it comes to some of the backstops that they have done for the neo clouds and really kind of getting the private equity together in terms of lending to some of these smaller players. But I think overall, we should look at the earnings from the standpoint of how much the hyperscalers are still dependent on NVIDIA versus how much the smaller players are able to grow with NVIDIA support. And I think that will be a good proxy for how to model the earnings going forward.
We saw NVIDIA's credit stress there on a chart topping that of hyperscalers by a decent margin, and curious, a lot of investors and analysts are saying that NVIDIA is undervalued here, but could today, for example, be the catalyst for reducing that credit stress and for perhaps pushing the price higher once again?
Yeah, look, the price action hasn't been great for a lot of these infra companies that continue to be beneficiaries of CapEx. And sometimes we let the price action kind of determine our view on the fundamentals. I mean, look at the fundamentals. Everything in terms of the estimates has been revised upward, north of 15-20% for all of these companies, including NVIDIA. And so from that perspective, the fact that data center segment growth is accelerating compared to where it was last year, fundamentals look really solid. And some of that is accounting for memory price increases, which they are passing on to their customers. But at the same time, the overall top line seems to be accelerating. The gross margins seem to be holding up. So that's a reflection of solid fundamentals, which is not getting reflected in the price action year to date.
Just different companies. SoftBank is considering up to a $20 billion bond sale for an OpenAI stake. Will it be met with plenty of appetite, Mandeep?
I'm not too sure about plenty of appetite. At this point of time, I think there clearly is appetite for lending towards data center build out. At the same time, the hyperscalers have still the best kind of ratings in terms of raising money. And so they have that benefit. And for everyone else, it's about who else is investing along with them. What's the collateral? So there are that aspects. But SoftBank clearly has a lot of credibility. So from that perspective, they should be able to raise that money.
All right, Mandeep, thank you so much. It's going to be a long day for you. Mandeep Singh of Bloomberg Intelligence. Washington grappling with diplomatic challenges across the globe as the Look for a deal with Iran remains elusive and a trade war with Canada ramps up. For more, Mark Champion of Bloomberg Opinion joins us now. Mark, the US and Iran are in a quagmire. It seems like they're just getting deeper in, or at least stagnating where they are. What's the way out here?
I think it's very hard to say exactly what the way out is. I mean, this is President Trump's problem. He began a war that didn't work out the way that he hoped, and the Iranians have dug in. They may well be overplaying their hand, but they continue to dig in. He's now trying to find a way out by, shifting away from a kinetic war to an economic one. But the Iranians have a vote in that. So if he succeeds in really pressing them into, for the economy to collapse, they have two options. One is to cry uncle, and the other is to increase the pain on the U.S. and the global economy. That they would do by striking at the Gulf states again. And restarting the war. So it's a difficult position. The one sort of little piece of hope that I can see for some kind of compromise is that the Oman-Iran talks, which have been going on for a while about the control of the Strait of Hormuz, they have now shifted to an attempt to create a temporary deal to open the strait. And that, I'm not sure exactly how to interpret that, but it's possible that this is the Iranians saying, okay, we'll look for something temporary and then, go from there.
How are the Iranians gaming this out, Mark? Is there a way for them to provoke Trump into some kind of conciliatory or less aggressive action without actually doing anything that would provoke, real retribution once again on the part of the United States, which I'm sure there's no appetite for in Iran?
Yes, I mean, they don't want a return. They will try to avoid a return to all-out war. That, includes a lot of risks for them. But they're not as afraid of it as Trump seems to think. And a kind of low-level war, the sort of thing that we have now, in some ways, serves the regime, serves the hardliners in the regime, the IRGC, the Islamic Revolutionary Guard Corps, because for them peace is quite dangerous. They will then, go back to having to confront their own population and its demands about a collapsing economy. And one thing that the regime has proved is it's not very good at meeting those demands. And it is actually the economy has mutated around, decades of sanctions. And that has served the IRGC and its economic interests. It now sort of dominates much of the economy. So to unpick all that and to really open up and get investment flowing in from abroad, it poses dangers to the IRGC itself.
Fascinating, Mark. Thank you so much. And everybody should read your columns. Mark Champion of Bloomberg Opinion. Coming up, NVIDIA and the PCE and personal spending data front and center. We'll get you set up for your trading day.
most important news and financial information whenever and wherever it happens. I'm Michael McKee on the Mexican border, and this is Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker Playbook, where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
This is Bloomberg Brief. I'm Vonnie Quinn in New York. Now a look at what's ahead for your Wednesday session. First up, the main event, PCE and personal income and spending data coming at 8:30 Eastern Time alongside GDP and durable goods orders. Then more Fed speak again from Richmond Fed President Tom Barkin. That's at 11:45 a.m. And the big one, NVIDIA earnings after the market close around 4:20 p.m. is when we're expecting them. Plus we get HP and Salesforce as well. This is your macro picture coming into the session. Nasdaq futures down small. NVIDIA about 0.3% in the pre-market. Your 30-year yield up a basis point but down from yesterday morning. That is it for Bloomberg Brief. Surveillance is next. This is Bloomberg.
You're going to see disruption in certain job functions. I don't see how that's not possible. And I don't see how anybody can look people in the eye and say that's not possible.
What percentage of customer service gets displaced?
It can be a large percentage of customer service. I think that function, I forgot my password, what's my billing amount? Those are all simple and easy things for an agent to go do. Like what we're seeing in our customer service right now is the rote stuff can be done by agents. More complex is a combination of an agent and a human working hand in hand to be able to satisfy that customer much better than either of them could do alone. And so I think you'll see all of those things happen, but I'm going to lean heavy, as I think all of my colleagues will, all of Fortune 100 will lean heavy on AI. You cannot be a part of this age without understanding the technological revolution. We have a responsibility to put serious money, resource, and effort into training not just our employees, not just people that are impacted, but the communities we serve as well, because that's the age we live in.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Joanna Bersecci in El Ola, Saudi Arabia, and this is Bloomberg.
AI story is so dominant, it is the driving factor throughout markets.
We're starting to see a lot of investor nervousness.
The market wants to see real evidence that the spending is it's getting return. It's turning into margins, turning into profits, turning into free cash flow.
This build out is not as mature as people think.
The volatility in certain segments in tech has been so dramatic. It's a bad Ouija board at this point.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, Bloomberg Surveillance starts right now. Coming into Wednesday, waiting for NVIDIA, holding steady, heading into earnings from the world's biggest company, as economists are preparing for another read on inflation in America. And the move lower in oil is helping to put a floor under a rattled bond market. Crude back in the 70s.
How much is the entire story of the bond market jitters over the past couple of weeks entirely about oil prices? I mean, you take a look at Fed funds futures pricing in a rate hike at September meeting. And at the last Fed meeting, it was a 65% chance that they would hike rates. Now it's currently a 38% chance. Oil prices down 5% in that period, and right now seeming to indicate even lower. So at a certain point, is this a story about Treasury Secretary Scott Bessent and questions around Fed Chair Kevin Warsh, or is this a story about the Middle East and the price of crude?
Oil has certainly helped bring it up. Crude and Brent briefly back in the 70s earlier on this morning on WTI, just above those levels right now on the WTI contract. Over the previous 3 sessions, we've had an 9% move on the price of Brent. That's material. 30-year bond yields down so far this month by around 9 or 10 basis points. That is helpful to this bond market, to this Treasury Secretary. To your point, I think oil's a big factor in the last 24 hours, without a doubt. And on crude, I think you have to draw a big distinction between pricing in a deal and pricing out renewed military escalation.
One of the most interesting reports was reporting that the U.S. was putting ambassadors, putting some of the diplomatic staff back in the region, which indicates that they don't believe there is going to be a reignition of a hot war or of more intentions. Even yesterday, when I was talking with Scott Kirby of United, he's been really aggressive, saying oil prices are going to be higher. Even he was saying he thinks that jet fuel prices will slowly go down from here just because people have been so creative about getting oil out of that region. And frankly, you know, he doesn't see things reigniting. Of course, he said, I'm not a geopolitical strategist, even though we all play one on TV every single day. Nonetheless, it does highlight that that is a huge factor behind the inflation.
Can we get the family discount for Sardinia? Have you confirmed that with Scott Kirby?
I tried to get him to sponsor our program, but alas.
He seemed game for that.
He seemed game for that. I think that our schedules are booked.
We'll work on that. Let's talk about where the buzz is right now. The buzz is around this. The Stanley Druckenmiller op-ed in the Wall Street Journal, which, when first reading it, we all felt like it looked like AI. The man himself confirming it was AI. To notice, saying, of course I used AI. I'm not embarrassed by it. I write everything using AI now for the same reason I use a calculator. Bramo, when I do maths problems.
So I have a lot of thoughts.
Share
we don't
them.
have enough time. We don't
We've
need
got
to,
time. No, please do.
You know, look, number one, I would say, as someone who is a writer in many capacities, I just think there is something to seeing somebody's personality and raw ideas in their own writing and their own thinking. I do think that clarity of writing is often clarity of thinking, and I would like to see just the way that somebody gets to an idea. So it helps me to understand who I'm talking about. He said I was a B student in English, but an A+ in economics. These are my ideas, and I've been speaking about them for over 15 years. A question about what the purpose is of filtering them through some sort of algorithm in order for them to be digestible to us. Is that the appropriate way to be digested through a newspaper or not? It leads to a lot of questions about the role of the media and the role of writing.
We've got some time to talk about this, so let's take the time. I think there's a massive difference between substance and style. I think there's a difference between the opinion and how it's presented, and we should debate those two things separately. For Stanley Druckenmiller, one of the best money managers in history, just absolutely fantastic. I'm interested in what Druckenmiller thinks. I'm told this is what he believes. That's important. It's also important to me how you got to your conclusion. The reasoning matters. Are we using AI to provide an argument for an opinion we already have? I would find that intellectually lazy. That's not what happened here, we're told by Stanley Druckenmiller. So the reasoning aspect of this, how you got to your conclusion, the argument, is very, very important to me. It's important to you. I think we still have an idea of how we got to his conclusion, his reasoning. The style, I think, is a much bigger conversation for our industry in journalism. If you're at the Wall Street Journal, and for any other publication for that matter, do you want to be in the business of selling AI slop? I would argue probably not, and I'm not sure many people want to buy it. So if you're going to have, and this is not just a journal problem, it was an FT problem more recently too, people submit their opinion in essays that is clearly written by AI. Just take out their opinion and present it in a different way. So, for instance, with Druckenmiller, I'd actually prefer a picture of the raw notes that Druckenmiller made to get to the argument that he provided to the Wall Street Journal than something sort of synthesized through some AI bot that just looks like signature slop. Are you with me?
Yeah, well, it seems like in the past, journalists were the filter, or the writer of an article is the filter for one of these behemoths in an industry, their ideas and their reasoning. Then the person could just write directly, and now the filter is artificial intelligence and different algorithms that can then filter it for everybody else. I would argue there is a real question around what is the correct filter, given the fact that the person might not want to write a sort of full-length article. And you could argue maybe they shouldn't have to, because everybody can run their ideas in whatever raw form, to your point, through their LLM of choice, and they can get their own document. But ultimately, it raises a question of what form of information you really want to buy access to. And ultimately, that's going to be really key for not only the media industry, but also for financial analysis more broadly.
This is just the start of the conversation in many ways too.
Watch out, 3 hours.
Right, what are we paying for? I think Citrini had this social media post yesterday and we talked about it. And it made me laugh. And the prompt was basically, criticize the Treasury Secretary, don't make any mistakes, dear Claude, something like that, right? If that's the world we go into, I find that really, really lazy. If you're not coming up with your own original argument to get to a conclusion, if you're just providing a conclusion to a chatbot and saying, give me some evidence because I'm too lazy to come up with it myself, I just believe this, and then it comes up with an argument for you, that's a very, very slippery slope. That's a dangerous place to go.
But this is the reason why we're talking about that exact point, that this was Druckenmiller's way of trying to criticize Scott Bessent, less about the argument at hand, which a lot of people would agree with. And maybe that was the message they got through, because this was not something that was rationalized through his mind or reasoned through, that he spent all weekend vociferously writing.
Druckenmiller got everything he wanted out of this.
He did.
Right? This is what he believes. Everyone knows that now. And everyone's talking about it for a second day.
I know. You know what? Congratulations. I'll use AI.
I have to say, there wasn't even a crisis in the bond market to begin with if the Treasury Secretary didn't step in the way he did a week ago.
Yeah.
Right? No one would be talking about this.
Okay.
Yields have come back in. We'd just be like, Kevin Walsh, it's over to you in a few days' time.
If I were a kid and I were watching this, my lesson would be use AI for every project.
If you were a kid and you're watching this accidentally this morning, you'd be like, who's Stanley and why is everyone so obsessed with what he's got to say?
I want Cheerios.
Stanley's an important guy, okay? Coming up this hour, we'll catch up with Marvin Lowe of State Street, heading into another read on inflation. Sarah Kunz of Clio Capital as chips rally ahead of NVIDIA earnings. Andrew Balls of PIMCO as the Fed's bargain warns of a potential US debt reckoning. We begin this hour with stocks and yields holding steady ahead of more earnings and inflation data later this morning. Marvin Lowe of State Street writing, while recent data has thrown a bit of cold water on the strength of the economy, we don't find a reason to fade the view that the Fed will still need to tighten before year end. Marvin joins us now for more. Marvin, good morning, sir. It's good to see you. Do you expect to get a guide from Kevin Walsh in a few days' time on that?
You know what? We're not going to hear from him with regard to what he thinks September is going to look like, or even December is going to look like. All we can hope for is that we get a little bit more sense into, what his thinking is, how the Fed's going to actually approach the concept of the reaction function, and really to give the market a little bit more comfort that July is not the way the Fed operates and not the way the new chairman operates.
How do you think the Fed operates and the new chairman operates?
Well, I think it's still, generally as divided as we saw at the beginning of this year. Those opinions are out there. Certainly the data has given the Fed a little bit more room to think about things, but you continue to have half of the committee that thinks that there is a fairly low hurdle with which they should hike rates, and I think that winds up being a theme that we take into the latter part of this year.
To your point, Marvin, we even heard from Susan Collins, somebody who previously had been in the hold camp. Yesterday, she had an essay where it seemed to be a bit more hawkish, saying that the onus is on the inflation data to keep getting better for her to remain on hold. Otherwise, it might be appropriate to tighten. Where is the inflation coming from if it isn't coming from oil prices, if it isn't coming from some of these supply-side shocks?
Yeah, I mean, for sure. After 5+ years of this kind of embedded inflation, that is the concern of the Fed. forward guidance and forward expectations around inflation is ultimately the self-fulfilling prophecy. And I think that that's the risk, that we've got a Fed that, theoretically is remaining patient in the face of an inflation target, which is starting to mean nothing. And that influences both the services part of the economy, which certainly is the bigger part of what we wind up generating wealth from in this country. And it's something that standing on the sidelines becomes less and less acceptable.
Isn't this a data story, though, and less of a Kevin Warsh story? I mean, what can you learn from Kevin Warsh that gives you a sense of whether or not, the degree to which they are prepared to hike rates later this year?
Yeah, I mean, certainly data is always going to be an important part of this discussion. And, we've got this kind of little bit of soft patch in the middle of the summer. We'll see what August inflation looks like. Our readings kind of around August inflation, kind of in a more real-time perspective, is that it is coming back to a certain degree. So, that hat is not completely shoved back in the bag. But it also is a story about U.S. growth. It also is a story about demand for duration capital in the U.S. and globally. And what we need to learn from Warsh is how he parses the data as well as kind of this R-star capital demand perspective. And, clearly the Treasury Secretary is throwing his hat in the ring around that longer term duration story and that broader demand for capital. And for me, it's always been part of why we need to think about tightening, and that hasn't changed.
Marvin, do you care that Druckenmiller used AI? Weigh in, please. That's where the buzz is right now.
Yeah, I don't. I loved your conversation because I have the same on the trading desk every day. I still write all of my work. I find that the actual writing helps me think. I think my analysis improves as a result of that. So, call me a Luddite. I'm not necessarily willing to allow it to write my my analysis. But, Stanley Druckenmiller has all the street credit that is needed. And it's fine that he uses AI.
Marvin, it's good to see you. Marvin Lowe of
Nice to see you too.
That's where a lot of people's side right now, at least on that issue.
Well, he's proven his mettle. It's not as though he needs to show something. It's not like he's looking for an English teacher to give him an A+. Ultimately, he's just trying to communicate ideas. I think, though, the interesting thing is it means he wasn't thinking through these ideas. He was saying, hey, AI, express all my views and direct it to Treasury Secretary Scott Bessent, and that was the message that everybody
precisely.
heard.
That's where the value is.
Yeah, exactly.
Not the argument, the fact he signed off on it.
Correct. And directed it toward a specific event.
Yes, and we're still talking about it this morning. Futures negative by about 0.1% on the S&P 500. Bond yields a little bit higher after pulling back over the past few days, and over the month so far doing better on a 30-year side of things. Let's give an update on news worldwide with your Bloomberg brief. Vonnie Quinn has more. Hey, Vonnie.
Good morning, John. The White House is considering additional trade penalties against Canada. This after Prime Minister Mark Carney unveiled dollar-for-dollar retaliation to new tariffs imposed by the U.S. Additional escalation could include higher levies and other trade actions. Meta and state attorneys general have discussed a possible mid-trial settlement in its teen social media case. The company accused of deliberately designing Facebook and Instagram to addict teens. Meta believes a loss at trial could result in penalties of as much as $1.4 trillion. SoftBank holding talks for a potential $10 to $20 billion bond offering to help refinance a loan for its investment in OpenAI. Sources telling us here at Bloomberg the proceeds from the sale would be partly used to repay a $40 billion bridge loan. And that is your Bloomberg brief. John.
Hey, Vonnie, thank you. Thanks for the update. More from Vonnie in about 30 minutes' time. Up next on the program, asserting control over Iran.
Iran is broke, totally broke. They're not going to make the kind of a deal that I feel is necessary.
We have total control of that entire region having to do with the Strait of Hormuz.
Up next, Colonel Wayne Sanders of Bloomberg Intelligence, live from New York City this morning. Good morning.
countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech. Every weekday, only on Bloomberg Television.
When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
Stocks this morning slightly softer. We're down 0.1% on the S&P. On the Nasdaq, we're down by 0.2%. Later on this morning, PCE data at 8:30 Eastern Time. The move in inflation helping to put a floor under this bond market. Inflation pretty much in line on CPI. PPI softer. Retail sales were weaker too. We saw this with payrolls as well. That's brought yields down at the front end, 2s to 420. Crude had the move lower on oil more recently, helping to bring yields down at the long end as well, 517 on 30s, and WTI briefly in the 70s. WTI this morning, $80 and down by close to 3%.
Yeah, some discussions around negotiations with Oman and Iran about establishing some sort of corridor of the Strait of Hormuz. A real question here, though, about what inflation is going to be relevant to this Federal Reserve. We talk about how oil can be transitory. How about the data center build out and the AI-related inflation? How do you consider that? Is that a one-time price shock that then's going to disinflate? A lot of questions in the mix, and oil just sort of sets the tone for a lot of these other ambiguous features that are filtering into the data.
How many times will people say this morning the Fed's preferred gauge of inflation comes out at 8:30 Eastern Time?
Perhaps.
There's a big maybe around that now.
Honestly, increasingly people are saying this is inaccurately skewed by data center spending and doesn't actually reflect the inflation in the system. Problem is, what does? And that, I think, is a little bit more of a question.
You'll be there. Do you think that's part of the conversation this week in Jackson Hole?
I think it is the question, actually, the inflation mandate and the inflation gauge. Also a question of what does an inflation target mean? This is something that Alan Greenspan actually did not want back in the day, and he didn't want there to be some sort of explicit 2% target when it came out, and Janet Yellen supported it, who was on the Fed board. He was actually upset. So there is a lot of hair around this that has to be established.
I saw TK coming down the escalator moments ago with a suitcase. He's getting ready to leave. He's flying out today. Yeah. You flying with him?
I don't know. Maybe he'll be on my flight, but I'm guessing that he'll be in a different class.
He's a United guy.
Oh,
United Airlines.
So then,
probably from a different airport too.
Yeah, probably. And probably, taking up the first row.
I have no doubt. I've been squeezed a few
I'll be in the
times
back.
on those trips, yeah. Looking forward to the special programming from Bramo, TK and the team coming on Friday at 9 a.m. Eastern Time. Under surveillance this morning, let's talk about the backdrop for oil, asserting control over Iran.
Iran is broke, totally broke.
They have no money.
They want to make a deal, but they're not going to make the kind of a deal that I feel is necessary.
We have possession, complete control of the Strait. We have total control of that entire region having to do with the Strait of Hormuz.
So here's the latest this morning. The Trump administration narrowing in on economic pressure on Iran. Axios reporting the Secretary of State Marco Rubio told several foreign ministers the U.S. is holding off on strikes for now. The shift happening as Iran and Oman discuss an interim framework for reopening the Strait. Joining us now is Bloomberg's Abu Amar. She joins us now from Dubai. Abir, welcome to the program. How much progress are we making on the diplomatic side of things?
Faint progress, I would say, John. Good morning. So what we know is that deal that we've been speaking about on this show and multiple other shows between Iran and Oman, the final stages, we seem to be at some final stage, this joint corridor, maritime corridor, for a temporary period of time, at least for the next 30 to 60 days. That was the joint statement that Iran and Oman came out with yesterday, suggesting some kind of reopening in the Strait of Hormuz. Now, the mechanism has a little bit of details about inbound and outbound ships and just what exactly what pathways they're going to be taking. But perhaps the most important out of all of this is further negotiations are set to take place for a more permanent solution in the Strait of Hormuz. And some of the clauses that were brought up were interesting, namely the one about the management over the Strait of Hormuz. Now, we don't know what the U.S. is going to respond to that with, but of course, the United States and Gulf countries that are in the region, the biggest oil exporting region in the world, of course, have vehemently refused in the past for Iran to have any management over the Strait. But we don't have a lot of clarity about what that management is going to look like. But then again, in the joint statement, both countries did say or alluded to the fact that Persian Gulf countries may be included or may take part in the wider negotiations happening. But when it comes to the wider negotiations, John, between the United States and Iran, those are, of course, nowhere in sight. You also mentioned Rubio talking and saying how the U.S. is not planning on military strikes or escalating this once again. And we have some NYT report from the morning suggesting that some staff that did leave at the peak of this war from the United States might be coming back to the region. So maybe a little bit of truth behind that statement.
Abir, it's good to see you. Thanks for getting us up to speed. Abir Abu Umar there out of Dubai, covering the story for us out of the region. Colonel Wayne Sanders of Bloomberg Intelligence joins us now for more. Colonel, welcome to the program. It's difficult for me to sit here and believe that the kinetic phase is behind us and that in front of us is diplomacy and a path towards peace. Colonel, do you think there is a path towards peace from here?
Yeah, I think that there is. I think that one of the biggest pieces right now that you're seeing with this coercive diplomacy is really both sides recognizing that the kinetic fight right now, the conflict, hasn't really done a lot for either side to be able to get what they want. So this transition over into this additional piece for this coercion side, both sides are talking about what they're going to do. President Trump even brought up potentially bombing Oman, in terms of that. Iran looking at it in terms of, hey, anybody who partners with the United States, better be prepared for retaliatory attacks. So I think that the kinetic fight is always something that is going to be out there as a potential, but looking at it in terms of where their strategy is right now, I don't think that's at the forefront.
Colonel, I don't want to be skeptical here, but let's say there is this pause, it's a prolonged pause in kinetic activity. Who has the upper hand in terms of how quickly they can manufacture additional ammunition? Is it Iran or is it the United States?
It's a tough one. I would say that from the standpoint of scalability, it's easier to build a Shahed 136 drone. So I would give, from that perspective, the types of munitions and the types of capability that Iran is looking to produce. They can scale that faster than the U.S. is going to be able to scale PAC-3 interceptors or Tomahawk missiles. So for that perspective, I do think that Iran would have the lead on that. But what you have seen is a lot of change in that doctrine in terms of how they're doing the counter-drone fight, not using some of these exquisite interceptors to go toe-to-toe with Iran on that. We transitioned a lot into gravity bombs, which obviously the U.S. still has tens of thousands of. So I don't think that part is really in play. I think it really comes down to what is the impact of what you're trying to do. So let's say Iran does scale. They have all of these 136s. Where are they going to do with that, and what has it actually achieved up until this point? And then the same thing for the U.S. attacks on Iran.
What can be achieved through financial means? In other words, do we get somewhere other than where we are currently, or is this kind of the only place we can stay without it really devolving into either military conflict or, on the other hand, some sort of peace agreement?
Yeah, President Trump, he hits it on the head when he talks about some of the economic hardships that Iran is going through right now. The problem is that some of these increased sanctions that are on the table for this, part of the problem that you run in there is that the #1 economic lifeline for Iran is China, especially when you look at 90% of the oil that comes, the oil exports from Iran going into China. So then the question really becomes, how much leverage are you trying to place onto Iran without upsetting the relationship with China, especially, we have, September 24th for President Xi coming, so we're running out of time on that as well.
Colonel, you can make the argument that China is more important to Iran than Iran is to China. Going after China, how much of a difference does it make to China directly?
Directly, I don't think it's going to, I think that it's mainly going to be the fact that China on the global scale has already now said is, hey, look, we're not going to stand idly by. They're not pro-Iran-U.S. conflict, but at the same time, on the sanctions side of the house, they're also not going to stand idly by and let U.S. dictate across the world global trade. And so I think that there's a certain amount in terms of where that leverage is as the U.S. continues to push. how much of those sanctions we put into place before China has to respond.
Colonel, it's good to see you. Always appreciate and respect your experience, sir. Colonel Wayne Sanders there of Bloomberg Intelligence on the situation in the Middle East. The Treasury Secretary, Scott Bessent, said a financial institution would be sanctioned, I believe, this week. Watch this space.
Really interesting to see whether that's going to be in China, because ultimately all eyes do lead to China, all roads do lead to China when it comes to the Iran relationship. They still are the major trading partner, the major buyer of Iranian oil. It is important to note, though, that their oil purchases have gone down significantly tied to Iran. The question of whether they want to appease the U.S. or whether they like that the U.S. is kind of sort of busy with this quagmire and taking some of their focus out of Southeast Asia. These are some of the things that are definitely going to come to the fore.
I remember all these different deadlines. We had to get it done by then. We had to get it done by then. And here we are going into September, and it's still not done. I remember that social media post from the president was April 17th, the Straits reopening. We were down in Washington, D.C. at the time, heading into the weekend. Strait didn't reopen. Here we are months later, waiting for the same thing.
Yeah, right now I think a lot of people are saying if we stay here, that might not be the worst thing. At least we're not getting substantially worse.
Up next on the program, Sarah Kearns, the Clio Capital, looking ahead to results from NVIDIA. Results from NVIDIA drop in after the close.
How do you see AI changing gaming and game development in the future?
Look, I think the biggest thing that I'm thinking about is how do we just make sure it's solving problems. On the game development side, I've gone to a lot of our studios, you know, whether big and small, and I'm blown away with how they're using AI in the production pipelines, how they're using it for iteration and prototyping. That's not production ready, there's still work. And so, and you know, 30% of game development is software, and so there's the traditional applications that we see in enterprise. At the same time, I do not think AI will replace AAA games. I think it's entirely possible, though, that AI represents a new category of games and a new type of development and enables more people to create and participate. And we'll keep an eye on that, and we'll see how we best serve that.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
week ahead looks like this. It starts this morning with PCE data at 8:30 Eastern Time, continues this afternoon with earnings from NVIDIA. Then it's on to Friday. Skip claims on Thursday. Never any real news there. Maybe that changes. I don't know, but...
Now that you said that.
Right. Then we've got UMich on Friday too. And then it's the big one. It's Kevin Walsh addressing Jackson Hole, Wyoming, heading into the weekend. Bramo's going to be there alongside TK and the whole of the team to break this down. It's a big moment for a new Fed chair.
If he doesn't say anything, that's saying a lot. If he does say something, we'll get some view on exactly who is Kevin Walsh as the chair of the Federal Reserve in 2026. A lot of questions about the reaction function, a lot of questions about what gauge of inflation matters. And I would say one of the more important things is how does he think of artificial intelligence when it comes to inflation? He has talked about it leading to productivity and disinflation. Considering this is one of the main drivers of ongoing inflation outside of commodity prices, it's a really important question.
Did Claude write the speech?
For him?
We all want to know.
I don't know. What would he even put for the prompts? I think a lot of people would pay to see the prompts that he put into Claude for that speech. So I think there's still would be...
Clean up the news conference from a few weeks ago and insert my thoughts from the FT piece, published the following week. Maybe.
Claude, clarify. Were those your thoughts? Just a suggestion.
Let's turn to the market. Equity futures right now declining just a little bit. No drama here. We're down by 0.1% on the S&P. A bounce from Monday's losses in Tuesday's session, underpinned by a better day for tech and a better day for the semis, helping to underpin that move higher. We snapped a 7-day losing streak on NVIDIA heading into earnings this afternoon. In the bond market, 2s, 10s and 30s. As we talk about Kevin Walsh, think about that news conference. Before that news conference even started, the morning of the last Fed meeting, the 30-year bond yield was just south of 5.1%. This morning, it's at 5.17. It's not bad. It's had a helping hand. It's had two. One's been the moving crude, and the other has been the Treasury Secretary with a big decision, a big move a week ago.
Yeah, talking about buying a significantly bigger proportion, buying back a significantly bigger proportion of 30-year notes, potentially using the general account, although that hasn't been confirmed. Interesting, we talk about how effective that's been and how difficult it's been to stay still. Some people have argued, actually, it's been quite effective in at least squeezing out certain short sellers that now are not putting on those bets, given the fact that they have a pretty big whale on the other side of them. And there have been studies showing that maybe on the margins he brought down the costs, but he also really highlighted how much the fiscal deficit is in focus. And now you even have Fed officials, Fed governors, talking about how this is a real problem and ultimately it is something that is going to bite.
And this number right here is helping. The price of crude, WTI and Brent this morning. Yesterday, closed below 90 on Brent for the first time since mid-August. 86 right now and down another 3%. WTI briefly this morning in the 70s. At the moment, WTI $80.20 and down by 2.6%. That's some of the cross-asset price action as we count you down to the cash open 3 hours away. Let's get you some single names, some morning movers. Yahira has more. Hey, Yahira.
Hi, John. Software is back in the spotlight, and not for good reason. We are seeing Intuit shares falling nearly 13% in the pre-market after giving a much weaker outlook than Wall Street expected. TurboTax revenue is expected to grow just 2 to 3%, and Jefferies points out that is the slowest growth for that unit in more than a decade. But the bigger issue, of course, is that it's coming at a difficult time for software where investors have started to question how vulnerable it is to AI. Plus, the bar has been high since you did see software rally off the lows of earlier this year. And sticking with that pressure on software, we are seeing Zoom also falling at 6% in the pre-market. Its outlook also failed to impress investors. This is a company that has been working on expanding beyond its video tools into things like corporate phones and AI tools. So investors were looking for a much bigger payoff from that, but they did not get it. Revenue came in just in line, while profit came in a bit light. And we are seeing USA rare earths and critical metals extending their gains from yesterday. Critical metals was up 21% yesterday as investors bet on more government support for this industry. That's because earlier this week, Washington backed a more than $1.5 billion financing package for USA rare earth. And that's helping to lift expectations that you could get more funding and more purchase commitments from the U.S. government as it tries to reduce its reliance on China. John.
Yahira, thank you. So much has been written about an activist treasury in the last week or so. We have an activist White House. We've had an activist White House now for the last 18 months.
Going after direct investments in a whole host of different companies and picking winners and losers. And ultimately, if there is a cohesive idea behind it, if there is a predictable pace to what they're doing, sort of similar to what people have said about Treasury buybacks, then people can wrap their head around it. It's really a process issue more than the actual action itself.
Is this the new normal down in Washington, D.C.? And if the Democrats manage to win 2028, under a party that's shifting further to the left, what does that intervention, that activism look like under that government?
You could argue this has been going on for quite a while. I mean, it was bipartisan with the CHIPS Act and what was passed in terms of direct investments to different areas. And you have seen the executive branch consolidate more and more power. If you have increasing involvement with the private sector, is this the path of travel? Ultimately, is going to be a big question on the ballot. This is one of the reasons, this is actually one of the big talking points heading into the November election.
You have to really think about what we're normalizing here down in the nation's capital. On our radar this morning, crude falling for a third day as Iran and Oman hold talks to reopen the Strait of Hormuz. Discussions are set to continue between the two countries for a permanent route through the waterway. Elsewhere, the US-Canada trade war still heating up.
No deal is better than a bad deal. And we have to go tariff for tariff and dollar for dollar. And it's unfortunate. We had an attack from President Trump. It'd be more productive if we actually sit down and the Prime Minister and the President sit down and have a fair deal for everyone.
The Trump administration weighing additional levies against Canada after Prime Minister Mark Carney unveiled dollar-for-dollar retaliation. The Ontario leader, Doug Ford, maintaining his support for Carney's response. And finally, billionaire investor Stanley Druckenmiller admitting to using AI to write an op-ed in the Wall Street Journal, criticizing the Treasury Secretary's bond buyback plans. Druckenmiller telling Notice, quote, "I'm not embarrassed. I write everything using AI now."
Yeah, I was thinking more about my knee-jerk reaction, which is, this is terrible, it violates the process of writing. It's very much a Luddite view based in the fact that growing up, that is what I did in my free time. I really enjoyed it. It was a way of my going through my thoughts. And in the classes, it was really about the way you organized your thoughts, et cetera. Is there a difference between using it in class and using it in a workplace? Well, obviously there is to some degree. How much is this an issue of disclosure? How much is this an issue of the purpose of said writing? Ultimately, these are questions that we're going to be grappling with, because if it is a tool just to express our thoughts more clearly in a more acceptable way or digestible way for the public, why is that a bad thing inherently if the views are established by somebody who already has a reputation and a track record? On the flip side, it does feel like we are muddying the waters of personal expression, and I think that that really does have to be clarified in some capacity in a very different era.
So let's start with this question: where's the value, right? Where's the value for you, and where's the value in general? The value for me is, what does Stanley Druckenmiller think, right? There's value in that. I've got value from that. I don't really care how it was written from that perspective. I just want to know what he thinks and get an idea of the general argument behind that conclusion, so we can park that. Then there's value to you, and I think your perspective matters. You value writing and good writing, and you want to be able to read a story that makes sense and has a nice thread and keeps you reading, right? That's important. That should be important to the Wall Street Journal, because if the Wall Street Journal is just going to put out AI slop, you're not going to pay for it, right? I can get Druckenmiller's opinion without even buying the Wall Street Journal in the last 24 hours, without even visiting the website, because I know everyone's talking about it, and they've put that quote in several different places. Everywhere. We're all talking about it all around Wall Street for the last day, and we'll continue to talk about it for the next week. So there's value in understanding what Druckenmiller thinks, one. But then you have to understand from the media perspective, is there value in going to the Journal to read the story? And based on the fact that it was put through Claude, Gemini, ChatGPT, or whatever, there's obviously not. And the Journal, and not just the Journal, but every publication under the planet needs to figure that out.
And a big part of this is disclosing that AI was used when creating different stories. I think a lot of this comes down to disclosure. I'm fine with AI assisting. I'm fine with AI being part of the process. In many ways, it has to be, given the fact that this is the new normal that we live in. It's a matter of disclosure, and the Wall Street Journal was fine with it, the op-ed page. You saw the FT come out and actually have to run a clarification around a Richard Hausman article of Harvard, where it said that they used artificial intelligence to consolidate some of the piece. So some real interesting questions. A lot of it does continue to have to be hashed out.
It's funny how many different dimensions there are to this conversation.
It's endless.
It's totally endless. Let's talk about some real news for you. NVIDIA snapping its 7-day losing streak heading into earnings today in another test for the AI trade. Sarah Kunst of Clio Capital writing, we know NVIDIA has solid quarters. What we don't know is how many quarters of blistering demand are left. Sarah joins us now for more. Sarah, welcome to the program. Are we at the point where you believe this market is beginning to price in deceleration?
I think so. I think that there's starting to be more question marks, and there's also going to be a lot more answers as OpenAI, as Anthropic, sort of move into their presumed IPOs. They're going to have to talk a lot about kind of where they're spending money and how much they're actually spending. One thing we forget a lot is we don't have much insight into who's paying to use AI right now, and that is a huge question for NVIDIA, because if people aren't paying, eventually their chips are going to seem a little bit less appealing.
Sarah, this competition, how serious is it? I saw another story from OpenAI. This is your world, it's not mine. I'm told and I understand this is a very complex industry. It's difficult to make these things. If it wasn't, everybody would be doing it. How advanced is the competition?
So, I think about a year ago, I said, hey, NVIDIA probably has a 2-year lead still, right? Now we're halfway through that. And you're seeing things like OpenAI come out and say, hey, we have some really, really good chip design as well. Now, it's OpenAI, so you have to take everything they say with a grain of salt, kind of Elon style. But the reality is that we know that this sort of hyperscaler arms race has meant that a lot of very smart, very well-funded companies are getting more into chip design, whether that's the OpenAIs of the world, Meta, Alphabet. So certainly NVIDIA won't have this huge head start forever.
At the same time, Sarah, how much does this ultimately matter for the earnings report that comes after the bell? Is it a competition story, or is it a financing story, or is it what NVIDIA means in terms of financing the entire ecosystem? In other words, is it the financier or is it the supplier of chips that's more important to markets at 4:20 p.m. Eastern today?
So I think that actually it's the forward looking. I think that understanding how they are viewing, they're very good at telling a story on these calls, telling a story to the street so the street knows what to expect. So I'm really focused on what they say is going to happen in terms of this year. Any forward looking statements I think are going to be incredibly important to understanding are they getting nervous? Because when they start to get nervous, I think that the rest of us should be a little bit cautious.
If they aren't nervous, which is most likely, and they do talk about a robust pipeline, which is what we heard from TSMC and a bunch of the others, do you expect that to be a positive for markets, or do you think markets can't be satisfied no matter what, as has been the case over the past few earnings seasons for NVIDIA?
So I think on the credit stuff, I think on the round tripping, the markets are getting pretty wise to it, and I think they're getting a little sick of it. And so I do think that there is muted enthusiasm. There's also just larger secular trends. People are not liking data centers, and if data centers can't be built, then where do all these NVIDIA chips go, right? And then also the capacity issues. You look at the fact that everyone from SpaceX to Meta is leasing out all of this space, all of this demand. It really indicates that maybe no one's quite sure yet how much AI they're actually going to be using. And again, NVIDIA can have the best chips in the world. They largely do. It doesn't matter if no one's buying them.
Sarah, it's good to see you. Sarah Kunz to Clio Capital. That last line I think is really important. We often describe Jensen Huang as the godfather of AI, the spokesperson for the whole industry. How does he weigh in on the situation with the politics and how quickly it's moving in this country?
I think he has talked about the desire to keep in this race. He's talked about open source versus closed source, but to the degree of data centers, it's going to be a tricky one because anything he says is going to be viewed through the lens of being incredibly self-serving. So probably the less he says, the better it will be received.
Nasdaq futures this morning, negative by about 0.1%. With an update on news worldwide with your Bloomberg brief, Vonnie Quinn has more. Hey, Vonnie.
Hey, John, thank you. OpenAI claiming new processing chips, dubbed Jalapeno, can outperform NVIDIA's current lineup in testing. The ChatGPT maker plans to deploy the chips later this year to power its AI models. The move joins a growing list of firms looking to build their own semiconductors. London bus drivers have resumed a strike over working in the sweltering heat. According to The Guardian, about 1,500 union members in North London and Essex are taking part in the 4-day work action through Friday. New York Mayor Zoran Mamdani pushing for a more affordable U.S. Tennis Open. The mayor and the U.S. Tennis Association are offering city residents 1,000 discounted tickets on sale starting 10 a.m. Eastern today. New Yorkers can buy up to 2 tickets if they can get them for $100 each from main draw matches. And that is your Bloomberg Brief. John.
Vonnie, thank you. Thank you very much. We can complain about that in a few weeks' time.
complain.
Do you want to start the complaining now?
Well, I think that
Not the move to get cheaper tickets. That's a great move.
I was about to say, I think this is one place where Zoran Mamdani and you actually completely agree, and it seems like, you would support
We
this.
agreed on the FIFA stuff too.
Yeah, so when it comes to sports,
Found
the
a very
great
piece of
feature
common
of us
ground.
all. There we go.
Okay. Up next on the program, a debt reckoning.
Our deficits are not getting any better. This is a government-wide issue. We're spending too much.
Treasury does have these tools and the ability to reduce issuance at the back end of the curve. I think that would send a more impactful signal to the market rather than just these buybacks.
It's more symbolic than anything.
Andrew Balls of PIMCO joins us next, live from New York City. You're watching Bloomberg TV.
Kieran, where are we right now? What are these things?
Right now, this is the solvent yard. So it's not a very exciting part of the whole park. But we are kind of moving up to the fermentation facilities.
And you can smell the fermentation.
Yes.
And it's funny because people always think fermentation is simple, it's easy. It's not.
No, it's very complex. And we have two types of fermentation. One is microbial fermentation, and the other is mammalian cell culture. I mean, I basically could have used yeast to make beer, but now I use yeast to make insulin. So,
amazing. I think that's cooler than using yeast to make beer.
Well, both are cool. In the
but, no, but one, you're saving lives.
Yeah, but the other is also a great beverage.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Yield stable this morning at the long end of the curve, around 520 on 30s, 517 at the front end, yields higher. Heading into PCE, up by 2 basis points at 419.70. Under surveillance this morning, what many are calling a debt reckoning.
Our deficits are not getting any better. It's not just the Treasury, right? This is a government-wide issue. We're spending too much.
Treasury does have these tools and the ability to reduce issuance at the back end of the curve. I think that would send a more impactful signal to the market rather than just these buybacks.
It's more symbolic than anything. The market's going to perceive it temporary.
So here's the latest this morning. Elevated Treasury yields and the threat of intervention facing Garth against fundamentals. Richmond Fed President Tom Barkin warning of a, quote, reckoning if U.S. debt continues rising. Andrew Balls of PIMCO writing, don't get carried away. Volatility in bond markets remains at relatively low levels, and a lot of what is happening is healthy. Andrew joins us now for more. Andrew, welcome. It's been too long. What is happening right now that you believe is healthy?
Great to be here. Thanks very much. Well, yes, there's so lots of noise, but when you look at what's happening in fixed income markets, there's reasons why yields have moved higher this year. The situation in Iran and oil prices, of course, some concerns on fiscal, and then the AI issuance, the hyperscalers, their issuance has become very significant in terms of the amount of debt, and a lot of it's at the long end of the curve. But when we step back, yes, yields have moved to higher ranges, but we are back to the sort of yield levels that prevailed before 2008. So in some ways, kind of the aberration was the period of QE and zero interest rate policy, etc. And then just, the 30-year, yes, there's been some focus on the 30-year part of the curve in the US. But if you look at the 10-year 465, we've been using a reference of kind of 375 to 475, going back a few years now with a higher end of that range. That may make sense, but still within the range. And when you look across other global bond markets, it looks pretty similar. It tends to be at the higher end of the range of the last few years, but in that range.
Andrew, two-part question. If this is the return to the old normal, why is the Treasury so uncomfortable with it? And if the Treasury is so uncomfortable with it, how sustainable is a return to the old normal?
Well, it was interesting. You had a spate of news stories on the long end, and I was slightly scratching my head on this. And then you had the announcement in terms of the buybacks, which gives some credence, I guess, to the concerns in a way. And maybe this is just kind of a political reaction. Of course, we have a very different administration to the administrations we've had in the past. On the interventions itself, it's going to be interesting to watch. It's not quite clear to me why you would want to step in now. Volatility has not been high in terms of fixed income markets, again, within the ranges, as I said. So I think we'll watch now to see the behavior, how much they are spending in the buybacks, where they are bidding versus the mid or on the spline, just to get a sense. But it's not 100% clear to me why they would be doing this now, or what the definition of success is, other than there may be an idea of drawing a line in the sand, not wanting to see an ongoing rise in terms of 30-year yields, which of course markets may want to test that.
Andrew, it makes sense to say that economically yields should be higher, that it makes sense for them to be so. At the same time, it creates that much more focus on the $40 trillion deficit in the United States. And every time the yield moves higher, it gets incrementally more punitive for the United States to finance that. At what point do we enter that doom loop, and does that become a problem in its own right?
Well, I think you're right. I mean, the main thing here is fiscal. These interventions are certainly interesting, and it's been an interesting few weeks. Also, of course, with currency interventions earlier in the summer. But the big thing is fiscal in terms of the outlook for the U.S. debt market and yields. I don't think anyone is expecting any significant improvement in the next couple of years, but in the long term, in order to anchor the market moving away from a world of kind of 6% structural deficits is going to be very, very important.
Andrew, just to break in here, for you as a bond investor, when does it sort of hit that threshold? I mean, that was sort of a question that people had as the 30-year yield rose, that at what point does it keep rising because there wasn't a sustainable remedy to the deficit and there wasn't the political will. Is there a trigger point that can be breached and then it becomes really problematic for you as a bond investor?
So we tend to look at the long-term outlook, and 5-year, 10-year, and longer. The US, if it remained on this path over that long period of time, would see a continued rise in debt to GDP. In the short term, as I said, we're not expecting much of any significant improvement, although the Treasury have said that they have plans. I think when you step back, we get compensated for the risk as we see it. Again, at the higher end of the range is where we've been. If you have a high quality bond fund, the yield's 6-7%, something like US or global ag. That looks like very good compensation. So you are being paid for this deterioration in fiscal metrics, which is global. I mean, you see this across the world, not just a phenomenon in the US. And so I think that keep calm, carry on. There's good equity-like, as we would see it, compensation for the risk. The outlook is a difficult one in terms of the long-term US fiscal outlook, but we're getting compensated for the risk as bondholders because of the very significant repricing you've seen. If this was back to the very low levels we had in 2020 at the height of the COVID pandemic, it would look very different.
Andrew, I've got 30 seconds. Do you feel the same way about USIG?
Yeah, I think USIG, that now there's going to be pressure from the extent of the issuance from the tech sector, so be careful on the tech sector in particular. Do the bespoke deals, the special deals. Overall credit spreads look tight, but okay. But be careful, I think, in terms of technology. Don't have the generic exposure. Go and do the deals where we can get excess yield, excess risk premium.
Andrew, it's good to see you. Thank you, sir. Great timing. Andrew Bulls there of PIMCO, a man himself who spent some time in the media in years gone by. Should have got his opinion on the Wall Street Journal piece.
Yeah, actually, that would have been really good.
Former journalist himself, he would have had some thoughts, I'm sure.
Maybe. That would have been really good. Andrew, please come back and give us those.
Up next on the programme, Dan Skelly of Morgan Stanley, Tobin Marcus of Wolfe Research, Capital Investment CEO Mark Hine, and Conrad de Quadros of Citi. The second hour of Bloomberg surveillance is just around the corner.
To Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Everybody has a moment where they put into action all they've practiced, where they step up to a challenge and either succeed or fail. But what are those moments for some of the world's most influential leaders?
It was a rough and tumble world, and I thought, okay, I can rise up, I can play this game, and I did play the game.
It was great, and it was depressing, and it was disappointing.
My chair at the time sat down with me and said, "Succession starts now."
I'm Francine Lacroix, an award-winning journalist. For the last 25 years, I've interviewed world leaders, bank bosses, even fashion icons. I'm often asking about the news of the moment. But I've always been curious, who are these people as leaders? Join me for the podcast version of Leaders with Francine Lacroix. I'll start your week with conversations that explore what drives the world's most influential people, how today's leaders got to where they are, where they're going next, and how they've transformed their organization in the process.
Make decisions. A poor decision is always better than no decision.
You have to have truth tellers around you, and you have to be willing to listen.
You don't want to be setting strategy in the middle of a transaction, that's for sure.
Do it for the right reasons. Don't do it because of FOMO.
We'll also learn lessons which we can apply to our work and daily lives. Tune into the podcast version of Leaders with Francine Lacroix. Listen and watch on Bloomberg Television or wherever you get your podcasts.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
The trading day is about to start.
And you're already looking for that edge.
The Opening Trade brings you everything you need to know as markets open across Europe. I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie. This is your Opening Trade.
Only on Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Burr.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
There is kind of this push-pull between what Warsh is looking at, what Bessent wants to accomplish here.
Will Kevin Warsh say that we have a fiscal issue that's driving the inflation side?
We've had a change of leadership at the Fed, and we're still trying to figure out how they're going to react.
If the Fed does hike as we expect, typically that does lead to some pressure in the long end.
The Fed's inflation credibility, shockingly, after 6 years of missing the 2% target, is still very much intact.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, the second hour of Bloomberg Surveillance starts right now, and your price action scores look like this. Equities negative across the board, slightly lower. We're down by about 0.1% on the Nasdaq 100, pretty much unchanged on the S&P. In the bond market, yields have stabilized at the long end around 520 this morning. Yields slightly higher by a basis point of 517. In the commodity market, this move has helped stabilized fixed income. This move in crude. WTI and Brent briefly. WTI this morning in the 70s, 80 right now, and down by 2.7%. Heading into this later this morning in 90 minutes time. PCE data later this afternoon. Earnings from Nvidia. Then just a few days away. Kevin Warsh, Fed Chair, speaking in Jackson Hole, Wyoming.
Normally we'd care about PCE. I understand that we know what it's going to be just because of the inputs that we've already gotten in terms of the data. But normally this is the key inflation metric for the Federal Reserve. Wouldn't we be excited to see what this is to determine Fed policy? And no one seems to care. Everyone's talking about Kevin Warsh instead and what Scott Bessent is doing over at the Treasury. And it gives a sense, is the story about economics? Is the story about oil? Or is the story about a lack of understanding from the U.S. Central Bank, how closely it's working with the Treasury Department and what it's looking at to understand what action it needs to take?
That's the story now. It wasn't before. We should have been focused on a string of weaker than expected data, retail sales payrolls, and then a soft PPI print as well, which should have taken some of the steam out of the hawkish argument into September. For some reason, it hasn't happened that way at all, and the hawks are still hawkish a few weeks out.
And even some of the doves are becoming more hawkish. I mean, Boston Fed President Susan Collins yesterday, in a speech that she released, a statement that she released, said that ultimately you need to see more inflation, more evidence that inflation truly is coming down in a sustained way, and that the data that we've seen over the past couple of weeks isn't enough to take the possibility of a hike out of her mind, that ultimately she's very concerned. Is this an issue of just impatience? Is it just a time issue with how long inflation has remained above 2%? Or is there something else, a fear of losing that credibility that we talk so much about?
All three. I think 1 and 2 are connected. I think being above target for so long has led to this impatience, this moment, and the lack of clarity on the third point is raising questions about credibility. The performance in the news conference a few weeks back has done a lot of damage to how the institution is perceived. It's why there was a clean-up act in the FT. It's why there is so much attention on this speech in a few days' time.
Yeah, and then there's a real economic debate here about what inflation metric we should be using. And I did go back and look at some of the Alan Greenspan era when the 2% target was first put on, and ultimately why it was and how it was perceived at the time. If this is a new Alan Greenspan Fed, do you expect a similar discussion to take place, with Kevin Warsh possibly saying it is a mistake to target with any precision a 2% target, not saying that we don't want to bring inflation down, that's a dangerous conversation to have right now, but maybe change the metric that they look at and give us some clarity on that. That's the reason why people aren't emphasizing PCE as much as they otherwise would. Yeah, well, you already were talking about that.
Look, Chairman Powell, I think, addressed this in the past few years. Now is not a good time to do it because we've been persistently above target for so long. We've got to get our house in order before we start thinking about moving the goalpost. Moving the goalpost now would undermine the credibility of this institution, I think, even more in the eyes of many market participants.
Dear Gemini.
Or dear Claude.
Dear Claude, move the goalposts without moving the goalposts.
Yes.
Make it 40 minutes.
Don't make mistakes. You think it's going to be 40 minutes, this speech?
I do. I think it's going to be 40 minutes talking about the framework and talking about the bigger goals at stake and what the potential task force is.
I hope it's not 40 minutes. My goodness.
What do you think? How long do you
Just
think
give
it's
it
going to be?
10 minutes.
Really?
Right?
10 minutes of what?
Super short.
But then you actually have to say something.
He's got to say something. He agreed to the speech.
Yeah.
He didn't have to.
This is my reaction function.
He really didn't have to agree to the speech, by the way. I wouldn't have raised any questions about that at all.
That would have lent its own issues to markets. If he had said, I'm not going to give a speech, that would have told as much as him giving a speech and saying nothing. Arguably, him saying nothing and just talking in word salad is going to be potentially less pernicious to markets than him coming out or not giving a speech at all, or not even attending.
We'll see what we get in a few days' time.
Arugula.
2 days away. Equity futures right now, the S&P 500. With some balsamic?
Yeah, maybe.
Yeah, just about unchanged on the S&P. Word salad. In the bond market, 2s, 10s and 30s. Yields look like this at the moment. Stable at the long end, around 520. Coming up this hour, we'll catch up with Dan Skelly of Morgan Stanley on what's driving the bull case for equities. Tobin Marcus of Wolf Research saying a Treasury intervention is unlikely to move the needle for yields. And Conrad de Quadros of Citi Wealth looking ahead to a key round of inflation data. We begin this hour with stocks stalling as investors brace for a busy day on Wall Street. Dan Skelly of Morgan Stanley Wealth Management writing, we remain constructive on risk assets because fundamentals are strong. Financial conditions remain controlled. AI productivity evidence is emerging, and valuations for the average stock are undemanding. Dan joins us now from what? Dan, good morning.
Good morning, John.
If it looks so good, why does it feel so bad?
Well, because I think
throughout the whole of August for so many people.
I think, to be fair, and we'll see who's actually tuning in on the last Friday in August to the big war speech coming up. But I think, to be fair, this is a period of time where liquidity conditions are waning, when people aren't as focused. And to be fair, stepping back, we have seen politics matter for this market in the last year or so. They've just mattered in the temporary sense. They've been the pop-up ads that we've discussed. So look, people are talking more and more about the midterms. We're getting more questions from our wealth management constituents related to, can the market actually act better in front of that catalyst? And I think those are the topics people are focused on.
When did the policy shocks become the movie and not just the pop-up ad?
Oh, so I think it's very much still the pop-up ad. The movie, which actually, interestingly, you guys did not talk about on the intro, is still AI. And we saw that really on display across what was a vicious rotation this past summer, out of semis into software. Now it looks like a little bit back out of software. But I think AI remains the main story for good reason.
Yeah, well, this is the reason why I think a lot of people are looking to NVIDIA later today, not just when it comes to the outlook for chips, but also the financing of it and the appetite for it. How important will it be to get some details around the $500 billion memorandum of understanding that it signed, the $100 billion data center that it's planning to finance for OpenAI, all of these big numbers around the financing needs of these companies?
It's important, and I think what NVIDIA is going to try to strike is twofold. Number one, clearly an update in terms of the funding and how it's still relatively healthy, secure. Our credit team at Morgan Stanley actually just came out with a great in-depth view looking at NVIDIA. And despite all of the different initiatives that they're undertaking, it's still a very clean balance sheet at like less than a turn of debt to EBITDA over the next several years. So I think they're going to strike a healthy tone on financing. But secondly, Lisa, they're obviously going to talk about the fundamentals. They're going to talk about the next product cycle. They're going to talk about compute demand still exceeding supply. And they're going to talk up their dominant market share, which, despite all of the challengers, is still the #1 market share.
Do you think that this inflation is persistent and problematic for the broader economy? And I ask that with an eye toward Friday, the idea that NVIDIA is going to talk about memory costs, it's going to talk about demand to the roof, and that's one of the biggest inputs for inflation that we've seen, except for oil prices. Is that something that has to be combated, that's actually starting to trickle down into consumer goods across the board?
It's a great take, and you're talking about the tech and AI supply chain. Let's zoom out and talk a little bit more about the consumer, because we heard from Walmart in the past 2 weeks that $4 gas prices did matter for their core constituent, and certainly that lower-end consumer who, candidly, has held up better than many would have perceived, I think, in the last couple of years. So the tech supply chain and the memory costs and some of the different issues there is going to remain top of mind. I think that having been said, we're also hearing about potential competition and emerging sources of cheaper memory, whether that be from China or other sources. And so the way our capitalism structure always works is these really well-regarded high-quality franchises are going to find alternative sources of inputs to try to make the profits work.
So where do you think the profits will be made? Where's the value being created? As you look across the whole AI ecosystem right now, increased competition into the hardware, that's what you're anticipating is what we're seeing. Where do you see the profits in the future, the value being created?
So per my opening comment that you alluded to in the intro, we're seeing increasing evidence, if you look at Michelle Weaver's work on the strategy side, increasing evidence within the Fortune 100 of AI adoption. So if I go back a year ago and you scrape all of the S&P transcripts from earnings season, no doubt using some tool from AI, of course, we saw something like 25% of S&P companies referencing direct productive uses of AI. Today, that number is 40%. The next phase of this, no doubt, and frankly, the phase that the earnings picture, which has been so strong of late, is dependent on going into 27, is when does that actually translate to explicit earnings guidance upside? We think that's coming in the next year or so.
Is there a particular industry where you see that concentrated in, or is it across the S&P?
So when you dig into the details, it's financials, it's healthcare, it's parts of manufacturing, and it's parts of consumer. So you see, interestingly, a lot of old economy sectors who are adopting and should see the most leverage in terms of the productivity gains.
You went there using AI for your analyst reports. We've been talking a lot about the Stan Druckenmiller op-ed in the Wall Street Journal. Is there some sort of view in terms of when you can use AI, when you can't, how you have to disclose it internally? I know you might say no comment. Why are you asking me this on live television? But this is something that is increasingly a discussion as everybody grapples with authenticity, using tools that are important to use, but also trying to play by the rules and present themselves in the most honest way possible.
Sure, and I remember reading it myself thinking this has like harsh edges around it, which is always the sign of some type of intervention. So in our world, right, two things I would say is one is increasingly in analysis and research, as I just mentioned, on the strategy effort, it is a must-have. And secondly, in the wealth business, in terms of financial advice, in a world of AI proliferation, it makes the human interaction and the human judgment and understanding of a client's full picture even more important. And so, you know, look, there's different facets to how it cuts across our industry. We're using it, but we're also saying in the wealth business, the financial advisor and the sanctity around that trust and relationship is not going away.
Diplomatic. Dan, thank you. Dan Scully there of
Always.
Morgan Stanley. You're basically asking a footballer, a professional footballer, to criticize Lionel Messi, right? It's Stan Druckenmiller. How many people on Wall Street do you think are going to come on the record, on TV, and criticize Druckenmiller?
Someone could say his sneakers weren't that clean one game.
Just not going to happen.
I'm not even just about him, but more broadly, there is a real question about process, about where it should be used, about where you need to disclose that it's being used, about how much you need to check it and with the human engagement. These are all important questions that I think are being had.
I have more questions this morning for the Journal than I do for Druckenmiller.
I would agree with that.
Right, I think
this doesn't speak badly about him.
It's their problem, not his. And he doesn't seem to care at all.
And he was super transparent about it, and I respect that. The fact that he went out and was quoted in another story by the Wall Street Journal saying, yeah, that's right, that was artificial intelligence.
The line for me was, this is an invoice. When I saw that, that's not this is an invoice, or something like that. That was the tell for me. I read that, I was just like, oh, come on.
I thought that was creative. I have a lot of respect.
You thought that was good? You thought it was a good line?
I thought that it was kind of an interesting way of saying it, you know, when prices go up.
Classic AI signature on that.
Either way, AI is actually very clever. It's just a matter of whether we need to demonstrate.
For the same reason I don't like LinkedIn right now. Well, it's just like a lot of AI slop through LinkedIn.
Is that what it is?
Oh, there's so much of it, Bramo. It's all the same.
Really?
Yeah,
write something that makes me seem sensitive?
It reeks of it.
Make something that's sensitive, lesson learned.
What's interesting, though, is that there's a lot of slop on X as well, but the AI slop on X seemed to be more engaging than it is on LinkedIn.
Because it's shorter. You can go longer on LinkedIn. But I'm wondering what I would write. Make me something, a lesson learned that's not too bad, but that makes me feel approachable.
It's this sort of like lazy attempt to be sincere and on LinkedIn that I just
I always take
can't get into.
Face value.
Anyway, let's give you an update on news worldwide this morning with your Bloomberg brief. Vonnie Quinn has more. Hey, Vonnie.
Hey, John. Iran and Oman in talks over an interim framework aimed at reopening shipping in the Strait of Hormuz. The deal would establish a temporary joint maritime corridor, and mine clearance would restore safe navigation through the area. The two nations are holding more talks to secure a more permanent route. Senator Darlene Graham defeating Congressman Ralph Norman in South Carolina's Republican primary runoff. Graham receiving the full backing of President Donald Trump to replace her late brother, Lindsey Graham, as the state's GOP candidate. She'll face the Democratic nominee, Annie Andrews, in November. OpenAI data center executive Chris Malone left the company last week, according to the Wall Street Journal. His exit joining a wave of leadership departures. This as OpenAI works towards an IPO expected in the next few months and races to catch up with rival Anthropic. That's your Bloomberg Brief. John.
Hey, Vonnie, thank you. Thanks for the update. More from Vonnie in about 30 minutes' time. Up next on the programme, bracing for the Treasury's next move.
We are trying to bring the market back into equilibrium in a thinly traded market.
We haven't bought a single bond yet.
Up next, Tobin Marcus of Wolf Research, live from New York City this morning. Good morning.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
It's Bloomberg Money.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals. Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
It's a snoozy Wednesday in August. We need more of those, right? More snoozy summer days.
You're going to say
we haven't had money.
Okay, you're going to say that.
I said this last week, and then we got better intervention.
You literally are just jinxing it. You're going to create absolute wildness.
Kevin Walsh leaks ahead of the speech on Friday.
Kevin Walsh comes out
in the FT.
You're going to see me unplugged.
We're going to buy bonds too.
We're going to expand the balance sheet.
I'm not saying he's going to say that on Friday.
Heard it here first by Jonathan Farrow.
Nobody thinks he's going to do that on Friday. Equity futures right now unchanged on the S&P 500. The gold bug's getting really excited. Nasdaq futures unchanged too. Likewise on the Russell. In the bond market, 2s, 10s and 30s shaping up as follows. Yields just about unchanged this morning. Higher at the front end by a couple of basis points. 419.70. Really anchored around 420. Even with a string of softer than expected data. I think that's notable heading into September.
A lot of Fed officials who have spoken since that FOMC meeting have said ultimately the string of softer data doesn't really indicate anything. One number doesn't mean much. They need to see a continuation of disinflation for this ultimately to matter. Again, the market's looking beyond what we've gotten so far.
A bit of stability in the bond market so far. Under surveillance this morning, bracing for the Treasury's next move.
We are trying to bring the market back into equilibrium in a thinly traded market, we were left with a mess.
We haven't bought a single bond yet. The next time we have an operation is September 9th. So we will see on September 9th.
We will see in a few weeks' time. Here's the latest this morning. Yields holding steady as Wall Street pushes back on Treasury Secretary Scott Bessent's bond buyback plan. Tobin Marcus of Wolfe Research writes the following: if the myth threat of action isn't enough to get yields down, we think Treasury will need to go very big on this program to have a meaningful impact. Tobin joins us now for more. Tobin, welcome. Obviously, the Treasury Secretary's been vague about the overall size of what this program might look like over the next several months. In fact, there was a leak more recently that maybe they'd use the general account. How much of the general account they use, I've got no idea. They could also just issue T-bills and go big, Tobin. How big is going big? How big do they need to go?
Yeah, so I don't think that the difference between using the general account or using new bill issuance as a financing mechanism makes much of a difference to the size of the program. They have the capacity to go big either way. In terms of scale, I mean, we look back at the Fed's Operation Twist in 2011, which of course is what this Treasury Twist label harkens back to. That was a $667 billion bond buying program, where the academic consensus, the academic literature consensus is that got you about 10 or 15 basis points on the 10-year. That's a factor of 8 bigger. Like to get to that scale, you need to increase this program at its currently announced scale by a factor of 8 and run it through the end of 2027. So it's quite a large expansion, and nothing that we've seen from Secretary Bessent suggests to me that he's prepared to go that big.
Tobin, is there a problem to go big on to begin with? Can we sit on that before we run away with ideas on how to challenge this? Long end of the curve, as you know, the 30-year piece of the Treasury curve, it's not a major piece of the curve that finances the US government. It's not a major piece of the curve that dictates borrowing costs across this economy either. You have to come in much closer to 10s and perhaps even shorter than that in many cases too. Tobin, why has this become such a hot issue for the Treasury?
Yeah, the 30-year itself is basically a driver of headlines. It's kind of a talking point. I completely agree that it's not really material for a lot of the actual real economy. Not much is anchored to it. I mean, these buybacks are across the entire 10 to 30-year spectrum, both the 10 to 20-year bucket and the 20 to 30. So, they're probably affecting the 10-year as well. There have been moves up across the curve, even though the 30-year has been the most dramatic. The 10-year also has been trading at levels that they're uncomfortable with, even if they're not quite as unprecedented within the past couple decades.
Tobin, I've been trying to gauge whether anyone in Washington, D.C. starts to say, wait a second, maybe this is our job to take up the deficit, or maybe we have to care about this. And then I remember what Warren Buffett said in 2011. He said, it's very easy to solve the problem of the deficit. He could do it in 5 minutes. You just pass a law that says anytime there's a deficit of more than 3% of GDP, all sitting members of Congress are ineligible for re-election. Is there any chance, given the political pressures and given the re-election cycle, that this Congress could actually take it up before prices go down significantly more and yields go up significantly more?
I would be very surprised. Secretary Bessent on last Thursday, promised that there would be a shortly forthcoming fiscal consolidation plan, which he indicated would be late that week, early this week. We, of course, have not seen any such thing. Whatever they do roll out, I think is very unlikely to make a difference in the deficit. He was kind of pitching it like Doge, but of course Doge already happened and did not meaningfully move the needle. So, ultimately we're going to need bipartisan action on this in Congress. I think there's far too little sort of mutual goodwill and trust across the aisle to have any hope that people can hold hands and jump on that. But the optimistic story about this over the next few years is that we get into a point where deficit reduction is perceived by ordinary voters to have a benefit to them by virtue of bringing down interest rates. And that would be like the early 90s, where the fiscal consolidation actually has some prospect of reducing consumer-facing interest rates like mortgage rates that I do think are one of the most salient elements of the affordability challenge. I don't think we're there yet, but fingers crossed, maybe we get some of that in 2028.
In the meantime, different administrations are going to have to try to make sure that yields stay below a certain level, just purely so interest expense doesn't go up too much to be overly punitive. I just wonder how international buyers will play into that, particularly governments, especially with some of the sanction regime that continues to be used as a tool. Do you see that being ongoing pressure, the idea that some of these big buyers of treasuries that are government and price insensitive are going to back away on the margins, or at least not buy as much?
I don't worry that much about that. It's already been a significant secular shift away from the foreign official sector and towards more price-sensitive domestic buyers in terms of who the incremental buyer of treasuries is. So I think it's already the case that at the margin, it's somebody who cares about prices who's buying the incremental treasury. That's going to continue. I don't know that this scale of the sanctions regime that was rolled out on Monday is so dramatic that it's going to make anyone who is buying at scale today think about trying to exit the dollar system, even though that threat was made.
Tobin, it's good to see you. Thank you, sir. Tobin Marcus there of Wolf Research on this backdrop for this debate right now. There was no crisis. To paraphrase the Druckenmiller piece in the Journal yesterday, this bond market hardly cleared its throat, and you had the Treasury Secretary stepping in. There are so many different fundamental reasons for yields to be at this level. The headline is really over the last week. There are many, but of course here's one. It's just how nervous the Treasury got over yields at this level with this backdrop and all these reasons, fundamental reasons for yields to be higher. And by the way, when I say fundamental reasons, I'm not just talking about the deficit. In fact, there are far more constructive reasons for yields to be at this levels in this economy, with 6% nominal GDP growth in America right now, and risk appetite incredibly buoyant. Why wouldn't yields on treasuries be at the levels they're at right now?
Yeah, this is why the focus has been so much, though, on the deficit. The deficit isn't the driving factor for why yields are going up, but it is the reason why higher yields becomes overly punitive for the overall budget in the United States. And I think that that is what's different. And I think that's an important distinction to draw. The budget deficit is not driving yields here necessarily, but higher yields is driving the deficit further. Yep. And then it becomes that doom loop discussion that people have to talk about. So my question to Scott Besson is, what is that level on long-term yields, or what is that level on average blended maturities for the U.S. Treasury Department where it becomes overly punitive, where suddenly you do enter that fiscal doom loop? It becomes incredibly difficult to pass any agenda and pay for anything outside of just simply interest expense.
This is what makes the return to normal somewhat unsustainable. When people come on the program and say, we're going back to the old normal pre-GFC, this is where yields were in the 90s, the 2000s, it was sustainable then because debt to GDP ratios weren't what they are now. If the Treasury is nervous now, I think that tells you about something about how sustainable this might be going forward.
Yeah, and what this takes money away from. Think of what they can fund and what they can't fund. If a significant portion, bigger than the defense budget, is going to be expense.
Let's talk about sports next. Up next, we'll catch up with Capital Investment CEO Mark Hine on the rapid pace of private capital firms piling into sports. That conversation up next.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world, the dealmaker playbook where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech. Every weekday, only on Bloomberg Television.
Hi from New York City, welcome to the program. Equity futures right now in the S&P just about unchanged. We're negative by 1/10 on the Nasdaq. In the bond market, 2s, 10s and 30s shaping up as follows. Yields stable at the long end, up by a single basis point at about 517. In the commodity market, a lot of attention on what's happening with crude, WTI and Brent. 3-day streak of lower prices. Brent crude at 86, WTI just at about 80, and negative by close to 3% on the session. There are talks between Oman and Iran about how to reopen the Strait of Hormuz and get volume up and traffic through that strait. This headline just crossing Bramo moments ago on that agreement, according to the IRGC.
Yeah, this says that Iran and Oman have agreed on sharing some of the Hormuz revenues. This is Iran's SEPA News, citing an IRGC spokesman. Interesting to think that Iran and Oman are going to be sharing Hormuz revenues, suggesting that there will be Hormuz revenues, which then gets to a question of, is it a toll? Is it a service fee? Is it acceptable to people in the region?
Is it acceptable to the United States and the president? And how do they weigh in on all of that? The encouraging sign of all of this, I think, is from Secretary Rubio saying that, ultimately indicating through Axios reporting today, suggesting that we're going to take the diplomatic path and not the kinetic phase and repeat that kinetic phase. But Lisa, I think the commodity market this morning reflects a situation where we're pricing out the potential for another harsh kinetic phase, as opposed to pricing in the potential for a deal. I hope we're closer to a deal than it seems we are, because if you're closer to a deal, you're closer to 70 and the 60s on crude than you are certainly to 80s and the 90s.
Yeah, you're closer to reestablishing more normal commercial activities in the region and beyond, and it will help with a lot of different economies. There is an issue here, though, with exactly what this new normal looks like, and if people are just getting creative about getting new barrels out, as well as what happens in the interim in this sort of uneasy calm that is expected to take place.
86 right now, Brent. WTI at 80, 2 hours away from the cash open. Let's get you some morning movers, some single names. Yahara has more. Hey, Yahara.
Hi, John. We've gotten a few retailers reporting earnings this morning, and we start with Kohl's. Shares down nearly 4.7% in the pre-market, even after boosting its full-year EPS forecast. But the issue at the struggling retailer is still demand. Comparable sales fell about 1%, which was worse than analysts expected, while Kohl's also still sees little to no sales growth this year. It is getting a boost from tariffs, but investors want to see more people going into its stores and buying more. And it's a similar story over at Bath & Body Works. Those shares down 4% even after it raised its profit outlook. But sales at U.S. Canadian stores fell more than 5%, and It's expecting another sales decline this quarter. And remember, Bath & Body Works, they sell discretionary items, things like lotions and candles that consumers can really put off, especially when they're feeling the pinch. And it appears that is what they're doing here. And we end on software with Intuit shares. They are still plunging down 11% in the pre-market after giving Wall Street a much weaker outlook than expected. TurboTax revenue is expected to grow just 2 to 3% this year, and Jefferies points out that would be the worst growth it's seen in more than a decade. John.
Yohara, thank you. With the update this morning on some single names for you. More from Yohara in the next hour. On our radar this morning, Secretary of State Marco Rubio reportedly signaling to allies that the U.S. is unlikely to initiate any new strikes against Iran. According to Axios, Washington is shifting its focus to economic pressure, including fresh sanctions. Elsewhere, the Richmond Fed President Tom Barkin warning rising U.S. debt could eventually trigger a, quote, reckoning. The total recently surpassing $40 trillion, Barkin adding that at some point, people will stop buying the debt. And finally, OpenAI, claiming a new processing chip called Jalapeno can outperform NVIDIA's current lineup. The ChatGPT maker plans to deploy the semiconductor later this year to power its own AI models.
So I guess fast and hot, is that the idea of why they named it jalapeno? I mean, really, I have to wonder exactly what they were thinking. Nonetheless, I will move on. This is going to be the subject of a lot of the discussion with NVIDIA in terms of the competition. How much is that bringing down some of the prices for their own goods? How much is this pressuring them, given the fact that high prices and high memory input prices is prompting a whole lot of creation, whether it's at OpenAI or whether it's at the likes of Microsoft or Amazon, that we're seeing similar types of
And to some extent weighing on the multiple over at NVIDIA already. We spoke to Sarah Kunz at Clio Capital in the last hour, talking about the potential of a market pricing in deceleration for this company in the next few years.
Yeah, not only is the competition with price, but also with how far beyond these other competitors NVIDIA's chips actually are. How do they maintain an edge? How do they consolidate a lot of the talent? OpenAI, of course, has been in a spotlight for not being able to retain talent. So again, talent war is heating up. If you want a big bonus boost and you work in this field, I assume you
the money's crazy, right?
Just pouring in.
Have you seen the price of real estate around some of these companies? Like what you can get now? It's insane how expensive it is.
And then it's even more insane when you see that somebody hasn't even graduated college yet and they're able to buy
I know. Well, good for them.
Yeah, I agree. 100%.
I'm happy for them.
I'm happy for it too. If you want a place to stay and you want to be my friend,
yes,
let me know.
Well, let's talk about something less risky than investing in OpenAI, apparently. Private capital piling into sports, with at least 5 U.S. professional teams striking deals to change ownership just this summer. Investors fueling record valuations with more than $96 billion flowing to the asset class since 2018. Mark Hine is the CEO of Capital Investment Corp and has stakes in teams across the NFL, MLB, and Premier League, telling Puck News recently, at today's valuations, there's meaningfully less downside risk in owning a piece of the Lakers than a piece of OpenAI. Mark, I'm pleased to say, joins us now for more. Mark, welcome to the program. Quite a provocative quote, but I'm going to build on it and ask you this question, Mark. Do you think in some ways this is the one part of the entertainment industry that might well be insulated from what happens with AI?
For sure. First of all, it's great to be with you guys. And for sure, this is much more insulated from AI than most parts of the entertainment industry. Sports and music are the two things that bring us together at scale. AI is not going to change that. The drama and the excitement and the communal experience of coming together to watch your favorite team isn't going away. In fact, I would argue it's only going to grow as people have more time and more money. They're going to go and try to do stuff like this and have these kind of experiences.
Mark, let's talk about opportunities then for investment. I was reading through the transcript of that interview that you did with Puck News, and within that you reflected on that opportunity to get a franchise in Philadelphia, I believe, Mark, to get exposure to the NBA back then. Is there a similar opportunity that's available right now compared to the one that you passed up back then?
No, to invest in the 76ers at a $250 million valuation. No, I mean, look, back then, sports teams have always had a bit of being valued on the traditional business valuations, and a bit on intangible things, whether people wanted it because they loved the sports or the experience, or because they viewed it as a store of value and uncorrelated assets. Always had that mix. What's happened over time is that the amount of the valuation that's now the intangible part, the uncorrelated part, the store value has grown so much. And that's why I don't know what the 76ers would be worth today, but it's at least 20 times as much. And in the major sports, you're not going to find that again.
Mark, a lot of people were decrying the Middle Eastern money that was going into soccer, in particular football, in Europe as distorting valuations so as to make it absolutely unaffordable to get involved if you are an investor, at least not attractive multiples. Do you see that kind of dynamic starting to happen in any other regions? Is that something that you are following closely?
Well, I mean, look, it is getting harder and harder for all kinds of people to be the majority owner of these teams. You see the prices. You showed the logos of the 5 trades in the U.S. But what's interesting is at the same time the prices are going up, what is driving a lot of it is actually a much more vibrant market for minority owner stakes, limited partner stakes in these teams, and the amount of capital that people are investing to take those minority stakes is growing. And so the headline price is going up. The majority owner ticket price is also going up. But a lot of the capital is actually coming from the people in the cap structure around the majority owner.
Do you have aspirations to become a control owner for any particular?
Well, I do own the tennis tournament in Washington that just ended, which really was my childhood dream. I was a ball kid at the tournament, and I'm fortunate enough that I do own that. And as you noted, I'm an investor in the Commanders and the Orioles and Leeds United, and I love that. I love both being the control owner in a big event that means a lot to me, but I also actually enjoy being a supportive minority owner in the other things.
Mark, can we talk about Premier League football? You mentioned Leeds United. I'm always fascinated by the American perspective on this. When you look at the franchise value of, say, the Seattle Seahawks at close to $10 billion, without any disrespect to these Seattle Seahawks, I think that we can sit here and safely say that on a global basis, Manchester United is a far more visible franchise. And yet, for some reason, these American franchises are able to generate that much more brand value and attract that much more money. And they seem to be valued at a higher level, a bigger premium, if you will, Mark, compared to English football, Mark. What explains that?
It's such a fascinating question. And actually, the other thing I would add is actually now if you look at MLS franchises, some of them are more than Premier League teams. And you would say, well, how is that possible? It really comes down to 2 things. One is the economic model for European football teams is not that great. Even the ones that generate the most revenue don't generate very much at all of a bottom line. And so that's one. But the other huge one is relegation risk. And it's best shown when you compare a league like MLS that doesn't have relegation risk and you look at the ones that do. It's a huge discount because not only obviously the prestige drops if you get relegated, but you lose a massive amount of revenue at all. And when that happens, and so a huge amount of the difference, I think, is explained by actually relegation risk.
Can we pick up on that, Mark, and just apply it to, say, Leeds United? Leeds United is one of those clubs that always runs the risk of being relegated in the Premier League. It takes a lot of investment to stay up. You've managed to do that. Mark, does that affect and influence how you run the club compared to, say, how you'd run a franchise in America? And for those not in your world, can you give us examples?
Yeah, so first of all, I'm not in the control. I mean, the team is run terrifically well by a group of executives affiliated with actually the San Francisco 49ers. They do a great job, and I'm not in the weeds with them on that one, but we talk a lot, and I see it. And well, it does have a huge implication on how you run the team, because when you're relegated, you lose 200 million pounds of revenue over 2 years, and then when you come back in, you get that back. And so when you're in that zone, it's a lot harder to make to have long-term planning the way you do in an American traditional sports franchise, because you have this revenue uncertainty both ways. Now, we had a great season last year. We finished mid-table. We're feeling really good. Now you start to see how you can start to invest. And in fact, once we got promoted, we announced meaningful stadium expansion plan to Ellen Road, our home stadium, which you wouldn't have done while you were relegated. But when you get promoted and you believe you're going to stay up, then you get the revenue certainty that then actually lets you invest in all parts of the club, including the stadium.
Mark, since you're on the other side of this discussion, often on this show we'll talk about ticket prices, whether it's to the U.S. Open or whether it was to the World Cup. We'll say the prices are just too high. How do you balance the actual price of tickets versus the revenues that you get from other streams of advertising and beyond from just having the most eyeballs possible?
Yeah, and that's a great question. Obviously, it's a hot topic this week already because of the U.S. Open and some of the ticket prices there. Look, I view our ownership in these teams as caretakers for community assets. These teams or these events mean so much to so many people. I think you have a real obligation to finding ways to making them accessible for everyone in your community. And I think that there is a business part of it, that it's good business, but far beyond that, it really is part of your responsibility as the owner is to make sure that people can attend these events. And so you've got to find ways. Now, there's a lot of ways to do it. Some sessions in a tennis tournament are less popular than others, so you can offer cheaper tickets. You can allocate tickets to certain groups. The challenge, and this is what happened at the U.S. Open, is with an incredibly liquid and easily transferable secondary market. If you sell tickets cheap to someone, it's very hard to regulate them not putting them back on the market and getting the market price. And that's a bit of what's going on here. Even the most well-intentioned owners who do this end up not able to accomplishing their goal because it's so easy these days once you get a ticket to resell it. So it's a challenge, but you saw the U.S. Open found a way to get 1,000 tickets in the hands of New Yorkers. We do similar things with the community our tennis tournament is in. We do the same thing with the Commanders. I really think it is part of your responsibility as an owner. The other thing I would say that I think happened this week at the U.S. Open and is happening is it's so easy to put tickets on the market that when your days or weeks out from an event, people will just put the ticket on the market with an aspirational price. Yeah. And so the headline looks really bad. They're raising these prices, I think. The event gets closer, usually the prices come down. It's not as bad. But that headline of people going online and seeing these prices, I think, obviously upsets people.
Mark, we could talk to you all day. Let's do this again soon. In studio, hopefully. Yeah. Mark Hine, thank you, sir. The Capital Investment CEO on the price of franchises and the price of tickets right now.
Yeah, I mean, this has been a hot topic. And as he said, increasingly for the owners, those aspirational prices are really bad PR for what even the reality ends up being. And it's a great sort of whipping post for people who say the prices are just too high.
Without a doubt, I mean, they are too high. Premier League football, by the way, season tickets compared to American sports, super affordable.
Yeah, it's because of
relegation
relegation
risk. If you saw the prices.
Risk. Yeah, it's relegation risk.
Right? It's that too. It's not really that.
It's just a different...
No, it's a different culture.
Yeah, and it's a different group of
people.
people.
It's really difficult to get season tickets. The waiting list is super, super long.
It's like the Green Bay Packers.
To get access.
Same thing.
Same thing?
Yeah, very much so. People, it's like lifers, then they pass it along to their kids.
Right. You sort of inherit it from generation
to
generation, right? Let's give an update on news elsewhere this morning with your Bloomberg Brief. Vonnie Quinn has more. Hey, Vonnie.
Hey, John, thank you. IMF Managing Director Kristalina Georgieva saying AI investment is becoming a growth engine for the globe as countries ramp up data center and infrastructure construction. Adding the global economy has weathered the Strait of Hormuz energy shock better than feared. Existing investors in Shein have agreed to a 6-month lockup on newly allocated shares in its Hong Kong trading debut. Sources telling us here at Bloomberg, current backers are expected to take up a significant portion of the offering, which could raise up to $1.8 billion. Meta and state attorneys general have discussed a possible mid-trial settlement in its teen social media case. Meta is accused of deliberately designing Facebook and Instagram to addict teens. A loss at trial could result in penalties of as much as $1.4 trillion for Meta. And that is your Bloomberg Brief. John.
Vonnie, thank you. Thanks for the update. Up next on the program, a test of credibility.
The Fed's inflation credibility, shockingly, after 6 years of missing the 2% target, is still very much intact. At some point, 6 years, 7 years, 8 years of missing it, the market's going to start to get nervous. And that is not reflected in longer bonds yet.
Up next, we'll catch up with Conrad de Quadros of City Wealth, live from New York City. You're watching Bloomberg TV.
anything we do in Africa is going to be more risky than the U.S. I think the approach we want to take is, how are we being compensated for that risk? And one of those is obviously going to be a valuation question. In our minds, valuation is a lot more attractive in Africa, even if we adjust for some of those Africa risks that a lot of Western investors see. So yes, in a lot of ways, you take some of those models that, as I said, might be more asset medium or asset heavy. There might be some more inherent risks. However, if we're saying we're adding some risk because of that kind of model, but we're now solving a core problem as opposed to maybe a nice to have solution in Africa, that might actually offset it. Where if you're solving something that people really absolutely need and can't live without, in a way that then that's a lot less risky. So again, we'd encourage investors to have a less binary view. In other words, the US isn't risky, Africa is risky. That's going to lead to a lot of complications down the road.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Bringing you the latest business news wherever and whenever it happens. I'm Scarlett Fu, reporting from America's biggest military shipyard. This is Bloomberg.
Live from New York City, welcome to the program. Under surveillance this morning, a test of credibility.
The Fed's inflation credibility, shockingly, after 6 years of missing the 2% target, is still very much intact. The Fed's inflation target, 2%. This is like hailing a cab in New York City. It's always coming at some point, 6 years, 7 years, 8 years of missing it, the market's going to start to get nervous. And that is not reflected in longer bonds yet.
So here's the latest this morning. PCE data due in less than 1 hour's time. Investors looking for the latest read on inflation ahead of Fed Chair Kevin Warsh's speech from Jackson Hole on Friday. Conrad de Quadros of Citi writing, inflation has moderated but remains above target. Firmer growth expectations allow central banks to keep their focus on price stability. We see this as supportive of higher policy rates globally. Conrad joins us now for more. Conrad, good morning.
Good morning.
Does that include the Fed?
I think it does. I mean, our view is, we don't think it's going to be imminent, but our view is that the next move from the Fed is likely to be a hike, not a cut. And the reason for that is that persistent inflation and the signs that their policymakers are becoming a little bit uncomfortable with the duration that inflation has been above their target. And so I think they do want to sort of reestablish that credibility. I would say that they didn't lose their credibility in markets, right? The markets do still look like they believe that the Fed will get the inflation back down to target. But I think there's some nervousness that it's been too long. How can you seriously have a target if you're willing to tolerate
Lisa
it
mentioned
above?
this too, the loss of patience. I think this is important. Does that mean that the incoming information isn't as important as it was when it comes down to single decisions like, say, September?
Well, I think it might be the case that any single report has less relevance, but it does seem to be the case that the incoming reports taken together do provide information. So we heard from Susan Collins yesterday, for example, and she's clearly looking for signs of moderation in inflation in each of the upcoming reports. And if she doesn't see it, she too will start to support higher rates. And I think that was the messaging yesterday.
Which inflation metric matters? Do we understand what the Fed is actually looking at anymore?
Well, I think the hope is maybe we get some more information on that from Jackson Hole. Officially, the Fed is still looking most closely at that core PCE measure, but now we know that they want to take a bit of a broader view, and I don't think that that's a bad idea. We've heard about maybe some focus on the trim means. I think that there's some value in that. One of the things that we focused on is the breadth of inflation gains. So how many of the components of those inflation measures are rising at very rapid rates? I think that would be helpful information. So I think broadening out the inflation view would be useful, rather than just looking at one indicator. But obviously the one indicator that they're looking at right now is pretty elevated at 3.25%.
If you broaden your view, and this is something people have discussed, whether it's the AI inputs or some of the component prices that have gone up, Where is inflation coming from, and is it something that warrants Fed action to counteract?
Well, that's a very good question, and I think that's kind of the point of looking at these breadth measures, where it might be the case that AI-related inflation in chips that feed through into computers are pushing the prices higher. But if we strip out the tails of the distribution on prices and look at the middle of the distribution, I think that's kind of a good way to get an indication: is it just these one-off things, or is it more broad? So we looked at the trim means. The trim means are still running at 2.75% on PCE. We look at those breadth measures. There's still a third of the components of the CPI. We'll get PCE today, but of the CPI are rising above 5% 1-month annualized rates. Before the pandemic, that was a quarter. So that's sort of one indication that we're not there yet, and it's not just one-off things. It is more broad.
You don't think a move is imminent, so that takes September off the table, fair?
I think so. I think September.
When does it become real for them, and what makes it real?
So I think by the end of the year, if there's not evidence that the inflation data are getting better, and we are seeing some tamping down and maybe some signs that they are making progress towards the more broadly defined price stability target, I think that puts December in play, or maybe early next year. And I do think that it depends on the data. But by the time we get to December, I think there are Fed officials. There's already 3 who think they should be hiking now. We only have to get to 7 for there to be a hike. And there's a lot of focus on Kevin Warsh, but it's a committee decision. And if you were to get those next few inflation reports, and we don't have calls for any specific meeting, but we do need to see that progress in the next few meetings for them to continue to hold off.
Is there too much focus on Kevin Warsh?
I think there is. Look, it's not a surprise that he's the Fed chair. But for example, all the talk about has the Fed lost credibility because of the last meeting. My question is, Kevin Warsh has been there for 3 months. The Fed has missed its inflation target for almost 6 years.
Yep.
Isn't that the credibility issue? Now, I think that it is important to focus on Kevin Warsh because he's the leader and he directs the Fed, and he's making some changes, shifts in direction in very important ways. They're looking at the balance sheet. They're looking at the inflation measures. They're looking at the conduct of monetary policy. These are important things, but again, they're not going to signal any imminent change in the direction of the Fed. These task forces are going to report at the end of the year. There'll be potential changes next year, but again, it's the committee that will decide those potential changes, not Kevin Warsh on his own.
Conrad, it's good to see you. Thank you, sir. Conrad Jacordros there of City Wealth. He didn't say it. I'm going to say it for him. The Powell Fed was given a free pass, wasn't it? For quite a while by a lot of people.
And now people are looking at it in a different way. Interesting
Yes.
that we haven't heard from the other governors, though. We've heard from other Fed officials, but not the governors.
The third hour of Bloomberg surveillance just around the corner.
Today, Wayfair sees immense potential in brick-and-mortar stores.
When we got into physical retail, our view was that, even if the market continued to grow for e-commerce, probably a large chunk of the market in the space would stay offline.
Kate Gulliver showed me around Wayfair's new 150,000 square foot Atlanta flagship store.
When customers who have seen us online come into the store, they're generally a bit surprised by actually the breadth of what we offer. Often if you're going online, maybe you're looking for something particular. But when you come into the store, you walk in, you see the market square, you see all these pillows, you see the decorative accents. So what we're seeing actually is that in store, we do really well in some categories that online are, less a percentage of the total.
How does technology help in kind of making it seamless online to store?
I think
and vice versa.
The biggest thing is for the customer on the front end, that she can be in the store, that she can actually shop here, go back home, complete that purchase. And if you look at these sort of price tags and everything, they're all these digital tags. That's because they're the exact same prices they are online. So you're not going to be surprised that you saw something in the store and then you decided to purchase it online, that it's somehow different and that the offering is different. It's actually very consistent, but when she's here, she can have her app open and everything that she's doing here can be very similar to what she's doing at home. And I think that consistency is quite important.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
my old mentor, Roger Staubach, who told me when I transitioned, football will never leave you, but you need to leave it.
Wow.
Everyone has a dream, and a lot of dreams are, you know, my dream is to play football and play professional football, and you get the dream comes true, but it is going to end. And the day it ends, the day before it ends, you're one of the best in the world. Great. The next day you wake up, that's gone. What are you great at? And the truth is nothing, right? I'm not great at anything else.
I talk about it all the time, Steve, is this whole idea of it's not from penthouse to penthouse. And what I mean by that is you played for 15, 20 years and you're in the penthouse. That doesn't mean that you come to the business world and you're going to be in the penthouse. Now, you don't start in the third floor or the lobby. You actually have to start in the basement.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Bringing you up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
The AI story is so dominant, it is the driving factor throughout markets.
We're starting to see a lot of investor nervousness.
The market wants to see real evidence that the spending is it's getting return. It's turning into margins, turning into profits, turning into free cash flow.
This build-out is not as mature as people think.
The volatility in certain segments in tech has been so dramatic, it's a bad Ouija board at this point.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning for our audience worldwide. The third hour of Bloomberg Surveillance starts right now, and your price action and scores look like this. Pulling back by just a tenth on the S&P 500, on the NASDAQ down by 0.2. The main event for the NASDAQ later this afternoon, it's NVIDIA after the closing bell. NVIDIA snapping a 7-day losing streak in yesterday's session. That was the longest daily losing run going back to September 2022. This morning, just about unchanged. Switch up the board and get to the bond market. 2s, 10s, and 30s at the long end of the curve on the month so far. Yields lower at the long end by some 10 basis points. This morning, higher by a single basis point to 5.17. At the front end, stable, up by a basis point, 4.18. Heading into data later, crude has helped this move in bonds. It's introduced just a little bit of stability. We're down 2% on WTI. Brent crude is down by 2.3. Brent this morning at 86. WTI briefly earlier this morning trading in the 70s. The main event for us all, I mentioned NVIDIA after the closing bell. Before we get there at 8:30 Eastern Time, 29 minutes from now, it's a read on PCE. And Bramo, I'm right there with you. Typically, this would be a big deal. Inflation data, it matters to the Fed. It's a big, important gauge. Overwhelmingly, the focus is on the man himself, Kevin Warsh, how he interprets the data and whether he'll even share his interpretation with us in a few days' time.
And what oil prices are doing more than PCE, which is supposed to be more independent of some of the volatility in commodity prices, just simply because when we have heard from Fed officials, and we keep going back to the Susan Collins speech yesterday, the Boston Fed, it doesn't seem to matter that disinflation has gotten into the data over the past couple of weeks because people think it's, dare I say it, transitory, given the fact that oil prices have been swinging around and do seem to bleed into it. As she was saying, that less benign scenarios are quite plausible. However, some of the recent data are mildly encouraging, but can be volatile and aren't enough for her to shift away from an otherwise hawkish position where she is more inclined to hike rates than to remain on hold.
It's a little bit controversial, but let's tackle this head on. Conrad talked about it. Everyone's going after Kevin Warsh. I'm not here to defend him. I thought the news conference was really sloppy. It's only been there for a few months. There's another guy who's been running the Federal Reserve for a long, long time, and they've been above target for 5+ years. And everyone seems to be going after the Warsh Fed without very little thinking on what happened previously under the Powell Fed. And it was also on the committee, there are some individuals that didn't seem too concerned about being above target for so long, and now all of a sudden they've lost patience. Where's that loss of patience come from? Just time? Or was it a change of leadership and a lack of faith in the man running the institution? right now?
I think it's a really important question, and a lot of the communication that we have heard from different Fed officials has given us very different reaction functions and what they're looking for. You're right, how much is qualitative and how much is quantitative? How much is there some sort of guide, or how much is everybody operating in a vacuum where emotion can play a bigger role in sort of coloring the data and coloring the trend? I would be curious to understand the components of inflation that matter, how the acceleration is being viewed, and whether that is truly the calculus of people who are getting impatient now, or whether it is just, we don't have conviction that this person's really to combat it the way that the previous regime.
I get that we don't have an understanding of his personal reaction function. I understand that. But I think we do have an understanding of the Federal Reserve's reaction function, the committees in totality. Given the way we've priced September off the back of weaker than expected data, saying that we don't know what the reaction function is and saying that we think the reaction function is too dovish, I think are two very different things, aren't they, going into September?
There were questions about why he couldn't answer the question about his preferred tool for bringing down inflation, whether interest rates were the main tool or whether potentially the balance sheet and some other tools could otherwise. These are the types of things that people point to, but you're right, which is that the tone has shifted on the FOMC. A question about the committee members who had been pretty patient earlier this year. What has shifted for them so materially? Is it AI? Is it persistent tensions that are leading to oil prices and commodity prices to go higher? Is it something else that they're seeing in the labor market that they didn't see last year? This is all important, and this is the reason why I am so excited to be going out to Wyoming to discuss all these things against the backdrop of glacial mountains.
It's beautiful.
It is beautiful.
It is beautiful.
But very cold in the morning, so feel bad for me.
I won't be jealous first thing in the morning because it is very cold. I'll be envious as the day progresses.
Around like
we start
12,
to see that shot come into view, the sun starts to come up.
Beautiful.
It's gorgeous.
Buffalo,
It's beautiful.
Actually, bison, excuse me.
You going on any hikes this year?
Of course.
Okay.
Come on. I'll bring bear spray, don't worry.
Good.
I'll come back without any bear maulings.
Bramo sees cubs and gravitates to them. And I've spent years warning Bramo that you shouldn't do that. You need to rewire, and when you see cubs,
they're
move
cute.
away.
Bears, there's a reason why there's a teddy bear. There's a reason why
They're
we have
super
made
cute.
it into, I know that you think that we've all just been conditioned to think that they're cute.
I think that you've been conditioned to think that real-life bear cubs are cute.
Because I've actually seen them and they're adorable.
And you're not scared of Mama Bear.
I'm definitely scared of Mama Bear.
Terrified.
I'm not going over there and hugging baby bear,
I should hope not.
I will just say it's really fun to see, animals in the wild, and let me tell you, they're really interesting.
Okay, stay safe.
I will.
Looking forward to the program, 9 a.m. Eastern Time on Friday, alongside TK and the team breaking down that speech from Fed Chair Kevin Walsh. Coming up this hour, we'll catch up with Tracy McMillan of Wells Fargo on why she's sticking with stocks over bonds, Jay Goldberg of Seaport counting down to NVIDIA earnings, and Stephanie Roth of Wolfe Research breaking down the latest PCE report. We begin this hour with stocks steady as investors brace for NVIDIA results and a fresh read on inflation. Tracy McMillan of Wells Fargo writing, look through headline volatility to overweight equities over fixed income, given strong earnings. Tracy joins us now for more. Tracy, two core calls from you and the team, and welcome to the show. One was a steeper yield curve at the start of the year, and the other was to get long financials. Financials have ripped, with the exception of last week, an 11-week winning run for that sector on the S&P. Fantastic run. On the steeper curve, the Treasury Secretary, Scott Bessent, Tracy, now has other ideas, and I wonder whether that's upending your view to some extent on the bond market.
Good morning, John. So to answer your question, not really upending our view on the bond market. We have seen that steeper yield curve as we predicted, and we've really seen it rising on the longer end. And, that was our forecast at the beginning of the year. It's what we forecast for 27. We think that we have more room to move higher. And we think that because we think that the intervention that the Secretary Bessent described last week is not addressing the underlying issues. And the main underlying issue is that we have a lot of supply coming to market. So it's no longer just the Treasury issuing bonds. We now have companies that we're paying through cash flow, turning to the credit markets to fund the AI infrastructure build out, and that's important.
Tracy, is there a moment where it flips, where the issues that you see developing in bonds become a problem for the profit cycle funded by the debt raising that we've seen by the hyperscalers? Is there an issue in debt that becomes an issue for equity?
At some point, it probably will. We haven't reached that point yet because earnings have been so strong. And if you're a corporation and you're looking out at 10, 15, 20, 30% earnings growth, then 5, 6, 7% interest rate is still very appealing to you. Those interest rates have risen, yes, but we've got very strong nominal GDP supporting those higher interest rates and very strong earnings, driving companies toward issuing more credit.
We have seen in the equity space, people move away from some of the high flyers of the past few years. NVIDIA is a perfect example, reporting earnings after the bell. You've seen their shares really underperform some of the other broader indices, up about 15% so far this year, but a very long streak of losses. I just wonder if you think that indicates that some of the biggest momentum trades kind of have seen their big gains and kind of aren't going to drive the returns that we're going to see in equities going forward.
So we think that they do continue to drive a lot of the earnings going forward. Yes, we've seen big gains, but we think that the AI story is more of a secular story. So we are still overweight information technology, and we're overweight communication services and materials, which are more ancillary AI plays at lower valuations. And we think that those earnings are really going to drive prices higher by the end of next year.
Tracy McMillan with the latest over at Wells Fargo. Tracy, thank you. Appreciate it. For those of you tracking this story, I'm sure many of you are, the controversy around Mark Walters and TWG and its affiliated companies, the loans provided from some of the insurance companies that were directed into investments affiliated with Mark Walters without being properly disclosed. That's the investigation for the federal authorities and the SEC. There is a statement that's just dropped just moments ago. I'll share it with you. It comes from TWG Global. There are a number of bullet points here, so I'm working through the press release in real time. It goes on to say, despite what has been reported, there has been no fraud. TWG and Group 1001 insurance companies have presented a plan to address any regulatory concerns. It goes on to read, affiliated transactions are common across the insurance industry, and suggesting that TWG is looting insurers is defamatory and false. TWG is not looking to sell its sports assets at fire sale prices to raise capital for its insurance operations. The allegations that the LA Dodgers were acquired or have been funded improperly is false and not supported by the facts. A number of paragraphs that back up those statements from TWG released just moments ago.
Yeah, including that the Lakers sale at $12.5 billion was sold at a 25% premium, not exactly a fire sale. Really continuing to emphasize that they are working with the Department of Justice and the SEC to resolve the inquiries, and that they and Guggenheim have done no wrongdoing. They also said, and you mentioned this, that insurer looting claims are defamatory and false. So this is a clear effort to try to combat some of the stories that keep coming out about different allegations tied to this company.
Their direct response in that press release just in the last few minutes or so. Let's give you an update on news elsewhere. Let's get to your Bloomberg brief. Vonnie Quinn has more. Hey, Vonnie.
Hey, John, thank you. The IRGC saying Iran and Oman have agreed on a share of revenues in the Strait of Hormuz. The two nations are working towards a temporary joint maritime corridor through the critical waterway and are expected to hold more talks to secure a more permanent route. Richmond Fed President Tom Barkin issuing a warning that rising U.S. debt could eventually trigger a, quote, reckoning. With a total recently surpassing $40 trillion, Barkin cautioned that at some point people will stop buying debt, though he says that timing remains uncertain. Abercrombie & Fitch higher in the pre-market. The retailer raised its full-year 2027 outlook, driven by strong second-quarter results. CEO Fran Horowitz seeing well-balanced growth across all brands and regions. And that is your Bloomberg Brief. John.
Vonnie, thank you. More from Vonnie in about 30 minutes' time. Up next, the morning calls, plus Jay Goldberg of Seaport counting down to earnings from NVIDIA, dropping after the closing bell, with equity futures on the S&P 500 just about unchanged, negative by not even 0.1%. Live from New York City this morning. Good morning.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering.
We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
When news breaks,
A redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm election.
Hear it first on Bloomberg.
AI remains the main story for good reason. The next phase of this, no doubt, and frankly the phase that the earnings picture, which has been so strong of late, is dependent on going into 27, is when does that actually translate to explicit earnings guidance upside? We think that's coming in the next year or so.
Was Dan Skelly of Morgan Stanley weighing in on the profit cycle, an unreal profit cycle so far this year. Just think about where things were. We came into this quarter looking for 20% earnings growth, which is a really punchy number, right? Ended up being closer to 30, which is ridiculous. Outside of recessions and recoveries, you do not see numbers like that on the S&P 500. That's exactly what we've seen in Q2.
And some are saying, is this as good as it gets? Can you continue with this type of acceleration? And if you can't, is there enough heat in the system to maintain the earnings, maintain the multiple expansion that we've seen for a lot of these companies? It depends what sector you're in, and frankly, a lot of people have said absolutely yes, the answer is, especially because there are certain efficiencies that tied to AI that the adopters are really seeing come through.
By the time you get to NVIDIA earnings, it feels like you've been doing earnings season for years, and it feels like we've been covering this earnings season for years.
Kind of have.
JP Morgan feels like decades ago. Remember bank earnings?
JP Morgan's around the corner. It's going to start again in about a week.
In a few weeks' time.
Like we already got to like a full cycle. I do think it's going to be really telling, though, about financing and also the look ahead for semiconductors that have really gotten beaten up. They've had a rough ride of it so far.
Ed's going to join us in a moment. It's the politics for me.
Yeah.
The politics is becoming a real business issue. Sarah Kuhn said it. You need to be able to build data centers to put the things in that NVIDIA sells. And right now, there are a lot of politicians in this country who do not want data centers in their backyard.
Yeah, but what's he going to say? I think there should be data centers, and we'll make it more in your interest to have that in your backyard. And guess what? We have a big bank account for lobbyists down in Washington, D.C. to talk about all of this with all of your friendly constituents. Look, this to me is going to be an interesting thing going forward. How much is he actually going to say about it?
Nasdaq futures this morning, negative by about 1/3 of 1%. On the S&P, we're down by 1/10. That's the price action. Let's get you some morning calls. First up, Bank of America downgrading Intuit to neutral, highlighting market share loss to AI-based alternatives. That name is down by 9%. Your second call from Citi, raising its price target on Snowflake, citing momentum and increased migration across financial services. And finally, UBS raising its price target on Dow, noting stronger server and storage demand in the near term. That's the story. And 3 stocks to watch this morning. Here's another. NVIDIA reporting earnings after the closing bell as tension continues to build for the AI story.
There is muted enthusiasm. There's also just larger secular trends. People are not liking data centers. And if data centers can't be built, then where do all these NVIDIA chips go? NVIDIA can have the best chips in the world. They largely do. It doesn't matter if no one's buying them.
The chip maker coming off its longest losing streak since 2022, going into earnings later this afternoon. On top of those earnings, Bloomberg's Ed Ludlow. Good morning, Ed.
Yeah, good morning, John. The expectation is sales of $92.3 billion in the quarter and EPS of $2.09, both double what they were a year ago. But having risen 2% or more yesterday and snapping a 7-day run of declines, matching the streak that we saw just before the ChatGPT moment of 2022, everyone has started to talk more about the decelerating growth of future years and quarters. Data center is still everything. And from the technology perspective, NVIDIA is in a moment where it is trying to convince Wall Street that as it transitions from one generation of platform, Blackwell, to another, Vera Rubin, that's now in full production, but it will will bring a new wave of acceleration. We are very close to the midterms in a world where we have tangible data that, yes, Americans' attitudes towards data centers is putting some projects on hold, delaying others are being cancelled outright, and it is NVIDIA GPUs that largely go into those. The high bar is set very simply against the guide for the third quarter, the current period, where Wall Street expects them to say they'll hit sales of $105 billion. That is a very high bar, and right now, you know, the probably backdrop is Jensen Huang is balancing shareholder returns and shareholder-friendly policies. Buybacks and dividends are expected to be on the table, but explain the circular financing story because it hasn't gone away and it's likely to be put to him directly.
So many dimensions here, Ed. There's also a wave of competition too. From your perspective, you track this technology far closer than I do. How material is that competition?
Yeah, I mean, there is certainly a school of thought that the reason that the stock now, on a year-to-date performance basis or on a forward PE basis, trades much more in line with the S&P 500 is an acknowledgement that that competition is coming. That's why people have sort of recalibrated their future growth forecasts. The other side of the coin, or the counter-argument, is the reason that all of the frontier labs are doing their own chips. We had OpenAI put performance metrics out on their chip yesterday. The hyperscalers are buying from NVIDIA, AMD, TPUs from Google, is that the environment is still the same. Massive compute constraints, supply is constrained, falling behind demand, and future demand as well. And to be honest, until NVIDIA stops posting the growth levels that they've shown, it's very hard to argue that they are losing or ceding market share to that competition.
Ed, it's good to see you. Thank you, buddy. Looking forward to the coverage later on this afternoon. Bloomberg's Ed Ludlow on top of that blockbuster earnings story. Jay Goldberg of Seaport holding the only sell rating on NVIDIA, price target 180. Jay joins us now for more. Jay, welcome. Is there some deceleration on the horizon?
I think that's likely, right? I think this quarter will be good. Maybe the guide will be okay. But I think it's just getting harder and harder for NVIDIA to compete and to sell. Not forecasting disaster, but it's getting harder.
We're getting closer to your price target of 180. You actually have been right with respect to the performance relative to the rest of the markets, although you are seeing NVIDIA shares up so far this year, but much more muted than in the past. What would it take for you to put a neutral rating or even a buy?
I think the key issue for NVIDIA right now is that they're selling everything they can, right? They've got all the allocation they can from TSMC. They've locked down allocation to all these other companies. They're sold out, right? And how do you deliver surprise upside beyond that? It's very, very hard for them. There's a lot more that can go wrong here than can go right. Ed was just talking about, you were talking about data center pushback. There's supply chain issues. You just go down the list of things that could go wrong here that could not wreck them, but certainly deter their record, sort of put a dent in things. It seems pretty likely that next year starts getting tougher. And then you add on to that all the competition that's out there, plus the surge in memory prices. All of those sort of can play into the margins and profitability that NVIDIA has.
At what point does NVIDIA get treated like a venture capital firm as much as a chip maker, given how much money it's put into the entire ecosystem of artificial intelligence? It seems like it has as big of a portfolio as many other businesses just sort of hanging out there that people don't consider. How does it factor in for you?
For me, I look at it as NVIDIA is constantly advancing the terms of competition, right? First they sold chips, then they sold servers, then they differentiated with software. They've had all those things working for them, but that's getting harder and harder as AMD and Google TPUs start to catch up, right? So now they're also competing in networking and supply chain, locking down the supply chain and using their balance sheet as a competitive tool. And that's good while it lasts. They certainly have the sort of headline name. They can attract lots of people to their cause. But they're now competing with financial engineering, which is much harder for them to differentiate.
Jay, what's the difference between fostering healthy growth in the ecosystem and a kind of more sinister circular finance that you'd be concerned about?
I think the distinction is if you go back to like the .com era, when you had companies that monetized through advertising, and they'd sell company A would sell advertising to company B, and then company B would pay them in advertising slots on their site, right? And so it was literally trading revenue back and forth. NVIDIA's not quite there yet. I think there's a fine line between enabling demand and creating that demand. And NVIDIA's getting ever closer to that point.
Jay, before you go, just on the politics, Ed mentioned it, the midterms, the pushback you're seeing against data center growth in this country. Is it too early to expect that to start to influence the outlook for growth?
I think so. Most of what's in store for this year, what they're going to talk about in sort of near term and earnings and guidance, that's all set in stone. The stuff that's already in construction, that's not the issue. I think it starts to become a more prominent issue next year when data centers that we had sort of penciled in for being built don't get built or just get delayed significantly. So I think that's a sort of next year we'll see the impact of that.
Interesting, Jay. Thank you, buddy. Appreciate it. Jay Goldberg there of Seaport. On NVIDIA, there are 79 buys on NVIDIA. There are 2 holds. There is 1 sell. That 1 sell belongs to that guy right there.
Yeah, and look, we have seen the shares gain value so far this year, but they've been underperforming what a lot of people had expected. And certainly on a multiple level, you've seen huge multiple compression. So you've definitely seen people take some chips off the table, if you will, when it comes to NVIDIA.
Nice, Bramo.
Anytime.
Is that ChatGPT? No, that's just authentic. That's just real.
That's sad. Actually, I'd like it to be artificial intelligence.
In the moment. That's where the value is, Bramo.
Maybe
sometimes,
journalism. I wasn't A+ in aphorisms or sayings, so maybe, I'm using AI to help with, making it a little bit
Comes
better.
From a good place.
Does it?
Of course it does. Up next, we'll get you some data. Breaking PCE data just around the corner. Stephanie Roth of Wolf Research joins us to react. We often call this the Fed's preferred gauge. The question is, for how long? That conversation up next.
Welcome to Bloomberg This Weekend. I'm David Burr.
I'm Lisa Mateo. And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington. Let's start overseas. The sector is really propelling this yield forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Bringing you the most important news and financial information whenever and wherever it happens. I'm Michael McKee on the Mexican border, and this is Bloomberg.
The latest read on inflation just seconds away, about 20 seconds away to be precise. Equity futures heading into that. Your scores look like this, just about positive on the S&P, slightly negative on the Nasdaq. In the bond market, 2s, 10s and 30s. On the month, yields a lot lower at the long end of the curve, 516 now at the very long end. We've come in over this month so far, down about 10 basis points or so on a 30-year bond. At the front end, the 2-year at 417. With your economic data, Mike McKee has more. Good morning, Mike.
Good morning, John. We've got a lot of numbers this morning, but the first ones out are durable goods, so I'll give you that very quickly. Up 1.1%, double, more than double the analysts' expectations. Okay, here's the numbers that matter to everybody this morning, and that's the PCE price indexes. The headline up 0.2%. That is more than the 1/10 expected. It was down 1/10 in the month of June. The year-over-year number is 3.7%, unchanged from what we saw in June. The core at 0.2% is as expected, and the year-over-year number stays at 3.3%. So a slightly higher inflation number on the headline, which is probably due to the switch in the energy numbers over the month. And whether that matters a lot to the Fed at this point is something we're going to learn in the next couple of hours or days. Personal income is up 0.4%. That's double what it was in the last month in June and double what was expected. Personal spending up 0.2%, less than the 0.3 last month, but double what was expected. So a strong economy and still some inflation would tend to have you lean towards maybe increasing the odds of a Fed rate increase. As I mentioned, durable goods orders were up 1.1%, and capital goods orders were up 0.2%. They'd been up 1.2%, 1.7% now revised in the month of June. So huge capital orders. That's likely all AI related, but only up 0.2 in the month of July. And GDP unchanged. The second reading of GDP for the second quarter, 1.5%. Personal consumption a little bit stronger, 3.4% from 3.2%. So a little bit stronger economy is the bottom line here, and a little bit, tiny little bit inflation move based on energy. And at this point, what we could say is that it has become steady. It hasn't changed a whole lot, the inflation picture. So we'll see what Kevin Warsh and colleagues have to say about that when they get here in Jackson Hole. And I did want to show you my hotel room this morning, John, because it's
what
not
have we
the
got,
same
Mike?
as the other day.
Have you moved?
We have moved. We are at Jackson Lake Lodge, and we are awaiting the arrival of all of the members of the Open Market Committee and other Fed and central bankers from around the world.
Mike McKee. Stay close, Mike. I'll have a look in just a moment. I want to look at the markets first. Equity futures on the S&P 500 negative by 1/10. The Nasdaq down by 1/3. This move at the front end of the curve. Yields a little bit higher on 2s by about 2 basis points. Call it 3. Back to 420 on 2s. A small move in the grand scheme of things, but a stronger economy and a slightly hotter economy. If you look at the strength, personal income better than expected, personal spending better than expected. And as for the heat, PCE coming in just a bit firmer than anticipated, Bramo, on the headline.
Yeah, 3.7% year over year versus the expected 3.6%. I do find this mix interesting, and I actually find the response into your yields also notable. It took some time for people to start pricing in a greater chance of a rate hike. And as people digested it, the more that they digest it, the more front-end yields are rising. I just wonder whether people are a little gun shy, looking at data and drawing too many conclusions right now, just because it has been something that people have moved past. But it seems as people look at this, they do think that on the balance, this does make people more hawkish going into the
Starting points matter. Are you looking for data to get you to hike or to stop you from hiking?
Stop you from hiking.
Right, and I think that's different. The bias has changed somewhat for some individuals on this committee.
This is really the onus on disinflation to actually show itself rather than some sort of change in the status quo. The status quo is not good enough anymore, and that is what we've heard from one person after another. So when you have status quo and you have inflation running at the same pace, it is just one number, but it will put some people, at least, definitely in the camp of hiking rates.
Mike McKee still with us. Mike, come back into the conversation. Set the bar, set the stage for us in a few days' time. What kind of speech are you anticipating from the Fed Chair, Kevin Warsh?
Well, we were discussing this last night with some of the other Fed officials who aren't on the committee, who've arrived here, and there does seem to be a lot of pressure on Kevin Warsh from Wall Street to do something to explain how they're going to bring down inflation. He's promised to do it, but right now it's not moving. It's basically where it was before the Iran war started, and a lot of members of the committee were not happy with inflation where it was then because it hadn't moved down in 5 years. So will he go that far to explain, to do a little bit more about whether the Fed will use the interest rate tool at some point if necessary, or will he stick to high-level generalities? The interesting numbers today may be more in the income and spending numbers because they're stronger than anticipated, and also the durable goods orders numbers because they were stronger than anticipated. And so the economy is relatively strong at this point. You don't see any weakening that would cause them to worry about raising rates at this point. Now, we still have more CPI to go on the 12th of September, and that'll be really definitive. Let me just note that wages and salaries went up 0.3 in the month of July. That was up from 0.1 the month before. So wages and salaries pick up. Personal spending was a little bit slower, but disposable income a lot higher, up 0.5%. And the savings rate, 2.7%, is basically unchanged. So what we're looking at is, again, relatively strong economy with inflation pressures and no real sign that they're moving down.
Mike McKee, on location, ready to go. Kevin Warsh speech a few days away. Mike, appreciate it. Thank you, sir, as always. One more payrolls report on the 4th. A week later, a CPI print. Stephanie Roth of Wolf Research joins us now for more. Stephanie, good morning.
Good morning.
Have you seen enough to stop this Fed from hiking in September?
Yes, I think so. I mean, barely so, but I think so. I mean, today's core PCE just barely rounded down to 0.2. It's 0.2455, so we almost got a 0.3, which would have potentially rattled markets just to some extent as everybody sees their Bloomberg screen. I think we're in an environment where the data will look a little bit cooler in the next couple of prints, such that the Fed can avoid hiking and do it credibly. So we're going to see, another round of inflation data. That will probably come in on the softer side. The seasonals are in our favor. The Fed officials all know that at the end of September, we're going to get some revisions to how they're calculating PCE. In today's print, portfolio management was up 5.6%. That is a piece of the inflation data that's going to change in a couple of weeks. Therefore, it might bring some downward pressure to the data. So overall, we're likely to see an environment where the labor market data look a little bit softer from here, and the inflation data also cools such that they can just sort of wait and see, and therefore they don't ultimately have to hike.
Are you looking for a wait-and-see speech on Friday?
Yeah, I think he's not going to say a whole lot. I mean, granted, of course, it's not Q&A, which is what tends to sort of create some market volatility. He'll probably correct some of the points that the market didn't like last time. He'll probably talk about 2% is for sure the inflation target. We're not looking at changing the inflation measures, at least at this point. He'll correct the reasons as to why they did not end up hiking in July. They were probably looking for softer inflation data. And then outside of that, I don't think we're going to hear a whole lot.
Do you think that the emphasis still will be on remaining on hold, that otherwise this would be a Fed that would be desiring to hike rates? In other words, are we going to see the hawks still dominate the discussion, even with a non-speech from Kevin Warsh and this sort of assumption that he's going to try to remain on hold as long as possible?
I think to some extent, but the data have very much been in their favor. I mean, if you look at the last 2 months, we've had 2 consecutive months of softer inflation data. We've had employment data that's mixed, if not somewhat concerning to some extent on the headline level. In the next print, we'll probably see a bit of a tick up in the unemployment rate, with payrolls running at an okay pace. So they're not really going to be in the same urgency to hike that they felt in July. And we're in an environment where wage inflation is pretty sluggish, and therefore it's not feeding into inflation.
Are we just justifying why we're reacting so strongly to oil prices? I mean, essentially, is this a bond market that's being dictated by oil, and people are running around fanatically saying, it's not just oil, it's all these other things. Then oil prices go down, and it's like, oh, well, look at this, it's inflation, and oil helps.
To some extent, I think you're right. I mean, I was surprised the extent to which yields didn't reflect the softer inflation data that we've seen, because the data couldn't have been cooler for the most part in the last couple of months, yet yields continued to back up. And, you know, of course, people talk about supply and the deficit and all these dynamics that haven't really changed in the last couple of months, yet you see yields continue to back up. So certainly we saw the moves yesterday seem to be oil related. I think it's a combination of things. When people wake up after Labor Day, we'll probably be in an environment where the data comes more into focus, then focus on a Fed that's not likely to hike, and therefore yields can come down a bit.
Where is inflation the most problematic? Take out oil prices that are somewhat volatile. I know it's difficult because it impedes in a lot of different areas. Is AI-related inflation problematic? Are we seeing inflation in other areas that suggests that it's becoming more pervasive in the psychology and in commerce?
So when we think about the reasons as to why core inflation has been elevated this year, I would say it's three things. It's been the Iran war, which at this point we're kind of seeing a bouncing around in oil, but kind of somewhat stable at this point. It's been tariffs, which are going to be rolling off the data, and in fact you're starting to see some companies come out and say they're using some tariff refunds to offset some prices.
Notwithstanding Canada.
Fair. And then the big thing has been the chips. So I think by far the biggest thing we should be watching is on the AI-related inflation, because that's the piece that hasn't fully worked its way through the data at this point. We think for the most part, we've seen the impact flow through into computers and accessories and that type of thing. But it's possible there's another piece of the AI puzzle that pops up in the inflation data that we're not necessarily aware of at this point. This is the part that could be, still adding some inflationary pressure. The other two factors are very much moving into disinflationary territory looking ahead.
I just saw a headline from Bath & Body Works. They saw approximately $80 million in 2Q tariff refunds. So many of those companies got money back. How different would this conversation have been? We've been this close to 0.3. You said it. How different would this conversation have been if we did get a 0.3?
Funny enough, it's fractions of a basis point here. I think the conversation would be different.
Isn't that really silly?
Completely, no question. But it's just this mental model, and you see, you look on your Bloomberg screen, which is rounded to one decimal, and it's 0.2, so we can all breathe a sigh of relief. But you're right. I think we would be talking more about yield rising a bit on the back of the data if we had just rounded up, slightly to 0.3. I think the conversation would be modestly different.
Stephanie, it's good to see you. Thank you. Stephanie Roth there of Wolf Research. I think some people on Wall Street having that conversation right now. You are seeing yields climb by a little more than 3 basis points, 3 to 4 basis points higher at the front end and into the belly. 2 years are at about 421 right now. 5's at about 437. Yields higher there by 3 basis points. Income better, spending better. PCE headline this close to a 0.3 print.
And some people on Wall Street are already saying that this actually would justify a hike. Omar Sharif over at Inflation Insights just out with a note saying hike territory. This is data that supports a hike. Talking about what Stephanie was just talking about, the unrounded core PCE was 0.246, so it barely missed out on a reading to 0.3%. Look, if it's that close, there is ultimately a real question about just how close people are to hiking rates, and ultimately a real conversation about what hiking rates will accomplish. If you hike once, does it do anything? If you don't hike once, then are you basically saying you're going to be hiking 3 times or 4 times to potentially offset any momentum coming from where? From AI spending? I mean, ultimately, this is a complicated discussion happening at a highly politicized time, which is a reason why maybe put into AI. All right, say this now without getting the attention of the White House. Okay,
that's
say this.
That's the speech on Friday.
I think that it would be actually really interesting to run it through different filters and see what it says.
Rock and a hard place, right?
It's very difficult right now.
Some of it is his own creation, but he's in a tough spot into Friday.
Yeah, I mean, look, he could have just explained why the Fed remained on hold last time. At the same time, he did come out earlier and say that, he's not looking at 2 point something, he's looking at 2% target. Then he then said, well, it's a little bit of, why are we parsing hairs here? He's talked out of a lot of sides of his mouth. do we hear some sort of definitive resolution of some of the conflicts that he's created?
Up 3 basis points at the front end on twos this morning, 421 on 10s, 465 30s further out, only up a single basis point to 518. With an update on news worldwide with your Bloomberg Brief, Vonnie Quinn has more. Hey, Vonnie.
Hey, John, thank you. Recapping the PCE data we just got. Inflation-adjusted consumer spending flat last month, following strong increases in May and June. The core number, which excludes food and energy items, advanced 0.2% from a month earlier and 3.3% from a year earlier. TWG Global says it's not selling sports assets at, quote, fire sale prices, and that the Los Angeles Dodgers are not for sale. The statement coming in response to what it calls speculation and misinformation surrounding the DOJ investigation into CEO Mark Walter. TWG Global says it's working with the DOJ and called claims of insurer fraud false and defamatory. OpenAI data center executive Chris Malone left the company last week, according to reporting from the Wall Street Journal. Malone's exit is part of a wave of leadership departures. This as OpenAI works towards an IPO expected in the next few months and races to catch up to rival Anthropic. And that is your Bloomberg Brief. John.
Vonnie, thank you very much. Appreciate it. Thanks for this morning. Up next, we'll set you up for the day and the week ahead. Plus, we'll catch up with the Citizens Commercial Bank Vice Chair, Michael Lehman, looking ahead to earnings from NVIDIA, live from New York City. You're watching Bloomberg TV.
How do you see AI changing gaming and game development in the future?
Look, I think the biggest thing that I'm thinking about is how do we just make sure it's solving problems. On the game development side, I've gone to a lot of our studios, you know, big and small, and I'm blown away with how they're using AI in the production pipelines, how they're using it for iteration and prototyping. That's not production ready, there's still work. And so, you know, 30% of game development is software, and so there's the traditional applications that we see in enterprise. At the same time, I do not think AI will replace AAA games. I think it's entirely possible, though, that AI represents a new category of games and a new type of development and enables more people to create and participate. And we'll keep an eye on that, and we'll see how we best serve that.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker Playbook, where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe. I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie. This is your opening trade.
Only on Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Today's core PCE just barely rounded down to 0.2. It's 0.2455. I think we're in an environment where the data will look a little bit cooler in the next couple of prints, such that the Fed can avoid hiking and do it credibly.
This close. Stephanie Roth of Wolf Research, on how close we were to a 0.3 print. So we come in on headline PCE at 0.2, economists, the median, looking for 0.1. We're this close to 0.3. Yields are higher at the front end of the curve. You can bring up the bond board quickly, 2s, 10s, 30s. You see the move at the front end on 2s, yields up. But 0.3, would we really be having a different conversation based on that smaller move on headline PCE?
Well, Sharif says that we already should be having that conversation, and some people on the Federal Reserve, Beth Hammack, Neil Kashkari, are already having that conversation. They're right there, and if they want evidence, they can point to this. The onus is on explaining why you're not hiking if you have inflation running at this pace. And increasingly, over to you, Kevin Warsh, but also the other Fed governors. We have not heard from the other Fed governors since the FOMC meeting. We've heard from a lot of other people about why they potentially would be in the camp of hiking rates, but none of the other governors have dissented and supported hikes as soon as either September or shortly thereafter in response to the inflation.
You think the burden is on the doves into September?
Yes.
Okay.
I think that right now, that is the perception based on the rhetoric that we're hearing. The doves speak up. Explain why you're dovish. We've heard from some of the regional Fed presidents about why they think it's okay and appropriate to remain on hold, but the onus is on the data not to come in like this. Now the question is over to the people who want to stay on hold. Okay, why? And if you do, how much clout do you have on a committee that's led by somebody who really is a question mark?
Over to you, Kevin Walsh, in 2 days' time. Equity futures right now pulling back off the back of that move in bonds. We're down a 10th on the S&P, and the Nasdaq down a 3rd. As we count you down to the cash open with some single names and morning movers. Vonnie Quinn has more. Hey, Vonnie.
Hey, John. Well, we start with a couple of companies that give us some glimpses into how the consumer is faring. First up, Abercrombie & Fitch, a heavily shorted retailer. It's up 13% in the pre-market now. It beat estimates significantly. Now, a portion of that was thanks to tariff refunds, which were massive, but not all of it. It turns out the consumer is still spending at Abercrombie & Fitch. Comp store sales were flat, but total sales, so not just the same stores year over year, up 5%. Hollister was up about 5%, and the namesake brand Abercrombie & Fitch also up. So it does turn out that consumers continue to spend on clothes. Now, if we look at the next company, J.M. Smucker, also higher in the pre-market. It also cheered investors. The only part of J.M. Smucker that didn't do so well was the total baked snacks. So you're thinking Twinkies and Hostess donuts, right? So they didn't meet estimates, but every other part of Smucker did. And the interesting thing here is what management said about coffee. So we know coffee had a massive price increase last year for various reasons, nothing to do with the war in Iran or anything like that. But obviously, coffee prices went up. J.M. Smucker put the prices up. Now coffee is in supply, and they have just started to pass those price savings on to consumers once again, so taking down the inflationary impact of that coffee spike. And then we'll finish with Intuit. So just when we thought it was all safe out there in the software world, maybe not so much. Now, Intuit did beat on revenue, but it gave much lower guidance than analysts were expecting. The stock is down 46% this year, even with August's 13% increase, right? It's not quite the SaaSpocalypse back again, because the company is doing a lot to try and get customers into its fold, so price decreases for the most part, but not a lot there that Wall Street was liking in those results.
Bonnie, thank you. Thanks for the update. A few names to look at. Going into the cash open, here's another one. It's NVIDIA. NVIDIA results after the closing bow following a 7-day slide into yesterday, which we finally snapped. The Citizens Commercial Bank Vice Chair Mike Lehman writing, expects solid earnings from the company. They're the leader and continue to build durable technology and backlog. Mark joins us now for more. Mark, welcome. We've got some competition. How important is that competition, and does it begin to make a dent in the growth of this company?
I think it already has, Jonathan, and thanks for having me on. I think every quarter we're seeing more and more competition, but at the same time we're seeing them continue their lead unabated. So I would expect this to be a fine quarter. This stock hasn't done particularly well, even when they beat earnings expectations right after the quarter. But over time, obviously, the stocks perform mightily, and I'd expect that continue that trend.
Mark, Joe's been asking a great question all morning about the political interference with data center building and how much this could potentially curtail NVIDIA's forward look at their business. How much are you expecting to hear some commentary about this crimping some of the sales going forward?
It's a big issue. Obviously, the election's 100 days away, last 70 days away, excuse me. And I think it has become the issue nationwide, and I think it has to be addressed. I think it's hard for companies to address political situations, but I also think at the same time, there's the political. I think the globe has woken up. China's catching up. I've said for a while, I don't think they're there yet, but they're catching up. The government's backing their efforts mightily, as much as they can and much as they will continue to. So Jensen's really good at that. We've seen him when he's been in China at times. I expect that not to slow down either.
Mark, just how did we lose the public so quickly in the way that we have, Mark? What are your reflections on that, and what are people telling you?
You know, it's such a good question because there's both economic and political ramifications to this. And I think we've had this political theme for a long time about being left behind and sharing in this expansion. And at the same time, as the AI wave is so extraordinary and unabated, the question mark is what that does to the populace and what that does to the future of work and the future of economies. And I think it really is kind of interesting to watch as these data centers get built basically everywhere in these rural places as well as in urban or near urban. And the people watching this happen at the same time, their lives for the economy that we now have are not increasing equally. So it's a pretty easy thing for them to look at that and say, wow, isn't this great? And at the same time, it's not really helping me. I don't own any land. My job's being affected. This is really difficult, and I don't see this slowing down.
Mark Lehman, thank you, sir. Appreciate it. The Citizens Commercial Bank Vice Chair. There is a boom, a technological boom taking place in this country right now. Very few people feel it. In fact, many people feel threatened by it in different ways.
I feel like we've come full circle. We started talking about Stan Druckenmiller using AI to write his op-ed in the Wall Street Journal, and we ended talking about why are people worried about the potential for AI to come in,
Sure.
and I think these two things are somewhat connected.
Hey, Bramo, safe travels.
Thank you.
Looking forward to the coverage on Friday. Lisa alongside TK and the team for Jackson Hole coverage on Friday. Coming up tomorrow, we'll catch up with Torsten Slok, Libby Cantrell, Francis Donald, Savita Subramaniam.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech. Every weekday, only on Bloomberg Television.
At any point in your tennis career, did you say, I've had enough and I'm just going to retire at the top? You ever worry about that problem, staying too long?
It's a great question, and it's one that I think every athlete finds a different answer to. Mine came a little bit later than when I would have liked. I think stubbornness was a great quality that shaped a lot of my victories, but in the end of my career, I think it became a flaw because I was so stubborn to get healthy, for my shoulder to recover. I was also at an age where just my body didn't recover as quickly. And so for a year or two, that stubbornness got in the way of other great things in my life.
What would you say is the thing you're most proud of having done as a tennis player? Was it winning Wimbledon? What was the highlight of your tennis career?
I'd say consistency. I think consistency is, you can have results and they could, come at various times in your career, but I was consistent for many years, and you have to show up. You don't just show up to play first round of the finals, but you have to show up for press conferences before every match, before every tournament, and just the consistency and the mental wear and tear of showing up week in, week out. So I felt like I consistently showed up for my team, for my sponsors. As I look back, I'm proud of that.
Kieran, where are we right now? What are these things?
Right now, this is the solvent yard. So it's not a very exciting part of the whole park. But we are kind of moving up to the fermentation facilities.
And you can smell the fermentation.
Yes.
And it's funny because people always think fermentation is simple, it's easy. It's not.
No, it's very complex. And we have two types of fermentation. One is microbial fermentation, and the other is mammalian cell culture. I mean, I basically could have used yeast to make beer, but now I use yeast to make insulin. So,
amazing. I think that actually that's cooler than using yeast to make beer.
Well, both are cool.
Yeah,
in the
but, no, but one, you're saving lives.
Yeah, but the other is also a great beverage.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Joanna Bersecci in El Ola, Saudi Arabia, and this is Bloomberg.
Hotter inflation comes to spoil the rally party. 30 minutes until the start of your cash equity trade. I'm Danny Burr.
And I'm Yahaira Anand. Open interest starts right now.
Coming up on the show, stocks and bonds slip as fresh eco data adds to a sign of a cooling economy. And it's NVIDIA's earnings day. Jensen Huang takes the spotlight later after the bell. Plus, a Bloomberg exclusive, Vanguard buys Altruist and a major push deeper into wealth management. Those conversations to come on the show. But first, I want to show you what some of these equities are doing post their earnings. A tough go of it for software companies. Intuit falling 10.2%. Its outlook disappoints. That adds to the pressure that it's already been feeling for this tax advisory company. Meta, we'll get into this too, rising 4%. A Bloomberg report that it has discussed settling its teen addiction case with 29 states. And all eyes this morning on NVIDIA, down 1/3%. It's going to be reporting its earnings after the bell. We begin with our top story this morning, though, the latest economic data. And the U.S. consumer spending stalled in July as PCE advanced in line with expectations. Let's break down the latest data with Michael McKee, Bloomberg's international economics and policy correspondent. Mike, what do we see?
Well, we see mixed news, but really it sort of leans in the direction of the hawks for the Fed. PCE headline comes in up 0.2% more than anticipated, leaves the year-over-year rate at 3.7%. The core at 0.2% is stronger than anticipated. Core stays at 3.3% on an unrounded basis. But go back to that PCE core month over month. It's wrong on the chart there, but in the core is the 2.46. Which is 4/100ths below having it revised up to a 0.3, which would have moved everything higher and definitely sent a bad signal to the Federal Reserve. The super core comes in higher. Up to 0.3% for the month. That's ex-housing and ex-energy. So right now, it does look like there is still an inflation issue, and the hawks will be able to make something out of that. You look at the trend in the headline PCE, which is the Fed's official measure, and the question is going to be all the way over on the right-hand side. Yeah, that arrow has come down, or that line has come down a little bit, but look at the distance between that and the 2% target and how much they have to do. And I imagine we are going to hear over the next couple of days, definitely the hawks making the case for thinking about a rate increase. What else did we get? This is where the mixed news comes in. Personal income up strong, 0.4% because wages and salaries went up in July, but spending dipped a little bit. Now, is that a worry? Durable goods orders, very strong, 1.1%. The business side of spending and GDP was up, and a lot of that was Boeing, but a certain amount of it was cars as well as some consumer goods. So there is some strength there in terms of manufacturing. The capital goods core up just 0.2 though. So that's the mixed part of it. GDP was not revised. It was 1.5%. However, if you take out inventories and you take out the government spending and you take out trade, things that are not really the consumer side of the economy that you're looking at, you get a much stronger number for what they call real final sales to domestic purchasers. That was up by 4.2% in the second quarter revised. It had come in originally at 3.9%. So we have still a fairly strong consumer, still a fairly strong business spending, and that's a lot of AI stuff. And then we get a little bit stronger inflation. So I think that's why you're seeing yields rise, and people are going to start reconsidering the idea of a Fed rate cut maybe in September.
Mike, how does this set us up for Jackson Hole and what Kevin Warsh needs to communicate to this market?
Well, the new chairman is kind of under pressure from Wall Street to say something about what he would do if inflation doesn't come back down, because he's promised us it's going to, that they're going to get to the 2% target. And investors have been frustrated by the fact that that's kind of all he says. And he parried a question about whether they would raise interest rates if inflation doesn't come down. So there's a lot of hope on Wall Street, a lot of expectation that he'll say something along those lines without promising anything. So no forward guidance. But we're going to have to wait and see how he takes all of this data as well. But those who are on the committee and who are hawkish are probably going to make some noise about today's numbers.
All right, Mike, thank you very much. That is Bloomberg's Michael McKee. And make sure to tune into our Bloomberg Surveillance special on Jackson Hole. Mike, I got to know, are you going to be wearing that cowboy hat behind you for the special?
I may, you know, well, we'll have to check with the powers that be. But
if it's up to you, Hira and I think our vote is yes. Please do wear the hat. Mike, thank you very much. Looking forward to your coverage. Now, the countdown is on, and we're just several hours away from NVIDIA's results. The earnings will give investors a key read on the state of the AI trade. Let's bring in Bloomberg Tech host Ed Ludlow. Ed, where do expectations stand for later this afternoon?
Yeah, just incredibly high. You know, sales of $92.3 billion, adjusted EPS of $2.09 is double what it was a year ago. And the high bar is probably set against the guide for the third quarter, fiscal third quarter current period, where Wall Street consensus is $105 billion of revenue. So NVIDIA joins that kind of smallish club of $100 billion quarterly revenues. You know, it was only in fiscal second quarter of 2024 that this company notched $10 billion of sales in a quarter for the first time. So those are the numbers, right? There's a high bar against them. What we've talked about in recent days is after that run of declines, which matched the streak in September of 2022 that ended yesterday, you know, the stock trades on a performance basis, on a forward PE basis, much more in line with the S&P 500 now. And the market is basically no longer assigning such a premium to NVIDIA's future growth. And that's where the question will be. You know, how long does NVIDIA dominate the data center build out? Does the data center build out itself last? And talk to us about circular financing.
Ed, moving on to Meta, we know that we have some reporting that Meta and states have discussed settling this teen social media case. How enticing is this for Meta, given that by Meta's own calculations, a trial loss could maybe mean penalties of up to $1.4 trillion, and a settlement could be much less than that?
So, Yahira, the stock's now up almost 5% in pre-market. There was a Bazinga report that Meta has accepted the terms of the settlement offer from those states. Bloomberg has not verified that. What we had reported last night was that there had been talks mid-trial between Meta and those groups of states' attorneys general. The $1.4 trillion potential penalty was calculated by Meta itself. It was Meta saying, if this goes to the worst case scenario, this is the financial stress that we're under. I think the states themselves said that that number was way inflated. The bigger issue probably, and what will be interesting in the details of any settlement, is what operational and technology changes were required. Because the basic accusation is that Meta deliberately designed Facebook and Instagram, other platforms, to encourage compulsive use among young people. So what will they be required to change about those platforms to remedy that? And like that will be a big part of it. But clearly, you know, from de-risking on the stock, that any settlement that removes that potential $1.4 trillion penalty, which again Meta calculated, Meta's always denied the allegations made against it, it removes a bit of an overhang.
And we'll be sure to bring our audience any update if we are able to match that story. Ed, a good day for Bloomberg Tech. Bloomberg Tech host Ed Ludlow, catch him in just under 2 hours' time on the show. Now, elsewhere in the world of technology, Intuit has kicked off a software stock earnings for the week, and it gave a full-year forecast that underwhelmed. Bloomberg's Ryan Vestelica covers that sector and joins us now from Chicago. Ryan, this is already a deeply beaten-up stock. It's almost halved so far in the past year. Just how much of insult to injury was this latest earnings report?
Yeah, it was pretty bad for the Intuit narrative. We've seen at least 2 analysts downgrade the stock this morning, including Bank of America, which warned that this is a sign that maybe people are going to free AI-related alternatives, which is obviously really the heart of the bear case that has been facing software for several months now. The concern that AI disruption is going to be sort of a long-term headwind to growth, to profit margins, to pricing power, and Intuit really just falls right into the heart of that concern for a lot of investors. Weak outlook, we saw sort of similar results from Zoom, which had sort of another underwhelming forecast. Really, it is just adding to the concerns that people already had.
But more broadly, Ryan, we have seen software stage a bit of a comeback lately. So what does that mean for when Salesforce and CrowdStrike report after the bell today?
Yeah, I think there's going to be even sort of higher expectations for them to deliver and just really show that they are not seeing this sort of same growth risk or disruption narrative. Both of these stocks have really been under pressure. Well, not CrowdStrike, but Salesforce has really been under pressure. It's another one where people are like, this should be pretty well insulated from AI just because of its proprietary data. Just there's all these compliance issues surrounding the CRM software. So people were kind of optimistic, but this is one that's just, it's been really struggling to find a bottom and enjoy any kind of long-term pronounced rebound. So this is another opportunity for them to help address some of this stuff. But Intuit, I think people are just now a lot more likely to just sell at the first sign of weakness rather than maybe waiting and looking for values and hoping for the longer-term story here. CrowdStrike, there is a sort of a narrative surrounding what does AI mean for security? Is there going to be more demand for security? So a lot of the cyber names have been doing very well, including CrowdStrike, but those are also on the higher end of the software sector in terms of their multiple, so maybe a little bit of elevated expectations there.
Hey, Ryan, really appreciate your reporting. We look forward to those earnings results. That's Ryan Vostelica from the Bloomberg team. I do want to mention we're just speaking with Ed about Meta potentially settling their teen social media case. Reporting coming in from Bloomberg that Meta in the States have agreed to settle the teen social media harm case. We're waiting details of just how much that might be. As Yahira mentioned, a potential lawsuit. They could face penalties under $1.5 trillion. This would be less. We are assuming so. So we will wait for the figures of how much they've agreed to settle for. But Meta at a high in the pre-market, up 4.6%. Here's how your other markets are faring this morning. We are still down across the board. We had started to inch higher, but hotter CPI that if you round basically up just a little bit more. It was hotter on the core figure too. We're down by 0.5% for the NASDAQ as we wait NVIDIA earnings. 10-year yields, those move higher. They had been coming in because of the price of oil, but now they're up 2.5 basis points at 465.45 for your 10-year yield. Brent crude, that still declines down 2% as hopes that Oman and Iran maybe have reached some sort of agreement over trafficking the Strait of Hormuz. Let's get a look at some of the other individual movers on our radar this morning. With that is Nora Melinda. Hey, Nora.
Hey, Danny. A few stories I'm keeping on my mind. First up, remember Uncrustables? Well, it turns out that they're still a hit. JM Smucker raising its outlook for the year with Uncrustables and Coffee Bill driving success. Earnings also beating expectations, and the company got about $115 million back in some of those tariff refunds. So you're seeing shares of JM Smucker up by about 5% in the pre-market trade. Now on the flip side, Strategy, though, getting a massive 22% cut to its price target at Bernstein. That's at $350 from $450 a share. The firm does, though, still rate the stock at outperform, but Bitcoin's rally is stalling around that $80,000 mark, and Bernstein lowering its forecast on Bitcoin and expecting even more share dilution. Shares of Strategy down by about 2.4%. And finally, wrapping things up over to solar, UBS upgrading Solar Edge to buy from neutral. The FCC banning imports of new inverter models. The firm thinks that this could mean less competition and more market share for the company. Shares, though, of Solar Edge up by about 6.8%. Those are your morning movers. Danny?
Thank you very much, Nora. Coming up, a fresh batch of retail earnings. We're going to take a look at Kohl's and Abercrombie next. You're watching Open Interest.
global economic playbook is being rewritten and the levers of power are moving in real time.
To see where the world is headed, you have to look where the action is.
I'm Haslinda Amin in Singapore.
I'm Menika Doshi in Mumbai.
Welcome to Emerging the New Economy podcast.
Each month, we dive deep into how the world's most exciting rising economies are shaping the global future.
Join the conversation. Subscribe to Emerging on your favorite podcast platform today.
Western countries, all of them are cutting funding to Africa. And some of these programs were supported by funding coming from Western countries, like for human resources, for testing, for transportation of samples. And suddenly, African countries have to think how to fund money and to cover this gap. But it takes some time. And I think the combination of all of these factors are fueling this mistrust that we see at community level. We value the support we got and we are still getting from the US. And we think that if we continue to work together, and there is no reason for the US not to work with Africa CDC, Africa CDC is the leader in terms of public health in Africa.
Bringing you up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Now to high interest, a look at what's making headlines around the world. Iran's military saying it has reached a revenue-sharing agreement with Oman on the Strait of Hormuz, sending oil prices lower. The Islamic Revolutionary Guard Corps spokesman also saying the U.S. is obstructing the process and causing delays. Iranian officials have warned that a deal with Oman would not immediately reopen the waterway. Hedge fund billionaire Stanley Druckenmiller admitting to using AI to write an op-ed in the Wall Street Journal criticizing Treasury Secretary Scott Bessent's bond buyback plans. Druckenmiller telling Notice, quote, "Of course I used AI," adding, "I'm not embarrassed by it. I write everything using AI now for the same reason I use a calculator when I do math problems." And a turnaround attempt at Kohl's showing some signs of progress after the retailer raised its annual earnings outlook, but it still doesn't see sales growth this year. The outlook came after revenue missed Wall Street estimates last quarter.
Let's get more into that story, Ahira. Joining us now is a man who does not rely on AI for his stories. It is Bloomberg Global Business Managing Editor Craig Trudell. I don't want to get us in the AI rabbit hole. Maybe we should talk about it since you are a leading editor at Bloomberg, and I'm sure you have feelings. But let's start with the retail earnings. Kohl's falling, not the biggest store, but is it any indication of generally how retail is faring right now?
I mean, we saw yesterday with Dick's that there are absolutely possibilities for retailers to really sort of let down the market. I mean, the degree of decline out of those shares yesterday was really remarkable. With Kohl's, it is absolutely the case that you're seeing a bit of a letdown here. This was a stock that was showing signs of life under a new CEO last year. When he was made permanent in November, you saw a really big pop. We've seen some loss of momentum there. There is, to be fair, a little bit of a bump up in guidance for them in terms of seeing a less substantial decline in sales this year, but he has not managed to get this company on a track for growing again.
Meanwhile, Abercrombie is faring much better. So is this more of a story about not necessarily a weak or strong consumer, but just them being more selective when it comes to what they're purchasing, what stores they want to go into?
Yeah, I mean, I'm interested in the Abercrombie story as someone who was, growing up at a time when it was like at its peak, right? And it's managed to sort of grow up with us a little bit, right? And sort of appealed to the generation that does remember it fondly, even after the hard times that it fell on for years. it's interesting to see the Abercrombie brand specifically be so strong, and that's really sort of where the company is doing well. Hollister less so, but a significant pop in the shares this morning on the basis of the Abercrombie brand in particular doing nicely.
And they're not like gassing us with their cologne anymore. Like every time we walk by,
They've grown up. They've grown up.
That's certainly a sign
us.
of growing up. It's quite sweet, actually. Craig, thank you so much for joining me. Hi, and myself, Craig Trudell, from our Bloomberg News team. Coming up, we're going to bring you more details. They're just breaking now about Meta's settlement with dozens of states regarding a teen addiction case. We have a number around $17 billion. We get the details with Ed coming up after this break.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers, and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech. Every weekday, only on Bloomberg Television.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
It's Bloomberg Money.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
Breaking news, Meta has agreed to a $16.7 billion settlement in its teen social media harm case. The stock is up nearly 4% on the news. Let's bring back Bloomberg Tech host Ed Ludlow. Ed, we were just talking to you moments ago before this. We have a price tag on the settlement. Just how big of a relief, of a savings is this for Meta versus if they had gone to trial?
Well, against what Meta said was its worst case scenario of 1.4 trillion, which would be every single count and accusation met with the most severe penalty, $16.7 billion is low. And so clearly the stock reacting as it is in the last moments of pre-market de-risks. It removes that overhang. But again, it was Meta that had calculated that penalty. The states themselves had said that, whatever the outcome of the trial, where it was an advisory jury and be for the judge to decide, the penalties would get nowhere near that. They would be in the hundreds of billions of dollars potentially. One thing is just against history. Think back to 2019 when Meta settled with the FTC on a privacy issue. That was $5 billion. It's had prior settlements in various pieces of litigations in the low single-digit billions. So this is still a pretty significant number, Danny.
And Ed, the states weren't just asking for money, they were also asking for changes on how Meta operates. So how much of a relief is it on that front as well?
Yeah, I think I'm still searching for details and reading through this court filing. The accusation from the states, it was a mix of consumer protections at the state level and then one federal level privacy law. But the basic accusation is that the platforms were designed in a very specific way to keep children hooked on them. And so whether Meta will be required as part of this settlement to change those platforms, either algorithmically or from a policy perspective, and it will be for the analysts to kind of work out what any tangible impact of those would be. That isn't part of the story here, but I'm still searching for that in this court doc.
Yeah, and again, things are quickly changing here. Meta shares, they are up 4%. Ed, as I know you are looking for that and any details. For what it's worth, again, we just have the $16.7 billion figure in this landmark case with multiple U.S. states, 29 of them suing Meta. Meta agreeing to settle, as Ed was mentioning, the high watermark. They said this could be over $1 trillion. And I appreciate this is still not enough time to completely look through the documents. But if we take a step back, I just wonder where this brings us going forward, because we're talking about major technological disruption and maybe an inability of regulators to keep up with it. Social media addiction, a clear one here with Meta. And now we're going to have to grapple with the changes to society that AI is making. What does this case teach us about ability for regulators, for this court system to keep up with the changes that technology are bringing to society and indeed teens and younger people who use it?
These are the questions. So again, I don't yet have in front of me any part of the settlement that is non-financial. In other words, mandatory product or platform change or technology change. The $16.7 billion deal kind of closes what is one enormous case and potential financial overhang on the stock and the company, but not Meta's broader youth safety legal issues. Part of the item with this case and prior litigation that they've been involved in 2026 is that there are a number of potential, thousands of them, personal injury, school district cases that Meta may or may not confront. And so that has been something that analysts have tried to gauge what comes next.
And just seeing now some of this reporting that Meta has agreed to impose daily limits and nighttime blocks for teenage users, bolster its age assurance systems to prevent children from accessing inappropriate content, and provide extra tools for parents and guardians. Ed, I know this is still a developing story. We'll continue to catch up with you and the reporting from the tech team. Ed, thank you very much. Bloomberg Tech's Ed Ludlow. And we are just moments away from your opening bell. Amanda Gatti is going to be joining us to discuss what she's watching ahead of NVIDIA earnings. You're watching Bloomberg Open Interest.
Being called an ideological lunatic or a bunch of left-wing nut jobs?
I've been called worse things than that.
You'd think she owned the place.
23andMe, I think, is so incredibly valuable. We're coming back.
It had that kind of detective story feel to it. When you're hot on the trail of something, you know that it's very exciting.
What magazines were you reading as a kid?
I don't think I was reading magazines until I was in them.
You are on the cover of all of these.
Oh, and there's many, many more, but we just don't have time.
Why should people trust you?
I don't think anybody should trust any company or entity completely with any of this.
It's very uncomfortable. Artificial intelligence is this force that is far bigger than we are.
want to build better businesses around these brands.
The shock will never wear off.
So you're a brother and sister running one of the most powerful companies in the world. When you argue, who wins?
No one. The way I could see AI being banned or blocked is if something really went wrong. And if something really went wrong, then maybe it deserves to be.
So is it Paradise ahead or Gattaca?
Maybe somewhere in the middle.
When news breaks,
A redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
Bringing you the most important news and financial information whenever and wherever it happens. I'm Michael McKee on the Mexican border, and this is Bloomberg.
Let's get your trading day started. You are watching Open Interest. I'm Danny Berger. Matt Miller still off, and it is a muted session so far in the pre-market. We'll see if this can turn around, but being weighed down by PCE figures that came in ever so slightly, like to the third decimal point, hotter than expected. Omar Sharif of Inflation Insight says that this means that the Fed may indeed need to hike. Dow futures also unchanged. NASDAQ down 0.4% as we await for NVIDIA. Opening bell down at the New York Stock Exchange. Optimal Tax Asset Management, like maybe the most boring name that you could think of, but they offer things like ETFs and mutual funds. And I guess their tax optimization strategy is so boring, but obviously important. Down at the NASDAQ, we have Frequency Electronics that is listed down there. They make components for space ventures, for wireless. They are up only about 11% year to date, so they are underperforming. They are a small cap equity. Some of the stocks that we're watching, we had some earnings after the bell. Intuit specifically, down 4.5%. An outlook that was largely disappointing. They've already been under a lot of pressure, as have a lot of software stocks. Meta, we've been breaking this one down for you. A $17 billion settlement with 29 states. States were originally seeking up to $1.4 trillion in penalties. According to Meta, they've also agreed for some remediations, like putting a time cap limit of under 2 hours for teens under 18, also giving parents and other guardians more tools to monitor the usage. So those shares are up 3.4%. NVIDIA, that is down 0.2%. It is going to be reporting earnings after the bell in another test for the AI trade. Let's talk more about this and bring in PNC Chief Investment Officer Amanda Agati. Amanda, great to see you. In quarters past, we have seen NVIDIA be this big market event, but over the past few quarters, the stock has sold off after it's reported its earnings. What is the bar, not only for NVIDIA, but for the entirety of the market, for this earnings report to help carry us and propel growth from here?
Well, Dan, it's always great to be with you. Thanks so much for having me. I'm going to stick with the storyline that I think the consensus is also talking about today. It's all about guidance from here. We all expect the fundamentals to deliver for this quarter. So that's not really the storyline. I think the key questions for pretty much all investors are, what's the path forward for demand growth? Is it broadening beyond just a few customers? What does the inflection point in CapEx look like? Is there one? Or do we just continue to accelerate from here? And really just where are we in terms of innings of the cycle? With the fundamental backdrop, we still think it's early to kind of middle innings. This is not a late cycle story at all here. But I think the guidance is really going to be the most important driver for markets.
And going off of Danny's question, Amanda, if NVIDIA delivers another great quarter and the stock fails to rally, what do you think that tells us about the AI trade in this moment?
I think it literally just tells us that valuations are starting to become a headwind, that investors are getting, and again, this is not rocket science, right? But investors are getting a little bit more price sensitive to what they're willing to pay for growth. And I think the thing that I've been talking about all year, and many others have too, is really what return on invested capital is going to look like at these valuation levels. So much spending, hundreds of billions of dollars across the board being spent here, not a lot of return on that invested capital yet. So I think there's still a decent amount of investor skepticism. When you add that to the valuation story, it just creates a little bit of headwind here in the short run. Doesn't mean it's over.
Amanda, I've heard, though, over and over again, NVIDIA is a deal now. It's sold off for 7 straight days. This market's not as frothy as it once was. We had some damage in July. Is that not the case? Are valuations still an issue?
Well, I think evaluations have been, quote unquote, an issue for a while, right? NVIDIA is not cheap, and it's sort of funny. You're making me giggle to talk about 7 days, right? 7 days is a rounding error. It's literally irrelevant in terms of this secular growth story and this innovation cycle. So I'm not sure that it's moved the needle much in terms of investors clamoring to get a deal here. I think investors need to get a lot more creative about the path forward if they're worried about the last 7 days.
And Amanda, you note that this has been one of the strongest earnings season in years, but fewer than half of companies are being rewarded on earnings day. What does that tell us about how this market grinds higher from here if we don't get those rallies after beats?
Yeah, well, we're 5 quarters in a row now of effectively setting a higher bar, a function of positive revisions over the course of each quarter, and then beating that high bar. And so I think that does make a difference, right? How much momentum is left in the trajectory of growth from here? We are seeing an acceleration in positive revisions for Q3, but it is at a slower pace than what we have seen in past quarters. So still positive, still a higher bar, still a lot of fundamental strength here. But I think this rally is just starting to exhaust itself a little bit. And then when you factor in all of the macro policy uncertainty, the macro backdrop has gotten really complex and really fast, despite this disconnect between how strong earnings growth has been and also the economic growth backdrop. And so I think investors are just sort of feeling like, how do I play this macro backdrop from here? It's starting to put a little bit of the brakes on. It doesn't mean it's the end of the cycle or the rally. That fundamental story is still strong, but I think the macro headwinds are starting to bug investors.
Well, you get headwinds today with CPI that ever so slightly, but indeed still is hotter than expectations. It's pushing yields up across the curve, specifically on the front end. That's up nearly 5 basis points. And then you also have to contend with what the Treasury is doing, trying to move around or move down the long end. That did have maybe some effect. Maybe it was oil that was pushing yields down. But Amanda, it is this back and forth. What is the transmission mechanism for that pressure and volatility in yields and treasuries to translate over to equities? Or is earnings growth strong enough that you can look through it?
I think in this environment, there's less of a direct correlation between higher yields and what happens to the stock market. It's not a perfect correlation. It's certainly not an inverse correlation, but I think relative to history, we're seeing a little bit of loosening there. So to the extent that the fundamental backdrop continues to be so strong, I think that gives us a little bit of a reprieve. It bails us out a little bit relative to where yields are kind of pushing to, but it's not, again, a perfect correlation. So I do think there is a limit to how far yields can go before the stock market starts to kind of falter a little bit. Again, it all comes back to the fundamentals. That fundamental story is really strong, but as it relates to the Treasury and the Fed, they've got to be working overtime right now. This is not a 9-to-5 gig. That was a Dolly reference. You know I had to get something in there.
Thank you, Amanda.
May she rest in peace, of course, a true legend. But I think from a Treasury and a Fed perspective, this is really hard. The push and pull of trying to analyze the data and figure out what the path forward is for policy and rates and all of that, it's very purple haze in this environment. I don't envy them at all.
And sticking with that, Amanda, on the Fed, we have Kevin Warsh getting ready to make a big speech on Friday. We all have a list of what we want him to say, we want him to tell the market, but what are you actually expecting?
Well, it's a great question. I wish I had a perfect crystal ball answer for you. Notoriously so, Jackson Hole tends to be a market-moving event year after year after year. It seems as if whatever comes out of Jackson Hole does tend to move the market in a pretty significant way. I mean, I think the wish that every investor wants is clarity on what they're going to do with the policy rate. I think it's a really hard one to give a lot of clarity on. He himself doesn't want to shed too much light from a forward guidance perspective. I think it's really tough in this environment to raise rates. I know there's a lot of disagreement on the part of the Fed on what to do, but just given this macro backdrop and how complex it is, I'm not sure that 25 basis points matters at all. I guess that's the good news, bad news for the market. If we raise 25 basis points, it's not the nail in the coffin for the market, but I don't think it solves some of the macro forces in play. There's other things in play here, other exogenous factors that have nothing to do with 25 basis points plus or minus.
Amanda, great to have you on. Thank you so much for joining us. That's PNC's Amanda Agati. The team on the tech team for Bloomberg have been reading through this Meta lawsuit case. We want to bring you the latest that we've learned from it. Again, as a reminder, Meta has agreed to settle with 29 states in a teen social media harm case rather than bringing this fully to trial. The settlement number is $16.7 billion. California will receive up to $2.1 billion in the settlement. New York as a state gets less than that, just over about $1 billion. They've agreed to a 2-hour daily limit for those under 18 years old and will block 12 a.m. to 6 a.m. for those under 18 as well. They are saying for their financials that they will accrue about $10 billion in legal expenses in the third quarter as part of this. It is reaching a pact with 51 states, so all states on this usage. They are also calling TikTok and YouTube to follow their example. Again, Meta settling in a lawsuit for just about $17 billion, avoiding the worst of the penalty, which could be around $1.4 trillion. All right, we are about 10 minutes into your trading day. Let's see how some of the other stocks are shaping up so far this morning. Little changed on this market. We were down more dramatically in the future session, given what CPI did, coming in a little bit more steeply than expected. Microsoft, that is the best performer based on points added, followed by Oracle, AMD, United Health, Apple doing well too, Broadcom. We are awaiting NVIDIA earnings, and that is heading slightly lower so far here in the early moments of this trading session, down 0.5%. Healthcare not having the best of day. Eli Lilly is down 3.2%. Meta now logging a decline. It was up after the announcement. Now it is down nearly 1% as they announce that $10 billion hit to their third quarter earnings results. In terms of the individual sectors, energy is the worst performer, or one of the down ones, not the worst performer. It's only down 1/3 of 1% as the price of energy falls. Now it's communication services that is the worst because of Meta dragging down the overall index. Discretionary is not doing well. We had Kohl's earnings, those disappointed. Industrials, utilities, materials, those round out the top sectors. Coming up, Vanguard making a major push into wealth management in a deal to buy Altruist. We're going to speak with both CEOs in a broadcast exclusive. That's coming up next. This is Bloomberg.
CFOs are reshaping the C-suite. Bloomberg's chief future officer shines a spotlight on these dynamic leaders.
What's the skill set that you would advise every aspiring CFO to develop?
Psychology.
I think analytical skills are important. Obviously, you need to like the numbers. If you don't like numbers, then don't go into finance. It's sort of like a recipe for disaster if you don't like numbers.
Not only for the CFO, but also the company's management. That's a communication and the collaboration.
I spend a lot of time figuring out how to take the complex and make it simple, and then finding a way to be able to communicate that both internally and externally.
I think it's relationships, whether it's working with investors, bankers, with the senior management team, with the board. Having your head down is one thing as a finance person, but keeping your ears open is super important as well. And I think that all of that is what kind of builds out being a successful CFO.
Watch Chief Future Officer only on Bloomberg.
The
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Joanna Bersecci in El Ula, Saudi Arabia, and this is Bloomberg.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance. Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
Breaking news earlier this morning, Vanguard is buying digital wealth platform Altruist. The deal marks Vanguard's intensifying push into wealth management. And you might remember Altruist back in February. It sparked a sell-off in wealth management stocks after launching a tool aimed at creating tax strategies. So pleased to say that joining us is Vanguard CEO Salim Ramji and Altruist CEO Jason Wenk in an exclusive interview. Thank you both so much for joining. Jason, do you enjoy the notoriety you still have for making all of your peers sell off? Look, this is a really exciting deal. And Salim, if I can start with you, because this is a departure from Vanguard. You're known for growing organically. Why not go that method in expanding into wealth? Why does it make sense for Altruist, who you've already partnered with, to outright buy it?
You know, we've been an investor in Altruist going back more than half a dozen years. So we were a minority investor kind of in the early days when Jason and his team were first getting started. And what we were impressed back then about is what we're also impressed about today. The first piece was really the mission that Jason had founded the firm around, which is making advice more accessible, more affordable, and better for many more Americans. And the second piece, which is really takes us to today, is just the tenacity with which Jason and the team have really been building their business. And from a Vanguard perspective, we want to do for financial advice what we've done for the past 50 years for investments, which is really make it much more accessible to many more people. And part of this alignment around the mission, right? When Jason was talking about the mission of Altruist to me, and we were comparing notes, a lot of what he was trying to do rhymed with what we were trying to do, and I think in that, it really led to this moment.
Well, I'm assuming part of the mission has been this fast growth and nimbleness that Altruist has, Jason. I mean, you're in California, you're away from the hub of financial services here in New York. Why not stay independent? Why partner with a behemoth when one of the sort of bright points of Altruist had been, this independent sort of flavor that you had as a firm?
Yeah, I think so. We're probably more alike than people realize. I heard Salim say that Vanguard is not a Wall Street titan. They're a titan of Pennsylvania, rural Pennsylvania. We were founded on Abbot Kinney Boulevard in Venice Beach, California, so also about the anti-Wall Street as you can get. But Altruist is a business that's designed to help independent financial advisors. Those independent advisors are often referred to as RIAs. They serve tens of millions of clients, over $10 trillion in assets. And we're incredibly focused on empowering those advisors to make advice better, more affordable, accessible to everybody. You'll hear a lot of, like, again, the rhymes with, like, the genesis of Altruist in many respects was inspired by Vanguard. I've been a fan of Jack Bogle's work going back into the late 90s, early 2000s. Our mission is very similar to the Vanguard mission, to take a stand for all investors, right? So you start to see these things. And when you are an entrepreneur and you're thinking about leaving a really long-term legacy, and in our case, it's one of again, this very mission orientation around making advice better and more affordable and more accessible. There's no better partner I can think of. And again, this would have been likely the case when I started the company 8 years ago than Vanguard.
And you also very much so rhyme with a Fidelity or a Schwab, though, considering your business threats them. I mean, Salim, is this Vanguard becoming even more of a direct competitor with those?
Look, if you think about the problem we're trying to solve, and it's not just Vanguard and Altruist, I think it's many firms, but I'll be particular about what we're trying to solve. It's how do you get more access to financial advice? Today, only 1 in 5 Americans have access to a fee-based financial advisor. We would like to see that number be most Americans having access to financial advice. And even as we surveyed Vanguard's own investors just earlier this summer, what they told us, 74% of them, is they want access to some form of human financial guidance to be able to make sense of all the complexity out there.
Yeah.
And so part of what we're trying to do is use technology to give independent advisors greater scale, greater ways to reach more and more clients, but also use technology to help clients who may just want a second opinion or may just want some basic kind of guidance to be able to get that guidance. Because if you go back to our founding mission about helping improve the chances of people's investment success, having low-cost, high-performing products is one component of it, but another component is financial discipline. And what we've seen over decades is that if you got a good fee-based financial advisor that's focused on your interests, that they can really instill that long-term discipline for an investor. And with technology, we think we can do that with greater scale.
So again, the mission is nice, but it's the business case I'm also interested in. I mean, is this you wrestling market share away from some of those competitors by this with this purchase?
Yeah, because of Vanguard's unique structure, we're owned by our clients. We don't necessarily think like traditional companies will. And so is one of the best accomplishments, I think, of Vanguard over the past 50 years. You know, it's 50 years ago this month that we launched the first index fund. And one of the best accomplishments, in my opinion, is that many more people, 2/3 of Americans today, are investors, in part because we help make investing simple and more affordable and more accessible. And what we want to do is do the same thing for advice, because there is a scarcity of advisors and of fee-based advisors, and there's exceptional demand, whether you take my 74%, you take other industry stats, and we think being able to marry kind of the scarcity of supply of great financial advisors with the technology that Jason and his team have built really helps us do for investors who are seeking advice, what we've done for investors over the past 50 years who just want a low-cost investment product in which to enter the markets.
Well, having like this sort of technology-based IRA custody, again, I mentioned in February, it led to kind of this panic among some of the more traditional ones. Jason, what have you seen since then? Like, have you been this really disruptive force, or is it more, you know, to the point that Sam Altman made the other week, sometimes these things are slower moving in adoption and really embracing AI in some of these forms?
Well, on AI, I think that there's still a lot more opportunity. I think there's a lot more possibility than reality, you know, today. So I think Sam's probably right in that regard. As for us, I mean, we've had a fantastic year. We're still a young enough company that virtually every quarter is a new record quarter. I think the innovation's a big part of that. And in our case, because we serve advisors, advisors for the last couple of decades have had very few choices. It's hard for them to run businesses. They have to make a lot of compromises. The compromises might be either I can only serve really wealthy people because I don't have enough capacity to serve more, or I have to reduce the quality of work I can do because I want to serve many. A lot of our growth is because we're able to bridge those, kind of two conflicts and make it much easier for advisors to do their best work at scale, a lot more clients, a lot higher quality work, and to do it at a lot lower cost. So, these are things that AI is a huge enabler for, and technology in general can help enable.
Just on that, how much of that does it hinge on keeping compute costs low? Because this is something that businesses have also had to grapple with.
For us, it's not been a challenge. So, compute, I think, depending on the type of work, I mean, there are some tasks that are, very compute intensive. Some knowledge work will fall in there, but definitely not an issue thus far, and I don't see that being an issue in the future.
Salim, I have to get into the numbers a little bit. Wall Street Journal, I know, reported that this deal valued Altruist at $4 billion. Is that Is that the right figure?
Yeah, we're not disclosing the financial terms,
sure.
But what we are really quite in unison about is what do we want the outcomes to be. And one of the outcomes is to enable most investors to have access to some form of financial advice or some form of financial guidance over the coming decade. Because from our perspective, and it's, again, we're a different type of company because we're owned by our investors, that if we can do that and give people access to that in a high-quality, low-cost way that people have come to expect kind of from our funds, then what we can do is help them maintain financial discipline, and ultimately, we can help them achieve investment success, which is what the company was set up for.
Given sort of the rhyming and how much you align on these sorts of things, in your mind, is this sort of a one-off? Because as I mentioned at the start, it is very rare for Vanguard to grow inorganically, to do M&A, or is this kind of maybe you dipping your toe in and this might be the future for Vanguard, looking at adding companies like Altruist that make sense on more frequently?
Yeah, like we're a very discerning buyer, and Jason was a very discerning kind of seller, and I think that there's so many unique circumstances that made this feel right to both of us. Some of it goes back to 2020 and the early investments we made. Some of it was a strong sense of alignment, kind of a mission, and some of it was just based on the very complementary nature of what Altruist does and what Vanguard does. We have a very loyal following amongst RIAs. We've been big supporters of them through kind of our funds, our models, our research, and so does Altruist. Yeah. And so these are really ways in which we can serve that community better, because we really believe that if we can help that community of fee-based advisors scale what they can do, they can serve more investors, and ultimately, in Vanguard's kind of parlance, that's helping us take a stand for all investors and helping us kind of improve their odds of investment success.
I have like just over a minute, but I would love to get both of your your views on prediction markets and sort of the gamification of investment. Is that trend worry you at all, Salim?
Oh, it worries me tremendously. What we're about is long-term investing, and we really see kind of different forms of whether it's sports betting, gambling, and the like, as things that start to cloud between what is investing and what is ultimately speculation. Vanguard has always been about long-term investing. We're always going to be about long-term investing. And even as Jason and I talked about this kind of in some of our early days, there are very similar views that you had held kind of around just the bad outcomes for investors if you start blurring these lines.
Yeah, I mean, look, we have something at Altruist we call the sacred rule, which is that we will never build something that harms investors. And so I've been a very outspoken critic of prediction markets. I think they're a terrible idea for most people, and I think they don't belong in financial services applications.
Maybe a good way to get young clients, though.
If you don't want them to have money in their future, it's probably a good idea. But again, I think if we focus on like empirical, evidence-based ways to help people achieve their long-term goals, this is partly why we focus with serving these independent fiduciary advisors. It's so critical that advisors help coach people along. Look, there may be things that are okay to do, it's for fun, and then there's things that they shouldn't do, and that these advisors play a huge role in making sure that people are on the right path.
Thank you both so much for joining. Again, congratulations, Vanguard.
Thank you.
Everybody has a moment where they put into action all they've practiced, where they step up to a challenge and either succeed or fail. But what are those moments for some of the world's most influential leaders?
It was a rough and tumble world, and I thought, okay, I can rise up, I can play this game, and I did play the game.
It was great, and it was depressing, and it was disappointing.
My chair at the time sat down with me and said, "Succession starts now."
I'm Francine Lacroix, an award-winning journalist. For the last 25 years, I've interviewed world leaders, bank bosses, even fashion icons. I'm often asking about the news of the moment. But I've always been curious, who are these people as leaders? Join me for the podcast version of Leaders with Francine Lacroix. I'll start your week with conversations that explore what drives the world's most influential people, how today's leaders got to where they are, where they're going next, and how they've transformed their organization in the process.
Make decisions. A poor decision is always better than no decision.
You have to have truth tellers around you, and you have to be willing to listen.
You don't want to be setting strategy in the middle of a transaction, that's for sure.
Do it for the right reasons. Don't do it because of FOMO.
We'll also learn lessons which we can apply to our work and daily lives. Tune into the podcast version of Leaders with Francine Lacroix. Listen and watch.
IQ only on Bloomberg.
ABC News, I'm Wayne Cabot. Breaking news of a settlement by Meta to get states to drop their suit claiming that Facebook and Instagram hook kids with addictive algorithms and designs. This would change the algorithms and designs in major ways. The app would turn off automatically after 2 hours a day. 1 hour if other platforms do the same. No displays of likes or reactions to kids under 18. No cosmetic filters that change faces and bodies. No notifications sent out after 10 p.m. school days. And a better way for teens to report harmful content with a requirement that Meta respond to 90% within 6 hours.
What we're looking at here is an agreement that effectively concedes that some of the design features on these apps got young users addicted, and the states had claimed that that contributed to harming the mental health of these young users, and now Meta will be forced to make these changes.
ABC's Elizabeth Schulze. Meta will also pay the states between $12 and $17 billion. But not all states. Texas, Florida, and New Mexico are not part of this. Whether to raise interest rates is a question the Fed is tackling. One data point this morning. Report from the Commerce Department. Prices rose in July 3.7% year to year. A natural catastrophe is unfolding from a sudden flood caused by reasons still unclear, wiping away villages and people and tourists in Nepal. ABC's Lama Hassan says at least 3 people, Americans, are among the hundreds missing.
Where this took place near the border with China is a popular destination with tourists, and according to the Nepalese Tourism Board, nearly 400 tourists are missing. The army has urged people to remain on high alert and to stay in safe places.
Too soon to know how many people have died. Well, just as folks got their power back on, twisters are a threat again for northwestern Indiana, plus parts of Michigan, Ohio, and Illinois into this afternoon. You're listening to ABC News. Elon Musk is looking to build a massive launch site on the coast of Louisiana.
SpaceX plans to repurpose a disused Exxon facility in Vermilion Parish as a $100 billion launch site. 3 wildlife groups have filed papers opposing the project, saying it endangers habitat and hurricane protection. SpaceX Chief Operating Officer Gwen Shotwell acknowledged those concerns, but insists
the birds might fly away during a launch, but I guarantee they come back.
Governor Jeff Landry compares the SpaceX project to the Louisiana Purchase that opened up the American West in 1803. Jim Ryan, ABC News.
At noon today, the historic courthouse, the bell there at Dolly Parton's home county will ring. Then a moment of silence to honor Dolly and her extraordinary life and lasting contributions to her hometown. She was one of 12 in a house with no electricity, no running water. What you're hearing here is the band at Buckingham Palace, a royal salute to someone so grounded, so relatable, even as she soared to heights few of us could imagine. ABC's Chris Connolly on why she inspired so many.
Dolly stood for joy and welcome and resilience and a fundamental belief in the goodness of others. Really, even Jolene. I think for a lot of people, she was a guardian angel. And I think now she'll always be.
Dolly would open today because in her spirit, the show must go on. Wayne Cabot, ABC News.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
How do you think the Fed is looking at tariffs, the uncertainty of tariffs?
Let's take a look at the sectors and how they perform.
A lot of investors getting whipsawed every day by news events.
Breaking market headlines and corporate news from across the globe.
Could we see a market disruption, a market event?
Are people just too exuberant out there?
You see some so-called low-quality stocks driving this short-term rally.
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, originals and the Bloomberg Business app.
Good Wednesday morning from the Bloomberg Interactive Broker Studio in New York City. We are streaming live on YouTube as well, so check us out there. Scarlett Fu, Paul Sweeney, this is the Bloomberg Intelligence program. Coming up, we're going to take a chat with Matthew Sheltonham. He's a Bloomberg Intelligence media litigation analyst. We got to get the lowdown on this Meta agreement with, I guess, 29 states out there, $16.7 billion. So we'll see what's going on there. James Abate, Managing Director and Head of Fundamental Strategies at Horizon Investments, get his thoughts on these markets here. Kujan Sabani, he covers all the semiconductor companies for Bloomberg Intelligence. Get a good preview of what we can expect from NVIDIA as they report earnings after the close. Then we'll check in with Michael McKee. He's out there in, I don't know, where are they out there? In Jackson Hole?
Jackson Hole.
Okay. That's where all the economists go,
and also getting ready for work.
Okay, very good. Tom McKean's hopping on the surveillance Gulf Stream in just a moment to join him out there with Lisa Bromwich. So we'll check in with Michael McKee, get his thoughts on what we can expect from Jackson Hole, maybe get his thoughts on that inflation print we got this morning, which kind of came in line with expectations. So a lot going on over the next 2 hours. Stocks doing absolutely nothing, which is our cue to go to Alexis Christophers.
Thanks very much, Paul. All right, Wall Street is anticipating NVIDIA's earnings for what they mean to artificial intelligence and to the market itself. That's going to happen after the closing bell. NVIDIA, of course, considered the best barometer for AI spending, and its earnings will help determine if hyperscalers are still accelerating or becoming more disciplined in their spending. NVIDIA down about 0.5% here ahead of those earnings reports, and we have got shares of Intel down about 2.5%. Micron, though, is up fractionally, and AMD rallying about 1.5%. So mixed picture for the chip makers ahead of NVIDIA. Meta Platforms agreeing to pay up to $16.7 billion to settle a landmark social media case accusing the tech giant of intentionally making its Facebook and Instagram platforms addictive to teens. Shares of Meta up just about 1%, and Intuit down 3% after the tax preparation software company gave an outlook that was weaker than expected. That's just adding to concerns about AI and how it's disrupting Intuit's business model. Brent crude is down more than 1% at $87.58 a barrel. West Texas Intermediate crude $81.56 a barrel, down about 1%. Bitcoin at 78,560, and spot gold $46.25 the ounce. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Alexis Christophers, and that's your Bloomberg Business Flash. Paul and Scarlett.
All right, Alexis, thank you so much. We appreciate that. Scarlett Fu and Paul Sweeney live here in our Bloomberg Interactive Broker Studio and streaming live on YouTube as well. Got NVIDIA after the close, so let's pay attention to that. The AI boom. It spurred trillions of dollars in rapid investments to fund critical data centers and energy infrastructure. But many of these projects have met fierce local opposition. What questions do you have about America's battle over AI data centers. Join Bloomberg journalists for an interactive live Q&A conversation happening today at 1 p.m. Eastern. Join at bloomberg.com/live Q&A. So there you go. There, red and green on the screen, as Alexis was just reporting. Let's take a look at some of the stocks on the move today. We can do that with the Bloomberg's Christine Aquino, managing editor for Markets Live. Christine, what are you looking at?
All right, Paul. Well, we got to talk about NVIDIA because it's the big day. So ticker NVDA. Those shares actually not doing too badly, just down a little bit, 0.3% at the moment. And again, the big question, right? What is the state of AI demand, and what do NVIDIA's results tell us about that? So the revenue estimate, of course, I mean, it's $1 bajillion. It's not really. It's $92 billion.
Might as well be.
Might as well be $1 bajillion. A lot of that looking to come from the data center part of the business. The revenue estimate there is $85 billion. And, you know, I think a lot of investors and analysts looking at the margins part of the earnings. That's going to be interesting because that will tell us kind of how much pricing power NVIDIA still has. Remember that they told customers recently they're going to have to increase prices to account for the surge in memory chip expenses. And so we're looking to hear more from them in terms of how much they are able to wield up pricing power, investments into other companies, particularly their own customers, another topic that would be of interest to investors and analysts, especially because, you know, there's whole concerns about this whole circular funding issue and NVIDIA being very much at the center of all of that. I mean, one interesting thing that we were looking at this on the MLive blog today, NVIDIA is no longer the biggest driver of day-to-day moves in equity markets. And so, you know, at least by that measure, some of its influence is starting to wane a little bit, but still, of course, a very important company to watch.
All right, next up on your list?
We're looking at Intuit as well, Scarlett. We know the results weaker than expected, of course, and we're seeing that in the shares. So ticker INTU, those shares are now about 3.5%. I mean, look, outlook was weaker than expected. That was very much, of course, related to concerns, again, about the AI-related disruption that this stock has had to battle for most of this year. They were very much part of that SaaSpocalypse narrative earlier this year. And Bloomberg Intelligence weighing in and saying that, you know, it really does signal disruption, not just caution. The fact that they did have a weaker than expected outlook. And there is very much slowing momentum in QuickBooks and TurboTax. JP Morgan weighing in as well, downgrading the stock from overweight to now neutral, and also cutting its price target by a good chunk, $331 now versus $605 previously.
All right, J.M. Smucker,
Orville,
Ohio. That sounds like Middle America. Orville, Ohio. J.M. Smucker.
Very fitting for a company like Smucker. I mean, that stock is doing too well, or it is doing well today. Ticker SJM. The shares are up now 3.8%. Good results is a beat as well as a raise for their full year outlook. Both sales and profit got upgraded there, and they're citing growth, particularly in its Uncrustables, sandwiches, and coffee.
Interesting. There you go.
I can't say I've eaten a lot of Uncrustable sandwiches, so.
Well, you're not an elementary school kid, so that would make sense.
But yeah, I mean, they say as well that the new guidance includes roughly $115 million of tariff refunds. So tariffs also helping the bottom line for Smucker here.
Yeah, that's been a theme across the board for a lot of these consumer companies, but one that won't last because it's a kind of a one and done. All right, Christine Aquino, thank you so much. Christine is our managing editor for Markets Live coverage here at Bloomberg. And for more conversations like this, subscribe to our Stock Movers Reports. It's our 5-minute audio report on the biggest winners and losers in the stock market that is available to you on Apple Podcasts, Spotify, or anywhere you listen. Paul, the big story of the morning, of the day, certainly in Silicon Valley, is Meta agreeing to pay up to $16.7 billion to settle the social media case brought on by 29 states.
Yeah, that number is big, but I'm reading some notes from our next guest. There's some serious usage changes coming.
Exactly. All right, let's bring in Matthew Schettenhelm. He's our media litigation analyst on this settlement. Matt, Paul just mentioned all these usage changes that Meta will or has agreed to implement. Does that mean that it can't deny that it was at fault? I mean, you know how most settlements end with not admitting any kind of not guilt, what's the word?
Just, responsibility.
Responsibility, I guess, saying, not admitting to any kind of concessions really when it comes to guilt for what happened. Is that the case here, or the fact that it's agreed to usage changes means that it's agreed that it was at fault?
This is certainly giving the states a part of what they asked for. Now, I want to be careful because this is a very detailed settlement agreement, and I haven't read in depth exactly what the company's admitting to or not. And I suspect it's still not admitting fault in any sort of formal way. But in an informal way, you're absolutely right. This is actual changes to how the service operates for teens. And it risks, at least at the edges, discouraging them from using it quite as often. And so we're talking about 2-hour time limits on usage, and other related terms, mandating that they take breaks from time to time in sort of an effective way. It was discussed in trial. Hey, no one actually uses that feature, and most kids just ignore it. This is kind of making those things work a little more aggressively and more effectively. And in theory, down the road, that could have an impact on how many eyeballs are seeing ads on the service.
I mean, some of these behavioral remedies are major in my mind. 2-hour daily limit, as you mentioned, nighttime lockout, school hours, push notifications will be disabled, most of them, mandatory breaks, age checks. I mean, these are significant behavioral changes. I would think, I would think this would have a material impact kind of the company's operations.
I think it's a longer term impact because, one thing that was looked at in the case is what percentage of the company's revenue actually comes from these teens and even younger than teens, under 13. It was a relatively small amount in terms of right now, how much revenue are we getting from them? Where this starts to impact is longer term, because those young users become your adults that are hooked on the service. And these changes, risk denting that. If when you're 17, you're not using your social media as much, you're probably not using it as much when you're 17 to 35.
No, that's a really important point. I think about my son who's 20 and is always scrolling on these social media services. And, he's not going to have to be subject to any of these restrictions, but, he's hooked in there completely. So, Matt, question. The changes that Meta agreed to make are good for 10 years. Why is there this time limit?
Yeah, I think this was a negotiated settlement, and there's a lot of details in this agreement that we need to work through. I think some of these conditions are contingent upon other industry players also adopting them. So that you're right to point out the time limit, but there's also some of the strictest versions of this may not apply if TikTok or other peers don't adopt them. So there's a lot of close reading we need to do on exactly how this works. And all of this, of course, is in addition to the monetary terms and the broader litigation. This is just one piece of a multi-layered piece of litigation facing the company.
I find it interesting that we had heard that Mark Zuckerberg was going to be testifying. Lawyers had said that they would call him to testify. So I'm guessing that this settlement means Mark Zuckerberg would not need to testify?
That's what I would expect. So the parties filed this consent judgment before the court this morning. I don't expect her to, stand in the way of them reaching into this agreement. So that trial that's been going on in Oakland should end with this development. What it won't stop is other cases brought by school districts. There's over 1,200 school districts across the United States that are suing Meta on that basis. There are personal injury lawsuits, individuals who say they're harmed and they're suing the company. All of that continues and doesn't seem to be displaced by this agreement, but that's a little bit down the road. That's not this trial that's ongoing in Oakland right now. That one should come to an end. So Zuckerberg should be off the hook, at least in the near term.
All right, Matt, thanks so much for joining us. Matt Schuttenhelm, he's a media litigation analyst for Bloomberg Intelligence. The stock opened up about 5% on the news today, reaching an intraday high of about $593. It's now down about 0.6%, $566. So losing the initial gains, and maybe as people start to read into this agreement, they see that some of these behavioral remedies look pretty substantial.
They sound pretty significant.
Yeah, so we'll have to, and the $16.7 billion, they have $90 billion of cash on the balance sheet, but they also have tremendous capital needs from their AI capital investments. So this is significant, so we'll have to see how stock reacts. This is Bloomberg Good Morning.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Alexis Christoforous. Wall Street is eagerly awaiting NVIDIA's earnings out after the closing bell. Not so much for what the numbers will say about the chip giant, but for what they may mean to artificial intelligence investors and to the market itself. Right now, the S&P 500 is flat. We've got the Dow Jones Industrial Average down 63 points, or about 1/10%, and the NASDAQ Composite giving back 65 points, or about 1/4%. Brent crude, a lower all morning long, now down about 1.25% at 87.59 a barrel, and West Texas Intermediate crude is down about 1% at 81.62 the barrel, and the Bloomberg Dollar Spot Index up 1/4% at 1195.12. Lots of stocks on the move today. We've got shares of Abercrombie and Fitch rallying 32%. This is after revenue topped estimates, and the retailer raised its annual earnings guidance, suggesting that the apparel company is regaining some momentum even after another quarter of slow sales growth. Also on the plus side, we've got J.M. Smucker rising about 5% after the maker of coffee, peanut butter, and pet food posted a beat and raise quarter. Fiscal first quarter sales increasing 5% from a year ago, helped by tariff refunds. And we got to touch on Meta. The stock is only down about 1/3% after agreeing to pay nearly $17 billion to settle a landmark claim with multiple states that it deliberately made its social media apps addictive for children. And guys, in a related story, it looks like Meta is going to be spending $10 billion just on legal fees alone in the third quarter because of that settlement.
Yeah, and that's
lawyers. I mean, I've never seen a number that big.
Yeah,
I have to go pick
it's stunning.
Yep.
And that's just for third quarter. Like, who knows down the road if there's something more to come.
Yep.
All right, that's your Bloomberg Business Flash. Back over to Paul and Scarlett.
All right, Alexis, thank you so much. Appreciate that. Scarlett Fu, Paul Sweeney, we are live here in our Bloomberg Interactive Broker studio and streaming live on YouTube as well here. Let's get right to it. Somebody who does this stuff for a living, James Abate, Managing Director and Head of Fundamental Strategies at Horizon Investments. James, I guess one of the questions investors are asking these days, in this world of higher interest rates where they seem to be just grinding higher, seems to be higher for longer, how much of a headwind are higher rates for this stock market?
Well, I think if you look at where we are in terms of the market's positioning, it doesn't seem that, the demand for capital, and let's be clear, I mean, the demand for capital right now is coming from the U.S. government as well as, the AI infrastructure build out, including much of the onshoring, reshoring of, all types of investment in that type of areas. So I think when you look at where the market is today, because of the fact that returns on capital are exceeding the cost of capital by a relatively healthy margin, and the differential has not changed, I think it's still a safe area to look at in terms of the equity market right now. Rates have not yet made a bite like they have in other points in time. And even when you look at the real rate, it's still not a point where one would be concerned about muting stock market returns.
James, how are you looking at NVIDIA's earnings that are coming out today after the market closed? A lot of people saying it has less to do with the numbers that NVIDIA reports for the last quarter and for its outlook, and more about the tone that Jensen Huang, the CEO, strikes when it comes to demand and the overall picture for the AI build out, not just for his company, but for all the companies in the industry.
Yeah, no doubt. I think, from our perspective, one of the key things that we want to be looking at is to make sure that there's still very strong demand from neocloud, model builders and sovereign programs, which are outside of some of the hyperscalers who are trying to create their own proprietary silicon to compete against NVIDIA. So from our perspective, we expect a very healthy quarter for NVIDIA, but more importantly, where are sales going to be coming from and where the expectations are for that outside of the hyperscalers demand.
James, I just saw Tom Keene jump in the surveillance Bentley, take him to the surveillance Gulfstream, take him out to Jackson Hole, Wyoming. What are your expectations for Fed Chairman Warsh? This is his first Jackson Hole get-together of the big bankers and economists. What do you expect?
I think today's muted core PCE rating and the increase in Treasury buybacks on the longer dated Treasuries, as well as last week's yen intervention, takes the pressure off the new Fed chairperson for now. I mean, he's kept his views on interest rates very close to the vest. I, maybe non-consensus, believe that at some point, despite all the talk about reducing the Fed's balance sheet and Warsh's supposed hawkishness, I think the Fed's likely to be compelled to step in and buy longer duration bonds along with the Treasury to keep a lid on interest rates. And unlike the Treasury, the Fed, faces no limits on the scale of its interventions. The fact is, 6% GDP fiscal deficits have rising debt service costs, and there's no political appetite to control spending or raise taxes in a meaningful way. And Warsh is not going to blow things up, as Fed rate increases are going to do nothing to discipline bloated government spending, I think, on the horizon. So let's not forget, lastly, that Kevin Warsh's mentor was Ben Bernanke, the godfather of quantitative easing. So Warsh's aversion to QE should be taken with a grain of salt, especially seems to be a very politically savvy person in the spirit of Alan Greenspan.
Last question to you, James. We also have the trade war heating up once again, whether it's the U.S. versus Canada or what the U.S. plans to do with Iran and targeting China in the process. Is that something that's going to prove to be any kind of headwind to this equity rally?
It has been. And, unfortunately, from a dynamic of inflation, getting back to Fed policy, I'm worried that some of the short-term fixes, like pausing tariffs on imported ground beef and attempt to suspend, even the federal gas tax, are very Nixonian in trying to push the inflation genie back into the bottle temporarily. But, like in the end with Nixon's 90-day freeze on wages and prices, they just postponed the inevitable. I think the problem we look at today, the Heritage Foundation's Project 2025 served as a good tether for the first year of President Trump's second term. Unfortunately, now we're getting the very impulsive President Trump. So the taming of inflation in recent months is, unfortunately, like the saying, a story with a happy ending is a story that hasn't ended yet. So I think the end result is going to be a weaker dollar, flatter yield curve, and investors should position themselves in those market sectors that historically perform best under, interest rate inflation scenario that's a little bit higher, namely energy, materials, industrials, cyclical tech, and infrastructure, and avoid long duration assets like staples and healthcare.
Great call there, James. Really appreciate it. Very concise. James Abate, Managing Director and Head of Fundamental Strategies at Horizon Investments. He is based in New York. From an earnings perspective, all eyes are focused on NVIDIA reporting after the close today, which I think explains why our next guest is in New York and not in SF. You got to be in the center of the world, which is here, as nice as the Bay Area is. Kunjan Sabani, Bloomberg Intelligence. He's our senior semiconductor analyst. He's responsible for all that NVIDIA silliness. After the close, what are you looking for? What do you think the street's looking for coming out of NVIDIA?
I mean, look, as usual, the expectations run high. I think the focus is really going to be the next quarter guide. Remember, this is where the new Vera Rubin product starts ramping.
Which is it? This is the new chip?
The new platform, yeah, the new chip that's going to start ramping. The last time when they ramped a new chip, they ran through some hiccups in this quarter. So the eyes are on there. Most of the street is not expecting any hiccups, so we expect robust numbers out of them. But I don't know if that's going to be enough to really change the sentiment. I think the focus is more than the numbers around three key areas. One, they have announced the $500 billion of the sort of not vendor financing, I want to call it, but backstopping, the consortium that have put together. So there's a lot more concern now, like, hey, is it necessary really to become sort of the bank of NVIDIA to get revenues? And the other two key points are going to be, they recently announced a price hike, which implies they cannot keep up their margins unless they hike prices, right? So a lot of focus is going to be on the margin, especially as the new products are ramping.
So about that price hike, how are you thinking about whether this is the start of more price hikes? I mean, you said that they need to keep their margins intact. It suggests that, there's a certain level that they're eyeing, and that's going to be something that they have to maintain over time.
I mean, look, they've always had industry-leading margins, which means they have always had the most expensive chips. The fact that they could not pass through the high rising memory and inflation costs anymore suggests, like, yes, they are under pressure to keep that margins. And that's a very big indicator that sort of speaks to their mode. So I don't expect more increases in the near time soon, but if the memory landscape does not change, we could very well see another sort of price hike in sort of next year.
What's the competitive landscape these days, NVIDIA versus kind of the next two or three folks out there?
Yeah, the real competition is really from ASICs, which is what the chips of NVIDIA's biggest customers are developing for themselves. Just this week, OpenAI announced its latest chip, ASIC chip called Jalapeno.
Based on Jalapeno?
Yeah, they're calling it Jalapeno.
You guys are so tricky out there in Silicon Valley.
And, the initial performance suggests, again, this is only done by this one outlet, and it's very early. It's not out there in the public for benchmarking, but at least that from that results, if you believe them, they seem to go neck to neck to the current NVIDIA chip. Again, this is one of the biggest compute customer, OpenAI. It consumes their compute through Microsoft, which is their biggest direct GPU customer. So the risks and the competitive pressure from ASICs continues to rise, and we don't think this trend is going to stop. So they will have to figure out a way to continue keeping the share.
You mentioned the bank of NVIDIA, that idea that NVIDIA needs to finance a lot of the futures sales, keep things going. How do you expect Jensen Huang to answer questions related to circular financing? Because that's something that investors keep saying that they want to hear him address, but I don't know that that's something he's going to answer, head on.
Yeah, we have not seen him sort of address that head on. I think, one of the things that they have addressed it sort of is like they're really investing in the ecosystem, and which is something really needed. This is not specific to NVIDIA. All of the vendors, Broadcom has also announced doing something in the ballpark of 100 billion. Is just when NVIDIA takes a step, it's a $500 billion step. So something really
it's a big step.
What's the investor sentiment out there, Sujan? I'm looking at stocks up 14% year to date. For most people, that's a decent living, but last 5 years, this stock is up about 57% per year. Where are we in kind of the investment story with NVIDIA?
Yeah, and I think this applies to the overall sort of AI semis trade, not just NVIDIA, is that everyone is sort of in the no man's land right now for the next 3 to 6 months, because everyone's trying to see what happens in 28, right? 26 and 27 have been booked out. There's not a lot of chance of downside here, but the big question is, does the CapEx trend continue in 28? And we will get sort of that marker in the next 2 quarters. So everyone's sort of waiting before taking a massive action. Like, where do we go in 28?
Before we let you go, Kunjan, I'm just looking at the SURP function on the Bloomberg terminal, which shows what the stock tends to do after earnings surprises. And in general, the stock tends to move up, and not by a small amount either, following the earnings results. What are you thinking will be the result after today's earnings?
Yeah,
a gain, a drop?
I'm surprised to sort of hear that, because what we have seen, at least in the next 24 hours, generally for the last 6 quarters, the stock has either stayed flat or down.
No, you're right. I misread that. The surprises to the upside, the stock reaction has been down for the last 4 quarters.
Okay. So
okay.
There you go.
I need to work on my Bloomberg terminal reading skills here.
That's why we have the pros in here. Good job. I mean, he's got to get on the phone and talk to investors, and sometimes talk them off the ledge. Sometimes,
he has the hard job.
It's a tough job, but that's why we get the great ones for Bloomberg Intelligence. Kujan Sabani, Senior Analyst, Semiconductors. He's based in San Francisco, where a lot of the good tech folks are based, but he's here in New York this week, so we appreciate getting a few minutes of his time. S&P down 7 points. This is Bloomberg. Good morning.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Alexis Christoforous. Stocks are mostly lower after the Fed's favorite inflation gauge rose in line with expectations in July, and consumer spending stalled. That's giving the Federal Reserve some wiggle room to hold interest rates steady in the near term. The S&P 500 is down 4.5 points. Dow Jones Industrial Average down about 80, or about 0.1%. NASDAQ Composite off 71 points, or 0.25%. WTI crude is down 0.75% at 81.73 a barrel, and Brent crude now at 87.70 a barrel, down about 1%. Spot gold is down 0.8% at 46.19 the ounce, and Bitcoin pulling back after rising above $80,000 the other day. It's now at 78,143, basically flat. Shares of Nvidia down more than 1% ahead of the chipmaker's key earnings report after the closing bell, which could help shape the future of the AI trade. Boston Scientific says it has been hit with a cyber attack that's hampering the medical technology company's ability to fill orders. And we've got shares of Boston Scientific down more than 4% on that news. And SoftBank is talking with investment banks about a potential $10 billion to $20 billion bond offering to help refinance a loan for its investment in the U.S. tech giant OpenAI. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Alexis Christoforous. That's a Bloomberg Business Flash. Back to Paul and Scarlett.
Thank you so much, Alexis Christoforous. This is Bloomberg Intelligence. We're streaming live on YouTube. We are live from our Bloomberg Interactive Broker Studio in Midtown Manhattan. Let's go over now to Jackson Hole, Wyoming, where our own Michael McKee is standing by. He's getting ready for the start of the Jackson Hole Economic Symposium later on this week, culminating with Fed Chair Kevin Warsh speaking on Friday. And Mike, ahead of that, as Alexis was just recapping, we got the latest inflation data. This does not seem, will this change how Kevin Warsh addresses inflation when he speaks on Friday?
No, it won't, because he doesn't want to give what he calls forward guidance, so he's not going to put it in the context of what they might be doing in the near future. The only question about how far he goes is whether he'll say, if inflation doesn't come down in the future, we'll use all our tools available. He's not likely to say anything about the fact that inflation has not moved, and so therefore they have to consider rate increases. That would be a bridge too far for him.
Mike, Scarlett and I, we noticed your cowboy hat in the background. Is that just for show, or do you wear that when you walk the streets of Jackson Hole?
Oh, you definitely, I wear cowboy hats all the time out here.
Very good. So what is the vibe out there as to expectations from what we may hear in the next couple of days, particularly from Fed Chairman Warsh?
Well, there's not a lot of feeling that he's going to make huge news, but he doesn't have to say a whole lot to affect what the bond market is thinking these days. So it is possible we get something out of it. Now, in terms of the rest of the conference, most Fed officials are not speaking to the media on the record here, probably because Warsh has asked them to speak less, and probably because it's his first meeting and they're ceding the headline ground to him.
Oh, interesting.
But many of the other people who are here from academia are going to be talking about payment systems and stable coins and things like that. So there won't be a lot of headlines coming out of this Jackson Hole.
That's interesting that the other Fed officials will not be speaking out of deference to Kevin Warsh. Do you think that sets a precedent going forward? Is that kind of going to be the state of play for them, or is it just ahead of this key speech this time around?
Probably ahead of this key speech, unless over the next year, until we come back here in August of 2027, he convinces them that speaking less is virtuous, but that remains to be seen.
Mike, what's the chatter out there, if any, about Secretary Bessent and his bond buying strategy plan thing?
Well, there's still a general feeling on Wall Street, as was epitomized by a number of very well-known market participants over the last couple of days, that it's a mistake for Bessent and that he is trying to manipulate interest rates rather than steady a market. And so he's going to lose because markets are not going to pay attention to him in the long run. In the short run, yields fell. They have not gotten back to where they were, but they're still up. And as we saw today, you saw some movement in the bond yields today after the numbers came out. So maybe when we get whatever Warsh has to say Friday, and then on September 12th, the CPI, it erases all of those moves that the secretary was looking for.
Yeah, I like your oblique reference to the feedback from Wall Street. Stan Druckenmiller, of course, former mentor to Scott Bessent, among those being very vocal about how he doesn't agree with the buyback plan, and in fact wrote a opinion piece in the Wall Street Journal. Although there are a lot of people on the internet who apparently have a lot of time and put it through AI filters or AI detectors and noticed it was written by AI. Why do we care about that?
I don't know. I don't. But I mean, I guess if you put your name to it, like Stanley Druckenmiller.
I guess so, but I mean, he made the argument. He has his point of view. I mean, Mike, do people care about the fact that it's written by AI? Why is this even a thing?
It's a thing because people have too much time, as you say, and there's obviously a debate going on over how much you use AI. But Druckenmiller addressed that today, saying that everybody uses AI that he knows, and that it was his ideas. So what does it matter whether the computer or he wrote it?
Interesting. I guess that's the times we live in. Mike, one of the key areas for, I guess, just investors in general, but certainly in the bond market, is to try to gauge kind of where the true inflation is in this economy, the stuff that's maybe outside of the realm of energy, to name one area. What's kind of your view? What are you hearing from the street now as we can try to get a sense of that underlying inflation?
Well, with the numbers we got today, because they were sort of divided, the monthly numbers for the headline coming in worse than expected, the core about as expected, and neither one changed the year-over-year numbers. You've got people on both sides of the hawk-dove debate with material they can use in the next meeting argument. But I think when you look under the hood, what you're seeing is not a lot of change at all in what's going on with inflation. With the super core, which takes out housing and energy, was up 0.3, a tenth more than it was the month before. And that was one of the numbers that the hawks were leaning on. There's also an increase in the PCE driven by portfolio management, and they are changing the way they calculate that in the next month. So that could push inflation down a little bit, but it's really a methodological change. And there may be some things that make up for it, but it's something for the doves to hold on to. So at this point, I think what you're looking at is a status quo inflation. And then the question is, do you think it's going to go down from there? Because basically where we are now is back to where we were before the Iran war started, as energy has filtered in and out. And but at that point, that wasn't good enough for the hawks. So if they don't get some indication that we're going to see inflation continue to move down in a fairly rapid clip towards that 2% target, this debate's going to go on, and maybe more people join their side.
How are economists thinking about tariffs now? Because it feels like the tariff war or the trade issues have reemerged and become kind of a factor again after laying kind of quiet for a while. Is this something they actively cite in looking at inflation expectations?
Not at the moment, but only because it's at the moment. What they thought is that we had gone through the cycle of tariff price contributions to inflation and that things were going to settle down now. But then the president has come back with more tariffs for companies around the world. And now the big Canadian tariffs, if they actually take effect, would have an impact because we get a lot of stuff from Canada, and that would leave us with more inflation pressure. Hard to calculate exactly how much, but more inflation pressure, and that is another reason to lean against the inflation by perhaps raising rates.
All right, Mike, thanks so much. Appreciate that. Mike McKee, International Economics and Policy Correspondent from the $1 Million Cowboy Bar in Jackson Hole, Wyoming there. That's
an actual place?
Oh, yeah. Yeah, the bar stools are saddles.
Oh, interesting.
Yeah, so it's kind of the center of the town there.
Okay, I like that idea.
That's where a lot of work gets done. A lot of
on the sidelines.
Yeah, economists sit down
in the bars
and debate the markets here. So Mike's out there, Jackson Hole, and please join our special coverage of the Fed's Jackson Hole Economic Symposium with Tom Keene and Lisa Abramowitz from 9 a.m. to 11 a.m. Eastern Time this Friday. They're jetting out there on the surveillance Gulfstream as we speak. We'll have more coming up, please.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
This is Bloomberg Intelligence. Paul Sweeney and Scarlett Fu here with you. It is still earnings season, and the retail companies are busy reporting their results. And we've got to read on two different parts of the consumer retail economy. Bath & Body Works, sales sliding, and that is having an effect on the share price, certainly this morning. And then you have Williams-Sonoma, whose sales momentum has extended. Bath & Body Works, for the moment, up 3.5%. Williams-Sonoma down 2.5%. Lindsay Dutch is with us right now. She is our consumer hardline senior analyst. And Lindsay, if we just take a step back, first of all, and look at the headlines, look at the numbers out of Williams-Sonoma and Bath & Body Works, what kind of story does it tell about consumer spending and the willingness of consumers to spend on little treats and bigger, more expensive investments like cookware?
Thanks, Scarlett, for having me. Yes, I think that there's two different stories happening here. You know, I think the Bath & Body Works, the stock is up, sort of results better than feared. But as you mentioned, they're seeing sales decline and sort of pressure on profit if you take out any tariff refunds from the result. That company is going through a little bit of a transformation. They're kind of cutting their SKUs. So some of that decline is sort of a contraction in the assortment that they have going on with this strategy to revive growth. But the other piece is, you know, they generally cater towards, you know, like a broader, like the average U.S. consumer. And you can see, you know, there is some pressure there. Those consumers need big discounts to come and spend even on a lower price item that you'd find at a Bath & Body. And by contrast, if we jump to Williams-Sonoma, you know, they had very strong results, sales growth of almost 7% in the quarter, super strong across all of their brands. And I think the bar, you know, for investors for this company is just very, very high, and their guidance raise just didn't meet that high bar.
So what are these companies, just across your coverage, what's the general feel about the consumer here? Because, you know, we talk about the K-shaped economy, and some folks are saying maybe that's changing a little bit. What are your companies kind of suggesting?
I think the results so far still sort of indicate the strong divide in the K-shaped economy, sort of lower to middle, pulling back a little bit more, getting a little bit more selective, going after the value. And then we have higher income. You know, they are selective, but they are still spending. So Williams-Sonoma does cater to a higher income consumer. You know, they said home furnishings industry was about flat in the quarter, but again, as I mentioned, 7% sales growth for that company. And they saw growth across furniture and non-furniture categories. So that higher income consumer is still spending, especially if the product is new, or if it really speaks to them in terms of a collaboration.
So does this increasing divide between higher income consumers and, frankly, everyone else mean that more merchants, more retailers are actively choosing to chase the higher income consumer and cater to that group of consumers rather than sell to the mass consumer?
I think that's a really hard pivot to make. So if you think of a Bath & Body Works, for example, they did just earlier this week announce a new collection that kind of sounds like what you're describing, going after more of a higher end consumer. It included home decor and higher price items. And I guess that, you know, maybe is some effort from a mainstream retailer trying to get that advantage. But I think executing on that and really pulling in that higher income consumer out of nowhere is very difficult to do. I think a company like Williams-Sonoma, they have brands that already cater to that consumer. The consumer already knows to search for them online. And so I think executing on that pivot would be extremely hard.
Lindsay, I'm reluctant to ask this question because it suggests that summer is almost over, but holiday shopping, what are the trends? What are the expectations?
Paul, you're going there?
I'm going there. What are you hearing from your companies?
Right. So I think excluding Williams-Sonoma, the broad trend is very cautious, sort of a cautious look into second half. most guidance changes sort of indicate more of a potential slowing in sales growth, continued margin pressure, and just sort of very much uncertain or needing to use a lot of discounts to draw that shopper. I think Williams-Sonoma would be the exception. You know, they raised their guide. They, based on the midpoint, should get at least 4% growth in that back half, and they kind of chopped off sort of what they were thinking might be the worst case for the year. So broadly, I think there's a lot of caution going into holiday. Back to school comments have been minimal so far, but not a lot of indication of strong momentum for that holiday season.
That's exactly where I wanted to go. I mean, now is the time to look at back to school, not the holidays, not yet at least, Paul. So when it comes to back to school, does that tend to be a leading indicator for how holiday sales will shape up, or is there not really much of a correlation?
It can be. So Williams-Sonoma talked about it slightly. They had acquired Dormify, and they relaunched that. So they saw success with, back to college students, and their Pottery Barn Kids brand did well this quarter. Not a lot of detail, but again, a lot of their benefit is coming from that higher income shopper. When I think back to yesterday, Dick's results, they didn't really comment on back to school. Kind of gives you the indication that perhaps the performance from Foot Locker was not as good as they were expecting. And I think that is reflecting pressure on a lower income consumer for that.
All right, Lindsay, thank you so much. Always appreciate getting a few minutes of your time. Lindsay Dutch, she's a Consumer Hardlines senior analyst. For our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM Channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM Channel 121 is presented by Golden Crest Metals. Stay tuned for the latest market news and industry research. The next hour of Bloomberg Intelligence starts right now.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
How do you think the Fed is looking at tariffs, the uncertainty of tariffs?
Let's take a look at the sectors and how they performed.
A lot of investors getting whipsawed every day by news events.
Breaking market headlines and corporate news from across the globe.
Could we see a market disruption, a market event?
Are people just too exuberant out there?
You see some so-called low-quality stocks driving this short-term rally.
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, Originals, and the Bloomberg Business app.
Good Wednesday morning from the Bloomberg Interactive Broker Studio, Midtown Manhattan. This is Bloomberg Intelligence with Paul Sweeney and Scarlett Fu. We are broadcasting live on YouTube as well. This is the second hour of Bloomberg Intelligence, and in addition to covering the markets, we're going to check in with our Ryan Vlastelica, our equities reporter here, on NVIDIA results and what they're likely to say about the state of the AI trade. Of course, NVIDIA will be reporting earnings after today's market close. We're also going to check in with Ruben Hovnanissian. He is the managing director and a generalist portfolio manager in the fixed income group on the markets. It's been a wacky week for U.S. Treasury bond yields over the past 2 weeks, given the intervention from the U.S. Treasury. Of course, Mary Ross Gilbert on hand as well. She's our senior equity analyst covering retail to recap earnings from some of those retailers, including Kohl's, as well as Abercrombie and Fitch. But before we get to any of that, let's bring in Charlie Pellet for a check on our Bloomberg Business Flash.
Hi, thank you very much, Scarlett Fu. You mentioned Abercrombie and Fitch. Have you seen that stock quote up 35% today? Right now we've got U.S. stocks trading a little change. The S&P 500 index just turning higher, up now by 1.7679 where we stand. They're up under 0.1%. Dow Industrials down 84, now down 0.2%. We got NASDAQ down 43, drop there of just about 0.2%. The SOX, the Philadelphia Stock Exchange Semiconductor Index, up now, down now by 0.3%. All of this ahead of NVIDIA after the close of trading today. NVIDIA shares down now by about 0.9%. We do have the 10-year, the 2-year currently yielding 4.21%, with the 10-year at 4.65%. Your 30-year 5.17%. Gold, meanwhile, down $55 the ounce, lower by 1.2%, holding just above 4,600 even. West Texas Intermediate crude down again today, 81.90 a barrel, down 0.6%. Barrel of Brent, 87.85 right now, down by about 0.8%. Of course, we'll We'll have a whole lot more on the markets coming up in just a minute with our Judy LaGrue. Right now, we've got the S&P higher by 4 points. Little changed. The big event today will be NVIDIA. Coming up after the close of trading, James Abadi is Managing Director for Horizon Fundamental Equities at Center Asset Management. He was a guest last hour right here on Bloomberg Intelligence.
From our perspective, we expect a very healthy quarter for NVIDIA, but more importantly, where are sales going to be coming from and where the expectations are for that outside of the hyperscalers' demand.
James Abadi of Center Asset Management interviewed right here on Bloomberg Intelligence. Ahead of earnings, NVIDIA right now down by about 0.8%. Meta Platforms making big news today. Meta shares up by 2.9%. It has agreed to pay $16.7 billion to settle a landmark social media case with multiple states around the country. Recapping S&P higher now, little changed, up 2 points, up 0.1%. NVIDIA continuing to be the big story, down 0.8%. Paul and Scarlett, that is a Bloomberg Business Flash.
Charlie Powell, thank you so much. We appreciate that. Scarlett Fu and Paul Sweeney live here in our Bloomberg Interactive Broker Studio in New York City, streaming live on YouTube as well. Charlie was just talking about NVIDIA after the close. That brings us to a key issue here. The AI boom has spurred trillions of dollars in rapid investments to fund critical data centers and energy infrastructure. But many of the projects have met fierce local opposition. What questions do you have about America's battle over the AI data centers? Join Bloomberg journalists for an interactive live Q&A conversation happening today at 1 p.m. Eastern. Join at Bloomberg.com/live Q&A. As Charlie was just reporting, we got some kind of a mixed tape out there. Let's see where the action is. Take a look at some of the stocks on the move today. We can do that with Judy LaGrue. She's a reporter for Bloomberg News. Joining us live here in studio. Judy, what are you looking at today?
Good morning, Paul. First, I'm looking at Abercrombie & Fitch, ticker ANF. Shares are soaring today as much as 35%, although the stock currently is trading, pretty much at 35%. Shares are having their largest intraday jump since November 2025, and they are on track for their highest price since January 2025. This is coming after the company reported second quarter revenue that exceeded Wall Street estimates and raised its annual earnings forecast. So the company now expects net sales growth of 5%, which was on the top end of its previous forecast. Analysts are saying that this suggests that the company is gaining momentum. Raymond James specifically wrote that they were really impressed with Abercrombie's name brand strength, but they were worried about mixed reads on Hollister, which Abercrombie also owns. So they were pretty worried going in, and they were pleasantly surprised by the earnings. Hollister saw negative same-store sales growth this quarter, but its revenue rose 2%. I'd like to also point out that mall-based retailers are also gaining in trading this morning. Victoria's Secret, ticker VSXY, is up as much as 6%. American Eagle Outfitters, ticker AEO, is up as much as 5.6%, and Urban Outfitters, ticker URBN, is up as much as 5.5%.
I feel like a flashback to the 90s all of a sudden with all those names.
You're suddenly right in the mall with all of those names.
Exactly, like bring on the Britney Spears. Okay, let's move on to J.M. Smucker.
Sure, J.M. Smucker, ticker SJM. Shares are gaining as much as 7.5% on the day. They're up currently about 3.3%. The stock has been up 28% year to date. So it's had a good year. And today the shares are on pace to close at their highest price in 3 years. That's since September 2023. And this is another earnings-based stock mover. The company reported a beat and raise quarter that was supported by growth in their Uncrustable sandwiches product and their Folgers coffee product. They're raising guidance and said that a lot of this guidance raise was due to the $115 million in tariff refunds the company received in the first quarter. So I want to also specify, too, the growth in coffee. It was a very big money maker for the company. Sales went up about 13% last quarter, and they were also able to lower coffee prices after raising them. So passing the savings along to consumers seemed to be very helpful for J.M. Smucker. I'll also add, lastly, that Bloomberg Intelligence analysts wrote that Hostess, so sweet-baked snacks, are the key risk for the company in the second half of the year, and that segment fell about 7% this quarter.
Okay, real quick, Zoom Communications.
Zoom Communications, ticker ZM, the shares are trading lower, as much as 7% on the day, and it is on track to reach its largest single-day drop in nearly 3 months. This is coming after reporting second quarter earnings results yesterday, and they were seen as mixed by analysts. It also, the company also gave outlooks for adjusted third quarter earnings that were weaker than expected. So, despite strength in the enterprise and AI monetization business, according to according to Citi analysts, investors have really come to expect stronger guidance from Zoom. So that's really a lot of the sentiment from Zoom.
All right, good stuff, Judy. Thank you so much. Judy LeGroux is our Bloomberg News reporter, and for more conversations like this, subscribe to our Stock Movers reports. These are 5-minute audio reports on the biggest winners and losers in the stock market. You can find Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. NVIDIA, due to report earnings after the closing bell today. This feels like this, along with Fed Chair Kevin Warsh's comments on Friday, like the big events of the week and perhaps for the summer before the Labor Day holiday. And of course, it comes in, NVIDIA, into these earnings with a stock performance that's been kind of uneven. Ryan Vlastelica is our Bloomberg Equities reporter, and he's written about NVIDIA's earnings and what it means to AI investors and the market itself. So your conversations with investors really show that they're not so much concerned with the numbers for the last quarter or even the specific outlook for this quarter, because NVIDIA's business is doing just fine, but really what it says about AI spending and the AI landscape overall. Tell us more about what you learned.
Yeah, so I would say that this quarter, people aren't too concerned about it. If nothing else, we just had results from the hyperscalers, which is companies like Microsoft, Meta, Alphabet, Amazon. They all really affirm their commitment to heavy and aggressive spending on AI, and a lot of that money flows directly to companies like NVIDIA. So I think people are feeling pretty good, at least about near-term trends, maybe even for the next 12 months or so. But when we start to get to what is beyond that, have we seen a peak in growth? Are we seeing enough of a return on all of this investment to justify further spending and thus, further growth for the NVIDIAs of the world? I think that's what people are really focused on right now. It does feel like there has been a shift in sentiment toward the AI trade with a little bit more of a show me story, a little bit more skepticism, some growing concern about circular financing and some of the, just financials surrounding the investment. And that's what's really going to be, I think, a focus for NVIDIA tonight.
Ryan, how about the so-called circular deals? How much of the concern are they, do you think, from investors, and what do you expect the company to say about those?
It's going to be very important to hear what they say about this. Likely they'll say that everything is, working out fine so far, but I think you do have so many investments that are being made across the industry. You're investing in a company, which is then your customer and so forth, and there is just a concern if we start to see some of these companies start to falter, whether you're talking about OpenAI or Anthropic, these kind of private companies where the financials are a little bit more unclear at the moment because they're still private. If we start to see some faltering there, what kind of ripple effects is that going to have for the rest of the AI space? Now, certainly NVIDIA is still dominant in the field. It's still, very powerful, a lot of pricing power and so forth. So I don't think people are too concerned about it in general, but we do have this sort of concern, like what if we get some kind of cascading effect and weakness somewhere starts to spread, especially since all these companies have become so interconnected.
Ryan, very quickly before we let you go, you've noted in your story that NVIDIA stock is off to its worst start since 2022. You know what? We need to end our conversation here because we want to join in on a conversation that BTech anchor Ed Ludlow is holding right now with the West Virginia Attorney General, J.B. McCuskey. And this comes on the heels of Meta's settlement with state's Attorney General over the social media addiction case for children. Meta agreeing to pay up to $16.7 billion. Let's listen into their conversation.
I think the first thing that needs to be mentioned is that this is a bipartisan settlement. And we see so frequently in Washington how politics gets in the way of leaders taking bold actions to protect Americans and to do what is right for their constituents and the people. And so a huge thank you from the people of West Virginia. We worked a lot on this case, but the AGs, the Republican AGs in Tennessee and Kentucky, along with the Democrat AGs in California and Colorado, really led the way on this. And so it really is kind of a remarkable little window into how bipartisan politics can work. And I think your intro in terms of how the settlement broke down is incredible. I mean, this is a $17 billion global settlement that will be paid out over about 10 years, as you said.
Yes.
But I think most importantly, and West Virginia is going to utilize the roughly $115 million share that we will receive from that to very, very good use to make sure that our children and parents have everything that they need in what is a very trying time to be a parent. I am one. But the injunctive relief is really what is so remarkable here. And what you're seeing is that these tech companies are recognizing that their products can and are dangerous to children, and that they need to be doing more to be cognizant of that, to admit that, and that they have the tools to make it better. And we're really, really excited about what the future looks like for children in this country who use social media platforms, which is basically all of them, and what this lawsuit's going to do to make their lives a little bit easier.
Attorney General McCuskey, if we can just continue with the financial settlement for a moment, there is a discrepancy. The court filing says you agreed to a near $17 billion settlement. Meta is saying up to $18 billion. My understanding is that there may have been a separate or ad hoc settlement with another state, Texas. Could you shed any light on that?
So I don't actually know much about the Texas settlement. The numbers there add up. I know the AG in Texas very well. He's a really great guy, and I'm sure that he did the best he could for the people in Texas. I'm sure their settlement is incredible. And if the numbers are 17.1 and 18.1, it would make enormous amounts of sense for that $1 billion going to Texas to have been added to the number in the press release.
Thank you. I appreciate that. Did you achieve what you wanted to through settling that you would otherwise have targeted through the court system?
Yes, and I think that you can't really separate those two things. So we did achieve this through the court system. And so what we achieved occurred because we were able to put sufficient pressure on Meta during the trial process, right? So it's important to remember that this happens sort of shortly after they presented their case. And so, what they understood was that they were in a really bad position if this case went to a jury. And so just because a judge didn't make this decision or a jury didn't make this decision doesn't mean it isn't a result of the incredible work of the staffs of those four attorneys general, and interestingly enough, all the staffs of all the signatory states, right? So my team works every single day with the teams in California and Tennessee and Kentucky and California, and Rhode Island and Louisiana, you name it, right? So that our staffs are all very, very close and work together on a lot of these issues. So, this is a result of the court process and would not have happened but for the fact that we were winning this lawsuit and Meta knew it.
We're live on Bloomberg Television and on Bloomberg Radio. This is Bloomberg Tech speaking to West Virginia Attorney General J.B. McCuskey. A part of the $16.7 billion settlement, $5 billion approximately, is held back by Meta, contingent on TikTok and YouTube adopting the same framework that they have agreed to. And we can get into the specifics of the framework. At this early stage, have you any indication of TikTok and YouTube's conditions and attitude towards following that framework?
So I haven't had any direct conversations with either of those two companies. I would imagine that there is a litany of litigation coming against them in the coming months and years to make sure that that part of this settlement is accomplished, right? And I think it's really a novel approach. And to the folks that came up with this idea on how to sort of link these two things, what's important about that is that kids use all three of these platforms. And we believe that the injunctive relief, the things that you talked about, the nighttime caps and the hourly breaks and the 15-minute break every hour, these are really important things. And so what we want to make sure is that these other groups, these smaller companies, are implementing those same two things. So it actually gives us incentive to make sure that our children are being protected in the same ways on those platforms as they are on Meta. And it gives Meta the incentive to make sure that their competitors are also following the same guidelines that we placed in their lap with this settlement. And so it really is sort of a master class in how to settle a lawsuit and how to make sure that both sides have skin in the game.
My understanding is that TikTok, as a case study, faces, I think, around 15 different AG cases that are not consolidated. And YouTube and Snap, for what it's worth, I think face a smaller number than that.
Even just yesterday, Snap was sued by the great Attorney General in Pennsylvania, Dave Sunday. So, like I said before, I believe these cases are coming.
So how does that fit in, and how aggressive will this coalition of states be in saying, we've done this with Meta, we want you to follow suit in this framework that Meta's agreed to adopt?
Yeah, I would say very aggressive. I think what we see here is the success that we've had in this Meta case is a blueprint for how to be successful with other similarly situated tech companies, because the harm happening to children is the same, and it's for the exact same reasons. And so it has always been our goal to make sure that every platform protects children in the same way that Meta is going to be protecting children based upon their willingness to change their platform based on the pressure that we placed on them in this litigation.
I want to go into some of the specifics here. So the mainstay of it are limits on the use of the two platforms, Instagram and Facebook, by 13 to 17-year-olds. And in one example, there is a 2-hour daily limit where a teen can't simply exceed that. It would require parental permission, essentially, for a teen within that age bracket to use the platforms for more than 2 hours. How sort of contingent is the success of this initiative on the parents buying in to what Meta's agreed to do?
Yeah, I think very contingent. And I think in this country, one of the things that is paramount is that parents do and always will have the best interests of their children at heart, and that the government should be doing everything in its power to give parents the tools to be able to raise their children in the way that they want. And what we see with social media platforms is that there is a divide between the understanding of them between the children and their parents. I have an 11-year-old daughter and a 9-year-old daughter, both of whom use Facebook, they use Roblox, they use YouTube. And to be fair, they know way more about how to use it and what they can do on it than I do. And so it is really incumbent in this way that the government sort of bridge that gap and ensure that parents who may not be able to understand or use the technology properly are protected. Their children are protected at the exact same time. And so, what we see here is a way for parents to be able to do what it was that they wanted to do in the first place, and were in many instances unable to.
Attorney General, we have heard from Meta's Chief Legal Counsel or Legal Officer this morning, CJ Mahoney. I just wanted to play a little bit of what was said.
This framework will only work if all our peers join us. Because teens move fluidly across dozens of apps, we need an industry-wide solution. We therefore call on our industry peers, TikTok and YouTube, to implement this new framework right away.
I think we need to keep talking about this part of the story. Meta is saying we want to see our peers participate in this, and they withhold some of the penalty they've agreed to pay until that's the case. Again, please, Attorney General, sign sort of the likelihood that you see in that happening.
I actually can't see the screen, but through my earpiece, that certainly sounded like an AI video. I think it's very likely. Our office and my team of lawyers who worked on this case and I are very bullish about the other social media companies adopting this, because here's the thing. All of these things cost money, and kids always need money from their parents. And so they will, in my opinion, they will be a market aberration if they aren't providing these kind of protections to teens. And so I think in many respects it is they should want to implement all of these safety precautions, not only because they're great for kids who are their customers, but because they aren't going to want to be seen as the social media platform that is the only social media platform left that is still harming teens in the way that this lawsuit outlined. Because the theories are identical.
We're live on Bloomberg Television and on Bloomberg Radio speaking to West Virginia Attorney General J.B. McCuskey. There is an independent auditor that will monitor compliance. Will that mechanism have teeth?
Yes, that mechanism will have teeth because it will be in constant communication with the attorney generals who reached this settlement. And all of us are stalwart in the fact that these changes need to be implemented. And we are going to hold Meta's feet to the fire here because they've made some really incredible promises, some things that we think will make a difference in children and parents' lives all across this country. And if Meta is trying to circumvent what they're promised or trying to do things that get around what the settlement says, we need to continue to be the protectors for our clients who are our children and parents. So I feel very good about that part of this settlement. I think that Meta has really met us halfway here, pun intended, I guess. And their willingness to settle this case and their willingness to go as far as they have for these child protections, I think shows a willingness on their part to do all of the things that they promised. So I'm going to give them the benefit of the doubt. I'm going to assume that they're going to do every single thing that they said they're going to do. But these auditors will have the power, and we will have the power to hold them accountable if they don't.
Meta, positions this framework as empowering the parents, and we've talked about, how contingent the success of this initiative will be on the parents. But for those aged 13 to 17, this is also a technology story about their access to a technology and their relationship with a technology. How do you see that changing your constituents that are within the age bracket 13 to 17?
It's interesting. One of the corollaries that I draw frequently is that, all of the people in my parents' generation watched their parents smoke cigarettes. And kids who watched their parents smoke were way less likely to smoke going forward. And I think frequently when 13-year-old kids see their mom and dad scrolling on their phone on the couch, they kind of see that as in the same way that kids who watch their parents smoke. And I think there's going to be an inherent shift in the next generation of kids where, they understand that the time suck that doom scrolling can create and the damage it causes to your relationship and to your friends. And I'm very hopeful that not just these safety precautions that we have put together here, but just the general shifts in society, we will have a generation of kids moving forward who hopefully want to get back outside, ride their bike, play baseball, hang out with their friends, play Spotlight, do all the things that we did when we were kids. And we're really hopeful that that's going to happen. And I think in many respects, we're starting to see that now.
Attorney General, this ends or closes the book on a specific piece of litigation. Just in the 60 seconds we have left, what happens next? How much does this continue at an industry-wide level?
I think it continues at an industry-wide level until all of those in the industry make the same commitment that Meta did to the children and parents of this country. And I believe that the attorney generals who filed this case are all ready to go to make sure that that happens. And I'm very, very excited for the future for our kids. And I think this is a huge first step in holding all social media platforms accountable for how they have treated our kids and families as their customers.
West Virginia Attorney General J.B. McCuskey discussing a settlement with Meta, where Meta says it will pay up to $18 billion over 10 years, but is asking industry peers, TikTok and YouTube, to prescribe to the same framework that it's agreed to on changes to policy on how 13 to 17-year-olds use its platforms, Facebook and Instagram. Coming up.
All right, that was, of course, B-Tech anchor Ludlow speaking with the West Virginia Attorney General following Meta's settlement with 29 states' Attorney General over the social media addiction case for children. Let's get a reset of the markets and the news with our Charlie Pellet.
All right, I thank you, Roger Scarlett. Indeed, our continuing coverage of Meta platforms. Meta shares, by the way, up now by 2.1%. Stocks trading lower, little change on the S&P. And this Bloomberg Business Flash is brought to you by Golden Crest Metals. Inflation, tariffs, and volatility have some investors turning to gold for stability. To get a free gold and silver info guide and learn how to add metals to your IRA or 401k tax and penalty free, go to goldencrestmetals.com/guide, goldencrestmetals.com/guide. S&P right now down a point, little change there. Stocks treading water ahead of NVIDIA's results after the close of trading. NVIDIA right now down 1%. We've got the S&P little change, just about flat on the day. The Dow down 0.2%. NASDAQ down 0.2%. 2-year 4.21%. The 10-year ahead of Kevin Warsh on Friday 4.65%. Gold down 65, 45.91 the ounce, down 1.4%. Major move lower again today for crude WTI, 82.33 a barrel. Right now we've got Brent, 88.39 barrel of Brent, down 0.2%. Scarlett and Paul, that's a Bloomberg Business Flash.
All right, Charlie Powell, thank you so much. We appreciate that. Scarlett Fu and Paul Sweeney. We are live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. Well, last week we had Secretary of Treasury Bessent announce, I guess what some folks are calling a Treasury twist. Treasury will come in and buy some bonds here, targeting longer end rates, trying to get those longer end rates down. I'm looking here today. We have rates up a little bit here. The 30 years up about a basis point here to 5.18%. Let's talk all things fixed income and bond market. And for that, we talked to Ruben Hovhanessian. He's a managing director, generalist portfolio manager at TCW's Fixed Income Group. They are based in Los Angeles. Ruben, what did you and your team make of Secretary Bessent's move in the bond market?
Good morning, and thanks for having me on. I think it was one of the most remarkable, at least to me, aspects of the announcement was the outright targeting of yields and the government, that basically Bessent saying that the yields do not reflect the underlying fundamentals, and they're stepping in to provide support for the yields. That was quite remarkable, because the program that they're using, the buyback program, was initially intended to just enhance the liquidity in the secondary treasury markets. So that's one aspect. Then the question is how impactful this program will be, and of course the answer depends on what the size will be. And if they can use, there was an article referencing some Treasury officials saying that they can use the TGA, the Treasury General Account Balance. And that's not unlimited. Of course, I'm not breaking any news here saying that the Treasury doesn't have a lot of cash laying around. So if they end up doing it in a small scale, that's probably not going to have a tremendous impact. And if they do a larger scale, then that will entail a lot of issuance in the front end, probably T-bills or front end of the curve, and that will not come without some undesirable consequences either.
Ruben, one of the questions I have in Treasury buying back some of the longer dated bonds and then having to issue more in short-term debt is how disruptive would increasing issuance in the bill market be across the curve and to Fed policy as well?
Great question. It depends on the size. Again, if they do what they announced, which is an incremental $2 billion per operation, which is not a lot, it probably is. It's going to be very small compared to what we have, the T-bills outstanding and the T-bill issuance. But if they have to do a larger scale, or if they decide to do on a much larger scale, then you can potentially see T-bills rate going higher and then sort of crowding out reserves and reserve balances coming down, which may create some frictions in the funding market, and they may, at an extreme, it may force the Fed to restart the RMP program, the Reserve Management Purchase Program that they started in December and wound down recently, to just shore up the reserve balances of the banks. Again, we're not there yet, but if they do a much larger scale, then we may potentially see some frictions in the funding market.
Ruben, some commentators, when talking about the higher rates, particularly on the long end of the curve, talk about the crowding out effect from a lot of this hyperscaler debt. Is that really a thing?
I think it is. I mean, obviously, the more bigger picture, more secular backdrop here is the sort of the competition for global capital becoming more intense. And, the Treasury sort of experiencing the limits of running loose fiscal policies for years. But specifically this year, what exacerbated this drift higher in longer yields is a very large credit issuance in general. So credit issuance year to date through August stands at $1.5 trillion on gross basis, and on a net basis, it's $700 billion. That's a very large number, whether you compare it to last year, but more importantly, if you compare it to the $2 trillion that the Treasury is issuing every year to finance the deficit, $700 billion obviously is a very large number, and it does compete with Treasuries as well, and there is some crowding out effect there for sure.
Yeah, crowding out of Treasuries, maybe crowding out certainly of other corporate debt as well. I'm curious, when we look ahead to the calendar after Labor Day, we're expecting a big IPO from Anthropic, and if you use SpaceX as kind of your template, you're going to get this IPO, and then you might get some debt raising as well, some credit issuance from Anthropic. Is that your kind of working assumption? And if so, what kind of demand do you think there would be for that debt, in addition to all the other debt that's coming out?
Yeah, so there will definitely, if looking at the capex plans for the hyperscalers, which are huge, I think the estimate is that the hyperscalers will have to issue another, and of course this is an estimate, it may change, but I think the estimate is that they'll have to issue somewhere around 400 to 500 billion of debt in the next year and a half. That's a lot. That's almost twice what they have issued year to date, which is about a little over 200 billion. So, and we have seen some indigestion in the credit markets and some widening and bifurcation in hyperscaler spreads. So, if we see, if those, forecasts or those projections materialize and we see a lot more debt, then it will probably have to come at marginally wider spread. Although that being said, I think it's remarkable to sort of track the evolution, if you will, of the hyperscaler debt issuance, which was predominantly USD last year. This year, it got a lot more diversified, issuing in, a third of the hyperscaler debt has been issued in non-US dollar currencies. And then more lately, we've seen a lot of sort of off-balance sheet debt issuance, which, is raising money without necessarily burdening the balance sheets of the hyperscalers with that debt immediately.
Ruben, thanks so much. Appreciate it. Ruben Hovhanessian, he's a managing director, generalist portfolio manager at TCW's Fixed Income Group. TCW is based out there in LA, along with Capital Research Group, the two big money managers out there in LA. I kind of missed this move to 78,000 in Bitcoin. Do we know any reason why? We're building
It's part of the debasement trade. I mean, we were talking about treasuries and how there's a lot of question marks now over the U.S. fiscal policy over the longer term. The dollar has taken a bit of a hit as well. Yep. So people are moving into things that they see as hedges against the dollar debasement trade, and Bitcoin has benefited. It's down slightly today, but yeah, 78,000 is a long way up from where it was sitting, which was in that 60,000 range.
Yep, and we see gold right around $4,600 per ounce. So again, a little bit more, I guess, on that debasement trade there. So keep an eye on that. The DXY index, 99.2, so weaker there, although a little bit steady today, but people have been a little bit concerned about that situation. So we'll keep an eye on that. Looking at the markets, not a whole lot going on in terms of the equity markets. A little bit of a sell-off here. The S&P's down 6 points. The Dow's down 150. That's about 0.3%. And the NASDAQ down about 78 points, also about 0.3%. Tom from the Bentley calling in. He wants a VIX quote. 15
of course he does.
Spot 5, quiescent, as they say. This is Bloomberg. Good morning.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:40 on Wall Street. We do check markets all day long here at Bloomberg. The Dow, the S&P, NASDAQ 100 index, and the stocks all in the red. S&P right now little changed as we await NVIDIA after the bell. S&P down 4 points to 76.73, drop there of 0.1%. Ahead of earnings, NVIDIA down 0.9%. The Dow right now down 145, drop there of 0.3. NASDAQ down 0.2%. The NASDAQ 100 index down under 0.1%. And the stocks, the Philadelphia Semiconductor Index, the Stock Exchange Semiconductor Index down now by just under 0.1%. The 2-year, 4.21%, with the 10-year, 4.65%. We've got the 30-year, 5.17%. Gold, meanwhile, down 1.2%, 46.01 the ounce. West Texas Intermediate crude down 0.1%, 82.29 a barrel. Brent, 88.32, down now by 0.3%. Wall Street eagerly anticipating NVIDIA's earnings after the close of trading, not so much for what the numbers will say about the chip giant, but what they mean to AI investors and the broader market itself. Dory Wiley is the CEO and co-founder of Commerce Street Holdings, and on surveillance this morning, he told us too many people are, quote, way underweight NVIDIA.
I don't know if it's because it's a tired story or because of the circular financing, manufacturing demand, or whatever they're thinking. But you got to dig a little deeper. That cash flow is strong, and so it's warranted. And I think that stock, he comes out and busts earnings today. It's got to move 5 to 10% because it's undervalued. And you're talking about a pain trade for these people that are underweighted.
Dory Wiley of Commerce Street Holdings, and we'll find out if he, quote, busts earnings. We got complete coverage coming up on Bloomberg Business Week Daily after the bell. Right now, we do have shares of NVIDIA. They are trading down by 0.9%. By the way, we also hear from CrowdStrike and Salesforce after the close of trading. Just getting word that Tim Curry, the star of the Rocky Horror Picture Show, among many, many other movies, has died at age 80. Tim Curry, dead at age 80. I'm Charlie Pellet, Scarlett and Paul. That's a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. We appreciate it. Scarlett Fu and Paul Sweeney live here in our Bloomberg Interactive Broker studio. One of the stocks that Charlie's been reporting on this morning is Abercrombie & Fitch. A good quarter. I would say a really good quarter. The stock's up 38% year to date. Just today. That brings it to a positive gain for the year. It was trading down on the year prior to today, so a big turnaround there. Let's break that down, plus some other retailers reporting numbers. We do that with Mary Ross Gilbert, Senior Equity Analyst. She covers all the retail stuff for Bloomberg Intelligence. She's based out there in L.A. So, Mary, again, the stock up 38% today. That doesn't happen very often. What did Abercrombie & Fitch report?
Well, Paul, Abercrombie & Fitch reported a comparable sales increase at its namesake brand. It was up 4%. And you could say, well, look, they cycled an 11% decline last year in the second quarter, but if you look at the 3-year stacked figure, that was up 32%, 32.5% to be precise, is the 3-year stacked increase, and they still delivered a 4% increase. So that was really encouraging, and when you look at the total sales, because of course they're expanding, and with some wholesale opportunities, their total sales were up 8% for the brand. Hollister, this is their Gen Z brand, that was down 4% in the quarter, and analysts were looking for sales to be down less than 1%, but they were cycling a 19% comp increase a year ago. And so really what kind of overrode that is the fact that the namesake brand did really well, and the fact that we're seeing improving trends in the third quarter so far, starting off strong for both brands. So we could see the Hollister brand also return to positive comps. But their overall sales for Hollister were up 2%.
It's kind of remarkable when you go into an Abercrombie & Fitch now, how different it is from its heyday in the 90s. For one thing, the music is not so loud that you can't hear anything, and it's a lot brighter, and it's catered to women a lot more than it ever used to be. And of course, that might reflect the sensibilities and the strategic decisions of the CEO, Fran Horowitz, as opposed to Mike Jeffries, who was, really put his stamp on the company. But Mary, just talk to us a little bit about the dependence on young women, or maybe not even young women, millennial women, as the key audience for the close now.
Yeah, so Scarlett, you really hit on it, and that is that, going back to the 90s when it was really more of a high school, college student, now it's really, we're talking about millennials. So think about customers in their 30s and 40s. That's really where Abercrombie & Fitch is going after, and it resonates. And not only is it that consumer in terms of the age demographic, but from an income demographic perspective, they tend to be higher earning. So that's in the $100,000 to $200,000 household income range. So that's really how that brand has shifted, just to your point. And also, they're really looking to have more of a balanced business, like half and half men versus women. And you'll see that in the stores. It's divided straight in half, men on one side, women on the other side in terms of assortments.
Promotions, how promotional were they in the quarter, and kind of what are you hearing from some of the other retailers?
Yes, Paul, so you're bringing up a good point. They were actually able to do more full price business in the quarter, so that helped them on the margin side. Within the Abercrombie brand, this is distinct and different from the story that we're talking about here with Abercrombie. If you talk about Kohl's delivered another comp sales decline, and this follows, 3-year stacked sales declines in the double digits. So Kohl's is still struggling to make a comeback. We did see some encouraging signs when we walked the stores more recently. We're seeing much better merchandising. The store is starting to look more cohesive, but we also saw that it's a lot more promotional right now. That should benefit them in the third quarter, and they might be able to inch closer to break even. But nonetheless, it just goes to show you that off-price, I think, is really making a dent in that business, and why you're continuing to see declines there, despite the improvements, that they're seeking to make. And if you look at Sephora, which has been about a $2 billion business, their comp sales were down 4%. So here was a business that initially was showing strength, and that's a business that draws repeat customers.
Right.
But again, still seeing weakness there as they try to improve the assortments there, bringing in a lot more newness.
Sure.
It just goes to show you there's still a lot more to go there at Kohl's. And of course, they're catering to a lower to middle income consumer, talking about a K-shaped difference there.
So when it comes to Kohl's, it feels like it's been in turnaround mode for a long time. I can't remember when we weren't talking about it being in turnaround mode. And you mentioned Sephora and how that was a bright light for the company. Outside of Sephora, what other growth drivers does Kohl's have? And very quickly here.
Yeah, so Scarlett, key point, it's really the private brands, and that's where you're seeing strength. So we noticed in the stores that their private brands, it's always been around that sort of 33-34% of sales. It looked like it was higher in the stores. They were much deeper. And again, all promotional. The whole store felt like it was on promotion, and probably 20 to 25% of the store on clearance. But the juniors business was up 10%. So they are seeing some, bright spots there. Their core credit card customer up 1% after being down, previously. So continuing to see improvement there.
Okay, Mary, thank you so much. Mary Ross Gilbert, our Bloomberg Intelligence Senior Equity Analyst covering retail, giving us the tale of two retailers. You have Kohl's, still in turnaround mode, and Abercrombie with its biggest gain ever, up 37% just today.
Yeah, that's amazing. That's just a huge turnaround in how the market's just viewing that company. Stock was down 20% year to date and just turned it right around today.
I remember when I got confused between Abercrombie & Fitch, American Eagle, and Aeropostale because they all kind of chase the same teen market, but A&F has really distinguished itself, and I think AEO is owned by private equity now. Along with Aeropostale? Maybe. One or the other.
When was the last time you were in a shopping mall?
Ooh, good question. I think I stopped in there the other day when I was waiting for my table at Cheesecake Factory. Speaking of the shopping mall.
That's how they get you. That's Cheesecake Factory. Oh, yeah, there you go.
Cheesecake Factory is good value now. Because,
Is it?
Yeah, I mean, everything's 30, the entrees are $28, but entrees everywhere are $28, and you get more food.
Right, you get more food. Very good. S&P up 3 points, the Dow minus 89, and the NASDAQ is down 30 points. Not a lot happening out there. We'll have more coming up this year.
You're listening to Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
Scarlett Fu and Paul Sweeney live here in our Bloomberg Interactive Broker Studio. We are streaming live on YouTube and streaming live at Bloomberg.com as well. Got a red headline crossing the Bloomberg terminal on the geopolitical front. It reads, Putin said to plan Ukraine escalation, seeing talks fruitless. So that is not what you want to hear on the geopolitical front. We'll have some more reporting on that going forward. Earnings continue to come in, and we heard from J.M. Smucker, our good friends out there in, I think it's Orrville, Ohio. They raised a full-year outlook for sales and profit. That's a good thing. Let's break that down a little bit. Diana Rosetta Peña, consumer staples analyst for Bloomberg Intelligence. She joins us live here in studio. What do we hear from our friends at Smucker's?
Yeah, so the biggest surprise was volume. At the beginning of the year, management entered the year as a, I would say, conservative mode. They still expect, volumes to remain relatively flat for the year compared to the 1% decline that they expected previously. So, it wasn't just one product. It was an gains all over the board, like Uncrustables, coffee, Meow Mix, all were contributors to the volume growth.
So what do they say about their kind of longer-term top-line growth? Is this a GDP type story? Is it one of those companies, you look at consumer products and staples and things like that? Is that kind of where the market is?
So, yeah, that is the benchmark. I would say, in the past few years, these companies have tried to compensate with, innovation, premiumization of their products, so they have an argument for more better, pricing compared to, what you will normally follow through GDP. So, I would say brand equity has been playing a big part of sales growth, not only for Smucker, but for all of these companies. It seems that while, Americans are complaining about basket pricing, they're still going after their favorite brands.
The stock is up 3.5% today. It's up 33% year to date, a 52-week high. I haven't looked at the graph. It's probably close to an all-time high. Why?
It seems that
it's not an AI story, is it?
No. I mean, they do some type of AI for their products and stuff, so for marketing and stuff like that, but it's definitely not that. It seems that they have been, trimming some portfolio and getting rid of the least performing brands, and that seems to be working in their favor.
So what's the industry saying now that we've got several years of evidence of the GLP-1s? Can we look back and say it has had an impact on these consumer staples companies, these food companies, or not so much? What do we know?
I would say so. Penetration for GLP-1 products have been increasing significantly, I would say, in the past year. People seem to be a little bit more inclined to try them. PepsiCo actually said that they were going to, not pay for GLP-1 products or like through their insurance.
Really?
That was a thing that we saw yesterday. But yeah. Especially from PepsiCo. Yeah, so that was, that's a little on the nose. But definitely they have been some headwinds, and obviously with everything that these companies have gone through, it seems that they try to position themselves in terms of like permissible indulgence. So you see more, calorie-dense products having a smaller packet or, some formulation or some marketing straight up.
What are these food companies doing with their marketing? Are they going just all digital, all social, or are they still buying a 30-second spot on, a network TV show?
Yeah, I would say a little bit of everything. They seem to be a little bit more inclined with social, particularly, for example, for Café Bustelo and, going back to Smucker, they seem to be going through the TikTok audience by formulations of your iced coffee, and that seems to increase demand for their products as well. So it's more of like a show and tell, and they actually rely a lot on social media for that.
Interesting. Yeah. So I guess gone are the days of just relying on magazines, newspapers. You got to go where the influencers are. What's kind of when you talk to your clients, what's the stock they're most interested in these days?
Well, in my, I would say, Smucker, it seems to be a really interesting story, as well as Hershey and Campbell seem to be, among the most asked.
Those are some die-hard brands for sure, American brands that have been around forever. How are they all trading this year? I mean, Smucker's is doing great, but how about everybody else?
Well, I would say that there seems to be, within range. I would say for Smucker, that seems to be an outperformer compared to the others. And it is, again, because of that premiumization, that kind of volume growth that seems to be the driver for most of the, metrics for these companies. Your ability to show volume, that's the play.
That's the play. All right, Smucker's up 3.7% today. Diana Rosado Pena, Consumer Staples Analyst for Bloomberg Intelligence. Thank you so much for that. We appreciate it. For our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM Channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM Channel 121 is presented by Golden Crest Metal. Stay tuned for the latest market news and industry research. Your top stories and global business headlines are coming up in just a moment. We've got a little bit of red on the screen here. The S&P's off 5 points. The Dow's off about 110 points. And the NASDAQ's off 87 points. That's about 1/3 of 1%. Bond yields a little bit higher here. We've got a 3 basis point lift to the 10-year, 4.66% in the crude oil market. We were lower, sharply lower. Now we're up 42 cents. This is Bloomberg.
From ABC News, I'm Michelle Franzen. A landmark settlement reached between Meta and 52 attorneys general from states and U.S. territories today. The parent company of Instagram and Facebook facing a multi-state lawsuit that alleged the platforms were designed to be addictive and pose a harm to children and teens' mental health. Meta now agreeing to pay nearly $17 billion over the next decade, and also detailing changes to its platforms for young users. Here's ABC's Elizabeth Schulze.
A default daily time limit of 2 hours for users under the age of 18, a ban on displaying numbers of likes or reactions to users under age 18, a ban on cosmetic procedure image filters, the option for some users under 18 to have a non-personalized feed. That is significant because that gets at algorithmic changes with these platforms.
Meta now calling on other social media companies to also make changes. New Mexico and Florida, the only states not included in the proposed settlement. It still needs to be approved by the court. At least 95 people are confirmed dead, hundreds of others missing following massive flash floods in Nepal. ABC's Lama Hassan says rescue operations are underway.
We spoke to a Nepalese tour company that confirmed 3 Americans are missing right now after a massive flash flood triggered a mudslide sweeping through parts of Nepal. The flood was so powerful, so destructive, it washed away everything in its path, villages and damaging roads. The flood hitting early on Wednesday morning just north of Nepal's capital, Kathmandu.
Reaction following the death of Dolly Parton stretching around the world. ABC's Chris Connolly says this American icon and superstar crossed music and cultural boundaries and created a common bond for so many.
Dolly stood for joy and welcome and resilience and a fundamental belief in the goodness of others. Really, even Jolene. I think for a lot of people, she was a guardian angel. And I think now she'll always be.
Parton's family says a memorial will be small and intimate. You're listening to ABC News. A new law in New York State prohibits local police agencies from cooperating with federal immigration enforcement. The Local Cops, Local Crimes Act bars local government agencies from entering or maintaining agreements with ICE officials to carry out civil immigration enforcement. Here's ABC's Darla Miles.
Governor Hochul spoke about the new ban from Albany. She said that local police should be focused on local crimes and keeping crime down in the communities instead of participating in ICE civil enforcement activities.
The governor said any police department disobeys this law will face legal action. A surrogate fighting for custody of the baby she carried for a California couple has lost an early round in court.
When Naishin Gilkar and Omar Ahmed learned the fetus McKenna West was carrying had a serious heart condition, they opted to terminate the pregnancy. West refused, left her home in Alaska, and came to Texas, which strictly limits abortion, and gave birth last week. A family court judge in Dallas Tuesday continued a temporary restraining order, giving the right to care for the baby to biological parents Gilkar and Ahmed, not to surrogate McKenna West. Jim Ryan, ABC News in Dallas-Fort Worth.
A man seen harassing and chasing people in Philadelphia wearing a Chucky-style Halloween mask is now in custody. The 22-year-old arrested in Las Vegas. He'll be sent back to Philly to face charges. Police say he wanted to create social media content. Michelle Franzen, ABC News.
Live from Washington, D.C., this is Balance of Power with Joe Matthew.
President Trump is not done with Canada. Welcome to the Wednesday edition as the administration considers additional trade penalties for our trading partner after Prime Minister Carney unveiled dollar-for-dollar retaliatory tariffs yesterday. We're going to speak with Bloomberg's Jeff Mason, who has the scoop. Our White House correspondent will be with us in just a moment. The power of the Trump endorsement reemerges in South Carolina and in Oklahoma. We're going to dig into results of 2 primary runoffs with our political panel later this hour. And as Meta settles a massive social media addiction case, we'll discuss with Matt Schettenhelm at Bloomberg Intelligence. Not that it's been helping the stock. Let's start on Wall Street right now. Charlie Pellet has his read on the markets live from New York. Charlie, what do you have?
Well, right now, we're essentially in a holding pattern, Joe Matthew. We have got the Dow, the S&P, NASDAQ 100 index, Russell 2000 index. I'll throw in the stocks as well. Everything in the red, all trading lower. All of this ahead of NVIDIA earnings after the close of trading. On a down day for the U.S. stock market, NVIDIA shares down ahead of earnings, down now by 1.3%. The S&P 500 index down 7. That is a drop there of 0.1%. We have got Dow Industrials down 122, now down 0.2%. NASDAQ Composite down 89, drop there of 0.3%. Russell 2000 index down 0.2%. And the SOX, the Philadelphia Stock Exchange Semiconductor Index, down now by 0.3%. Investors are digesting the Fed's preferred inflation gauge, the 2-year currently yielding 4.21%, ahead of Kevin Warsh Friday, the 10-year 4.66%, and the 30-year 5.18%. Gold down $55 the ounce. That is a drop of 1.2%. Spot gold holding just above $4,600. West Texas Intermediate crude reversing course, now higher by 0.6%, 82.83 a barrel. Barrel of Brent turning around as well, 88.95, up now by 0.4%. Bottom line here, down day for the U.S. stock market. As for the broader market backdrop, Phil Orlando is chief market strategist at Federated Global, and on surveillance this morning, he told us you got to check your politics at the door.
You know, people in this environment are apoplectic over whether the D's are in charge or the R's are in charge, but the longer-term cycle, you look at the S&P 500 from 1970 to the present, we've gone through a lot of stuff over that period of time, politically, economically, et cetera. But the market on a total return basis has gone up about 13% a year.
Phil Orlando of Federated, interviewed on surveillance. Meta platform shares higher now by 1.4%. Meta agreeing to pay $16.7 billion to settle a landmark social media case with multiple U.S. states. Recapping stocks lower, down 0.1%. That, Joe Matthew, is a Bloomberg Business Flash.
All right, Charlie, that's a heck of a lot of money. Something we've been talking about quite a bit here. We just had Rob Bonta on about that case, and, well, here we go with a settlement. I guess Mark Zuckerberg will not be testifying. Charlie Pellet, thank you, my friend. Happy NVIDIA earnings day. This is the big one, right? The granddaddy of them all. And after the close, we will, in fact, be looking hard at NVIDIA's earnings here as the whole market holds its breath. Isn't this something? You heard what Charlie just said. We're just in a holding pattern here. We're waiting until we hear what happens after 4 o'clock. Imagine being Jensen Huang, the maestro. The entire market, the global market, is waiting on you to give us a sense of what the next chapter is going to be. So we're going to be keeping tabs on NVIDIA shares. Again, down a bit here, 1% as we go into the tape. Key performance numbers. This comes from the morning note from the great Ed Duffner, the editor who oversees this entire operation at Bloomberg TV. Stock up 14% this year. The release drops at 20 minutes after the hour, 15:20. And we'll also see HP Salesforce in a big one here as well after the close. He's in Central Time, right? We mean 4:20. I'm curious to see what CrowdStrike has to say. That's going to be interesting as the cyber side of this story plays out in the very same after-hours session as NVIDIA. So here we go on the 26th of August. You made it. Thanks for being with us on the Wednesday edition. We're live from Washington on Bloomberg Radio and streaming live on YouTube. As always, you can find us on YouTube by searching Bloomberg Business News Live. Watch the radio on TV. And we'll have plenty to show you before this hour is out. Remember the stuff that Doug Ford was saying about Donald Trump 2 days ago? Not yesterday, 2 days ago. He called him a bully, the king of bankruptcies, a loser. Remember, he said, I've dealt with guys like you my whole life, and you end up being a loser because you are one. He was sounding very different when I spoke with him yesterday. We had him on the late edition of Balance of Power. The Premier of Ontario, Doug Ford, joined us in front of a lineup of Canadian flags in what was a strangely darkened room. If you get on YouTube, you'll see what I'm saying. Still standing by his principles, but in a much more conciliatory tone. Here's what he said.
I told the Prime Minister, no deal is better than a bad deal. And we have to go tariff for tariff and dollar for dollar. And it's unfortunate. We had an attack from President Trump on our sovereignty, on our country, on the economy, that we're so integrated. Both countries were both each other's number one customer. And it just doesn't make sense to attack each other.
Well, and of course, the president was calling him out for the bluster. A lot of bluster there from Doug Ford. He ended that interview, if you watch the whole thing, by saying, Joe, I love America. God bless America. We love Americans. And look, the tariffs haven't gone into effect yet. Anything could happen. But then I read the scoop from Jeff Mason. So, well, wait a minute. The administration, he says, is discussing additional trade penalties against Canada after they unveil dollar for dollar. I mean, we can't even call them reciprocal anymore, right? I can't remember who was first. Well, of course I can. But additional escalation against Canada could include, Jeff reports, higher tariffs and other trade actions, having spoken with government and specifically White House officials about this. He covers the White House for us every day, and delighted that he is with us right now. Our friend Jeff Mason, live on Bloomberg. Jeff, are they still cooking this up, and when might we find out?
Good question, Joe. Yeah, they're still talking about it. There were no decisions as of last night when I spoke to this White House official that we cite in that story. But safe to say, the president is not somebody who sees retaliation from another side, in this case Canada, and decides he's just going to leave it at that. So they're definitely talking about next steps, and the official told me it's safe to assume that the U.S. will respond.
Oh, okay. So we can look forward to it. I guess you wonder, like, this either turns into a spiral, and it's one retaliation after another until everyone's at 100%, Jeff, or higher, or the bluster leads to a deal. And I tried to explore that idea with Doug Ford when we spoke yesterday. There's a lot of chest thumping going on right now. Nothing's actually taken effect yet. Is there a thought at the White House this could still be saved?
Well, I think you're absolutely right about the chest thumping, and there's chest thumping on both sides, right? I mean, this is a back and forth between two countries that I think it's always worth pointing out our neighbors, our friends, our allies, our partners in the NATO alliance have intertwined economies, although the president likes to downplay the impact or the need, as he says, for Canada from the U.S. side. But the two sides are absolutely intertwined. So sure, to answer your question, there's a possibility that the rhetoric will get ratcheted down, and you saw that, or you hinted at it a little bit with the contrast in Doug Ford's comments to you yesterday compared to just 2 days before. We'll see if that also happens on the White House side. I'll also remind our listeners and viewers that last week the president did give a 3-day extension to talks because they were close to a deal. And then, of course, it all broke down on the Friday. Yeah. But either way, they need each other. And I would add one more little aspect to that. The president did a couple tele-rallies this week for candidates that he had endorsed. And one of them was for his Republican preferred candidate for governor in Oklahoma. And during that tele-rally, I was listening, and he said he was endorsing this candidate because of his support for an aluminum plant. He said, "We need aluminum in this country. We get all of our aluminum from Canada." And that was a tell, I think, Joe, again, that the president, even though he says, we don't need Canada, we do.
Fascinating. I love that. Jeff's the real thing. He sits down, he listens to the tele-rally, because that's what he does for a living. So let's get philosophical for a minute, Jeff. I can do that with you. We talked to Ted Cruz last evening about this ratcheting up between the U.S. and Canada. He talked about the angel and the devil on President Trump's shoulders. Well, I called it that. Listen to how he put this.
There are two camps within the Trump administration. There's one camp that wants the threat of tariffs to be used in that direction, to lower tariffs, to expand trade. I'm emphatically in that camp. There is a second camp in the administration that just wants high tariffs in perpetuity. I think that camp is misguided. So what I'm hopeful is the resolution here will be that Canada will come to the table and we'll end up with more trade with Canada.
How about that? He was with us to talk about his new book. I just mentioned that for those wondering why there was a massive book if you're behind him if you're watching on YouTube. Look, everyone believes that he's running in 2028. Jeff, did he just outline the fracture in the Republican Party perfectly on this?
For sure. And if that's the beginning of his campaign platform for president, it would be a return to more quote unquote conservative economic values that the Republican Party absolutely used to stand for. And that probably is the party of Ted Cruz, even though he largely supports President Trump. He's outlining there his differences with this administration and with the president about tariffs. And that is historically where the Republican Party was, but is not where it is now, largely, I mean, almost entirely because of who's sitting in the Oval Office.
I want to ask you quickly about last night, Jeff. We're going to get into this more with our political panel next hour, but there have been some questions about the veracity and the durability of the Trump endorsement. Big wins for him last night, starting in South Carolina. Maybe this wasn't a shocker for you when it comes to Darlene Graham, but tell us what the White House is saying this morning.
Well, it was a test last night, and the Darlene Graham endorsement was a bit of a risk, and I think that manifested itself in what was a pretty big flub on her part at her debate last week when she was asked a question about Taiwan and responded by saying that she's not really a foreign policy person. Revealed how new she is to this, and also raised questions about whether President Trump had chosen the wrong candidate when there was another conservative, also Trump supporter in the race. But he did choose her, and it did pay off. And I will refer again to a separate tele-rally, Joe, that I listened to this week that the president did for her, in which she referred to herself as more conservative than her brother on immigration, and also said she would vote to do away with the filibuster to get the Save America Act. Those are things President Trump wants a lot.
Right down the middle. We'll see if she turns this into a full-time job. Hey, Jeff, great to see you. Jeff Mason, Bloomberg White House correspondent. We'll turn to NVIDIA next here on Bloomberg.
It's 12:21 on Wall Street. We do check markets all day long here at Bloomberg. I'm Charlie Pellet. We have got U.S. stocks treading water ahead of NVIDIA earnings. After the close of trading, NVIDIA shares down 1.3%. The Dow, the S&P, NASDAQ 100 index, Russell 2000, all in the red, as is the SOX, the Philadelphia Semiconductor Index. It is down now by 0.4%. As a baseline, we've got the S&P down 0.1% at 7668. The Dow down 0.3%. NASDAQ lower now by 0.4%, and the Russell 2000 index of small cap shares down by 1.3%. The 2-year currently yielding 4.22%, with the 10-year 4.66%, the 30-year 5.19%. Gold is down 1.3%, $45.98 the ounce. West Texas Intermediate crude now higher, above $83, $83.11 now, up 0.9%. Barrel of Brent 89.24. It is gaining by about 0.7%. Bitcoin just above $78,000. Bitcoin down 0.1%. Keeping an eye on Intuit shares after earnings, the stock is down 4.9%. The tax preparation software company gave an outlook that was weaker than expected. All of this adding to concerns about AI-related disruption. Intuit down by 4.8%. And Zoom Communications gave an outlook for the current quarter that was about in line with analyst estimates. That, however, disappointed investors. Zoom down now by 8.1%. Recapping stocks lower, S&P down 0.1%. That, Joe Matthew, is a Bloomberg Business Flash.
All right, Charlie, thank you. Charlie's been hitting Meta stock throughout the day. Got a nice little pop out of the news this morning when the headline first broke on the terminal, a red head, $18 billion settlement. Then it turned lower, and it's been kind of hanging out up modestly here in the middle of the trading session. Is the addiction of our young people to social media worth $18 billion? This is the question that some parents are asking today. Investors might not be, but we've talked about this quite a lot in the past couple weeks. This is a pretty tough story. They were accused of some very difficult things here, and Meta has indeed settled to resolve allegations. It deliberately designed Facebook and Instagram to encourage compulsive use, addictive use among young users. This requirement, the agreement, I should say, comes with a requirement. Meta has to put up new guardrails restricting how much time young people can scroll. We'll have to ask Matt how that's going to work, and preventing them from switching off certain safety settings without parental consent. I can speak to you firsthand about that sometime if you want to. And of course, this came from a group of state attorneys general, and we talked to Rob Bonta from California a couple times about this. In fact, we just asked him recently if Mark Zuckerberg was going to testify. Said he was on the list. What, that was 2 days ago? Well, he's not going to testify now. And we heard earlier on Bloomberg TV and radio by the Attorney General of West Virginia, John McCuskey, his take on this. Listen.
What you're seeing is that these tech companies are recognizing that their products can and are dangerous to children, and that they need to be doing more to be cognizant of that, to admit that, and that they have the tools to make it better. And we're really, really excited about what the future looks like for children in this country who use social media platforms.
Leading our coverage on this and our analysis, Matthew Schettenhelm. He's the best we've got on the legal side, our litigation analyst, media litigation to be specific, at Bloomberg Intelligence. He works in the same row that our friends Nathan Dean and Colonel Sanders work in. Matthew, it's great to have you back on Balance of Power. This is a lot of money, $18 billion. Thank you, of course. But Meta obviously thought this was worth it, and Zuckerberg will not testify. Is this over?
So it's over in part. So there were three pieces of this litigation. This was one piece of that. So in that sense, the big fight about social media addiction litigation continues. There are going to be separate suits by schools and by individuals who claim they were harmed. None of that is affected here. What is affected is these claims by the state attorneys general, potentially nationwide. Even though only about 29 were suing in this case, this settlement could, in theory, cover the entire U.S. and put that entire issue to bed. That's a big deal for Meta because, in my view, as I've been saying for a while, I think the state AGs had really the strongest legal case, the one that posed the most direct risk to Meta. And so in that sense, it's sort of easing the risk significantly to resolve this component of the litigation.
Mm-hmm. What do we make of this number, $18 billion? Did Meta make out well?
Yeah, I mean, well, for Meta, that's not going to bother it for very long. When you look at the cash that it has on hand and its quarterly profits, $18 billion, it's not even $18 billion. It starts in the low single digits and only goes up to the full 18 if certain contingencies happen. And this is spread out in installment payments over 10 years. So this is not going to bother Meta very much at all in terms of just the financial payment. You know, the states were seeking $193 billion here. And this settlement for low single-digit billions obviously is a small fraction of that. We had said it's probably going to be around that range. This is a little bit higher actually than we predicted. But for Meta, the money is not really the concern.
Yes, of course.
Right. And again, they don't have to have Mark Zuckerberg on the stand here. The money goes to the states who were signed on to this suit. How does that work?
Yeah, that's right. And actually, the settlement agreement spells out certain uses as to what the states can do with that money. And there are certain contingencies about how big the payments are that could come into play or not. Those seem to be tied to the idea that other companies, Meta's competitors, if they are also forced to make these changes to its service that Meta is agreeing to, then it will pay more to each state as well. So in that sense, I think Meta's, in a sense, making it more difficult for its competitors as well, or at least making sure that it's not uniquely burdened compared to its peers. And that's a component of this deal that could hit companies like Snap and YouTube.
Okay. Mm-hmm. Matt, thank you so much for jumping in. Matthew Shedenhelm from Bloomberg Intelligence with us live here on Bloomberg TV and radio. Of course, Meta is one of the hyperscalers. It's working on AI. Doesn't want to be talking about settlements in court right now, and we're going to be learning a lot more about the AI race after the bell when NVIDIA reports earnings. But there's a huge conversation going on that Bill Gates started around this that we have to plant a flag on here. If you haven't read it, I really do encourage you to. This is at gatesnotes.com. Think of it, it's an essay is what they're calling it. The turbulent AI era is here. Yes, the old-fashioned, the boomer printed it out, hard copy. It's long. The choices we make now are critical, says the co-founder of Microsoft. And it gets dark pretty quick. AI will either be the greatest equalizer ever invented, he says, or the worst source of injustice. The challenge is monumental. Even under the best circumstances, the transition to this new AI era will be one of the most turbulent times in human history. This is Bill Gates. He even highlights what he calls the three big risks. Many jobs will disappear forever. AI will empower people, and perhaps AIs, to do more harm. And AI could stunt our kids' development and replace human relationships. You've heard about all these ideas before and the stuff that could go wrong, but to hear it from Bill Gates and to have it articulated in the way that he has here stopped us in our tracks, and we thought we'd talk to Shep about that for a moment. Michael Shepard, of course, with us in Washington, Bloomberg News senior editor for technology and strategic industries. He's got a way here. I mean, this is pretty scary stuff. And by the way, he finds the good side of AI, but he seems to be pretty skeptical at the moment.
Skeptical and I think also remonstrative. He is really taking the tech industry as a whole to task for what he says, glossing over some of the risks that you just outlined right there, Joe. And they're ones that we have heard about before. And we've even seen other global leaders step forward to express their own concerns about what AI could do. We've even seen some tech industry representatives, including Anthropic's Dario Amodei, talk explicitly about the prospect of job loss and the prospect of catastrophic uses of AI for bioweapons, for cyber attacks, and other things. But Bill Gates is on a different level, of course, is one of the graybeards of the industry. He is the person who put a desktop computer on everybody's home office and offices around the world with, the groundbreaking Microsoft software. And what he is saying is this time really is different.
He actually says that, Shep.
He does.
Which kind of raises an eyebrow because everyone always says that.
Everyone always says that, but not everybody is Bill Gates.
That's right.
And the difference here is that he sees the technology advancing so fast, and he also sees the absence of a plan.
That's right.
What are we going to do with this? How are we going to address all the potential inequities, all the potential risks, and do it all at once? And he also singles out the risks not only to white-collar jobs, which we've heard about, but risks to blue-collar jobs. And he points to robotics and revolutionary developments being made in China, not so much here in the U.S., but that these robots are becoming so capable that they could replace humans in these kinds of roles in physical labor.
Yes, indeed. The idea that we're sleepwalking into this came up more than once. Not that he used that term, but the fact that we see these robotic videos and they're dancing and falling down and we laugh at that, they're not being developed here the way they are in China, so they're not in front of us in the same way. People have no sense of how advanced they are at this point, is his point. Not to mention the entire technology. He talked about when Windows first emerged. We had 20 years to get used to a computer and figure out what to do with it. This one, he says, will be instantaneous.
It'll be instantaneous, and it is also teaching itself. We had to adapt. We didn't have to adapt to Windows as much as we have to adapt now to AI, and AI is self-adaptive. That's really the magic behind it. He does point to some of the technology's virtues, and he says that surprisingly, agriculture in lower income countries will really benefit from this. It'll make planting and planning decisions much smarter, much more efficient. He also pointed to greater efficiency in government, believe it or not, and this is something that we've heard talked about at least here in Washington as well. And so he does find the silver lining, and yet overall this is quite a cautionary note. And Joe, there is no escaping the coincidence of the timing. One of the leading evangelists for AI later this afternoon will be holding a conference call, and we're talking about none other than NVIDIA Corp CEO Jensen Huang. He has been somebody preaching the virtues and benefits of AI, and some wonder, have they gone far enough in addressing some of the risks as well? And so the timing of this is, not perhaps coincidental.
Absolutely. Really interesting, Shep. Thank you for walking us through that. And it's going to be fascinating not only to hear from Jensen this evening, but CrowdStrike is reporting after the bell as well. And to have the sort of dichotomy of the AI coupled with the cyber risk and the business that's driving is going to be fascinating. It's always great to have you with us. Michael Shepard, of course, Bloomberg News, live in Washington. I'm Joe Matthew. Thank you for being with us here on Balance of Power. We're going to assemble our political panel next. There were voting last night in South Carolina and in Oklahoma. We touched on this with Jeff Mason. 2 Trump endorsements, both won. We'll talk about it with Rick and Jeannie next here on Bloomberg.
It's 12:40 on Wall Street. We do check markets all day long here at Bloomberg. I'm Charlie Pellet. Lows of the day right now on the S&P 500 index. We're down 17 to 76.59. Drop there of 0.2%. All of this ahead of NVIDIA earnings after the close of trading today. NVIDIA right now lower by 1.6%. Not just NVIDIA after the bell, but also a couple of high-flying tech names, Crowdsource, and also we'll be hearing from Salesforce. Again, the S&P is a baseline down 0.2%. Dow Industrials down 0.3%. NASDAQ down 0.5%. The NASDAQ 100 index down 0.3. Your 10-year at 4.22%. We do have the 10-year at 4.66%. The 30-year 5.18%. Gold down 1.5%. 45.87 the ounce. We've seen a turnaround for crude oil. Was lower earlier in the session, but right now up 0.9%. West Texas Intermediate crude 83.13 a barrel. Barrel of Brent 89.15, up now by 0.6%. And Bitcoin at 77,973. Bitcoin down 0.3%. Wall Street, though, eagerly anticipating NVIDIA's earnings after the close of trading. It's not so much about the numbers, but more about what AI investors and the market itself read into those numbers. Jay Goldberg is senior analyst at Seaport Group.
I think this quarter will be good. Maybe the guide will be okay. But I think it's just getting harder and harder for NVIDIA to compete and to sell. Not forecasting disaster, but it's getting harder.
Seaport's Jay Goldberg, and we'll be all over NVIDIA when it breaks after the close of trading. NVIDIA shares down 1.5%. And as we have been reporting, Meta Platforms has agreed to pay up to $18 billion to settle a landmark social media case with multiple states. Shares of Meta Platforms on a down day for much of the market, up by 1.1%. Recapping, stocks lower, S&P down 0.2%. That, Joe Matthew, is a Bloomberg Business Flash.
Okay, Charlie, thank you. Charlie Pellet, the voice of Wall Street, will be back coming up at the top of the hour, 1 p.m. Eastern Time, as we kick off Bloomberg Business Week Daily. Each one of these reports from Charlie is significant today, especially if you're following shares of NVIDIA ahead of the earnings that Charlie mentioned here. They've been bouncing around all day, all morning, and currently down 1.5%, as Charlie mentioned. It was positive the last time we looked, so let's just keep tabs on this. CrowdStrike has a bid. It's up about 1.5%. It, too, is reporting results after the bell. And we'll see, does the SaaS apocalypse continue after tonight? Salesforce, at the moment, is saying yes. It's down 1%. We'll see where we're at after the bell. It's still above $200, so maybe things will start looking up for Salesforce. It's been a tough year for all of the SaaS companies. Big night for Trump endorsements. You know, the whole game lately has been blowing holes and following these races around the country, and the media can write a headline saying the Trump endorsement fails. You knew that was not going to be the case in South Carolina, right? Or Oklahoma, if anywhere, maybe Texas. The Trump endorsement means as much as we saw last evening. Enough to propel Lindsey Graham's sister to the U.S. Senate for the full job. We had questions about this. We talked to Rick and Jeannie about it yesterday. It didn't look like it was a blowout over Ralph Norman, but she did pretty good. Darlene Graham currently has the role on a temporary basis, won the primary runoff last night, 52% to 48% for Congressman Ralph Norman, and she addressed supporters after the race was called. Listen.
I want to thank President Trump for all of his support and his endorsement. Mr. President, Lindsey truly loved you and viewed you as one of his closest friends. I appreciate that bond and appreciate all that you've done for our country. Our victory would not have been possible without you, and we are truly grateful. South Carolina is truly Trump country.
See that? South Carolina. Interesting to think that's where Democrats are going to start their primary process, but that's a whole different story. Let's get into this with our panel. It wasn't just South Carolina last night, Oklahoma as well. President Trump's endorsement helping in the governor's race there, another runoff that we had our eyes on. And Bloomberg Politics contributors Rick Davis and Jeannie Shanzano are with us right now. Rick is our Republican strategist and a partner at Stone Court Capital, and Jeannie is our Democratic analyst and democracy visiting fellow at Harvard Kennedy School's Ash Center. Rick, you've been through the ringer in South Carolina, and you know what it's like to win there. You know what it's like to lose there, and you know what it's like to be a Graham in South Carolina, how much of this had to do with her last name versus Donald Trump's?
Well, she got on the ballot because of her last name, but she had to earn the election victory. And I give a lot of credit to the Trump political operation. I mean, you know, when you look at it, this is a story of Horry County. Russell Fry, that endorsement by Russell Fry wasn't easy to come by. He had to be bludgeoned into it. But their strategy from the Trump folks were, we got to win Horry County. And Darlene Graham won Horry County by 17,000 votes, which was almost her entire margin of victory in this election in one county. And of course, that's where the president went, Myrtle Beach, Horry County. So I give a lot of credit to the political team today, because they put together a campaign that you knew Darlene wasn't going to be able to really connect with voters in such a short period of time. So they engineered a win, and they engineered a good one.
That was only 2 weeks ago when Russell Fry came in third, endorsed Darlene Graham Jeannie. Was this a slam dunk either way? You roll into South Carolina with a Trump endorsement and an amazing story to tell like this, filling the shoes of your late brother. When you look back on it, how could she have lost?
Well, you know, I think a win is a win. And when we have to give her credit for that, and as Rick said, the Trump team, that said, it came at a very steep cost. $800,000. Some say it was a lot more put in. Donald Trump personally calling people in South Carolina to get them to support her candidacy. Of course, 2 weeks ago, she didn't even have 60% of the support of the members of the Republican Party that voted there. So she did have an uphill battle. And you know who's feeling really much more positive today? Democrats. I mean, this should be a home run for Republicans, and it probably will be. She'll probably win. But now you've got Democrats saying, at the very least, they have to expend a lot of money, a lot of energy, and a lot of time to take South Carolina. That leaves Democrats to fight over other states. So it's a very good day for Democrats. And, you know, Darlene Graham, she's facing Annie Andrews, who has run before. Yeah. And Darlene Graham continues to have trouble on the stump. She continues well after that debate to say things out of turn. And I think at the very least, those debates that are coming up for the general will be interesting to watch.
What's your sense on that, Rick? Annie Andrews, a Democrat, a pediatrician, and a gun safety advocate. How does that work in South Carolina?
It's a confusing bio in that regard. But look, I hope that the Democrats spend tens of millions of dollars trying to win this race in South Carolina. They can take it out of Texas. They can take it out of Michigan. They can take it out of Wisconsin and Iowa. I mean, anybody who thinks that this is going to be in the top 10 seats that Democrats want to allocate funds to is probably wishing and dreaming. Look, this is a deep red state. Even in a very strong Democratic wave year, you would be practicing political malpractice if you targeted this state and thought you could pull off a win, even with a very early, inexperienced candidate like Darlene Graham.
All right, let's get into political malpractice, because some are pointing to Dallas, and it doesn't have to do with Paxton or Talrico. I mean, I guess it does by extension. But this midterm convention that we've talked about, we're suddenly learning a lot more about it. The Republican Party was posting last evening. In fact, I guess the enduring image of this confab in Dallas is going to be Donald Trump as the Marlboro Man. Do we have that, CC? This is what the party put up last evening. I don't know if you can see this, guys, but Donald Trump is the Marlboro Man on horseback, what appears to be the front of a pack of cigarettes. He's not smoking, but he's got the hat on and the whole thing. Thank you, CC. So that was the tweet that went out last evening with details on what they're going to be talking about each night, what the theme of each day is going to be. J.D. Vance will be the first night. Donald Trump will be the second night. Rick knows a lot about this. He's planned a couple conventions. But the gadfly Ron Filipowski points out on social media the Republican midterm convention, September 9th and 10th, is also opening week for the NFL season. Vance is speaking the 9th, same time Patriots-Seahawks Super Bowl rematch. Donald Trump speaks on the 10th, up against the 49ers-Rams game. Rick, would you have checked the TV schedule before you scheduled this?
Well, there's only one of two explanations. They didn't care and thought they'd get whatever share of the audience they wanted to, or they really were practicing political malpractice and didn't look into it and scheduled the president against a football game. I mean, who does that? And look, I mean, if you want to make the election about the president of the United States, even though he's not on the ballot, this is a good step in that direction.
What do you think about this, Jeannie? There were questions about whether this would make a dent or even be carried by the media to begin with. You're competing with, I mean, the NFL. How's this going to work? Or did they think that this would just be caught up on social media, make some ads out of this? Maybe it wasn't going to get a lot of primetime coverage.
The more Donald Trump in this election, the better for Democrats. Put him up front, put him there as much as you can. Republicans don't want to appear with him or J.D. Vance. And so I think it's going to be Democrats they're going to be stumping for. And in terms of timing, they are doing all of this right before the 25th anniversary of 9/11. So we've got wealthy Republicans. This thing, Joe, costs $25,000 to $100,000 per seat, we understand, to attend. And you are putting very wealthy Republicans on a stage to dance and frolic and go out in their cowboy hats, smoking Marlboro Lights or whatever they're doing, right before the 25th anniversary of the worst terror attack this nation has ever experienced. Not a good look for Republicans. And it's, you know, the NFL. I don't know why they're trying to compete with that, but they're going to be doing this right before the 25th anniversary. It's really stunning to imagine who planned this.
Well, just to be clear, these are Marlboro Reds. We're not smoking lights when we're down in Dallas. But to be fair, Rick, the convention, as I read here in the Daily Wire, will also highlight angel parents and border victims and will mark the 25th anniversary of 9/11 with the children and families of first responders. In the hour leading up to the president's keynote, speakers will focus on how Republicans are empowering families to make America healthy again. And they have themes for each night here. And by the way, President Trump will be on the stage at 9 p.m. Eastern time, so he's definitely going to crash into this football game. The party's core message, according to the messaging document, Rick, is the stakes could not be higher. Does that ring true with voters?
Well, I think the idea is that you are giving the voters what you believe are the stakes of the election. I mean, that is a standard practice. Like, why is it this election is important to you as a voter? And if you are smart, you will articulate those stakes of the election in a way that, basically gives you the broadest coalition to pull from. And so I think that part of it is good. It's interesting that they're going to be sort of echoing the MAHA movement on healthcare. That has actually, I think, eclipsed the MAGA movement in some ways. And so they'll take various pieces of the old game plan. President's underwater on immigration today. Thought we'd never see that happen. They're going to bring that back up and try and regain their values. But what is still lacking, I think, is a really strong articulation as to what the next 2 years is going to be for this administration on affordability and cost of living. I mean, those are the real stakes of this election.
It is interesting that we're doing the Marlboro imagery when it's a MAHA associated event. And yeah, producer Cece points out something here. Like, smoking is cool again with young people. Jeannie, you work on college campuses. You see young people smoke. Is this imagery working with young voters?
Not as far as I know. I don't think smoking, particularly cigarettes, is back. Maybe vaping and other things. At least I am not privy to it.
They're smarter than that on the Harvard campus. Okay.
They're much smarter than that. All young people are smarter than that. But, let's be clear. Since when is smoking cigarettes in line with the MAHA movement? I mean, none of this makes sense. Right. Yeah. And since when, Joe Matthew, did people crave more conventions? Party conventions are hard enough for them. once every 4 years. Now we're going to do them twice.
Right.
I'm not sure it's going to be a ratings winner.
I don't know. You better check with Rick on that. I don't think Rick ever saw a convention he didn't like. Actually, I might need to check that. Rick Davis, GD Shanzano. Great conversation. They're back in our second hour. Smoke 'em if you got 'em. Tyler Kendall's on our way in. This is Bloomberg.
From Washington, D.C., this is Balance of Power with Joe Matthew and Kaylee Lines.
Inflation is stuck. Welcome to the Wednesday edition with data showing inflation holding at elevated levels as economic growth is unchanged. And the market now trying to figure out what it all means for Jackson Hole at the end of this week. I'm Joe Matthew, alongside Tyler Kendall in for Kaylee Lines today in Washington. Tyler, it's great to have you along. This is all boosting
the Fed's case for keeping rates unchanged, and that seems to be the way the market's looking at this.
Right. Headline PCE and core PCE stayed unchanged, but we also have to keep in mind that we saw consumer spending slow. So maybe there's going to be two sides here when it comes to the doves and the hawks, and we wait to hear what the Fed chair, Kevin Warsh, has to say this Friday.
Yep, that's for sure. We're going to be putting some good voices on this over the course of our hour, beginning with Liz Pancotti, the economist at Groundwork Collaborative, and we'll play it to the panel as well, because this all comes back to the issue of affordability, Tyler, that you and I talk about every day, whether you're on the White House lawn or here in the studio.
Right, the number one issue. We are now 10 weeks away from the midterm elections. I would ask who is counting, but I know that you and I are both counting here. There's a few different headwinds that are happening, including the renewed trade conflict with Canada, and also the fact that the U.S. is ramping up the economic pressure when it comes to Iran.
That's right. We'll have a lot more on that as we make our way through the hour here, and we have to remember that this market is kind of holding its breath after getting through the economic data this morning, Tyler. We've got NVIDIA earnings, plus Salesforce, plus CrowdStrike, but the granddaddy of them all is NVIDIA, and we've been watching the stock throughout the day here. We might not see a lot of movement till after 4.
Right, so let's get to it and see where we stand right now. For that, we're going to check in with Charlie Pellet at World Headquarters in New York. Hey, Charlie.
Hi, thank you very much, Tyler Kendall. Yes, NVIDIA shares trading lower right now, down 1.5%. Going to be all over those numbers as they cross shortly after 4 o'clock Wall Street time. Complete coverage on Bloomberg Television and Radio. Again, NVIDIA ahead of earnings, down by 1.5%. And as Joe mentioned, 2 other key reports, CrowdStrike and Salesforce. We'll have those for you as well after the close of trading. Right now, we got stocks lower. We're off session lows, but bottom line here, basically treading water with the S&P down 10, 76.66 now, down 0.1%. Dow Industrials down 154 on the Dow, decline there of just about 0.3%. Nasdaq Composite Index down 0.3%, and the SOX, the Philadelphia Stock Exchange Semiconductor Index, down 0.2%. 2-year at 4.22%, the 10-year ahead of Kevin Warsh Friday, 4.66%, and the 30-year 5.18%. Spot gold 45.91 the ounce, down 1.4%. West Texas Intermediate crude turning around, moving higher. Oil advancing on supply concerns as Russia moves to escalate its war. Right now we got WTI up 0.5%, 82.76 a barrel. Brent 88.68, up by 0.1%. A story we've been all over: Meta Platforms. The stock is gaining on a down day for much of the market. Meta Platforms up now by 1.1%. It has agreed to pay up to $18 billion to settle a landmark social media case with multiple states around the country. Actor Tim Curry has died. He was 80, perhaps best known for his iconic role as Dr. Frank N. Furter in the Rocky Horror Picture Show, a college staple. Joe and Tyler, that is on Bloomberg Business Flash.
Tim Curry. I'm just hearing this, Charlie. Incredible.
That's why you keep it locked into Bloomberg, Joe Matthew. We keep you up to date on markets and celebrity deaths.
Oh, God. That's Bloomberg right there. Charlie, I don't know how he does it. It's the market headlines. It's the breaking news. No matter what happens, Charlie's on it. And he'll be back in about 20 minutes' time with another read on the markets here. All winding up to NVIDIA after the bell. Yep, you heard us mention it, and we'll say it a lot more times between now and then, with potentially the near-term direction for the entire market hinged off a single quarterly earnings report. Thanks for being with us here on the Wednesday edition of Balance of Power on Bloomberg TV and radio alongside Tyler Kendall. I'm Joe Matthew in Washington. As we dissect the data, if there's any point to it, we're in a world here where everyone's so obsessed with Jackson Hole at the end of the week that, well, of course, they're parsing through each data point, but then again, no one knows how to react to it because we're all waiting for the Fed chair to speak on Friday. Yields are moving a little bit. Long bond up a couple ticks, 5.18 on the 30-year. The 10-year's at 4.66, up 4 ticks. The 2-year 4.22. Everyone's been talking about the 30-year mortgage, 6.7%, and when this is all going to break. You can make the argument, Tyler, that this data reinforces the Fed's view that it can keep rates unchanged for the foreseeable future.
Right. There's a lot that, as you're outlining, we're going to need to parse through here. But then the other side are those questions about what the future of the economy's growth is going to look like, and in particular, consumer spending, and whether or not we're seeing in this data what is perhaps a front loading from the World Cup. a couple of months ago, or if this is a more durable slowdown. So there's a lot of that we need to parse through. But you're right, it's all leading up until Friday. And what is Kevin Warsh going to say to reassure investors?
If anything. There are two camps on this, it seems. One is nothing burger. It doesn't make any news, which is sometimes the Fed chair's job. Or does he need to lay down a marker and make a very stern point for this market that he is here to fight inflation? We remember how that went last time, and I bet Liz Pancotti does as well. Great to have her back. Vice President, Policy, Advocacy, and Research at the Groundwork Collaborative. Liz, it's good to see you. I'd also throw another item on this whole story, and that's a $40 trillion federal debt. How do you compile all this data and concerns about our fiscal straits with your eyes on Jackson Hole on Friday?
I think both with our eyes on Jackson Hole from potentially a Fed chair who is going to be quite silent, combined with Congress who seems more interested in blowing a hole in our revenue streams than in plugging them together, the economy doesn't look so great right now. I think the big question for Kevin Warsh is how he plans to use the couple of tools the Fed has to actually fight the inflation that we're seeing as the president, adds additional tariffs on Canada, sanctions on Iran. We know that interest rates as a blunt instrument are really not one that can bring down that type of sticky inflation coupled with rising oil prices, given his conflict in the Middle East. I think, though Kevin's hands might be tied on the Fed's tools in the wake of the data that we're seeing, his lips seem to be sealed as well, which doesn't give a lot of confidence to markets at this point.
Liz, what is the biggest upside risk to inflation over the next 3 to 6 months? Shelter, wages, you mentioned this now, renewed trade conflict with Canada, and also the fact that we are still seeing those tensions in the Middle East.
My big concern is that, I think we had this exact conversation in February or March where we said, if the war in Iran comes to a close here in the next 6 weeks, 8 weeks, we won't see sustained price pressures from the war. We are now 6 months into that war. There is no durable end in sight. Whatever the ceasefire talks are, if they're happening, they aren't sticking. So I think that pressure is here to stay, and we are certainly going to see those effects flow into plastics, fertilizers, and groceries over the coming year, just as all of that works out, even if the war ended tomorrow. And I think on top of that, with the president threatening additional tariffs on Canada here in the next 10 days, at the start of 2027, and then with those additional targeted sectoral investigations still on at USTR, consumers or businesses have any reason to believe that relief from tariffs is on the way. And so those are the two biggest upside risks to inflation.
Well, okay, Liz, with that answer, then how could the Fed avoid raising interest rates at some point in the months ahead?
I think the big question is how much do they care about the labor market? And Kevin Warsh basically, to the extent he said anything since taking office, he said that American workers really aren't his concern. His bigger concern is bringing down inflation, though he's hesitant to increase rates given, whatever promises he made in the interview process with President Trump. And I think as a result, what we're likely to see is paychecks that continue to shrink and prices that continue to rise. And if you're a business trying to navigate this environment, it's impossible to make long-term decisions like hiring or CapEx investments unless you're a data center, which is driving about 60% of GDP growth in this morning's report.
Wow.
Well, let's maybe pick up on data centers and maybe also NVIDIA's earnings today too, and how much that is going to tell us about the AI investment cycle. What are you watching for, Liz?
I think actually the thing that I'm most concerned about is the inflation we're seeing from all of this data center build out. I really worry that we are headed back into the chips crisis that we saw in 22 and 23, where we simply don't have enough of the memory chips we need to serve things like consumer electronics, autos, et cetera. Plus, on top of that, these massive investments in data centers. The moratorium conversation is interesting. Will that slow the build out of these? I'm not convinced based on what we've seen so far. And at the end of the day, who's left holding the bag for the massive shareholder returns we're seeing these companies deliver? Right now, it seems to be, commercial and residential electricity ratepayers, which is just another price increase that I think so many of these balance sheets can't take right now.
Wow, I'm glad you went there, Liz. We've already seen the impact on memory, for instance. Apple's talking to the Chinese about getting cheaper chips so they don't have to hike the price of the iPhone. But does it go beyond that? This massive AI data center spend, which has become a huge issue on the political campaign trail, could send prices of so many things higher, right? Raw materials, lumber, concrete, steel, all are needed to build these enormous complexes.
That's right. I mean, even chemicals like coolants for many of these buildings, piping. We've seen the aluminum market across the globe really in calamity over the past 2 years or so. For the same copper. I think in commodity markets, we're seeing the after effects of all of the tariffs, the war in Iran, supply chain crises made even worse by the fact that one industry is really doing all of the capex right now. And those supply chains are incredibly complicated. They are global in nature. They are very intertwined. There are lots of parts be put together. And I think the big question there is how far can they go before they really hit a wall? Can Apple diversify its supply chains before it runs into the fact that tariffs will need to balance out if they're going to import more from China? I think right now companies are trying to solve for an equation with 1,900 variables that all seem to move every time the president logs on to Truth Social.
Liz, it's great to have you back. Liz Pencotti, Groundwork Collaborative. Let's stay with this data center issue. Tyler, we're going to assemble the political panel in just a moment. Rick and Jeannie will have thoughts on this because we spoke to Ted Cruz about this last evening, of course, the Republican senator from Texas, knowing that Governor Greg Abbott has put some restrictions or at least reviews around proposed data centers in rural areas as opposed to the moratorium put in place in a state like New York. Here's how Cruz sees it should work.
I agree with what Governor Abbott has said, which is no new data center will be built in Texas unless the impact of that data center is zero, is absolutely not 1 penny added to anyone's electricity bills. I think that makes sense. And I'll tell you, I'm urging the companies that are building these data centers go further than that. Make the benefits absolutely clear and indisputable. I'm urging them send checks to the residents of the community. Send them $100 a month, send them $500 a month, send them $1,000 a month, or even better, say if we build a data center in your community, for the rest of your life, your electricity bill is free. We will pay your electricity bill. That's how you win the PR battle.
Gotta tell you, Tyler, it kind of rings true.
Yeah.
No electricity bill for the rest of your life?
Yeah.
All of a sudden, a data center shows up.
We're seeing both parties not have a continuous message on it.
Yep.
It is on both sides of the aisle, Republican and Democratic governors trying to figure this out, and candidates that aren't even in office yet trying to figure this out. Joe, I pulled one poll, a June poll from Reuters. Only 1 in 3 Americans approve of how quickly data centers are going up across the country.
Even those who've never seen one in their lives. Let's get to the political panel. As we mentioned, Bloomberg Politics contributors Jeannie Shanzano and Rick Davis are with us. Jeannie is our Democratic analyst and democracy visiting fellow at Harvard Kennedy School's Ash Center. Rick is our Republican strategist, of course, and a partner at Stone Court Capital. What'd you make of that, Jeannie? Is that the future? Nobody has to pay their electric bills anymore. It's open season.
Wouldn't that be nice? I think what struck me, it was such a fascinating interview with Senator Cruz. Number one, he was empathetic to all the concerns, and I think rightly so, as has Governor Abbott and so many governors across the country. But what was stunning to me was when he talked about this as a PR problem. And that, I think, is an indication that they aren't, or he isn't understanding the seriousness with which, in a bipartisan way, communities, whether it's in Salt Lake City, whether it's in Virginia, Texas, New York, around the country, are pushing back. There's so many issues that are of concern to people. Number one has been the lack of transparency in these deals, the fact that many of them have been made under NDAs without public input. I noticed he talked a little bit about, here's an answer to the water problem, this closed loop cooling technologies. Well, anybody who understands those will tell you that increases the energy costs so much. It creates chemical risk concerns, right? So all of these things he's talking about as a PR move, I don't think is addressing the scope and the reality of the concerns that people have in the poll that Tyler just mentioned.
So then, Rick, what is the balancing act here when on the other side of that argument, you have some, including the president, talk about the potential benefits to local communities, such as job growth? How do politicians navigate that divide?
Yeah, I think you're seeing the first step of that, which is trying to address the fear that the public has, because there's a lot of people who just don't understand what the issues are related to data centers themselves, because most of America hasn't seen one, so they haven't experienced it. And two, there's a lot of fear about AI in general, right? What undergirds all of these discussions about data centers is, what's AI going to do to my job? What's AI going to do to our culture? What's AI going to do to the future of our country? And so you create a lot of anxiety. And so addressing that fear and anxiety, I think, is the number one thing. And I think that's what you saw Senator Cruz doing. Nobody's got real answers because they don't really know what the scope of the problem is yet, and especially when it comes to these communities. So a patchwork effort of trying to get sound bites to appease people is simply not going to get it done. It's going to have to be in a conversation that the public officials have with the general public about how to handle this going forward. Do we want to be more competitive with China? Then we're going to have to build data centers. Where we build data centers, what we're going to do. Could you imagine a electricity tax-free zone in your neighborhood in Texas? Where does it start? Where does it stop? You know, can I build a house on one side of the road and get the tax-free status? I mean, we're unleashing a debate that's going to last a long time and have a lot of victims.
Well, okay, and I'll tell you, if it isn't a PR campaign here, Jeannie, you wonder what it is that will win people over beyond buying them off. Axios put together some fascinating stats. There are about, in case you were wondering, there are about 4,000 data centers across the country, 580 hyperscale facilities, at least 75 totaling $130 billion in potential investment impacted in the first quarter of this year. Interesting on the jobs, though, Jeannie. We hear a lot about job creation. That's typically the angle that the president seizes on. About 1,500 workers at the peak are employed to build the data center. That's about 12 to 18 months of construction. You know how many are left to run the data center? This is based on what we've seen in Virginia, where we've had these around for a long time. 50. Is this a job story or not?
It's a job loss story in the long term. And that's another thing that frustrates people. You know, part and parcel of a bigger picture in this is that many Americans are living at a time where they are worried that AI is going to take their jobs, and they are quite frankly sick and tired of tech billionaires telling them how they're going to live their lives. This explains a lot of the pushback on data centers, flat cameras, as we've talked about. I think even the Meta settlement today, these are proxies, and there's real concerns underlying them, but proxies for real anger over tech. And at the core of these issues have to be determined in Congress and by our executive. And that is going to take time. And that's why we do need a pause.
All right, our political panel, Rick Davis and Jeannie Shanzano, they'll be staying with us throughout the hour. Stick it here. This is Bloomberg. Bloomberg Television and Radio.
It's 121 on Wall Street. We do check markets all day long here at Bloomberg. We've got stocks lower ahead of NVIDIA earnings after the close of trading today. Right now, we do have NVIDIA shares. They are trading lower by 1.3%. S&P down 5. Little change, down under 0.1%. Still in the red. Dow Industrials down 0.2%. We do have NASDAQ down by 0.2% as well. Bottom line here, stocks are treading water as investors digest the Federal Reserve's preferred inflation gauge as we await numbers out of chip-making giant NVIDIA. 10-year currently yielding 4.66%. Gold is down 1.3%, $45.98 the ounce. And West Texas Intermediate crude up 0.3%, $82.62 the barrel on WTI. After earnings right now, Abercrombie & Fitch surging 32%. That Joe Matthew and Tyler Kendall is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Charlie Pellet live in New York. He'll be back in just about 20 minutes, as always, with another check on the markets. We're rolling our way up to NVIDIA earnings after the closing bell, after 4, which we will be spending a good deal of time focusing on in the late edition of Balance of Power. That starts at 5 p.m. Eastern. We'll have Ed Ludlow and Romaine Bostick with us, digging through the numbers, waiting for the call, and listening to Jensen Huang once he starts speaking. This could help to set the near-term direction, or maybe even the long-term direction for this market right now, obsessed with the AI spend, and of course, the politics surrounding data centers appearing in our program on a daily basis, and we'll have more on that later. Tyler Kendall is with us today in Washington, in for Kaylee Lines. As we consider the latest from the Middle East, and Tyler, there's been some interesting reporting here from Bloomberg as Iran's military says it has reached a revenue-sharing agreement with Oman on the Strait of Hormuz, the very thing that President Trump said would be a non-starter for the U.S.
And we should caution, the IRGC statement related to this does go further than the joint statement that we got from Iran and Oman, which said that this isn't finalized, but it is pointing toward Iran not giving up its leverage when it comes to the Strait of Hormuz, as the U.S. itself is trying to strengthen the economic pressure on Iran to get them to the negotiating
Well, that's right.
table.
You remember economic D-Day. This would be D+2, I guess, if we're keeping track, although many have wondered exactly how this is going to work and what Chinese entities have already been isolated and whether the administration is willing to go further, Tyler, with secondary sanctions. This is all going to be playing out in the days ahead.
Right, exactly, because we know that the U.S. has set out defined timelines for individual countries. And that's where we would like to start by bringing in our next guest, Ophir Falk, foreign policy advisor to Israeli Prime Minister Benjamin Netanyahu, joins us now live from Israel. Mr. Falk, thank you so much for joining us here on Bloomberg. Let's start there and your thoughts on the U.S.'s economic pressure campaign against Iran. Does Israel feel that this is the next best step in terms of the course of action to get Iran to the negotiating table? And does Israel have a timeline realistically on when you think this will go into full effect?
Well, thanks for having me, Tyler. We're all in favor for what President Trump's doing and the economic D-Day, so to speak. And the way we understand it is that the friend of your enemy is your enemy. And you can't have countries that are facilitating terrorist entities like Iran, and we're all for these sanctions that are going to be put on these countries.
Dr. Falk, it's great to have you with us. For the sake of our viewers and listeners, we should let everyone know that you have been in the room with the Prime Minister for some critical meetings and have been one of his nearest advisors in this process. And so we wonder if the Prime Minister believes that sanctions can achieve what military action has not been able to.
We welcome the sanctions, and we don't see them as mutually exclusive with military actions. I'm sure the president has already said that one thing is for sure: Iran cannot have nuclear weapons. That's what the Prime Minister says. That's what the president says, and that's what's going to happen. So these sanctions are welcome. The Iranian economy is in the gutter. Their inflation, they have hyperinflation. Their currency is as weak as that they've ever been. It's like 2 million rial to $1 US. They have no employment. Their economy is in the gutter, and they're going to be hit. They're going to be hit even further. So those are the conditions. The conditions are being created for this terrible regime, these tyrants in Tehran, to be clobbered.
Will they be hit militarily even further? There's a question about whether the U.S. is, for instance, turning away from military action to focus solely on an economic approach.
Well, again, I think those two things are not mutually exclusive. And the main thing is that Iran cannot have nuclear weapons. That has been made clear by the president. It's been cleared by Israel as well. For my prime minister, made it very clear that deal or no deal, Iran will not have nuclear weapons as long as Prime Minister Netanyahu is prime minister.
Can you give us any insight into what those conversations look like right now between the U.S. and Israel in terms of viable options for military escalation that could be on the table?
Well, I can't get into details, but obviously everything's on the table, and there's zero daylight between the president and the prime minister. There's been great cooperation and coordination throughout the war. I don't think there's ever been a precedent of such great cooperation between a president and a prime minister, or between our armed forces, between the American armed forces and between the Israeli armed forces. The achievements have been incredible, unprecedented. Iran is weaker than it's ever been, and America and Israel are stronger than we've ever been.
Well, part of building the pressure on Iran, given that Iran's economy has taken a hit, though, is the most powerful move would be to have China no longer importing Iranian crude. That's a big question here when it comes to the threatened actions by the U.S. Do you have a sense on what the U.S. is particularly looking for when it comes to China, if a reduction of barrels would be enough, and if Israel is engaged in any diplomacy when it comes to perhaps pressuring China to cut off some of its financial lifelines?
Well, I'm not going to get into American policy, of course. American policy is led by the Americans. But I think would obviously be in the interest of China for Iran to stop terrorizing the world. They're holding the Hormuz Straits as blackmail towards the world. You could only imagine what would happen if they had nuclear weapons. They would blackmail the entire world, and there'd be very little we could do about it. So we acted in the nick of time, and America and Israel did the right thing to put this Iranian regime in its place.
I want to ask you, Dr. Falk, about what's happening or not happening in Gaza. You said in an interview recently that when Hamas says it will disarm, quote, the proof will be in the pudding, unquote. What does proof look like to Israel? And has this boiled down to a who blinks first?
Well, it's very simple, actually. If Hamas wants to disarm, they can disarm in an afternoon. They can just lay down their arms. Yeah. Now, the 20-point plan that President Trump introduced almost a year ago called for a 3D model to disarm Hamas, to demilitarize Gaza, and to de-radicalize the Gazans. That is a 3D model that we obviously signed on to. If Hamas wants to disarm, they could do that in an afternoon. That is the next step. And once they do that, we can move forward.
Can you give us an update on where those efforts stand? Where are we in that process toward potentially getting Hamas to disarm?
Well, the IDF Israel currently controls between 60 to 70% of Gaza. And we're demilitarizing that area right now as we speak. The remaining area is unfortunately being controlled to a certain degree by Hamas, and we're fully aligned with the BOP, and more importantly, we're fully aligned with President Trump and Jared Kushner that number one, we have to disarm Hamas. Hamas needs to put down its arms, and Gaza needs to be demilitarized, either the easy way, by just laying down your arms, which again could be done in an afternoon, or it'll be done the hard way. But either way, Hamas is going to be disarmed.
Just lastly, what's the hard way? What could be done that hasn't been already? Gaza looks like the surface of the moon, Doctor.
Well, again, the hard way was what we've been doing for over 2 years. We disarmed over 30,000 Hamas terrorists by taking them out. Yeah. And if that's what needs to be done, that's what will be done. We prefer the easy way for them just to lay down their arms, and that would be over with. That hasn't happened for the past 10 months. They had the easy option of just laying down their arms. I hope they do that. I hope they do what they said they'd do, what they pledged to do, to lay down their arms, to disarm, to demilitarize Gaza, and we could move forward. But if that doesn't happen, again, we're ready to do whatever needs to be done.
He's the foreign policy advisor to Israeli Prime Minister Benjamin Netanyahu. Dr. Ophir Falk, we appreciate your joining us and sharing your insights with us today on Bloomberg. Let's play it to our political panel. Bloomberg Politics contributors Rick Davis and Jeannie Shanzano join us now. Rick is our Republican strategist, a partner at Stone Court Capital. And Jeannie is our Democratic analyst and democracy visiting fellow at Harvard Kennedy School's Ash Center. What do you think about this, Rick? There are some concerns that this period of time we're in, as the U.S. waits for the economic stranglehold to intensify, that Iran is simply rebuilding, digging out missile sites that we hit, trying to make more missiles and drones for when this turns back into a military action. What do you think?
Joe, I think you're absolutely correct. There's absolutely evidence in the past that after every one of our attacks, there's a rebuilding process that Iran has used, to the point where they've been very successful in being able to reconstitute drone capabilities in missile manufacturing, and even launch systems that have been at one point destroyed. So we can assume that in this period of time, the risk that the administration's taken is that we can bring Iran to heel economically, even while they rebuild their arms capability. And that is a threat to both the U.S., the Persian Gulf, and to Israel, obviously, and our allies around the region. So it is a gamble. And I don't think that anybody is taking it lightly in regard to what kind of capability Iran will have if this period extends and the economic sanctions over the course of the next few months don't bite.
Jeannie, to pick up on the headline that crossed the terminal earlier today, Iran and Oman, according to the IRGC, are nearing a finalization of a pact to oversee traffic in the Strait of Hormuz, which would include fees. Is that going to prompt the administration to have to take an even harder stance when it comes to getting Iran to the negotiating table? Because that seems to indicate that we're moving in the other direction.
Yeah, absolutely, Tyler. It's moving in the wrong direction. And what does the administration do about it? We've tried a military campaign. We tried a naval blockade. We tried an MOU. We are now trying this D-Day, economic D-Day. There's various reasons that none of those are going to work, including the economic D-Day, because you would have to get China, Russia, Turkey, Pakistan, and all of Iran's trading neighbors and friends to disassociate. And that is, we've heard already, not in the offing. So what do we do then? And that's the problem. And I think it's fascinating in your conversation that he was talking about the fact there's no daylight between the United States or the president and the prime minister. I think that's interesting because he also said that the economic efforts are not mutually exclusive, keeping open the idea of military campaign. And that is something that the president clearly does not want to try to engage in again.
All right, our political panel today, Rick Davis, partner at Stone Court Capital, and Jeannie Shanzano, democracy visiting fellow at Harvard Kennedy School's Ash Center, both Bloomberg Politics contributors. Thank you both for joining us, and stick with us. We'll have more up ahead, including the latest from the campaign trail. This is Balance of Power on Bloomberg TV and radio.
It's 1:40 on Wall Street. We do check markets all day long here at Bloomberg. I'm Charlie Pella. We've got NASDAQ 100 index back in the green, just turning higher. Little change, but higher by 6 points right now. The NASDAQ 100 index being led higher by Lumentum, Western Digital, and ARM Holdings. S&P 500 index lower. Little change, still in the red, but off-session lows down 2 points right now. We're essentially in a holding pattern, treading water ahead of NVIDIA earnings after the close of trading. NVIDIA right now is trading lower. NVIDIA down by 1.4%. Dow Industrials down 0.2%. NASDAQ down 0.2%. But again, the S&P is a baseline just about flat on the day. The SOX, the Philadelphia Semiconductor Index, it is up now. Little change, but up under 0.1%. The 2-year, 4.22%. Investors are digesting this morning's Federal Reserve's preferred inflation guide, personal consumption index. Right now, we do have the Russell 2000 index down 0.2%. 10-year at 4.66%. The 30-year 5.18%. Again, the 2-year 4.22%. Gold is down $57 the ounce to $45.99. Drop there of 1.2%. West Texas Intermediate crude up 0.3%, 82.64 a barrel. Brent lower by 0.2, 88.43. NVIDIA earnings, as we mentioned, coming up after the close of trading, down 1.4%. We'll also hear from CrowdStrike and Salesforce. CrowdStrike up 2.3%, and Salesforce right now down 0.6%. Joe Matthew and Tyler Kendall, that is a Bloomberg Business Flash.
Okay, my friend Charlie Pellet, live in New York. He'll be back in about 20 minutes, 2 p.m. Eastern Time, as we kick off Bloomberg Business Week Daily. Charlie watching NVIDIA just like we all are throughout the day here, and I know I've said it a few times, but you can trust we'll have a lot more after the bell with NVIDIA earnings popping alongside Salesforce, alongside CrowdStrike. It's going to be a busy post-market session here at the tail end of earnings reporting season. We'll have much more in the late edition of Balance of Power that starts every weekday at 5 p.m. Eastern Time. Alongside Tyler Kendall, I will be here, Joe Matthew, watching all three of these move for better or worse in the after-hours session. We're picking up the pieces after another election day, though. This was a little different. These were primary runoffs. None more important, we're told, than South Carolina. With the Trump endorsement on the line, Tyler, it worked out pretty well for him in not only South Carolina, but also Oklahoma.
The president has a relatively strong track record when it comes to these primary endorsements. I wanted to point out some new stats came in from the super PAC that supports him. $830,000 were spent in order to help boost Darlene Graham, the sister of the late Senator Lindsey Graham.
I think it was a total of about $6 million with outside groups added, but that was some of the first MAGA Inc. money that had been spent at all in the campaign. And of course, he's the one who asked her to run, so there was a bit on the line here. And we're joined by someone who knows a bit about the Carolinas. Patrick McHenry is with us, Bloomberg Politics contributor, of course, former Republican congressman from North Carolina, former House Financial Services Committee chairman, former Speaker Pro Tem. Mr. Chairman, welcome back.
Great to be back.
So everyone in the media likes to try to blow holes in this idea. The Trump endorsement, it finally hit the wall, and we've done this one race at a time and one state by state. South Carolina, Oklahoma worked out well, and he put a lot on the line for Darlene Graham. Why did he expose himself like that? And did we learn anything about the status of the Trump brand?
Loyalty to Lindsey Graham was one of the reasons. And the president had deep affection for Lindsey Graham. That very complicated relationship of how they started. But and number one. Number two, they wanted a loyalist elected to the Senate. And number three, South Carolina is a bulwark of Trump support. Yeah. So the combination of Lindsey Graham's popularity in the state and Donald Trump's popularity in the state elected Darlene Graham, who was Lindsey Graham's sister, unrelated to politics. She, a year ago, no one knew her. 4 months ago, no one had heard of her. Ralph Norman, who made the runoff against her, has been a longtime policy elected official, Freedom Caucus leader in the U.S. House, very outspoken critic of, well, a lot of things. But he was much more loyal to the Freedom Caucus than he was to President Trump. And President Trump wanted to show that he still has power and capacity within the Republican Party. He clearly does.
Well, and the president actually posted about the Congressman Ralph Norman this morning, talking about his endorsement of Nikki Haley. It appeared that this might have been a few years in the making in terms of who the president may have backed in this race.
Ralph was a rare and rare opponent of President Trump in South Carolina among elected officials. And while Ralph Norman may have forgotten about his endorsement of Nikki Haley, President Trump did not. And so these, what we're finding out is much like NASCAR. I'm a big NASCAR fan growing up in North Carolina. And what you'll find out about these race drivers is that they will talk about a feud that is a decade old, right? Yeah. Professional wrestling, stock car drivers,
Yes.
and President Trump, they will remember the slight from years and years ago.
No doubt. Does that mean you were at IndyCar, or did you boycott IndyCar because you're a NASCAR guy?
It was a great event.
Yeah,
but
was
no,
pretty
like
wild.
the Indy product is not as good as the NASCAR
It's not as
product.
good.
Not in my view.
Fantastic.
But top ratings for Indy
Yeah.
here in DC.
Yeah.
The best viewership of Indy. One of the best racing viewerships of any race in the United States. It's really amazing product that happened.
I was
this weekend.
indoctrinated on Sunday. I'm a baby. I don't know anything about that. I'm from Connecticut. What the heck do I know? But I was fascinated and blown away by the whole thing. And being on Pennsylvania Avenue in this environment, I'm wondering about the politics behind this. That was the final peg in a series of events. Started with the UFC fight. You weren't there for that, were you?
No, I was not.
I bet you were invited. We had the big air shows, all the flybys, the Guinness Book fireworks. Now IndyCar. Is there an impact on the voter? The way they look at Donald Trump, the sort of bare-chested America 250, what does that do politically?
It doubles down on his brand and who he is. He believes in America, the strength of America, the capacity of America. And what better way to express it than the 250th anniversary? Those that are opposing him or opposing these events look like they're anti-American. So what a great setup when he's trying to show off America, show off our capital city, and make improvements to our capital city. And for people to fight him about cleaning up fountains or putting up statues or having events like this, they look silly because what he's trying to do is really show off, just like Rome at its height, show off through games who we are in this capacity. It's a very pro-America or America first.
Well, Rome at its height, though, was the prelude to...
Well, I said it for a reason. It does have a double-edged sword to it. It's
very
a complicated message.
Wow. With reference to Nero. Take it away, Tyler.
I'm going to try to tie all these together, but also move our conversation forward. Okay.
Sorry for everything.
Well, if we go to the Oklahoma race yesterday, part of what we're all talking about right now is building up America, American ingenuity, America 250. Part of the race that we saw yesterday in Oklahoma, President Trump in part didn't back the candidate that lost over reported opposition to an aluminum smelter plant.
That's right.
This week, President Trump ramped up the tariff tit-for-tat escalation with Canada. We get a huge amount of aluminum from Canada, I think to the tune of like 50% of what's consumed in this country. How is this going to play if we bring this back to domestic politics and the midterm elections as we ramp up the trade war? But it also goes to the president's point that you need to bolster domestic manufacturing to have the U.S. be less reliant on other countries for critical materials like this.
The complicated thing is returning supply chains here to the United States does have an inflationary impact, right? You have a temporary lag in the ability to build up domestic manufacture when you're cutting off a foreign supplier. That complicates the inflation picture for the Fed, makes things complicated going into a midterm election. Stepping back, one aperture from the direct trade war with Canada, which is an avoidable disaster in my opinion, taking back one aperture of this, you have the AI build-out, the AI revolution, this reshoring back to the United States, and the president's deregulatory agenda and tax agenda. There are huge lifts for the American economy. And at the same time, we have a trade war that is a huge headwind to us and to the American people. You have American people experiencing inflation, and we don't like it. Then you have the Iran war and the effect on energy prices in the United States and globally. Imagine what this economy would be doing but for tariffs and Iran. It would be at an all-time tear. And instead, we have to have the Treasury intervene with long-term rates in order to manipulate the economy for short-term gain. So this, the economic question here, the voters will speak on this in November. this midterm Republican convention in Dallas in a couple of weeks will be a question of trying to reset what the American people are experiencing, but it is certainly a very complicated and challenging picture to try to paint. It's a very complicated thing for politicians to paint a positive picture about the economy right now.
Just as the market wakes up to the federal debt for some reason. This has been wild. You talked about the intervention at the Treasury, but $40 trillion set off alarm bells for some reason in a way that $39.9 trillion did not. And I talked yesterday about all of this with your old friend Kevin Brady, the former congressman from Texas, the chair of House Ways and Means. Here's what he had to say.
I think getting fiscal policy right is the only solution here. It's not going to come from the Fed. It will not come from the Treasury or any administration, frankly. It's going to have to come from Congress. Setting guardrails around spending, putting in place enforceable spending caps. And over time, you're not going to fix this problem immediately, but over time, right-sizing that government in a way that markets, more importantly, the country feels more secure.
Kevin Brady is an old-style Republican, and what he's saying makes a lot of sense, but, I mean, this comes with a big eye roll. Or you're going to tell us next about a blue ribbon panel? How do we manage this on the Hill?
Oh, no, you have to actually do something about the national debt. You have to do something about our annual deficit.
Yes.
Congress has done nothing about this since before the financial crisis, since the Bush second term, where we had a deficit that looks, it was actually 1/10 the size it is currently. This is the annual deficit.
Right.
And so there are a couple things that have hit the market. One is it's clear the politicians don't care about this.
Yes.
We have a Democratic Party that wants to spend more and isn't really talking about serious tax increases to fund it. One. Two, we have Republicans that are not a fiscal conservative. They're no longer a fiscally conservative party, if they ever were. They're more of a populist party. And no populist party in the world cares about debt and deficits.
Wants to cut.
They don't. They want to enjoy the high times right now. So you have that. You also have the Fed signaling clearly we're no longer going to monetize the debt, which they have done since the financial crisis, which has enabled Congress to look the other way. Right. And third, you have this AI revolution that has required gobs of money, tens of billions of dollars for this build-out. So how do you prioritize yourself? To fund something that is a broken system, or to fund the next thing that can unleash
you just
the next generation?
All the dots today.
But then what's the tipping point? When voters tell lawmakers they have to start paying attention?
Yes. I talked, the last time I had a town hall meeting about the debt and deficit was in 2010. And they rolled their eyes and they said, let's talk about something else. I had great charts too. And my staff said I'd stop bringing the charts, right? Wow. And so the voters have not prioritized this, but it is heart disease, right?
That's right.
This is not a problem until there's a cataclysmic
It's amazing we
event.
haven't had a heart attack.
Yes, truly.
We're getting the warning signs.
Yes.
So you go to Dallas, and you have to deliver a message at the Dallas convention at the same time America's watching football. Did you see this?
Terrible
the 9th
schedule.
and the 10th. J.D. Vance is speaking the same time Patriots-Seahawks Super Bowl rematch. Trump is up against the 49ers-Rams the night after. The tree that falls in the woods?
So this is exactly what you're talking about with what is Trump trying to say with this 250th anniversary of America.
Yeah.
Right? Strong, hurrah, America.
Yeah.
Who are those people? They're going to be watching the NFL.
Football game.
Right?
He should be doing an interview at halftime.
It would be far better. Far better. So this is going to be hard programming, and it's going to be very difficult to break through on a night like that when live sports are still, the dominant player on evening programming.
Should we expect anything monumental that he could say that would make people want to change the channel and tune in?
Never count him down.
Yeah, right.
Never
or at
count
least
him
look
out.
back at Twitter the next morning, right?
You still you have no idea what he can bring. And I think his staff is cooking things up, but he's certainly cooking things up separate from his staff.
Are you
He always
going?
Does. Not if I don't have to.
Okay. That's what every reporter in Washington said as well, I think.
Unfortunately, it will be something interesting. Could be something interesting, and likely will be.
You wonder if it's a new thing. Maybe both parties do midterm every time we have.
Republicans need it to juice the Trump electorate to come out and potentially save at least the Senate, if not narrow the House minority.
I bet we'll be talking to this man that week. Patrick McHenry, Bloomberg Politics contributor. Thank you, Mr. Chairman, as always. Tyler and I will be back. Late edition of Balance of Power.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, and Bloomberg Originals.
And a very good afternoon, everyone, live on Bloomberg Television, Bloomberg Radio, YouTube, and Bloomberg Originals. It is Bloomberg Business Week daily on this Wednesday, August 26, 2026. I'm Tim Stenovec. Carol Massar is out. We got Lisa Mateo here. She's news anchor for Bloomberg this weekend. It's so good to have you here.
Good to be here. It's
I know
not
it's
a
like
Saturday.
almost your bedtime.
Yeah.
So thanks for staying up late.
I know.
Because you're like in here, you know, at like 3 a.m. every day. So.
I know. And then you were off last week. I was away last week on vacation. Like, we're all resettling, getting back into the norm.
Well, the norm today is pretty big and pretty chaotic. Yep. We got a great program coming up over the next couple of hours. It is, of course, an NVIDIA earnings day. We got stocks and bonds both falling. We're going to have more from Charlie Pellet in just a minute. In the meantime, a Bloomberg exclusive crossing just this morning about how Russia is preparing to escalate attacks on Ukraine. Separately, Iran's military saying it reached a revenue sharing agreement with Oman when it comes to the Strait of Hormuz. We're going to go around the world with Jenny Welch. Also being watched around the world, what is going on with Meta? They're paying up to $18 billion in a landmark settlement, or landmark settlements, I should say. We're going to get to details and ask one child safety expert if that's enough.
Yeah, and that's an interesting story in itself, just because of, I know I'm a mom of like teens and things like that. So it's a very, very important story that I'm glad we're digging into that today.
Yeah, the big question I have is like, is this the end of the settlements and like what this actually looks like in these apps? I mean, I have younger kids and we're trying to keep them away from this stuff for as long as possible. It is hard.
Yeah.
It is hard. While we await NVIDIA results, we're going to be checking in with the CEO of another manufacturing company in the semiconductor making process. The CEO of Lam Research is going to be joining us in just a few minutes. All that and more coming up over the next hour right here on Bloomberg Business Week Daily. First up, though, a check of the day's trade and top business stories. Here he is, Charlie Pellet.
All right, thank you very much, Tim and Lisa. We have got the Dow, the S&P, NASDAQ. They're all in the red right now. Little change, perhaps, is the key takeaway at this hour. Yeah, we're in a holding pattern roughly 2 hours from now when the NVIDIA news breaks. Complete coverage on Bloomberg Television and Radio. Right now, we do have NVIDIA shares ahead of earnings. Trading lower, NVIDIA down by 1.2% as a baseline, keeping it all in context. S&P 500 index just about flat on the day, lower by 3 points now, down under 0.1%. Dow Industrials down 122 on the Dow, drop there of 0.2%. NASDAQ down 0.2%. NASDAQ 100 index swinging between gains and losses right now. I'm going to call that unchanged on the day. The stocks, the Philadelphia Stock Exchange Semiconductor Index, also flat on the day with a 2-year 4.22%. We've got the 10-year currently yielding 4.66%, the 30-year 5.18%. Gold down 1.2%, $45.99 the ounce. West Texas Intermediate crude up 0.1%. Little change there, 82.44 a barrel. Brent, the global benchmark, is trading lower, down now by 0.4%, 88.25 a barrel on Brent. As we have been reporting, Meta Platforms has agreed to pay almost $18 billion to settle a landmark social media case with multiple states. Shares of Meta Platforms up now by 1.5%. Meta, of course, the parent of both Instagram and also of Facebook. Also, we now have a price tag for RevMed's pancreatic cancer drug. It is $39,800 a month. Earlier today, Revolution Medicines secured U.S. regulatory approval for its drug, which targets one of the key molecular causes of the disease. RevMed shares, ticker RVMD, pushing higher now by 2%. Recapping S&P, let's call that flat on the day. NVIDIA, ahead of its highly anticipated report, trading higher. Right now, actually lower. We got NVIDIA down by 1.2%. Tim and Lisa, that is a Bloomberg Business Flash.
All right, Charlie, thank you for that update. We do appreciate it. This story crossing the Bloomberg a little earlier, just before noon today. It's a Bloomberg exclusive. It's about how Russia is preparing to escalate attacks on Ukraine after concluding that negotiations for a peace deal have reached a dead end. This according to 3 people close to the Kremlin. Separately, Iran's military said it reached a revenue sharing agreement with Oman on the Strait of Hormuz as Tehran and Washington standoff over control of this waterway just continues. There is a lot to get to, a lot happening around the world, and we're going to get to it with Jenny Welch. She's Bloomberg Economics Chief Geoeconomics Analyst. She joins us from our Washington, D.C. bureau. I want to start with Russia, and then we'll get to the Middle East, Jenny. There's a lot of ground for us to cover with you. Here we are, the first week of this war. We thought this thing would be over, in days. Here we are, many years later at this point. Are we back to the beginning now?
I wouldn't say we're back to the beginning in many ways because the strategic landscape has shifted. Ukraine, for example, has been able to leverage drones to create an essential no man's land along the front line with Russia. And that's part of the reason, as the Bloomberg reporting is reflecting, that Moscow is considering these other strategies of striking at, for example, more of Ukraine's key cities and economic centers because they simply aren't able to make gains along the battlefield front as they were in the earlier stages of the war.
Now, Jenny, I'm curious. I mean, what does it say about the U.S.'s efforts to end the war? What does this all say about it?
What it suggests is that about a year after Trump and Putin sat down in Anchorage last year, not much progress has been made. And part of that is because it was always going to be a long shot. Ukraine and Russia are very far apart on what the terms of a peace would look like. And part of it is because the U.S. simply hasn't been focused on it. The U.S. attention has been elsewhere, namely in the Middle East. And there's just been a lot less energy, attention, and resources dedicated to resolving this conflict.
How would you characterize the appetite of everyday Ukrainians and everyday Russians to continue this conflict?
I think Ukrainians are increasingly feeling the pain of this war, which is, just taking away from normal economic and social life. Many people have had to flee the country. The population is actually down compared to where it was 10 or even 20 years ago because so many people have left the country. And importantly, many of Ukraine's frontline soldiers are increasingly worn out. The manpower shortages there have led to extended deployments, and Ukraine has been wary of calling up more people and taking more from the civilian population. I think in Russia, the economic pain is somewhat more diluted because they are not the invaded country. At the same time, they are also facing manpower challenges. There is reporting and speculation that Russia may also be considering another call-up after the parliamentary elections scheduled for later this fall. And Ukrainian strikes have been seeking to bring more of the pain to Russia itself, but even those are relatively more targeted than the experience in Ukraine as the invaded party.
Jenny, I want to switch now over to Iran, Oman. Oman, they discussed these interim framework. It's kind of to reassure that shipping through the Strait of Hormuz. What exactly is this interim framework? What does it entail? Does it say anything about fees or anything?
So there are a lot of details still outstanding, including how much progress the two parties have even made on this. Earlier today, the IRGC announced that they had a deal. There's been other reporting from other Iranian sources suggesting that they're not quite at that point yet. But I think at the end of the day, the United States has a vote here too. And as long as the U.S. blockade remains in place, and as long as the U.S. continues to fight with Iran, shipping is not going to go back to normal in the Strait of Hormuz.
Also, isn't this a non-starter for the U.S. right now, the idea that it could actually be told by a country that's not the United States? Hasn't the president been very clear?
I would say the president has put out different statements on the issue, including at one point in time indicating that the United States might charge tolls or fees in the strait. But most of the time, the U.S. position has been that they don't want to see tolls or fees in the strait, which is the terminology that Iran has been using to indicate that it would still be gathering some revenue. It just wouldn't be in the form of a toll, which is somewhat illegal under international law, whereas a fee could theoretically be charged for services that are administered as part of the strait. And it does seem increasingly likely that what Oman and Iran are discussing is something like a fee structure. Oman has stated that it's opposed to a toll, but admitted privately that fees are part of the discussion. And that is a very firm red line for Tehran.
Jenny, I want to switch over to Scott Bessent, Treasury Secretary Scott Bessent. He announced this economic asphyxiation campaign against Iran. Where do we stand? Have any countries responded? Have we heard from China at all? I know there's a big meeting coming up next month.
So China's initial remarks on the issue suggest that the U.S. is going to have a hard time convincing some of Iran's most important economic partners to play ball. Beijing was very clear that it is not going to be responding to U.S. sanctions pressure or threats. And this is consistent with how China has responded to increasing U.S. economic pressure on Iran, especially over the last year, and especially as it regards to sanctioning of Chinese entities. In terms of the private conversations that Secretary Bessent said are ongoing, including involving President Trump, it remains to be seen. The administration may take aim at other partners that don't, for example, control a significant amount of critical minerals that come to the United States. For example, European countries, India, that have other linkages that are far less essential to Tehran, but could still be targeted in terms of remaining economic ties.
Jenny, does this or could this additional economic pressure, not just on Iran, but on Iranian allies or countries that do business with Iran, could this cause Iran to do what the U.S. has wanted it to do, which is to, well, one, is Strait of Hormuz, that's a completely different topic, but two, make headway on getting nuclear material out of the country so the president, and so the country does not develop a nuclear weapon?
I think given that Iran has survived about 47 years of heavy U.S. sanctions, and based on the measures that were concretely announced on Monday, not, the additional diplomatic work, and remains to be seen what outcomes those efforts produce, but just based on the designations and rules that were announced on Monday, that's going to dial up the pressure on Iran, but it's not going to bring the administration or the regime there to its knees. Tehran sees this conflict as existential, and it thinks that it can outweigh the United States. These measures are going to increase the pain, especially on its broader populace, but they're not going to change the picture for the regime when it comes to this conflict.
Jennifer Welch, Bloomberg Economics Chief Geoeconomics Analyst down there in Washington, D.C. Jenny, thank you, as always, for not just your research, but for joining us on Bloomberg Business Week Daily. The world, including Wall Street, watching what's happening in the Middle East and in Ukraine and Russia. Wall Street, though, also focused on NVIDIA today and its latest quarterly results, which we expect to hit just after the closing bell. For that, we bring in Kim Forrest. She's founder and CIO over at Boca Capital Partners. The firm manages around $35 million. Kim joins us from Pittsburgh. Kim, we wanted to talk to you, given the background, your own background, and of course your interest in technology stocks today. I'm just curious about your view as NVIDIA continuing to be a bellwether of AI and CapEx spend. What are you hoping to hear from the company today?
Well, I'm hoping to hear that, their customers are lining up and they can just barely fill the demand. That's what I want. Or maybe there's so much demand they can't fill it. I think that's what everybody's listening for. But there's other things that we're also watching out for, and that would be the vendor financing. That's a very scary topic, especially in tech, given what happened, I don't know, 25 years ago, maybe. So yes, we're going to look for lots of information on, is the AI spend still ongoing? Is NVIDIA the preferred vendor? And then what about that vendor financing?
I'm glad you brought up vendor financing and in the history of this, going back to the .com bubble and the burst of that. But it doesn't seem like there are that many people right now concerned about vendor financing.
No, and maybe it's too early in this whole thing to ever be concerned. Events in history don't line up 100%, or why would we be here talking about them, right? So it's a very different time. There are uses for AI where we were kind of figuring out, like, are people really going to use the internet for buying stuff? And, everything that we kind of use it for now. That was a question. And really, the Lucent stuff wasn't even internet. That's what I'm talking about. It was really telecommunications. And that was a whole different flavor. Nothing to do with .com, but still equally bad. I think it's super early in AI. I just do. I don't think Anthropic and OpenAI are going to ultimately be the winners long term. I know that's kind of crazy to say right now. But I believe they're part of the picture, not the entire picture. And this is going to be a whole ecosystem, not just one or two companies, winner take all.
Kim, talk about the competition in the space. I know you've talked a lot about the demand for the company's products. What do you think? I mean, we've heard of OpenAI's jalapeno chips, right? There's Meta, Microsoft, Amazon. I mean, so much kind of getting into this sector. Where do you see the competition?
I see the competition is everywhere. And, I've talked about this for a long time, especially with NVIDIA, that they had that huge target on their back, and that's brought to you by gross margins that are out of this world, right? It's what's going to happen. This is the great thing about capitalism. People are going to swoop in and have a better mousetrap or a better chip in this case, or maybe a series of chips. And while I don't know that Meta and Microsoft and everybody that's making it for their particular platform is a winner, it surely does chip away at NVIDIA's leadership in the long run, because maybe the best answer is a very proprietary chip for very proprietary compute. We don't know yet.
Kim, I want you to make a prediction here for us, and it's about CapEx spend and the growth in CapEx spend. When are we going to see the first company pull back?
When are we going to see? Well, we kind of saw Meta blink, right?
You think so?
So we kind of have, but I think, let's say in the next 3 years, somebody's going to blink, one of these big providers. My guess is it's Meta.
That's a lot. That's a long time and a lot of money.
Yeah, it is, isn't it? But these companies make a whole lot of money, and they think each of them are differently but well positioned to be able to grab a piece of this, new landscape. My problem with Meta is this: even though they're smart people that do things with computers, I don't know that they have a natural business model that they can, recover all this money that they're spending. That's a huge problem. Because I worked in AI and, I'm no longer in it. It was one of the reasons why I left software development, was because the companies I worked at weren't successful. You must always pay attention to the business proposition. And there isn't a clear one for Meta. So that's all I have to say about that.
So, Kim, if NVIDIA beats earnings, right? Let's say that happens and the stock still falls. What does that tell you about where we are in this whole AI investment cycle?
I think it's kind of normal, because in the recent past, well, I guess it's not distance, but like a couple of years ago, when NVIDIA and this whole thing was rolling out, NVIDIA would, double the numbers that people were expecting. We don't have that. We haven't had that in a while, and it would be really unusual for that to happen. It's just not going to happen. But what I think people do is they say to themselves, is the news I hear from the company enough to keep me invested? And, there's a little disappointment. Some people are going to bail out, and maybe that's what happens on the sell-off the next day from NVIDIA's earnings. I don't necessarily think any of its earnings recently have been in the bucket of disappointing, right?
Why does it feel like, just 30 seconds, why does it feel like this one is not as big of a deal as these have been in the past?
We already know. Sorry. We know a lot. Everybody talks about this constantly. So the new information the company is going to give is interesting, but may I say it's almost irrelevant.
That's a good place to end. Kim, we always love it when you join us on Bloomberg Business Week Daily. Kim Forrest, founder and CIO over at Boca Capital Partners. Kim joining us from Pittsburgh. We should note that our wall-to-wall coverage of NVIDIA begins at a little before 4 o'clock today, a little before things close out the day. I want to encourage everybody to join the conversation, to ask us questions and ask our guests questions. We have a fantastic roundtable that includes Ed Ludlow of Bloomberg Tech. Send our questions to bloomberg.com/askradio. This is a feature available exclusively to subscribers of Bloomberg.com and of the Bloomberg terminal. Bloomberg.com/askradio. All your questions for our panel about NVIDIA. Coming up next, we stay on tech and talk Meta. This is Bloomberg.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. We've got the S&P 500 index right now swinging between gains and losses. Little change, though. That is the key takeaway. Down now by just about half a point. All of this ahead of NVIDIA earnings after the bell. Dow Industrials down 111 right now, down 0.2%. S&P effectively unchanged on the day, while NASDAQ is down 33, drop there of 0.1%. And the NASDAQ 100 index has been swinging between gains and losses. Right now it is higher by under 0.1%. The stocks, the Philadelphia Semiconductor Stock Index, it is down, up right now by under 0.1%, effectively unchanged on the day. The VIX right around 15, the 2-year 4.22%. This is Investors Digest, the Federal Reserve's preferred inflation gauge. The 10-year 4.66%, the 30-year 5.18%. All of this ahead of Kevin Warsh's speech on Friday at Jackson Hole. Gold down 1.3%, $45.94 the ounce. West Texas Intermediate crude now lower. Crude been bouncing around today. Right now, just above $82, down 0.3%. Barrel of Brent below 88 now, down by 0.9%. Everybody's eagerly awaiting NVIDIA's earnings after the close of trading. NVIDIA shares ahead of earnings down 1.1%, but also reporting after the bell. We'll hear from CrowdStrike. It is up 2.4%. Salesforce down by 0.3%. Recapping, S&P 500 index down now by 1 point, little changed on the day. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. Tim and Lisa, that is a Bloomberg Business Flash.
Thank you for that update, Charlie. Watching shares of Meta up right now by about 1.5%. They bounced around quite a bit today. They were up as much as 4%, down as much as 1.4%. This after the company said it agreed to pay up to $18 billion in landmark settlements to resolve allegations from multiple U.S. states that the company deliberately designed Facebook and Instagram to encourage compulsive use among young users. For more, we're joined by Alexandra Levine, a Bloomberg News social media and technology reporter. Also with us, Stacey Steinberg. She's a professor and director of the program on children and families at the University of Florida Levin College of Law. Alex is here on set with us in New York. Stacey is with us from Gainesville, Florida. Alex, I want to start with you. I mentioned the $18 billion and up to $18 billion in landmark settlements. What else do we know about the details of this?
Well, we always knew, or we were always expecting that there could be some big monetary piece of this. I think perhaps the most interesting piece, though, is that there are these measures that would have essentially force the company to change the way that Instagram and Facebook operate for people who are under the age of 18. So some of the most significant things we can expect to see changed if the court approves this agreement are restrictions on how much time teens can actually spend on the platforms. Meta is saying that it would be capped at 2 hours. There are also restrictions in teens being able to use the platforms in overnight hours when they should otherwise be sleeping. I believe it's from midnight to 6 a.m. There's also going to be more restrictions around teens not being able to see likes as a default setting. Some of these can be changed with parental permissions, but I think one of the most interesting pieces on top of all of this is that all of the restrictions can be ratcheted up if TikTok and YouTube agree to sort of follow suit and fall in line with what Meta is already doing.
Now, hearing all that, I want to go to Stacey because she's kind of behind all of this. I mean, hearing all those things, Stacey, does this mean that is this a workable thing? Like, will this work? Is there another solution? I know kids are savvy, and a lot of kids can navigate kind of around these things. So tell us if you think this is a positive solution, or maybe there is another solution to this.
I think this is a great step forward. I was really excited to see this news this morning. I think that it gives, it shows that we can make some meaningful changes, or that the platforms can make some meaningful changes to the design. And them agreeing to do this, I think, is a great step forward for families. It also gives parents a lot more of an ability to control and oversee what their kids are doing online. So it's a great step forward. It's not everything, but this should help protect kids online and give parents a better way to monitor and help protect them as well.
Stacey, you say it's a great step forward. It's not everything. What additionally would you like to see?
Well, I think that it's important to keep in mind that this is a step forward where the Meta has entered into an agreement specifically with the attorney generals of many states. There are still many individual lawsuits that are pending across the country by parents of children who have been harmed by social media and by some of the children themselves. And there's also still a number of lawsuits pending by schools and other organizations that are feeling the impact of the mental health harms that social media can cause for kids. So I think it's important to see how those cases play out. It's also important to see how quickly these changes are rolled out and what the enforcement mechanisms are behind the changes that we end up seeing happening here.
I got to go to this 18 billion number. Alexandra, I'm going to take it over to you for this. I know I'm not going to ask you to kind of break down the numbers, but I was kind of thinking it was going to be with a T and not a B. I mean, did they kind of get out easy on this, or?
Well, I think the potential price tag on this was something that was catching a lot of attention before the trial had actually started. Meta came out to say that they were expecting penalties as high as 1.4 trillion, which is quite remarkable, knowing that Meta's market value is 1.5 trillion. And then when the AGs came back and said, no, it's actually closer to 200 billion. It was still an enormous number, given that Meta's revenue for all of last year was roughly around that. So I think that though the monetary piece is coming out quite a bit lower than we had heard even a few days ago, it will be interesting to see sort of what the long tail of this is. I was just on a call a bit earlier with with the legal team at Meta, and one question that came up was, what is the business impact of this going to be, and how are you thinking about that? And I thought the answer was really interesting. They, Meta was saying that they believe that teens are not actually that valuable because they don't have that much to spend. Valuable in terms of how much they can drive for the company's bottom line because they don't have that much to spend. But then, of course, there is the question of the long tail of this. And do these restrictions mean that more people will hold off on using platforms like Instagram until, say, just throwing this out there, say they're in their 20s, and sort of what that delayed usage could potentially look like for Meta in the future?
Well, Stacey, I want to ask you as a parent, as I'm a parent, I should say. I know Lisa is as well, but just as a parent of young kids, Lisa's kids are a little older than mine. Mine don't have smartphones yet. Given what we know now and the research that you do, what is the right approach for us to take in terms of exposing our kids to this technology?
That's a really big question, and it's hard for me as an attorney to be able to answer that. I think that taking a measured approach is going to be really important, and I think that it's important that we recognize how these interplays, how kids interplay with the social media platforms, how parents do, and really the unequal balance of information that the platforms have compared to what we have as parents. So from my perspective, and I'm also a parent, I think having us have more information, being able to give parents more control of how their kids interact online, and the platform sharing this information is going to be critical.
What about our own behavior, though?
Oh, well, that's huge for me. I spend a lot of time thinking about how parents interact on social media and how our own choices online impact our kids. I don't think this specific settlement will play a big role in it, but I think it's always important that parents keep in mind that how we use social media really shows our kids what we value. And so if we can manage our own social media use, not use it as much in front of them, and take time to show our kids how their privacy is impacted when we share, and how social media companies can use our information in ways that harm us, I think that we're helping our kids for sure.
Well, Lisa, I agree. It doesn't show, this doesn't do anything to the way that adults interact with social media, but I think what it does is it shows that the way that this is part of the conversation now, and the way that we're thinking about this differently than we were, let's say, a decade ago. I don't know. I mean, your kids are older. The toothpaste is out of the tube with them. They have smartphones.
Correct. But I think the hardest thing is for parents just to monitor it. And I think some of these will help in that way, but that is just the hardest thing. I mean, you see other countries like Australia and those who put out outright bans. So maybe you can talk to that, Alexandra, about how come it's so difficult here in the U.S. to try and make some crackdowns as serious as that?
Well, Australia's crackdown was certainly serious, but it hasn't been foolproof. It was definitely a big step forward, and it was a big deal that Australia went first, because now, of course, there's a growing number of countries that are considering, implementing similar types of restrictions. But I think actually thinking about Australia is a really good litmus test here. I think it was Stacey had mentioned a few minutes ago, what are the enforcement mechanisms here? Everything that has been laid out so far as these changes that may be made if the court approves this, the changes all look really good on paper. But there's always a question, especially because so much of this relies on the platforms knowing how old the children who are using the platforms are. There's a lot of questions about how any of this is enforceable, right? So a lot of these restrictions depend on the platforms knowing with certainty that a person is actually under the age of 18. But if, as we saw in Australia and we've seen in the US for so many years, it's very easy for teens to sign up with fake birthdays. Age verification is a problem across the entire industry, not just for Meta. And a lot of these workarounds are sort of obvious for a tech-savvy, digitally native, generation that has come of age with their phones. The question is, what are the enforcement mechanisms and how successful are they actually going to be? So I think Australia is an important barometer in that larger discussion.
Bringing it back to the U.S., at least here in the U.S., Alex, is the ball in TikTok's court now?
Well, interestingly, Meta has been calling on TikTok and YouTube to implement these same things, and Meta is holding back a certain amount of payments, and they're also sort of tempering the kinds of restrictions that they're going to put on users until TikTok and YouTube agree to sort of meet them in the direction where they're headed. Interestingly, Snap has been a defendant in this larger national social media litigation moment. The AGs have called on Snap to sort of follow suit as well. But I think that the companies, Snap, TikTok, and YouTube, that have settled in some of the other litigation maybe thought that they were out of the hot seat, maybe thought that they would not be in the spotlight quite as much. But now that this is the agreement that Meta has reached with AGs, I think if anything, it leaves Meta, coming out of this, looking in some ways you could say like a hero here, where now the other companies are thrust back into the hot seat and ball is sort of in their court to, for everybody to see where they net out on some of these demands that both the AGs and Meta are making of them.
All right, I want to take a look forward. Stacey, I want to go back to you. We have probably about 2 minutes left or so. Where do we go from here? I mean, I know a judge still has to sign off on the agreement, correct? But where do we go from this step? Because you mentioned this is the perfect, stepping off point. Where does it go from here?
Well, I think once the judge signs off on it, hopefully the judge will sign off on it soon. The next step is to see, do the other platforms follow suit? And do these design changes actually get implemented? How are they audited? How are we making sure that these are happening? I think that seeing how the individual platforms other than Meta follow through is going to be really important, because this sets a floor for what's acceptable for designs and for how platforms design their products. It gives us a floor for how kids should be maybe allowed to use social media, of course, with parental oversight being number one. And it also gives us some tools that we didn't previously have to be able to make parents feel that they are more in control and actually place them in a position where they're more able to help their kids interact with their online platforms more effectively.
Alex, I'm going to send the last one to you. Just 20 seconds. Does this remove a major regulatory overhang for the company?
I think it both removes one piece of this and also extends it far into the future, because it's not just a monetary settlement. I think injunctive relief, which are measures that actually require the companies to change the DNA of how they work for young people, that was always sort of the bigger looming threat for them. And now that those are real, I think it remains to be seen, as Stacey pointed out, how quickly they get implemented, how well they work. And so I think it's a little bit of both.
Well, I wish they would ban me, because I waste too much time on these things
You're
already.
a scroller. No.
Yeah. I've gotten better, but it's not good. Alex Levine, social media and technology reporter at Bloomberg News, here on set. Stacey Steinberg, a big thank you to her as well, professor and director of program on children and families at the University of Florida Levin College of Law. This is Bloomberg.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg, roughly 1 hour and 40 minutes until the latest numbers out of NVIDIA. Bloomberg has it dropping at 4:20 Wall Street time. Right now, we have got stocks treading water ahead of NVIDIA's numbers. NVIDIA shares, by the way, they are trading lower by 1.1%. S&P 500 index, we'll call that flat on the day right now. It's 76.74. A little change, perhaps to be more accurate here. We've got the Dow Industrials down 135, down 0.2%. NASDAQ Composite down 34, down 0.1%. NASDAQ 100 index has been bouncing around between gains and losses. Right now, that index higher by 13 points, up under 0.1%. 2-year, 4.22%. We've got bonds falling on speculation that the Fed will raise rates this year. The 10-year, 4.66%, and the 30-year, 5.18%. Gold down 1.3%. Spot gold now at $45.95 the ounce. West Texas Intermediate crude 82.17 a barrel on WTI, down by 0.2%. Keeping an eye on a number of retailers after earnings. Look at Abercrombie and Fitch shares today. They are surging. ANF on the ticker. It is up by 35.4%. The retailer raised its annual earnings guidance. Also out with earnings, we heard from Bath and Body Works, shares up now by 7.1%. And Kohl's is out with earnings as well. That stock higher now by 1.5%. Kohl's turnaround attempt showing some progress again. Kohl's shares up by 1.4%, but the one that bears repeating. ANF, Abercrombie and Fitch, up now by 35%. Recapping here, S&P 500 index flat on the day. Little change, down 1 point right now. NVIDIA ahead of earnings, trading down by 1.1%. Tim and Lisa, that is a Bloomberg Business Flash.
Hey, Charlie, thanks for that. Do appreciate it. Well, Wall Street certainly focused on NVIDIA. Before then, though, we're getting news in another part of the semiconductor ecosystem, and that's from Lam Research, the nearly $400 billion market cap developer of machines that are used in the chip manufacturing process. The company out with news this afternoon that it's breaking ground on a more than $600 million expansion of its Tualatin campus in Oregon. It's just south of Portland, part of a more than $3 billion planned investment in its labs around the world. We've got with us the CEO of Lam Research, Tim Archer, who joins us alongside Ed Ludlow, the host of Bloomberg Tech. Ed's out there in San Francisco. Tim is out there in Tualatin, Oregon. Tim, I want to get to this project. We'll get to it. But before we do, shares of Lam Research just surged at the end of last month. This was just after you reported results, closing higher by close to 18%. You reported fourth quarter results and an outlook for adjusted earnings that beat expectations. You said in a statement at the time that record revenue, operating margin, and earnings per share at a record as AI-driven demand continues to reshape the semiconductor industry. Can you give us some color of what you've seen day to day over the past 4 weeks that show what you're seeing with demand right now?
Well, thanks very much for having me today. It's look, I think those results, just indicate we're in an accelerating demand environment for semiconductors. And what Lam does, I think most people realize, but we make the machines that help make all of those chips, and especially our strengths are in some of the most advanced manufacturing processes for chip making. So we're seeing tremendous demand with the AI build out and all of the chips required to support AI. And I think that just week by week by week, we continue to just see not only really, we don't talk a lot about capacity. In fact, the announcement we're making here today is about a new R&D lab. We're just seeing an acceleration of the pace of innovation, the capabilities of each of those chips, and it's something that we're investing to stay ahead of that demand.
Tim, it's Ed in San Francisco, and you're right, we don't really talk about, at least Lam, in the context of more capacity. Your challenge is to make increasingly tiny three-dimensional structures at atomic level precision. And that's only getting more difficult in the AI age. How do these lab investments help you get there?
One of the keys to really accelerating innovation is working very closely with our customers. And so one of the things that's very unique about the announcement and, the groundbreaking we have here in Oregon, the Oregon has been kind of the heart of the Silicon Forest for more than 3 decades. And so a lab here in Oregon puts us close to a lot of the advanced chip making that happens very close by here by some of our very large customers. And we also have labs in Asia and Europe as well to put us close to those customers. We think that by shortening that distance and really building incredibly tight collaboration with our customers who understand what those next problems are to be solved. That accelerates the velocity of innovation with them for those next generations. So that's what's unique about our lab strategy and the type of work that's done.
So Tim, why is the timing on this? I mean, why is Lam investing so heavily now? What does semiconductor manufacturing technology matter?
Yeah, if you think about this lab here is part of a much bigger investment that we announced. It's $3 billion across that global lab network. And why now? The pace of innovation. AI has fundamentally changed the rate at which we have to be innovating. I look back just a few years ago, and when the markets were driven by things like smartphones and PCs, that cycle was operating, kind of on the every 1 to 3 years you needed to really innovate something new. AI has changed that requirement such that with new AI models coming every few months, and each of those demanding more computational power, even better high bandwidth memory, even more storage. Lam is looking to meet those needs. We are a manufacturer of machines that make each and every one of those types of devices, and so there's a lot of demand for us to continue to come out with the next great innovation in process and manufacturing technology to keep up. We've also seen a tremendous boom in what's called advanced packaging. It used to be that in most cases you built a single chip and it had a certain function, and you increased the performance of that chip by making it smaller and introducing new materials. Advanced packaging changes the game because now it is about putting many different types of chips together to create system-level performance. And putting all of these chips together and stacking them into a three-dimensional architecture, it requires a lot of etch and deposition equipment. We said that our business in advanced packaging this year would be growing more than 70% year on year. And one of the particular tools, the copper electroplating tool that plays such an important role, that tool is actually developed and manufactured here in Oregon, which makes this such an important site for us.
Tim, it's really important to underscore NVIDIA, as an example, is not your direct customer, right? It is TSMC and the memory makers. But, it is the demand for lead-edge chips across logic and memory, HBM, that is the story out in the world. How much of that growth in demand directly reads through to Lam, and how do you respond to it?
Yeah, it's, if you look at advanced chips today, one of the trends that just is, it's been around for a few years, and AI has really put it into hyperdrive, is the three-dimensional scaling of every device. And so, of course, that's been true in foundry logic with technologies like gate-all-around, introduction of gate-all-around, which is a three-dimensional transistor structure. But really, it comes to bear when you think about what high-bandwidth memory is. High-bandwidth memory is the stacking of multiple DRAM chips on top of each other to create higher bandwidth performance for AI. And so clearly a three-dimensional architecture that requires a lot of etch and deposition equipment and a lot of innovation for us to be able to support the manufacture of those structures. NAND has been has had a 3D architecture since more than 10 years, and Lam has been a very strong player. In fact, it has traditionally been our strongest market because of that 3D architecture. And what we're seeing now is as other devices go 3D, it just drives a lot more demand for our specific types of equipment.
Hey, Tim, we only have 20 seconds left, but you mentioned this is part of a $3 billion effort to expand your global lab network over the next 5 years. You made that announcement just a couple of weeks ago. I'm curious where you think we are in the cycle right now and why you're so confident that demand will still be high in 5 years.
Yeah, well, the need for innovation never ends, regardless of where you are in the cycle. And so, one thing we've seen, I've been in the industry more than 30 years, lots of cycles, and so regardless, the investment in innovation, the investment in R&D labs, putting yourself close to the customer to accelerate collaboration. Clearly, we think we're in the early stages of a big build-out, but regardless, we need to invest in innovation, and that makes the company stronger throughout any cycle.
Tim, appreciate your time this afternoon. Tim Archer, CEO of Lam Research. Also, always appreciate Ed Ludlow's time. He's the host of Bloomberg Tech. He's going to be back with us quite a bit next hour and in the 4 p.m. to talk NVIDIA. Coming up next on Bloomberg Business Week Daily, we've got stocks on the move and a check of markets.
This is Bloomberg Business Week Daily with Carol Masser and Tim Stenovec on Bloomberg Radio and Television.
It is Bloomberg Business Week Daily. That's not Carol Masser. That's Lisa Mateo. You might see her on Saturdays and Sundays on Bloomberg this weekend. It starts at 7 a.m. Wall Street time. Thanks for staying up late for us.
Yeah, no, and it's good. It's not Saturday. You're not seeing things. Yes, I am here in full effect, ready to join in.
And I think you're with us later this week, too.
Correct.
Yeah, okay.
I rounded out the rest of the week with you guys, so you're stuck with me.
We are happy to have you. It is a Wednesday, and it's NVIDIA Wednesday today. We expect NVIDIA results to cross just after 4 o'clock today after the markets close, typically around 4:20 Wall Street time. We got a great roundtable joining us in the 4 o'clock hour. It includes expert insight and analysis, not just from our Bloomberg TV team, but from folks who cover this stuff outside of the organization as well. Be sure to tune in for that. If you have